back to that, but TCS is now trading at 13 times FY28 PE. Wow. I mean, it used to be 3 years ago at about 26, 27 times. So it's, halved from there as well. And yes, 55% correction. So math adds up.
So Gautam, enriched by the earnings season, and we have pretty much all the companies really doling out the numbers and also putting out good narrative on the artificial intelligence thrust. So how do you now assess after being enriched by the recent announcement? Because in the last quarterly result, they actually got a taste from the market that we need that AI thrust. And this time, a lot of that work is being done by the companies.
So if you look at the narrative that's coming from TCS, they've said their AI transformational work projects the ARR is $2.6 billion, okay, which is about 8.5% of total revenues. But these are all short-term projects. They're not your traditional long duration projects. So like 3, 4, 6 months, or even 9 months, I think in some cases. So I think it's early days to start re-rating these stocks. Would I buy some of these stocks at this price if I had a large cap fund? The answer is probably yes, because I don't think you can get any worse from here. They're smart people. I mean, TCS, we don't own TCS for the record, so just want to make that clear. But the fact is they've, put $7 billion as a commitment to put money in the data center business. That's great news. At least they're pivoting in the right direction, which is where India needs capital. The others haven't really expressed or seen. HCL, I think HCL Tech announced something as well.
But 1,500 crores.
Yes. So, yes, it's a good step. It's not as big as TCS. But the fact is, if they start pivoting in this direction, it's the right place to start going into, given the amount of cash they're sitting on.
Just a quick question on that. So the tendency has been to look at these IT companies and judge them on a quarter-on-quarter basis. And you look very closely at their margins as well. So if they're pivoting from a services business to a data center business, then you're going to have to be okay as an investor to say, oh, the margins are not going to be what we're used to. There's going to be erosion.
That's one company.
I'm saying,
So if you look at the remit of the question, will Indian IT service sector live up to the AI challenge? My 2 bits would be yes. But would that make them as valuable and as interesting and as important in the Indian ecosystem as they've been? Perhaps not. Remember, everyone was excited about the Indian IT service sector, apart from an investor valuation metric, because these were the companies that flew our flag high. They created those high-value jobs. It gave that pride of, India is sort of the data center for the world. All of that will also change. So the way you look at these companies will also change. They'll then be one of many trying to live up in that AI race. Will they fail at it? I don't think so, because I'm a little sentimental also about the ability of some of these companies.
They will live up to that challenge is what you say.
They will live up to the challenge, but will they then be as valuable as they are now? Because they were earlier able to provide something not everyone was.
Right.
That might change.
I think they'll be more valuable than they are now. They may not be as valuable as they were 3 years ago. Because the multiples have to expand from 12 times to...
From here, they will recoup, basically.
That's a clever answer.
Let me just, before Alex says something, let me add something to what you just said. The fact is, if Indian IT companies figure out a way to get more and more embedded within the AI space, even if it's 10 to 15%, but of revenues, they're not there yet, but I'm saying if they start showing that, and the ability to actually get to a higher number over the next 5 years, these stocks will get significantly re-rated. I can guarantee that. We have a small cap company, I don't want to get into the name, but that's until now it's still making hose pipes. But that hose pipe now has a completely different application, i.e. liquid cooling of the GPUs. The stock has ripped. Their revenues haven't even started as yet in the data center business, but the market's already foretelling what it's going to be. The management thinks in 3 years' time it'll be 50% of revenues. Okay, 50% is a high bar for some of these companies that have a pretty big base, but I would think there would be a significant re-rating of these stocks by the market if they start demonstrating more penetration in the AI space.
Alex, what's your verdict?
I think that there's going to be a separation of the wheat from the chaff. There's going to be a few winners in this story, and those that are going to get their bets right at this point in the next couple of quarters in terms of mobilization of funds and reorientation are going to win the fight.
There will be a segregation between winners and losers. There will be a change of pecking order, and I would say collaboration with already existing AI capabilities is the way to go. Those who are doing it like HCL Tech with Sarvam, and there is a buyout happening in several other companies also. If that collaboration happens, because the two scripts are totally different.
Commentary is getting definitively positive on AI, say in the last couple of weeks than it has been for a while. So that is something to go by. Before we wrap up, very quickly, quick poll. How much will you pay for first access to Trump Media and to Truth Social posts? Because this is the strangest story I have seen all week.
So I will pay whatever it takes so they don't take away my US visa. Okay, so I'm a big fan of Trump.
Okay. That's what we'll end on. We've absolutely run out of time. Thank you so much for joining us on this edition of Editor's Cut. We'll be back same time, same place next week.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website. A stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You've got to be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market.
Hostilities between US and Iran refuse to ease as fresh strikes and threat ceasefire as well. US President Donald Trump claimed his forces hit Iran after 3 service members were killed in Iran strikes. Iran declared that its ceasefire with the US had effectively collapsed. And US futures trade flat as investors await fresh market catalysts this week, with the major indexes coming off a losing week after a sharp sell-off in semiconductor stocks. Meanwhile, oil prices climb as escalating hostilities raise fears of further disruptions to oil flows from the Middle East. Benchmarks resume weekly gains as earnings gather at pace, taking the center stage over rallying crude oil prices and weak global cues. But now investors weigh banking results with global developments as Nifty starts a new week. Mostly inline set of numbers for the first quarter for the banks over the weekend, but margin pressure really continues. ICICI Bank and PNB delivers strong quarter while Axis Bank lags as asset quality declines. HDFC and Kotak Mahindra keep the momentum going. The monsoon session of the Parliament is set to start today, with the centre and the opposition likely to lock horns on several issues. Income tax amendment bill, MSME development bill will also be in focus. And on to the world of sports. Spain climbs again to the summit of world football. The Red Fury crushed Argentina dream when substitute Ferran Torres struck in the 106th minute to prize the World Cup from holders Argentina with a 1-0 victory. Good morning. You're watching Markets Today with me, Shreyansi Singh, and this is the show that's going to get you a snapshot in terms of everything that has happened in the weekend gone by as well, and help you start your day and the week right as well. Get you everything that you need to know at the start of Monday's trading session. But first things first, let's talk about the Middle East conflict that is escalating rapidly, with the United States carrying out a 9th consecutive night of airstrikes against Iran. You do have US President Donald Trump, who's really ordered fresh military action after another US soldier was, in fact, 3 soldiers were reportedly killed in an Iranian attack in Iraq as well. And you do have the CENTCOM really saying that the latest strikes are aimed at degrading Iran's military capabilities linked to attacks on commercial shipping in the Strait of Hormuz. Meanwhile, Iran's Revolutionary Guard is the one that has really expanded its retaliation, launching attacks targeting Syria, Kuwait and Bahrain, raising some of those fears that the conflict could really broaden further and deepen some of those risks to regional security and global energy markets. And that's something that you're looking at in terms of something very important to watch out for. But speaking of important, let's also talk about US President Donald Trump's warning really coming in that the United States could target Iran's critical infrastructure if Tehran takes further action now. He's added that the US is going to hit Iran very hard. Let's go across and listen in to that bit of commentary.
But we hit him very hard again tonight, and we did that in honor of the probably 3. It's probably 3 as opposed to 2 great patriots. What we're doing now is we're ending any chance where they could have a nuclear missile. If you look at it, after a week and a half, not 4 weeks, a week and a half, 2 weeks, we stopped them from probably, but I don't want to have the word probably.
All right, then there you go. So that's some interesting commentary coming in from US President Trump, really highlighting that escalation that you've seen coming in over the weekend as well. But speaking of over the weekend, let's also talk about how to be setting right in terms of the handover that you have coming in from the US markets. Now, when you talk about the entire week itself, it was largely a losing week that you were looking at. When you talk about the moves on Friday as well, as you can see on your screens across the board, it's actually NASDAQ that was leading gains. S&P 500 also very much on the back foot with that 1% loss coming in, and Dow Jones also trailing with that close to 0.8% decline really coming through. When you talk about US futures, you're looking at a largely little bit of a flatline picture, close to the flatline picture coming in. So Nasdaq is the one that is the outperformer here for a change when you talk about US futures. But that said and done, not any decisive cues coming in, except for that slight negative bias coming in from Dow Jones as well. So a little bit of a mixed handover coming in from US futures. And speaking of mixed as well, let's also talk about Asian markets. Take a look at what the picture looks like there as well, because when you talk about Nikkei, that one's leading with that 4% downtick in terms of the cues as well that you should be watching out for from the Asian indices. And 1.7% uptick on the flip side coming in from Hang Seng. Some bit of resilience coming in from Shanghai as well with that 1% uptick as well. But that said and done, let's quickly talk about oil prices as well, because that's going to be a key talking point. We will get you some more insights, but before we do that and before we set up the context for the week as well, in terms of our markets back home, look at that 2.67% thereabout uptick coming in when you talk about Brent as well, and when you talk about WTI, 2.5% uptick there as well. So close to $90 a barrel for Brent, and it's crossed that key $90 a barrel threshold, which is why it's important to watch out for the resultant impact on our markets as well. But speaking of that impact as well, let's also get you the FNOQs in terms of what they're indicating this morning, and the kind of handover that we have, Puneet, especially in terms of oil prices, quite worrying.
Well, most certainly, and the implied open shows you that, right? Directionless at this point of time. As we start a big earnings heavy week for both the index as well as for the broader markets as well. Now, you are yet again seeing that 24,300 mark, and that's largely led by a very strong up move that we saw on the Friday session. So overall for the Nifty as well as for the Bank Nifty, the setup is very interesting, led by earnings. Now on Saturday, you had a clutch of earnings, HDFC Bank, ICICI Bank, Kotak, Axis, all of those coming up in numbers. You are currently at 58,200, but watch out for what happens with the reactions. While ICICI was in line with most of the estimates that we were working with, the commentary is strong. There was a slightly more weakish kind of a result essentially by HDFC. So both those heavyweights will have an impact today on the Bank Nifty as we go across to 58,500 and 58,800. So very close to that upper resistance level as well. Watch out for those. In terms of the cash markets, you've seen, on Friday that sell number come through, and with that, last week's sell number for foreign investors was roughly at around 9,100 odd crores, while DIIs bought through, held the market through in the last week as well. In terms of the F&O market though, you've just seen, because of Friday's session, come back into double digits in terms of the index long by foreign investors. But largely it's been an 89 to 90% short positions being held by them at this point of time. The put call ratio also has inched up materially to 1.37. So important to monitor if there is any kind of build in or build on this particular number at this point of time, because the open interest distribution, as we continue to highlight, the 24,100 as well as 200 as well as 24,000 level has started to see increased put build up at this point of time. So anytime the index goes back to that level, the next move is very important to watch on the downside or the upside, because the upside moves have kind of sold off over the last week or so. So consolidation could be likely in this week. And when you look at the stock specific reaction, because you have multiple earnings this week as well, but over the last week, Polycab was one that saw some build up of shorts after earnings. Radico Khaitan was the one where some longs were being built in, and Sona BLW has had a good dream run essentially from the 600 to 700 mark. It's been a swift move by this counter. But for stock specific open interest losing counters, you've seen BHEL post earnings, longs being unwinded, HAL as well as Tata Steel seeing covering of shorts at this point of time. But overall, stock specific action will continue, but the benchmarks are expected to be range bound this week.
No, absolutely, and thank you so much, Puneet, for getting us that check going in terms of FNOQs as well. That's said and done. Let's also talk about oil prices. And like I mentioned earlier, it's actually Brent that surpassed that $90 a barrel level. And that's the key update that you're looking at in terms of price moves as well. When you talk about WTI as well, we've talked about how that's also near $84 a barrel as well. And you're looking at the war premium really driving the fresh oil rally right now amid the escalation that's come in over the weekend itself. The supply fears really lifting some of those global benchmarks when you talk about some of the factors to watch. And we'll get you some more insights in a bit. But before you talk about, that as well, let's talk about some of those factors to watch. Of course, the US-Iran conflict is showing further escalation. That's something that you're looking at Hormuz transit risks also remain elevated right now, and you do have Kuwait energy infrastructure really coming under direct attack, which is also very, very important to watch out for. And amid all of this, the Red Sea shipping threats also persist. Against this entire backdrop, you do have Richard Redoglia joining us, CEO Matrix Global Energy. Thank you so much for taking time out and joining us this morning. It is a very, very complex setup when you talk about oil prices as well. And that war premium really seems to have decisively returned to the barrel amid the escalation in the US-Iran conflict. Let's talk about what you're penciling in terms of the move going forward. And before that, your view in terms of oil prices and where they are and where they're going to be right now.
Thank you very much. Yes, it is a very complex subject. There is a war premium in the market right now. Just recently, when the initial MOU was signed, the market moved down to $68. I think $70 is for Brent. Now back up to $90. We're back at there's a price. You can see the WTI price. You can see when you look at that price, we're at the bottom end of where the market had been over the past 4 months. And so two things have happened. One is when we saw the initial break, which is a function of the MOU that was signed, the market, you saw the pressure pushing it all the way down to $70. Now with hostilities again in play, the market's moving its way back up again. But a number of things have happened. One is that the OPEC members, Saudi Arabia and the UAE in particular, have found means to move barrels outside of the Gulf of Hormuz through Yanbu and for Saudi Arabia's case and through Fujairah in the case of the UAE. Now, when you do attack any OPEC member, as Iran is doing, you cause prices to move higher. But one of the bigger factors that is going on here is what is the capability of Iran? The goal of President Trump was to stop Iran from having nuclear weapons. And what he has done since the beginning of this war is destroy their navy, destroy most of their infrastructure, destroy most of their missile making capabilities. And so where we're at now really is a break in the MOU as a function of Iran attacking tankers inside the Gulf as they demanded payment for transiting the Gulf. And so at this point in time, we're going to see significant volatility. The market's going to trade in a price range. I imagine we can see another few dollars to the upside. But one of the things we need to pay attention to is the next headline. And that's always something that's going to cause increased volatility in this market. One thing we did learn was when hostilities ended, the market plummeted in prices. And that is something that people who want to play this from the long side, have to be very careful of.
Absolutely. And Richard, it's very clear that trade is right now headline driven. Given all of the volatility that is currently on the table, what kind of levels on the top in terms of how high prices can go are you currently penciling in? We've already seen a breach above $90 a barrel, and that was being touted as a very important level in the last week gone by.
Well, a number's a number, right? At $90 is not much different than, the high, to your point of $90, that's $1 off of the current highs. When you look 4 months out or 5 months out, the prices are still $7 to $8 lower than the current price. And so the market is pricing this in at the very short end of the curve. There's a thing called backwardation, which is the spot price versus the forward price. And right now, the forward price is around $10 to $12 above the price 1 year out. When the market was down near $70, the forward price was only $3 above the price 1 year out. So that's one of the things to to think about. The other one is crude volatility, and it's called 30-day volatility, and that is a tradable contract that trades on both the ICE and on the NYMEX, on the CME, which talks about where the market's expected range is. And currently, 30-day volatility is running around 55%, which is still historically high, but is off the 100% that it was back at the very beginning of the war. That implies that Brent price will be somewhere between $98 and $72 over the next 30 days, which in my mind is the best way to analyze this market.
No, absolutely. And very quickly before we let you go, Richard, just quickly wanted to get a sense in terms of whether you think higher for longer oil prices are, something that you're looking at as well and something that you're pricing in.
Are you talking about product prices? Is that what you said?
I'm talking about higher for longer oil prices if you're pricing that in right now, if that's something that you're expecting.
I think none of us could predict the future here, right? This is going to be a war. It's a war in the Middle East. It's never happened before. What we can predict is we need to be very careful to read the headlines. What is being said? Who is saying it? In my mind right now, the market is telling us we're expecting a range of around $20 around the current price. If this lasts longer and we get into the middle of August, and there's no the conflict is still continuing, prices will continue to move higher. I would say a good marker might be every week we stay with bombing going on is probably $2 to $3 to the price as a base level. But overall, I think that what the market is going to tell us, as soon as hostilities end, this market will come down extremely hard.
Thank you so much for taking time out and joining us bright and early this morning in terms of what to be penciling in when it comes to oil prices and the key factors to really be tracking here as well. And that's going to be something very important to track for the markets as well. But speaking of important things, let's talk about Reliance Industries posting an inline set of numbers in the first quarter with its revenue rising, aided by OTC and Geo as well. When you talk about some of the brokerage verdicts that have come in, let's talk about that first, and we'll get you a check going in terms of the numbers as well. You do have JP Morgan that's maintained an overweight rating. The target price is somewhere close to 1,600 rupees. For the Q1, they're talking about how this is finally a beat coming in, strong bottom line beat that they're looking at and highlighting here as well. OTC is strong, and despite retail losses, retail is soft again, and that's the bit that they've highlighted in terms of the retail EBITDA as well. So that's something that's very important to watch out for in terms of some of the commentary as well. They're talking about the commodity strength and commissioning of energy projects that are the key drivers as well. Macquarie, they're talking about how there's an outperform rating. Earnings driven by stronger refining margins and growth when it comes to Geo that delivered strong subscriber additions, and the ARPU that is slightly above expectations in segment margin that really improved as well, and margin declined due to the FMCG business. Also something that they're highlighting as well. But that said and done, let's also talk about the banking earnings. And you do have a little bit of a mixed pack coming in, largely inline set of numbers across the board when you talk about Kotak Bank, Axis Bank, HDFC, as well as ICICI. Of course, ICICI, the clear outperformer here. But let's get you a check going in terms of all of those numbers and how you should be looking at the key takeaways. In fact, Piyush joins in with that bit. And Piyush, let's talk about some of the key takeaways and how all of the banks really stack up against each other given the Q1 earnings.
Yeah, ICICI one is the showstopper. Like you mentioned, the bank beat estimates across parameters. But let's start with the largest private bank, HDFC Bank. In Q1, it has been able to post 10% sort of a growth in its net profit, primarily led by lower provisions. The bank's provision actually fell by 79% year on year to 3,060 crore in the reporting quarter. The net interest income was steady. It grew at around 7% year on year to 33,530 crore rupees in Q1, whether the other income was down substantially by around 41% year on year to 12,820 crore rupees, essentially because across banks the treasury gains this quarter are muted. Separately, ICICI Bank's other drawback was that the NIM came in at a very low level at 3.26%, down 12 basis point quarter on quarter, and multi-quarter low NIM. I don't believe ICICI has seen such sort of a NIM level for a very long time. Maybe they've picked up higher corporate loans, so they have given up a little bit on the margin front. But apart from that, the deposits of the bank grew handsomely by 15%, advances grew by 12%, and fresh slippages because of this seasonality impact were higher in Q1 in comparison with Q4. Fresh slippages stood at 8,000 crore rupees for HDFC Bank. Now the bank has said NIM will improve going ahead. It will appoint reappoint or appoint a new CEO very soon, and the loan growth is expected to pick up going ahead. ICICI Bank, like you said, beat estimates. The NII was up 13% on strong credit growth. The bank's NIM was also up 4 basis points at around 4.36%. Treasury gains, saw a turnaround in positive territory in Q2. The management has in Q1. The management has has said that going ahead, the NIM will likely, remain range bound for ICICI Bank. Axis Bank, slightly disappointing quarter. The PAT was up 23%, but primarily led by lower provision. Its provision fell to 2,223 crore versus 3,948 crore rupees in the same quarter a year ago. The net interest income was up 8% and other income was down 7%. The bank's NIM was also, the biggest drawback was that 16 basis point the NIM had fell Q on Q to 3.46%, and the management has guided this is the NIM has now bottomed out and it aspires to going back toward the structural 3.80% goal. Kotak Bank had a strong quarter. Brokerages have given a positive rating for this stock. The PAT has grown 26%, led by both stable growth in core income, other income, and lower provisions as well. So overall, a few lenders have done comparatively better. ICICI the best, and many lenders have seen a fall in NIM, the key metric of profitability.
Absolutely, and thank you so much, Piyush, for joining us with that update as well coming in terms of the banks and the key takeaways that you're watching out for. So that entire pack is key to watch as well. Let's also talk about another pack that's going to be in focus. The government has extended the ALMM2 exemption for select solar projects, and that's until December 2026, easing sourcing constraints and lowering costs for developers as well. How is this going to be impacting some of the key stakeholders? Varsha is standing by with just that answer as well. Varsha.
Well, the relief is only for net metering and open access solar projects. Earlier deadline was around May 31st, 2026. Now, overall, ALMM policy remains unchanged. Now, what is this? This is nothing but this requires solar projects to use Indian approved solar cells, and the aim is to boost the domestic, solar manufacturing. Now, this extension has been done as domestic solar cell supply still inefficient. But, which are the companies and which who will be benefited or which will have a negative impact, starting with the, Waaree Energies and, Premier Energies, which will have a negative impact in the near term. Why I say this? Because this delays benefits from mandatory domestic cells sourcing, also reduces pricing power for integrated players, now also weakens the near-term margin opportunity. Now, non-DCR module demand may rise, but margins over here are lower, and DCR modules use Indian solar cells. The reason why I am saying this, and non-DCR modules, if you see, can use imported solar cells. But overall, if you see, a net impact seen negative for FY27 earnings. Now, which companies will have a positive impact? The impact will, the positive impact will be on CleanMax and developers. Why? Because they'll have a lower project cost for open access projects, and of course faster project execution and commissioning, and they'll have a better returns for commercial and industrial customers. So negative for all the cell and module players like Waaree and Premier, but positive for the developers like CleanMax.
Absolutely, and thank you so much, Varsha, for joining us with that entire update also coming in. So there you go, that's the impact that you're penciling in for some of those counters. But with that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup
you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Hello, welcome to India Market Open on NDTV Profit. In fact, from the NDTV Profit Suzlon studios right here in Mumbai with me, Neeraj Shah, and my colleagues Alex Matthew and Hiral Daria. And yes, fitting champions, Spain, because they played a great tournament, of course. Throughout the tournament, a great run. And frankly, Alex and Hiral, yesterday's match, I mean, I've got blurry eyes right now, but it was because it was such a boring final.
Yeah, you were struggling to stay awake back then as well, right?
You bet. And especially if you're a Argentine supporter or a Messi fan, as I am, not a single attempt at goal. The goal, I think, included aside of me, the Spanish goalkeeper was feeling asleep.
So I think
attempts made.
I think there's a statistic or there's a record that has been made, right? The first time in a World Cup final that no attempts on goal have been made in 90 minutes.
Yeah.
Really?
Yeah. Zero. In fact, till 115 minutes, I will tell you, there was not a single attempt made. It's only after Spain scored that goal. But the only point is, Alex, and because you're a footballer, you will probably realize it more than me or Hiral, is that this was the exact template with which Argentina won against England. That England completely subdued and then Argentina kept on hitting them, right? They did that same thing throughout the 120 minutes. How do you expect to win?
So yeah, well, that's one thing, and the other thing, of course, is that the stalwart performers who were supposed to set the field on fire, which is Messi on one end and Yamal on the other, they were completely subdued for whatever reason. Maybe it was strategy from the perspective of Spain, because Spain is known as a defensive team, and Rodri in the midfield is meant to control the midfield.
Yeah,
so
but I don't think he had to do too much. Argentina was not attempting at all. There was not a single magic moment from Messi.
Yeah.
But guys, one question I have for you: are you guys also going to move to electric fuchsia shoes?
I have no idea what.
Okay, so I don't know if you noticed this, but majority of the footballers in 2026 in the World Cup have all moved to a bright pink electric fuchsia football shoes. And apparently this is the trend where this has been the unofficial signature of 2026 FIFA World Cup. And from brands like Nike, Adidas, Puma, name any of them, majority of them are wearing pink. So probably that's going to be the new trend.
That's why you're wearing pink. I'm missing out today.
That's okay. But India didn't miss out, guys. Very quickly, just before we get to the markets, India didn't miss out because I think it was a great weekend for India. Aside of all the other news flow around whatever sport could do, etc., and PV Sindhu also scoring that historic
the
win,
Japan Open, right?
But Skyroute and India's first indigenous hydrogen-powered passenger train set to operate. Two big things, but Skyroute, of course, dominated headlines. And it was a proud moment, of course, because India's first private sector, space orbital out there.
I'm also glad this hydrogen train is going to be a big deal, actually. I don't know if people realize the significance of it, right? If you can split the water molecule and create hydrogen, which is not available in nature as it stands, and utilize that for mass transport, what you get when you burn hydrogen is effectively water. Yeah. So how good is that, right? You're saving on crude and you're saving the environment.
Yeah, so two things. Sorry, just before we move to the hydrogen thing, since we are on the topic of Skyroute, because it's rightly put out there, from a dreamer to a space leader, it's fairly fabulous what Skyroute has done. And over the course of the last 48 hours, we also saw this update wherein one key investor invested in Skyroute after a 45-minute call. That's it. That's all it took, and made a major investment. But I'm happy for all those investors, simply because what Skyroute has done over the time has bored.
And it's very interesting to see how defense, how space, all of these sectors, which were absolutely, government driven, are opening up for the private sector now.
That is.
Yeah.
Global news?
Well, yeah, absolutely. Let's talk about that, because, by the way, Skyroute was involved in that last major space mission as well. Anyway, let's move on to what the global cues are, and ultimately for the Indian equity markets. And in fact, we should pull up the implied open just to set the context, because already you're probably going to see the impact of that. it's down about 17 points and after the week that we had. That's because oil prices have climbed further at the start of the week. Brent crude now tops $90 to the barrel, and that's bad news for importers like India. The West Asia conflict has seen an escalation. In fact, overnight you had the US-Iran conflict that saw the US conduct a 9th straight night of strikes over the weekend, particularly yesterday. Kuwait and Bahrain, meanwhile, are reporting more strikes by Iran. The dual blockades are underway. Iran has one side blocked, the US has the other side blocked. And that's choking oil supply. Apparently, according to a Reuters report which quoted LSEG data, 4 vessels made it through the Hormuz Strait on Sunday, and that is down from the 8 vessels that made the transit on Saturday. In normal course, you have over 30 vessels that can actually pass through the strait, so that gives you a sense of how much lower the supply of oil would have been on account of the choking of the Strait of Hormuz. The dollar has gained against most major currencies, and early rises in the Asia Pacific have opened mostly lower. You have the Japanese markets that are shut on account of a holiday, but the Kospi is down as much as 2%. US futures, at least last I saw them, were trading marginally in the green, but they've slipped now, and the Dow as well as the S&P 500 futures indicating a negative start. In the week ahead, you're going to have Alphabet, Intel, Tesla all post their quarterly numbers, but more than anything else, it's going to be geopolitics front and center, and US President Donald Trump warning that the United States could target Iran's critical infrastructure if Tehran takes further action. He's added that the US is going to hit Iran very hard. Listen in.
But we hit him very hard again tonight, and we did that in honor of the probably 3, it's probably 3 as opposed to 2 great patriots. What we're doing now is we're ending any chance where they could have a nuclear missile. If you look at it, after a week and a half, not 4 weeks, a week and a half, 2 weeks, we stopped them from probably, but I don't want to have the word probably.
Got it. All right. So that's the view from Donald Trump. Khun Go, head of Asia Research at ANZ Research, joining us this morning. Khun, thanks so much for taking the time. I wonder if you managed to catch any football over the weekend and what you thought of the results. But more importantly, what do you think about the fact that there has been a continued escalation of this conflict? It seems like the MOU is dead in the water.
Good morning to you. Yes, I did catch the final, and I have not had any sleep so far today. In terms of what's happening in the markets, more importantly, unfortunately, we are back to watching crude oil. And this escalation that we are seeing right now, to be honest with you, we have no idea when it's going to end, whether or not President Trump is going to do one of his famous tacos soon. For now, I think markets are once again hostage to what's happening to oil prices and the developments in the Straits of Hormuz. I guess the bright spot is, if you look at oil price, okay, Brent, $90 a barrel, elevated, but still nowhere near the 120-odd highs that we saw back in March, April. So there has been some diversion of some of the crude flows through pipelines, bypassing it. So I think that has helped to temper the extent of the run-up in oil prices so far.
Khun, and you hit the nail on the head, but the point being, the other thing is that now that a very comprehensively announced truce has also turned out to be fragile, would oil being slightly higher than what has been seen in the first 3 months of the current calendar year be the new normal? In that, if crude were to go down all the way to 70 or 65, that might be an aberration, because nobody will believe a truce until some passage of time has happened after the announcement comes by.
I think that's absolutely the right way to look at it. Any potential, future agreement or truce, I think, has to be taken with a grain of salt. We know that it might not last very, very long, and as a result, I think you're going to have a ongoing risk premium priced into crude going forward. So very unlikely we will see $70 a barrel or lower. I think most likely we're going to see a floor of around $80 a barrel. And don't forget, in the last few months, many countries have been running down their strategic reserves. And the longer we have the current situation where the Straits is effectively shut again, we might start to hear more concerns about supply shortages because, once you run down the reserves, there's really not much other alternatives you can do. And there hasn't been much opportunity in the last, few weeks when the ceasefire was in place to adequately rebuild those reserves. So I suspect all those factors will keep oil prices somewhat elevated for a while.
Kun, good morning. Hira here. Yes, crude prices may remain elevated as you're saying, but from an equity markets perspective, how are you looking at the next 6 to 8 months? Because we're talking about a truce which is not really getting implemented. There are concerns with regards to supply chain as well. So from an equity perspective, how are you placing India then?
Well, equity market is operating on a completely different, sentiment and theme, if you like, and also depending on the region. I think in India, not so much playing on the tech and AI related theme. So for the India context, I think it's very much the traditional impact of, what elevated oil prices might mean for earnings, for growth, for inflation in India. And not forget, there's also the potential of a strong El Nino that's going to develop, which will actually raise more concerns about the potential inflationary impact, which tends to be negative for equities in India. But for other parts of Asia, for example, for Taiwan, for South Korea, and for the US, the main theme for the equity market is really around the AI and the upcoming earnings results by the hyperscalers, as you mentioned. That's going to be very closely watched, and that's actually going to be the predominant driver. Not so much crude oil, but really a sense of whether investors think that there's further legs to go in this AI investment boom, and more importantly, whether the correction that we've seen in the Korean equity market in recent weeks has reached its low point, and whether or not we are ripe for some bargain hunting starting to emerge.
Okay, so bargain hunting starting to emerge when you talk about Indian markets as well. But thank you, Kun, so much for joining in. Always a pleasure to speak to you as well. But a quick recap in terms of Friday's session. We opened the gap up on Friday, extended gains throughout the session, and there was strong buying interest in index heavyweights. So your market participants were actually preferring the large cap stocks amid expectations mainly of a healthy corporate earnings. If you see in terms of close, a 1% gain in terms of Nifty 50, we ended above the 24,300 mark as well. On the sectoral front, you had IT and private banks that emerged as top performing sectors. In fact, IT, I think it's the second or the third consecutive week where the sector has ended in the positive. Pressure on metals and pharma is what you saw, and your broader markets actually underperformed your benchmark indices. So there is a preference shift happening towards large cap stocks versus your broader markets. Your mid cap declined nearly 0.4%, and likewise there was mild bit of pressure on the small cap index as well. So little bit of profit booking that came in terms of the broader markets, Neeraj.
Most certainly, and the index kind of held out, but unfortunately for our markets, oil on the boil is a recipe for correction despite the lower volatility last week, and Brent now crossing 90 means that there is an issue that we have at hand when it comes to the sentiment around Indian markets. Now, whether it therefore strikes the sentiment today, tomorrow, or the slightly medium term remains to be seen. But oil being higher is effectively the one which caps any kind of upside. You can, by the way, also see that in terms of capital flows, while FIs have been down, but the flows are rotating across the beaten down names, and they're moving from pocket to pocket where the valuation is okay and when the earnings might not be too bad. And actually we're starting to see that in chemical names, for example. For today's session, Reliance is strong, but banking and maybe a bit of a mixed breed for today, and I think we're going to do a elaborate conversation on banking as well, and Parag Thakkar will also come in a bit later on and talk about it. But we saw a pattern, which is that the net interest margins contracted for most large banks, save for maybe ICICI, and it'll be interesting to see how the street reacts to those numbers today, whether it's a promise of the future that holds them true, or will there be a bit of a mixed reaction to those numbers. So certainly keep an eye out for them as well. Also keep an eye out for some of the solar energy players, because I think they might take a hit, the Wari and the Premiers. Though I think for a lot of them, if you look at deep down, for them, some of their capacities are already sold out till December, so therefore may not have too much of an impact. But keep an eye out for the Premier and the Waris and some of those others. Just one quick update, guys, on earnings, and something that we do every Monday when the earnings season starts off, right? So pick up the companies which are over 1,000 crores market cap. So about over 80 companies, I think 81 or 82 have declared numbers thus far. I was looking at the analysis done by Tariq, and he's an analyst, and the analysis seems to suggest that two factors, that median operating profit growth and the median PAT growth is the strongest in the last 8 quarters. So we actually have started off the earnings season very, very strongly.
Good to hear.
Yeah, that's interesting. Now, I think then what happens in terms of the commentary that the management had given previously where there were concerns, is that something that the street will be able to put aside or not is the question, or does that actually shift to the second quarter in terms of impact of the war? That's what we need to watch out for over here. But this is very interesting to see that you have positive cues coming in there. In terms of factors, we've seen a strong breakout, and this is above the 5 to 6 day consolidation range is what you're looking at. Now, if you talk about the index trading above the 10, 20, 50 and 100-day EMAs, what is this indicating? Some improved momentum is what you're seeing. Focus is shifting towards the first quarter of FY27 earnings, especially your private banks that will be in focus today, along with Reliance Industries. Now, the question is for July 20, whether the Friday uptrend can actually sustain its momentum or not. Because if you see implied open, it's indicating a downtake of around 17 points. So not a major number coming in there. Your bullish bias will remain as long as Nifty holds above the 24,200 or a 24,100 level as well. Apart from that, if you have to look at Bank Nifty, there is resistance coming in at 58,625 and the first support level at 57,815. In fact, an interesting note that Bernstein has put up as well, that they are seeing a further 8 to 9% market upside, and the earnings growth expectation remains below the prior cycle peaks though. Your recent market rebound has been driven by domestic liquidity, and your large FI outflows have been proportionately impacting your large caps as well. They're expecting leadership to start broadening from the SMIDs to the large cap space, and this is as foreign flows stabilize and the valuation gap actually narrows between the two. And in terms of the current Nifty implied growth expectation, that is around 10.5%. Only modestly above the March 2026 levels despite the market recovery. In fact, they're finding the large cap valuations more attractive relative to your SMIDs as well overall. So interesting note coming in there, and they're preferring IT, healthcare, metals and auto from the recent correction. So that's what Bernstein is looking at. But I think let's look at what the F&O cues are indicating on this Monday morning. Puneet is here with us to tell us more. Puneet, good morning. What are the cues that you're picking up so far?
Well, good morning, Hiral. We've seen, as you mentioned, the implied open indicating a flat start at this point of time, but a big earnings heavy week. So continue to monitor the Nifty and the moves there. And as you rightly mentioned, 24,400 continues to be an important level. We are close to that. Thanks to the move that we've seen on Friday. But the Bank Nifty will be a big important level to watch out for today. Now, you've seen good earnings from ICICI, the second heavyweight HDFC, slightly more weaker than compared to its peer, as well as what we've seen, in terms of its historical performance too. So while we are at a higher level, close to that 58,800 mark, which is an important resistance level, watch out for these two heavyweights, how they perform, because that will determine where we go with the Bank Nifty for today. 58,800 on the upside, 58,200 on the downside are those two important levels. While the cash markets showed that FIs continued to sell, and last week I think approximately 9,100 odd crores is what the FIs sold in those 5 days. You had those 2 big days and big bouts of selling, and then continuing to see pressure on this index. But DIs continue to hold firm. But the index long, which the foreign investors have been maintaining, now thanks to Friday, we're back again at the double-digit mark, but continue to be under that 89% shorts level, as well as the put call ratio, which has increased materially to the 1.3 to 1.4 mark yet again. And that is clearly visible on the open interest distribution too. So 24,000, 24,100 as well as 200. all those big bars that you are seeing is the increased puts being added at those levels, those open contracts at this point of time. While we've seen a deceleration in the last week in terms of the calls, both at 24,500, 24,800 as well. So this could be a range where we could be consolidating at this point of time. So earnings become very, very crucial this week. And for stock-specific action, there wasn't too much that was buzzing in terms of individual movers. Polycab on results saw some build-up of shots. And Sona BLW is having a good dream run, essentially from the 600 to 700 has been a swift move. But for the stock-specific action on the loser side, you've just seen BHEL react post numbers and longs being unwinded. So that's some of the key aspects of the F&O market for today.
Well, thanks a lot for that, Puneet. Very quickly to the stocks in news that all of us are thinking of or on our radar, and not surprising today. I'll start off, and not surprising simply because I've got potentially two winners from the large cap space on my list. So let me kickstart the proceedings today. ICICI Bank, possibly the only one which is amongst the larger names, which showed whatever growth it did, but with net interest margin expansion. Everybody else, like I said, had a bit of a contraction. Not that that is the be all and end all for a stock price reaction for the others, but for ICICI Bank, it's a positive. So Kotak maintains a buy with a target price of 1800, and they say that ICICI Bank has shifted back into the top gear. And which is an interesting line that they've used. NIMs were stable, earnings growth remains supported by decline in provisions, but I think the next two lines are important for ICICI Bank's perspective. They say outperforming on metrics that matter the most from a company's and the stock perspective, and therefore outperformance is likely as a stock. But relative valuation limits multiple expansion. So whatever growth comes in ICICI Bank will be a factor of earnings growth. So keep an eye out for ICICI Bank. I believe it could start off positively, but it's also a stock that has put on a rally behind it. So let's wait and watch how much more can it do. It's a large heavyweight with an index weightage as well, so could be interesting. And speaking of index weightages and heavyweights, Reliance Industries could also be in focus today. After a long time, I'm seeing a slew of 2 or 3 notes which are positive. Doesn't mean that Reliance will have a rip and roaring day, but the JP Morgan note on Reliance is interesting. They maintain an overweight with a target price of 1660. This is the post-result view on Reliance Industries. Remember, they say the Q1 FY27 was finally a beat, a strong bottom line beat, and O2C has been strong despite retail losses. Retail is soft again, but that is now very well known, if you will. But O2C has been strong, and that might just hold the company in good stead. Let's see if there's a bit of a positive reaction. There are very quickly a third one, a small company on my list, and that is Tattva Chintan. Revenues up 42% or 43% at 167 crores is 107, but in a sign of what could happen to multiple chemical companies, not necessarily, but may happen. Look at the margin performance, 19.4 versus 14.9%, as a result of which net profit at 16 crores versus 6.7 crores. Definitely expect this one to react positively. So, well, 3 winners on my list, 2 large heavyweights.
Well, very interesting, and I think there's so much in the way of banks to talk about. So let me jump straight into it. HDFC Bank on my list, and it's not a great set of numbers. The Q1 results have missed estimates, and the moderate growth seen in the net interest margin, actually the net interest margin has declined. Operating profit is impacted by lower other income, and the other income has registered a 41% decline led by lower trading income. The margin moderated as the yields declined, but the funding cost remained stable. The PAT growth is supported by lower provisions on a year-on-year basis. There is also a decline in the return on assets as credit costs have increased. The asset quality has seen slight pressure on account of agri slippages. So take a look at some of those key numbers. NII growth at 7% or thereabouts. Other income is down as much as 41%, as we pointed out. 17% increase in provisions. The PAT number is up by as much as 5% on a year-on-year basis. Not very much. In fact, the GNPA, which is the gross bad loans, has risen by as much as 2 basis points on quarter, and the net interest margin stands at 3.26% compared with 3.38%. It's a 12 basis point decline on a sequential basis, and an increase in credit costs as well. I picked one of the notes, Citi on HDFC Bank. They've maintained a buy, but they've cut their target price to 970 from 1020 earlier. They say that the NIM or the net interest margin has compressed. The fees are soft. The OPEX credit cost is contained relatively so. Seasonal agri slippages have weighed, and they've viewed that as well. And the ex-agri, according to them, is resilient. So that's positive. The loan growth led by corporate or business is something that has taken place, and you knew that before the posting of the results as well. Banking and gold loan has also supported. You've had deposits that are seen a steady accretion, and the CASA ratio, however, has slipped. So all told, not the best set of numbers for HDFC Bank, particularly in the context of what Neeraj just spoke about with regard to Kotak, and I think we'll speak about ICICI Bank in just a bit as well. Poonawalla FinCorp from the NBFC
that was
space.
ICICI Bank that Neeraj spoke about.
ICICI Bank. No, so that was good. That was a good set of numbers. Poonawalla FinCorp, very good set of numbers for them, right? Take a look at this. The net interest income growing as much as 11% sequentially, 84.3% on a year-on-year basis. The PAT number as much as 21% higher sequentially, and nearly 5 times higher on a year-on-year basis. The return on assets is nudging that 2% mark, so it looks pretty good. 17 basis point improvement on a sequential basis, and the AUM growth stands at 11% sequentially, 62+% on a year-on-year basis. You've had an improvement in asset quality over the course of the quarter, and the new products, which is what has driven their growth, that contributes to 26% of the total disbursements. There are a few notes, but I picked Jefferies on Poonawalla FinCorp. They've maintained a buy with a target price of 560, which is up from the earlier target of 490. They're saying that this is strong AUM growth that is driven by rapid scale up in new products, and those new products accounting for a quarter of the total disbursements, with a focus on higher yield segments. The net interest income margin expanding by as much as 24 basis points on a sequential basis, supported by those better yields and lower leverage. The management expects the net interest margin to expand further over the course of FY27 to 29, and the asset quality is improved. All of those things are looking good for this particular company. And finally, JK Cement. It's not the best quarter, and this is, I guess, par for the course really for this pack as a whole. Solid revenue growth, but the margins have contracted, and that has weighed on the profit. You have higher input costs that have had a bearing on those margins. The margins contracting by as much as 440 basis points to 16.1% in the quarter gone by. The material cost as a percentage of sales rising to as much as 19.4% compared with 16.45% on a year-on-year basis the year-ago quarter. The profit as a result is down as much as 14.5%, and I guess this might just be the template that cement companies follow.
Probably, and I think in terms of cement as well, Nuvoco Vistas is what we've already seen, which has really seen some good growth post numbers in terms of stock price as well. In fact, we will be exclusively speaking to the management soon. Neeraj will be talking to them as well. But on my list, I'm going to start with a brokerage note, Alex. Adani Green Energy, where Macquarie has actually come out with the outperform on the counter. What's interesting is that they've raised the target price to 1800. What they're saying is that the 10 gigawatt annual addition is expected to drive your incremental EBITDA growth due to the BESS orders. Now, in terms of renewable capacity addition, that remains strong, and they're targeting approximately 5 gigawatt annual additions until FY30 and expecting a 30% EBITDA CAGR over the next 5 years, which will be supported by execution and scale up. The heavy capex supported by strong cash flow generation, net debt to EBITDA is expected to decline by FY30, and the grid availability remains a key challenge. They're expecting BESS, which is expected to provide long-term transmission solutions as well, and faster capacity ramp up and improvement in transmission connectivity remains a key catalyst. So watch out for this one in trade. Just a quick disclaimer, you have NDTV Profit, which is a AMG owned company, which is in turn owned by Adani Group as well. But from the banks, as Alex was mentioning, we spoke about ICICI Bank, we spoke about HDFC, Kotak Mahindra Bank. Now it is kind of a thumbs down on this one, because your net, I mean, look at the growth, 9% year-on-year growth is what you've seen in terms of the net interest income. Your operating profit has seen a growth of around 10%. Provisions have gone up by around 29% this time around, and your net profit has seen a growth of 26%. Talking about fresh slippages, they have ballooned as well. 30% is the uptick that you've seen there. Now, in terms of the guidance, they've said that they're expecting to deliver above system loan growth through both organic and inorganic opportunities, and they're expecting to deliver above system advance growth, expecting NIMs to remain stable, so no growth expected there. However, the outgoing CEO, Ashok Vaswani, has said that he's stepping down after more than 3 years at the helm for personal reasons, citing the completion of the bank's transformation journey and the arrival of his first grandchild. In fact, the bank has overcome its technology embargo, rebuilt its leadership team, and they've cleaned up the key retail portfolios, and he's saying that the bank is well positioned to accelerate growth as well. In fact, Kotak will be submitting names for his successor to the RBI in line with the regulatory norms. And very lastly, Punjab and Sindh Bank, a thumbs up there. 23% net profit growth. Your NII has gone up by around 15%. Your asset quality has improved as well on a sequential basis if you have to look at net and gross levels. In terms of operating profit, absolutely flat. Your provisions have come down, which is a positive as well. You're at 94 crores versus 217 crores. So watch out for this one in trade. So I think it is going to be a day of banks and financials, Alex, today, because large caps, a lot of your mid cap and small cap banks also that have reported numbers. I mean, you talk about RBL Bank, you talk about Yes Bank, all of these companies that will be in focus today.
Yeah, absolutely. In fact, let's head across, and we're going to be speaking about what our guest from Hercules Advisors, Aditya Shah, thinks about those numbers. But let's head across to Piyush just to give us a sense of how the pack as a whole has done and what his key takeaways are. Piyush, let's not go into the absolute nitty-gritties of each bank's numbers. What do you take from the whole pack?
From the whole pack, Alex, it's some banks have done better on the NIM front, and some large ones have been a bit disappointing. We'll start with HDFC Bank. You know, the bank has come out with a mixed set of results. The PAT is up 10%, essentially led by lower provision that they did in Q1. If we see, the provisions have actually come down by around 79% year on year to 3,060 crore rupees in the Q1. The net interest income of the bank, the NII, is up around 6-7% at 33,530 crore rupees. The other income of the bank is down very sharply by around 41% to 12,820 crore, essentially because of lower treasury gain, as other banks have also seen that. The biggest factor is that net interest margin of HDFC Bank has actually dropped by 12 basis points quarter on quarter to 3.26% in Q1. On the deposit front, the bank has continued growing deposits faster at 15% and advances at 12% year on year in Q1. The fresh slippages, thanks to agri portfolio seasonality effect, has gone up to 8,000 crore from 6,200 crore quarter on quarter. The management key guidance that they have given is that the NIM will improve going ahead. We have come at the bottom end. The loan growth is also expected to pick up in the coming quarters, and the CEO reappointment, that is expected in a short window, which is what the DMD, Mr. Kaizad Barucha, said. Now let's talk about ICICI Bank. My few key takeaways were that the results were expected. It was better than expectation. Further, the NII of the bank was up around 13%. Strong credit growth helped the NII to grow at the pace of 13%. Other income also saw a strong growth. They reported treasury gains, in fact, in this quarter, which not many banks have done. The NIM has gone up by around 4 basis points quarter on quarter at 4.36%, again an outlier amongst other peers. Treasury gain again saw a turnaround, like we mentioned. The asset quality remained stable, and the management expects its margin to improve a little bit going ahead in the following quarters. Now Axis Bank, mixed results on a bad foot. The PAT is up 23% year on year, but this is specially led by lower provision. The provisions have come down sharply to around 2,223 crore in Q1 versus 3,948 crore in the same period last quarter. The bank's net interest income, NII, is up around 8%, whereas other income is down around 7%. Advances of Axis rose by around advances were up 19% and deposits were up around 18% year on year. the margin, the management, the guidance that the bank has given is that, the NIM has bottomed down. From here, it will improve towards the 3.80 mark, and the bank will sustain, growth which is above industry.
Right. In fact, Piyush, thanks for that. Thanks for taking us through two of the key numbers. Let's get in Aditya Shah, founder at Hercules Advisors as well. Aditya, good morning and welcome to the show. Always a pleasure to speak to you. A whole host of banking numbers that have come in. Let's first look at HDFC versus ICICI Bank, and then we'll talk about the others as well. What do you make of the first print in terms of the way the performance has been? Because it seems ICICI somewhere is overtaking now in terms of the growth aspect.
So ICICI is not overtaking. ICICI is by a mile ahead of HDFC Bank. HDFC Bank's NIM, for all the news and for all the noise that HDFC Bank is really creating, the NIM does not seem to recover. In fact, it is at a 10-quarter low of 3.26%. I feel that the management needs to cut the noise and start focusing on the business. They need to start revving up their retail loan growth engine. On top of it, the deposit side of it also needs to improve. The LDR seems to be a big problem for HDFC Bank because the LDR is at about 98%. They cannot grow faster than the deposit growth. Deposit is a challenge for the entire industry. So from my perspective, it's been a while since the merger has really happened, and there's no sign of any recovery on HDFC Bank on the NIM side of it. Over the next 2 to 4 quarters, the management has to slowly and steadily on a right path show to the market that the NIM can recover. NIM is on a normal company, the EBITDA margin or the margin for the company. If that doesn't improve, the profitability for the bank does not improve. And that inherently means that the profit is not growing as fast as it should. So from my perspective, ICICI Bank is the true market leader. The valuation that the market is giving ICICI Bank is really correct because on top of the NIMs improving, the asset quality also improved for the ICICI Bank, which means that ICICI Bank is really growing well. So from my perspective, there's a stark divergence between those two banks, and HDFC Bank stock will only recover when the market feels that the NIM is now coming back, which is not for 2 to 4 quarters.
Okay. There is a contention that a few people have made, and good morning to you, Aditya, that it may be bottoming out. So I don't know if that's going to weigh in. Having said that, I'm wondering if you had a chance to look at some of the smaller banks as well as the NBFCs that have posted numbers. Something like a Poonawalla looked particularly good. RBL numbers looked okay, even though it was a miss on certain metrics. What do you make of them?
So as I said, a rising tide in the lending space, credit growth at about 18% for the system will lift all lenders. So Poonawalla FinCorp is going aggressive on the unsecured and the secure side of the market. So I expect them to grow. However, the valuation at about 3.5 times price to book is extremely expensive for an NBFC the size of Poonawalla FinCorp. If you look at the other banks, PNB reported good set of numbers. RBL also reported steady set of numbers. But for a company like RBL, none of these fundamentals actually matter. The new incoming investor, what do they do? The Emirates NBD, how do they change the bank? How do they change the lending standards of the bank? That will be in real focus for RBL Bank. So from my perspective, for both RBL and Yes Bank, the new investor strategy will be the key focus as of now.
And finally, Aditya, what's the call in the banking and NBFC space based on valuations as they currently stand right now? What should investors look at potentially adding to portfolios?
So ICICI Bank, I think, is the market leader. ICICI Bank will continue to do well. So that will remain a growth pick for the entire market. HDFC Bank will continue to remain a contra pick. However, HDFC Bank will take time, at least 4 to 6 quarters, to get over these NIM problems. From my perspective, Kotak Bank is also one that anyone can look at. However, Kotak needs to quicken up the process of a CEO search, so that the market has a belief that a new management has come in and they will do pretty well. So from my perspective, all of these together with the PSU Bank or SBI, they will continue to do well.
All right, Aditya, thanks so much for taking the time and pleasure speaking with you. We're to slip into a very quick break. More on the other side. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close.
Back with India Market Open right here on NDTV Profit. We are going to do a detailed conversation on all the results and the charts and the stock ideas, but quick conversation with management of Nuvoco Vistas, which has delivered a healthy first quarter with strong revenue or a decent revenue growth, I would say, EBITDA and net profit because of capacity expansion as well and stable margins. Mr. Jayakumar Krishnaswamy, Managing Director of Nuvoco Vistas, joins us right now to talk about the numbers. Thanks so much, Mr. Jayakumar, for joining in today. Could you talk about the volume growth outlook both for the industry and the company? Because I believe you expect the industry demand to grow about 7 to 9% in FY27. Would you target similar growth rate or slightly higher than that?
Fair assessment. I guess I'm looking at industry 7 to 9 and we are targeting around the same numbers. In some places we'll grow ahead. I think one or two markets are still not picking up. But all in all, I'm targeting a number in line with industry growth.
Fair call. Did Q1 shape out exactly the way you had penciled it to be? And how do you expect, therefore, the near term to be like?
I think we'll have to look at this in two parts. One is the demand and the cost side, actually. The demand side has been kind of 7 to 8% across the board. We are a predominantly east-based company. It's about 65% in east and about 35% in the rest of India. And we got very good growth in rest of India, namely in Rajasthan, Haryana, Western UP, Gujarat and Western MP. East also, we should have done much better than what we delivered in terms of volume. A couple of things which impacted the eastern markets were rake availability as well as diesel shortage in many states in east. And these two kind of demand was good, but I think almost every company had issues with rake availability because all the rakes were diverted for coal supply to the power plants because of summer months. And hence there were huge shortage of rakes for the entire cement industry. And hence I guess we also missed some volumes in east. If I have to kind of knock off the issues of rake availability, we would have got similar growth. We would have got similar growth in volumes in east as well. So that's a little bit of a downside on the east. But however, as I look at the industry in terms of demand in Q1 and the subsequent quarters, monsoon, there is obviously going to be a little bit of a tepid numbers when compared to Q1. But overall, I'm looking at Q2, Q3 and Q4, similar kind of volume growth for the industry as well as for Nuvoco. There are few markets we are very strong, namely Bihar, Bengal, Jharkhand, Chhattisgarh and Western MP, where I'm really targeting growing slightly ahead of market. But there are certain markets where we are not as strong as these markets. And hence, overall, I will mirror a industry growth of 7 to 8% for Nuvoco. But on the cost side, I think we Nuvoco did a wonderful job. I'm also looking at other companies because cement is a very simple business and almost all companies work on similar kind of cost levers actually.
Got it. Okay. Can I just come in there, sir, and just ask you, your higher EBITDA and the higher bottom line reflected, I'm guessing, resilient execution, possibly operational efficiencies as well as and prudent cost management, because not everybody's been able to do that. Did you do something extra or are these the new normal?
I think necessity is the mother of invention. In terms of what we were a few quarters ago or even a year ago, some of those things which we never challenged, we challenged in Q1. Namely, the use of pet coke at particular levels in our north plants as well as east plants. I think we totally changed the pet coke consumption by trying to substitute high cost pet coke with low ash coal, open market coal, as well as use of some better quality limestone. Net, the economics of coal cost as well as limestone cost played to the benefit, and we moved away from a company-wide about 37% pet coke consumption all the way to 27% pet coke consumption. That's a huge savings for us. Likewise, in North, where we are close to about excess of 50% pet coke, we brought it down to 40% by using domestic open market coal. In the past, moving coal from central India to Rajasthan or from eastern UP to Rajasthan was almost impossible because economics did not work out. But right now, with the prevalent prices of pet coke, we kind of moved such things and also focused on alternate fuels and kind of established a new norm in all our plants to reduce pet coke consumption and also kind of find alternate forms of fuel for our kiln. That's a big impact which we rediscovered ourselves in this quarter, which was not the norm in the previous quarters.
Got it. We'll have to call it a day right now, but look forward to this extended conversation soon as well. But thank you so much for being with us today and giving us your thoughts. Really appreciate your time. Viewers, we'll try and connect with this management again because it's just a day with so much of news flow that we can't get you this entire conversation with Nuvoco Vistas right now, but that'll happen soon. But speaking of entire conversations, I think it's so important to highlight today pre-market with oil on the boil and banking results and Reliance have come out. What could happen to the benchmark indices as well after a strong Friday close? Kush Borapara Thakkar with us in the studios. Gentlemen, both of you, thanks so much for joining in. Kush, we'll have to move straight to the markets today, slightly short of time. Strong Friday close, oil on the rise. The implied doesn't show a very sharp reaction, just about 4-5 points lower. Is it a normal day in the offing or do you expect some profit booking?
First up, a very good morning to you and to all the viewers, and congratulations, Spin, by the way.
Of course.
This was going...
Very well played.
Very well played. I feel like Paul the Octopus right now. No, but see, today was always going to be about profit booking. Now, whether it was from 24,300 or 24,500, that was the only question, right? Bulk of the gains that were to be had were actually factored in on Friday itself. Now, like I said, a day of contradictions. Nifty went on past the 24,300 resistance mark, but the mid segment was a different story altogether. Again, something that we've been speaking about for the last week or so, where there are some challenges around that space, and you want to stay nimble. The momentum indicators turned positive, bullish crossovers, but the PCR at 1.42, there is no chance that you would actually, or at least I would suggest going long at those levels. So for sure, you have to book profits today. Even if you open flattish or maybe slightly marginally higher, you have to exit. My concern right now remains in the mid segment. If you look at the Nifty mid cap 100 and the Nifty small cap 100, there is a rising trend line support which these indices are testing. Also the 20-day moving average, these supports coincide, by the way. If that's broken, the near-term trend perhaps could turn a little worse. So be a little cautious, be nimble, and as far as stock-specific action goes, you can perhaps either not trade or stay light. That's what I would suggest on the stock-specific front as well.
So do you have any picks today?
I do. I'm still going with just 2 calls instead of 3, and then even that has a short call in it. But like the ritual is, I'm going with a weekly pick being Monday. Again, if it opens in the negative, in the red, please don't go out and execute immediately, right? And that stock is Gujarat Fluoro. Again, we've done our diligence and we've done our research, but we've seen stocks behave funnily, right? There is good volume action, good price action. Even in the market like this, the stocks actually went on and moved past that resistance of 4,100. So yes, for targets of 43.30 and 45.50 with a stop loss at 39.50, Gujarat Fluoro is a long call, weekly pick. On the short side, MFSL. This one has had a terrible week, closed below the 1550 resistance mark. So on the short side, if you want to consider 1515 and 1490, these are your targets. 1560 is where you keep that stop loss.
Okay, so that's with regards to your topics. Parag bhai, I mean, we can't not talk about the banking space today, right? Yeah. I mean, how are you looking at the performance of ICICI Bank? I think hands down,
Hands down.
Hands down on the positive side. But if you have to compare it to the other private banks also, how do you see Bank Nifty performing today then?
No, it is completely hands down, as you rightly said. And if you remember the day when first business update came, Axis and all, I said that in the end, we will see that ICICI Bank will emerge as a clear winner. And by God's grace, that has exactly happened. Full marks to Sandeep Bakshi and the entire team. Superb execution. In a quarter where cost of funds was going up for everyone, and so NIM declined by as many as 12 bips for someone, for 14 bips for someone. ICICI Bank executed so well that even adjusted for tax refund, NIM was up 1 bips QOQ, 20% loan book growth, and profit before tax, excluding treasury gains, which Mr. Bakshi focuses on, was up by 20.9%. So amazing. Fee income growth was 23%, and stock still trades at 2x price to book if you adjust for subsidiary value, and the ROA was 2.49. So it has to go to 2.5 if this war situation is again bad. We are staring at oil at 90, so there might be some profit booking, but that profit booking should be used by the people who don't have. I have enough, but who don't have ICICI Bank to. I think it's the best way to play India's story, no doubt about it.
But there will be profit booking in other banks as well, right?
Yeah,
so what did you make of the others? Because none of the others showed NIM expansion. Axis, Kotak,
So
HDFC.
basically, if I remember correctly, in mid-cap private sector banks, Federal Bank showed NIM expansion of 13
no,
bips.
I was talking about the top cohort.
No, I'm saying, Axis, big fall. HDFC Bank, 12 bips was a big fall. QOQ NIM contraction. Kotak was 4.53, which optically was 12 bips down. But they said that in the base quarter, which is Q4, the number of days calculation was like that. So on a calculated NIM basis, Kotak was stable.
Okay, so that's on the NIM, but just on the final view on these banks, right? You keep frontline banks in one cohort and then all of the other smaller banks and NBFCs put together, right? You've looked at quite a few numbers over the weekend. ICICI Bank we've already spoken about. Is there anything else that you saw that was positive? Poonawalla was good.
Poonawalla, growth was fantastic, but the stock already trades at 3 times price to book. Plus, as I always keep saying, in lending business, you should restrict your growth at 30%. More than 30%, it will be very difficult to digest.
Is there anything else that you liked?
So PNB was decent because the valuations are very attractive and the NIMs have bottomed out. So PNB can go up by 2-3% today itself, in my view. Anything else? Of course, I was disappointed with Axis and HDFC.
So let me ask you this, right? You said you like PNB, ICICI clear winner. Big thumbs down, which was it? Big disappointment.
So I'll tell you, big thumbs down was Axis for sure and HDFC also for sure. Although I like HDFC, as everybody knows, but it was a disappointment that 12 bips QOQ. But the hope is that this is a bottom. That's a hope, right? That's a bottom. The hope is that August and September you will have FCNRB deposits coming in, and some situations gradually will happen that this kind of bottom NIMs, for example, just take Axis Bank has guided for 3.8% through the cycle NIM, 3.8. Today, this quarter they were at 3.46. So how can they go further down from here? Otherwise they'll miss their guidance completely. And that's what I think they said on the call, that gradually this will improve.
But a big thumbs
But
down.
that is still a hope, I would say.
Okay, yeah. So effectively your hope, you don't want to play hopes. Maybe ICICI Bank is a better way to play it right now. Okay, before we move off on maybe the chart checks for some of these banking names as well. Sumit has been waiting by, and I thought viewers are waiting by as well to hear what is it that remains the chatter on the dealing rooms. Sumit, good morning. What are you hearing?
Good morning. Firstly, it's a global spirits. Now, dealers indicate that there could be a potential fundraise announcement that could come in very soon in this counter. For GNA Axles, dealers expect a block deal by one of the promoters to happen in market. When it comes to Petronet LNG, there are sell flows on the large HNI and the PMS desk, and dealers indicate weak regasification volumes that could impact the earnings as well for Petronet LNG. For Bharat Forge, there are buy flows on the DI desk. Dealers expect strong Q1 numbers, and for Laurus Labs again there are buy flows on the lower levels on the HNI desk from earnings perspective. And lastly, when it comes to Bharti Airtel, there are some sell flows on the PMS desk because dealers are expecting a potential block deal to come in from Singtel's side post the Q1 numbers. So keep an eye out for Bharti Airtel as well in trade.
Got it. Okay. Certainly keeping an eye out for that. Bharti Airtel, let's see if there is that perceivable weakness that comes in. Actually, Kush Bora, can you come in on that? Since we're talking of large caps, Airtel, one, if indeed the charts look like there could be some downsides, and from amongst the large banks that we spoke about, right? Which one looks good on the charts? Which one looks weak on the charts?
This is where the fundamentals and the technicals are going to marry, where ICICI does actually stand out. It's actually crossed the 20, 200-day moving average, falling trendline resistance, but there is a negative divergence popping up, which is suggesting that the near-term run could perhaps be done. So if I had ICICI, yes, I would book profit today, and a re-entry point on that would be close to the 1400 mark. 1390 is the support zone, by the way. So ICICI Bank does look good. Kotak, like I've always said, not in a big favor of. So maybe if I had, I would exit right now. Bharti Airtel, now this one's building up, but the momentum's missing. The 200-day moving average at 1950 acting as a stiff resistance. So I would wait before I make any big purchases, at least from a trading perspective. Momentum indicators negative, bearish crossovers on this one. So Bharti Airtel right now from a momentum perspective, best avoided.
Okay, so that's Bharti Airtel right now. In fact, another heavyweight that we need to watch out for is Reliance Industries. The profits have gone up 23%, EBITDA up around 8% on a sequential basis. Your numbers have been in line with what the street was estimating. The retail segment growth has slowed and the overall profit has gone up 23%. JP Morgan maintains an overweight. They have a target price of 1,660. And what they've said from here, then you have Macquarie, which has maintained an outperform as well. They have a target price of 1,510. They're saying that earnings have been driven by stronger refining margins and growth in Jio. The ARPU has been slightly above expectations and the segment margins have improved as well. However, the overall margin decline is mainly on the back of the FMCG business merger that has impacted as well. In fact, in terms of upstream gas business, they've seen a higher production as well. And JioStar revenue has grown 14% with better manufacturing facility utilization. So that's what brokerages are indicating. Parag bhai, Reliance right now in terms of the way earnings have panned out and where the stock is trading at, would you still be, first, what do you make of the earnings? And two, would you be a buyer?
So basically, O2C was a good 17% jump and EBITDA across 17,000 crores in O2C. And one good thing about that is that petrochemical business, which was suffering since last 2-3 years, has finally entered into good profit zone. Because globally, a lot of capacities have shut down because of this volatility. So I would say that that is one good thing. Telecom business always remains steady and they keep on gaining subscribers. So that is steady. In the absence of tariff hike, there will not be a major surprise in telecom business. The retail part has disappointed. Retail there was a degrowth, but the company has said in its release that they are investing behind JioMart. And they want to scale it up so this is a year of investment. From next year, that will start showing good growth and they want to capture maximum value through JioMart in next 3 years. And they have also said that the retail EBITDA, they are aspiring. And their ambition is to double their retail EBITDA in 3 years, which is a very huge ambition, I would say.
Yeah, because they have consistently underperformed.
Yes, right? So let's see. That is a key monitorable. Retail will be a key monitorable for Reliance, apart from tariff hike, of course, which is okay.
But so do you give a thumbs up to these numbers and is therefore an addition to your portfolio or no?
No, I feel that I would not go buy fresh at today's price or higher than today's price. But on dips below 1300, if market is disappointed due to retail degrowth, if it dips below 1300, I would seriously consider it. We are on Friday, we came to know that promoter has also increased their stake by 0.48%. Which is around 8,500 crores. So
just to clarify, the reason you're saying you won't go and buy right now is not because of valuations, it's because expected growth.
Valuation-wise, it is attractive only. The only thing is that retail, what I'm trying to say is what market will think.
Sure.
So market can think that retail, which is a big driver of value, where they have 86% stake also. If the retail has disappointed, then what? Then that market can think, right?
Okay, so that's Reliance Industries, okay, and you said those that have disappointed you. Let me broaden the spectrum and say that based on earnings reactions, if there are any stocks that have posted numbers post-market hours on Friday that dropped very substantially, would they be on your radar? Which would those stocks be?
So in banking, clearly Federal and Indian.
Okay.
Those were the clear outliers of, like ICICI Bank. In their buckets, they posted the best numbers in banking. Then, of course, Reliance, as I said, below 1300 will be, I would seriously consider. Bajaj Auto, I'll not repeat again. Tomorrow is the result, by the way. And Bajaj Auto is, any big dip in Bajaj Auto is a buying opportunity. But at the same time, Alex, I would like to say that today GIFT Nifty is showing a very, I would say, flattish, slightly negative opening, but actually the Qs are very negative, if I would say.
Yeah, they are.
See, oil is at above 90, right? Then your results have not lived up to the expectations. So I would say that there are not many good things today in the market, frankly speaking.
There aren't. And so therefore, that's the reason, Kushbhai, you're saying that you'd be very careful in stock-specific action. But let me ask you about these banks. Since we didn't take a check of the banking pack on the technicals, right? Let's go ahead and do that. If you have an ICICI Bank, an Axis, a Kotak, HDFC Bank, let me throw in some of the smaller names as well, even the public sector bank, Punjab National Bank, Punjab and Sindh Bank, Federal Bank, and then the Poonawalla FinCorp, Reliance Industries posting numbers.
Quite a whole host of stocks, right? But let me also add one more point here. I think I missed it in the opening comments, which is the FII short positioning on index continues to hover around that 90 mark. Remember on Friday we spoke of this very same thing, which is a week prior when everything started to look good, but the only indicator, which is the FII short positioning at 90% was maintained, and then we had an announcement by Trump about the cessation of the ceasefire. That is still maintained, and I have a very keen eye on that, because FIs, for that very reason, I am assuming that they have, or perhaps they believe that geopolitical worries are not going away anytime soon, have this short positioning. While it's not reflected in the index, like I said, it started to reflect very clearly in the portfolios, and especially in the SMID segments. That is a bit of a worry, and hence my thought that stay light. Now, as far as a lot of these names go, like I said, ICICI is something where you book profit. Federal Bank, and Federal Bank, by the way, had a good run. It is above resistance zones. The move on Friday, very encouraging. I would very clearly hold this, but the trailing stop loss at 335. Indian Bank could make an up move, but then 850, that's a stiff resistance zone. So some of these banks, like I said, for most stocks today, and banks especially, today is the day for profit booking. My concerns around Reliance Industries. 1300 or 1330 to be very specific, around that October to December 2024 was the period where it had a stiff resistance and then it broke out. Right now it's still consolidating, so unless it closes comfortably above 1330, 1350 zones, I think this is a consolidation phase, but you can go long positionally, not a momentum play.
Yeah, it seems like it's opening positive though. The first ticks are in. You have the equity markets that have opened up. The pre-open session, of course, 0.2% lower for the benchmark Nifty 50. This is really par for the course, because on the one end you're seeing pressure from some of the private sector banks, but on the other end of the spectrum you're seeing Reliance Industries that's trading positive by about 1.3%, ICICI Bank that's up about 1.4%, and that's proving to be a little bit of a buffer for the fall that you're seeing in the likes of HDFC Bank, which at this moment is down as much as 3.6%. That could well settle over the course of the morning, but don't be surprised if it is a significant underperformer in trade today. It wasn't the best set of numbers. Kotak Mahindra Bank also losing about 2.5% or so. Bharti Airtel, and you had an indication of this on account of what Somit said in his Heard on the Street segment. There are sell flows that are coming through. There's some buzz of a stake sale that is brewing in that particular counter. State Bank of India losing about 0.6%. But at this moment, the big losers are in fact the three banking names. That's HDFC Bank, Kotak Mahindra Bank, and Axis Bank also losing ground. Let's see how they open up in the remainder of the session. For now, let's head across to find out what the other earnings reactions are, because it's earnings heavy this morning. We've already spoken about a host of numbers, but there are more companies to talk about. Puneet joining in to round up that list. Puneet?
Well, thank you for that. I think a host of banking names were taken by you guys, but Axis was one of them that I wanted to focus on as well, because while the business update was very strong for Q1 and you saw stock react as well, the actual numbers have come in slightly more weaker. So there has been NIM compression, and and it has been steeper than what the most analysts are also working with at this point of time. While the provisions are down by almost 37% quarter on quarter, that has boosted the operating profit as well as the net profit, which is up just 1% on a quarter-on-quarter basis. But Citi has largely maintained a buy on a counter with a target price of 1620, but mentions that the NIM compression has been much higher than they had estimated, as well as the fee growth has been much slower. The other factor highlighted that the retail growth has also been slower compared to both the corporate side of things, so that will be something to watch. Similar by Kotak as well, where they mentioned that the delivery on growth, while the visibility of NIM expansion is yet to be validated, that's one other point mentioned, so watch out for Axis today. The other one's Bansali Engineering, really strong growth numbers for this counter. Revenue is up almost 53%, EBITDA up 55%, and net profit is also up 43% in this particular quarter. Net profit has come in at 43 crores, was 65 crores versus 45 crores in the same time last year. They also have announced a 200 crore capex in this particular quarter that will be funded entirely by internal accruals, and also announced the first interim dividend for the company in this particular quarter. Inventory days though were increased in quarter 4. That will be monitorable going into quarter 2. They were high at almost 75 days, so that will be something to watch. And the final stock is Can Fin Homes, yet again a banking and a financial name where the total income was up about 7% but the net profit has actually grown by almost 19% in this quarter at 268 crores. Now, loan assets have actually grown by 11% at 42,000 odd crores, and the NIM has been at 3.81% versus 3.93 at the end of FY26. So, seen NIM compression yet again, as with other banks as well as financial companies. But Morgan Stanley has actually maintained an overweight with a target price of 1,055, where they feel that the SMA pool was largely stable on a quarter-on-quarter basis, but our valuation also offers upside given the current share price and where it is at this point of time.
Puneet, thanks so much for getting us those details. And certainly some of those stocks stand out in terms of the big gainers from the broader markets as well. Poonawalla FinCorp gaining about 3%. PNB looked okay. This was pointed out to you earlier in the day, 2% higher. Ventive Hospitality, KPR Mill, Can Fin Homes, these are some of the stocks that are gaining ground a little bit, at least at this moment. JK Cement losing about 3.5%. HFCL also losing ground. RBL Bank, on account of the contraction in its margins, is losing a little bit of ground today. So too is Nuvama, which is losing over 3% at this moment. Kunal Rambia, founder of The Street, joining us this morning. Kunal, very good morning to you, and thanks so much for taking the time. The suggestion at this moment is, because of the kind of uncertainty that's swirling, is to be a little light at the start of the week. Do you concur? And what is your view on the benchmark?
Good morning, Alex. Thanks for having me on the show. So as far as Nifty is concerned, we saw the first high of Nifty on 21st April. That was somewhere near 24,600. And since then, it's a massive curve formation which is underway. Friday's close was very, very positive. And so if Nifty closes about 24,550, I think we might see the levels of 26,000 to 26,500 on the midterm level. So Nifty, I'm extremely bullish. I'm just waiting for the breakout of 24,550. And as far as Bank Nifty is concerned, it is already much stronger than Nifty. The breakout is placed at 58,750. Any closing above 58,750 might show us the levels of 61,000 on the higher side. So extremely bullish on the formations as of now.
Okay, extremely bullish on the formation. Interesting. So if you're that constructive, Kunal, good morning, Neeraj here. What are the stocks on your radar this morning?
Morning, Neeraj bhai. So first counter is Aegis Logistics. This counter was extremely strong on Friday and the momentum was really strong. So considering that, one can go long on Aegis Logistics with the stop loss of 1280 and the targets can be 1450. The second is Bharat Forge. Again, after broader consolidation, Friday gave a very decisive closing with good volumes. So with the stop of 1240, one can go long and the targets can be 2300 and the stop loss can be 2240.
Okay, interesting. And interesting that Bharat Forge is a name on which Goldman has come out with a set of notes today, and on Bharat Forge they are neutral, but where they are constructive on are two stocks, and one of them is Craftsman Auto, where they have a buy call. Sharad Johnson with the rationale which Goldman has for, well, maybe initiating coverage or having this buy call on Craftsman. Sharad.
Well, good morning, Neeraj. Interestingly, there is an angle of data center. Also, Goldman Sachs has initiated a buy rating and the target price is 11,600. That means almost you could say 20% plus upside potential from the current prices. And the engine block specialist, the company which is then, they might benefit from the global data center build out segment and the aluminium content per vehicle. That's also expected to increase as you look at the transition happening to the EV segment. Now, the engine block business is poised to benefit from this as well, and the local for global engine theme which is there, that is where a big opportunity comes in or a growth driver also comes in. The ongoing turnaround in Sunbeam segment is also likely to support the profitability and the return ratios going ahead, and that is why Goldman Sachs is bullish on Craftsman Automation.
Starting off, thanks Sharad, thanks so much for that. Starting off okay, 1% higher. In fact, Sansera is the other one on which they have come out with a constructive view as well. Should pull up Sansera Engineering as well and see what that stock is doing, about 1.25% higher. So not a bad start for both of these. Parag bhai, any thoughts here?
I think both companies are great. They have done really well, but I'll not buy at these valuations. They have gone up too much.
They've gone up too much. Okay.
But yeah, companies are fantastic.
Companies are fantastic, but well, the fantastic companies don't necessarily make fantastic stocks, by the way. Keep that in mind. Not to say that these are not, but Parag bhai's view is that it may not be the best time to buy into any of those. 908 has settled. Let's pull up all the key names. So Reliance, ICICI Bank, HDFC Bank, Kotak Bank, Axis Bank, 5 large caps. We should try and see what they're doing. RIL, soft. ICICI Bank shouldn't be in the green, but let's wait and watch. Actually, marginally, HDFC Bank is it in the red? Very quickly, let's roll these stocks, please. HDFC Bank 3% lower. Kotak and Axis are the other two, and not a good start for either Axis or Kotak or HDFC Bank. So, dips, sharp ones at that, into a couple of them at least. Parag Thakkar, are these opportunities, or would you bide your time? There's no rush to buy into these.
Yeah, especially with geopolitical thing, whatever is happening, and oil at above 90, there is no need to rush.
To buy anything?
To buy anything. Of course, I will say that if I want to play India, I will play through ICICI Bank. That is one stock which is... So basically, from my view perspective, I am not a seller, even if ICICI Bank goes up.
That is determined.
But that is different.
So I'm asking for the other three.
Yeah. For the other three, definitely there is no need to rush in to buy. For HDFC Bank, of course, and Kotak, of course, these valuations are very, very attractive. But I would still wait.
Better opportunities down the road is what you're foreseeing.
Yeah, because right now the markets have gone up. The war has again started. Oil is again at 90. So the setup is not that great for bottom fishing.
So why buy Reliance?
No.
Below 1300.
No, I'm saying that at some valuation you have to buy, right? It's a huge.
So that valuation is not true for HDFC or Kotak right now.
I'm saying that gradually stagger it. Because the macros have worsened. So you have to keep that in mind, and it's that you are not going to get immediate gains. So you have to buy from long-term perspective in a staggered manner.
So you remember at the start of the conflict, we had asked you what percentage of your cash, if you're holding, you would deploy. If you had cash right now, what percentage would you deploy?
No, I am actually right now sitting on around...
I'm not asking about yours, Parag bhai, because you've deployed and you've spoken about where you've deployed.
Yes.
If you have cash available, should you deploy?
But in this up move of the market, some cash has been raised, and I'm planning to raise some more cash also.
Sure.
Wherever possible.
So effectively, he's not deploying.
He's not deploying, and you would not suggest deploying either.
Let's see now. Let's see. Because I feel that markets have gone up and macro situation has worsened. So there's a combination for me to be slightly on sidelines.
But I think the template is set out there. Yeah. Oil being higher, you just got to be careful about deploying too much.
At 24,200, even as we speak right now, it's not like it's reflecting what crude it was when crude was last at 90-100, right?
Yeah. So just the template is simple. Oil on the boil, the upsides are capped. Be very careful, be very nimble. And be very selective. By the way, being selective also means looking at some pockets which are actually giving some good numbers. I wanted to pull up the stock price of Tattva Chintan, and I wonder if that is reacting at all to the very good set of numbers that came out from that stock. So pull up Tattva Chintan Pharma and see if that is reacting at all to its numbers. Can we have that stock on the screen? Okay, it'll come up in a moment. But some of these chemical names are essentially giving good numbers and good build-ups too. Kush Bora, I think, had a call on Deepak Nitrite, if I'm not wrong, right? Yeah. So Kush, Tattva Chintan, Deepak Nitrite, Deepak Fertilizers, etc. How do they look on the charts?
Well, Tattva Chintan was one of the stocks that I was considering, but again, we knew there could be, this kind of an impact, so no point putting that out. Right now, if you have a position, not a bad idea to at least book partially. The structure is bullish on this one and hold the rest with the stop loss close to the 1485, 1480 zones. Deepak Nitrite had a big crack on Friday. It's continuing from there. Primary structure from a near-term perspective is still bullish. So as long as the 50-day moving average around the 1680 mark, 1675 zone is held, we'd remain constructive on this as well.
Okay, we're opening gap down, but last 40 seconds, Kunal. Quick 15-second view, one stock that we've not spoken about that you like?
I think Canterville is showing good strength in the last 15-20 days. So I think this trend might just continue. With the stop of 240, one can definitely consider this.
Kush, anything that you're spotting?
Yeah, given the texture of the day, I think, MFSL short call, I'll go with that. 15 and 1490, these are your targets, and 1560. MFSL, Max Financial.
Max Financial, not Motilal Oswal, Max Financial. Neeraj, over to you.
Okay, well, let's see how some of these stocks behave as the course of the day shapes up. But remember, we are likely to start off slightly sluggish, and some of the banking names are actually the culprit because ICICI is flat and the others have really taken a hit. Let's bring up the heat. Let's bring up the market open. 0.5% lower, and banks are the culprit here. 1.21%. It's the bank Nifty, as a result of which the Nifty is down 0.5%. The Sensex is down 0.5% as well. Market breadth is not terrible. It is essentially the large cap banking names. Bring up Nifty IT just very quickly before we get the heat map up on the screen, because IT is charting a slightly different course and negating some of the losses here. But pull up the heat map and see what HDFC, Kotak, Axis Bank are doing right at the bottom of the pile. HDFC Bank down 4%, Axis 3.5%, Kotak 2.5%. Indigo, no surprise with Brent at 90, would be correcting. Some bit of weakness in Bajaj Finance, some bit of weakness in some of these auto-related names like M&M and Maruti also. On the other side, ICICI Bank is giving that support 2% higher on a day like this. Well, the only large cap bank which had got NIM expansion with the numbers that it did versus some of the others, just charting a different course for itself. Tech Mahindra up another couple of percentage points. JSW Steel, a clutch of upgrades after their numbers. That stock is up 1.2%. Cipla, Hindalco, Wipro and Reliance, the big boys participating. Actually, it will help to pull up the point contributors because Reliance and ICICI Bank together are thwarting some of the losses that are coming in from the larger ones. Look at this HDFC Bank, 124-point contribution. Axis and M&M are the others. Just some attempt by ICICI Bank and Reliance to thwart that along with SBI. But yeah, about 40 odd points here. But yeah, a large candle, large negative point contribution by HDFC Bank. That is not looking very pretty today.
And I think that's going to be the story of the morning, Neeraj, as things stand right now, because the private sector banks really taking the cake with regard to the downticks that you're seeing on the screen. Let's take a look at the broader markets as well and see where they are. The mid-cap index and the small-cap index, pull that up on the screen. Just about flat for the mid-cap index. That's kind of reflected based on what you're seeing with regard to the market breadth in the small-cap index, just about 0.1%. So no big movers there. Pull up the sectoral heat map just to see where things are, and you will see quite a bit of red on the screen, not as much as I had thought actually. You have the pharma index, PSU banks that are doing okay, and I'd be curious to find out which ones specifically, but you have the metal index that's up about 0.9% as well. Healthcare and pharma are leading the pack though. What's not doing well is the private banking pack, no surprise there, because all of them are down in the dumps. You have the Nifty Bank as a result of the private bank move that is down about 1.4%, and Realty is losing ground about 0.8%. But remember, this is an index that has gained quite considerably in the recent past, particularly over the last few weeks. Let's talk about individual counters, jumping straight into it then. And Oberoi Realty posted its numbers. Actually looked like a pretty decent set of numbers, but the stock is losing about 2% at the start. Probably some money being taken off the table here. Let's talk about Poonawalla Fincorp. It had a pretty decent set of numbers. PAT growing by 5x on a year-on-year basis. It's up just about 0.4%. Remember that Parag Bhai, for one, believes that the lender should not be growing as fast as Poonawalla Fincorp has grown, but some other people believe that that's something to watch out for. You have several earnings reactions that are coming through, so let's pull up those numbers. You have Punjab and Sindh Bank that's up and about. RBL Bank had a contraction in its margins, not the best set of numbers. Yes Bank taking it on the chin, down about 3% or so. There's also PNB, there's Canfin Homes. PNB is looking good, and this is probably one of the reasons why you're seeing the public sector banks that are doing well this morning. Canfin Homes losing about 1% or so at this moment. JK Cement also, actually let's go to Banzali Engineering next. JK Cement is down about just a flat or so. But let's talk about India Cement. It's a turnaround quarter for this one, and Bansali Engineering. Bansali Engineering just about 0.6% higher. Pull up India Cements. Oh, this one's taken a bit of a battering. It looked like a turnaround quarter, but I think the broader questions about the input cost pressure for this pack is going to have a bearing on the results. Let's talk about Tata Power. It's gotten an order for a 324 megawatt pump storage project, not doing too much. Alembic Pharma, Natco Pharma, US FDA approval for a tablet has come through both of those stocks, particularly Natco, that is doing well in trade today. But I'm wondering, Hiral, whether you're seeing any action in the broader market to speak of, or is it primarily the frontline banking stocks that are taking the headline this morning?
That's what it seems like, right? I mean, it's a ICICI Bank, which is the top gainer on Nifty 50 versus the other private banks, which are losing out from the major ones. But in terms of broader markets, you have E-Clerks, which is slightly under pressure. Premier Energies is another one, which is down 4 to 5%. We've mentioned about the banks as well. Tips Music, that stock has been in focus as well over the last 1 week. Wabag on the back of an order win is up nearly 4% as we speak. So otherwise, nothing major that we are seeing. However, volumes have started to build up in terms of Kalyan Jewelers. That has continued, so that's interesting. Apollo Hospitals is another one that you should be watching out for as well. But clearly, I mean, it's the banks which are front line and center from here on. I think we should take this question forward with Kunal as well. Kunal, in terms of the way markets have opened right now, let's talk about the banks itself. Anything that is on your radar which could be a good momentum pick for today?
Morning, Hiran. So, as you know, you must have seen that in last 1.5 months, Nifty and Bank Nifty has been more or less into sideways consolidation itself. Look at the Bank Nifty support level, which is 57,450, and that's not broken since a month now. Though minor 1 and 2 days of ups and downs are fine. So, I think this correction seems to be like a good buying opportunity for short-term traders. I'll still stick to the banks like ICICI, which is okay to me, showing good momentum. Trailing stop loss of around 1440 can be maintained, which is today's low, or someone already holding the position can think of keeping the stop loss at 1420. The second is SBI, which we discussed last week also. I think this counter is ready for the breakout. 1055 is to be kept as a breakout level. Closing about that will open the doors till I think around 1100. So yeah, overall very bullish on these banks.
Okay. Kushbara, opening thoughts?
I think we'll watch for support levels more than anything else. If Nifty holds about 24,000, 24,100 and Bank Nifty holds above 57,300, then we'll take this as a win for today and for the next few days to come. So right now it's more about the indices holding on to these supports rather than actually building on from here.
Okay. Parag, very quickly, JSW Steel, lot of upgrades post the numbers. You've been constructive here.
Yes.
Yes. Is this something that you would add, or because the conflict is there, you would probably bide your time here too?
No. So basically, on any dip, I'll add, and I have been doing that in JSW Steel and Hindalco both. On any dips, I am a buyer.
No, my question.
Because my view is very clear. Q2 will be a softer one for all steel companies, right? Seasonally, demand is less, plus coking coal prices have gone up. From Q3, you will see a pickup. And my ultimate target for JSW Steel is that FY32, they'll do a EBITDA of about 70,000 crores. If you just give 9.5 times to that and reduce debt from it, the market cap should double from here. So market cap should double from here in 3 to 4 years in JSW Steel. Everything else remaining same because they are the most efficient converters, as I always say. They are not too much dependent upon steel price and all.
Got it. Okay. Parag Bhai, Kush Bora, Kunal Rambia, thank you so much for joining me today, gentlemen. Really, really appreciate your time. Great calling on ICICI Bank, Parag Bhai, Kush, great calling on some of the chemical names. And of course, Kunal, great calling on some of those refinery names. Let's get in. Very special guest, Tushar Bora, partner of Invexa Capital, joins in right now to talk about his thoughts on the markets and what themes is he looking out for, if at all, in the current context. Tushar, great having you. It's been a while, but thanks so much for joining in. Neeraj here. Good morning. Oil being what it is right now and the geopolitics specter being what it is right now, is it best to stay on the sidelines, wait for the dust to settle, or could this be the dust that doesn't settle for the next 6 to 9 to 12 months?
Thank you so much, Neeraj, for having me on the show. Good morning to everyone. So interesting, if you had asked this question to any market participant 3.5 months back, you would have got the same answer that it's best to be on the sidelines the first week of April. And if you see what the markets have done since then, you would have missed one of the biggest rallies in mid and small caps in select themes in that time. So there is no right answer, but what I believe has happened, the markets may have likely bottomed out for this year, sometime the last week of March. I believe that going forward, we'll continue to see bottom-up differentiation. Specific themes and stocks will continue to do well. The idea is to do your work, get the right thematic spaces, and try and identify good, safe pockets in those spaces. Pockets where earnings, momentum will relatively be strong in the near term, rather than trying to avoid the market or taking a call on the broader geopolitical variables.
Tushar, good morning. Hiral on this side. My question is, you're talking about the way broader markets and your large caps are performing as well. But if you have to look at valuations right now, in terms of Smiths, I think they're nearly at their all-time high as well. And when you talk about large caps as well, do you think then the valuations are much more attractive in the large cap space, though there is action in the small and mid cap space?
So actually, over the last 3 months, in fact, mid and small caps have materially outperformed the Nifty. And there's a good reason, because in a lot of those areas, you see incrementally the growth expectations are much better. And at least in several pockets, the valuations had corrected to quite reasonable levels. Even today, it's a large market. As an individual investor, or even for many institutions, you need only specific stocks to do really well. So I would say that you'll find those opportunities across both large and small caps. Just take as an example, large caps, a lot of interesting names, cement and steel, core economy sectors. Cement has not done anything virtually in the last 1 year. And there are a lot of good opportunities to invest out there. Likewise, if you see banks, financial institutions, large sector, almost 40% of the market weight. And there's a lot of differentiation opportunity available there. So across large as well as smaller names, you'll find your investment opportunities.
Tushar, I heard you start off this conversation saying that there is the rightful price appreciation at the mid end of the spectrum, simply because the growth looks solid there, right? Therefore, is the bias towards the non-Nifty or the non-Nifty 100 names a lot stronger than what it was before? Part one of my question is that. And because it's such a wide bucket, help us narrow it down. In that cohort as well, are you looking at smaller steel and smaller cement names? Or are there other sectors where you are a lot more confident with a, let's say, with a 1 year or a 1.5 year view? If it's even possible to take these days, considering what's happening in geopolitics.
Yeah, so in fact, cement and steel is just used as a representative example. But if you see large cap cement names, a lot of those stocks haven't done really anything in the last 1 year. When you come to banks, again, large cap private banks, there's been a significant underperformance in several names over the last several years. So incrementally, wherever you see any pocket of earnings upside in these names, or take a completely different sector, let's say consumption, the valuations have materially corrected for several consumption names, and the earnings expectations are relatively muted, quite moderate in many pockets. So wherever you see even a slight earnings surprise, you will see a material re-rating. And if the markets have to move up, obviously it will be large cap led. So from an institution standpoint, there are enough opportunities available in large caps at attractive valuations, factoring in both near-term volatility as well as medium-term growth. But from an individual investor, a lot of your audience will be retail and small PMSs. To them, I will say that you will find equally good, maybe even more attractive opportunities in the mid and small cap, even from here. So depending on what check size you have and depending on what's your horizon, opportunity across both.
Okay. Tushar, how are you looking at pharma as well? It has continued to deliver growth. In the last 1 month as well, the gains have been substantial. Do you think there is a case where the growth could continue right now in terms of pharma as well? And are there enough tailwinds if you have to actually look at the CDMO section as well?
So pharma, I think, will continue to do well. Interestingly, between IT and pharma, both being defensive, export-oriented sectors and currency beneficiaries, IT has clearly seen a sustained downside, and that leaves pharma as a major defensive sector for institutions to focus on. Earnings growth momentum is quite robust, as well as if you see the multiples were quite attractive in the larger cap pharma space, as well as in a lot of the smaller pharma companies. And that is why the last few months, last 6 months, the sector has done really well. I believe incrementally it will continue to do well from here. CDMO within pharma, specific pocket, most of those companies are attractive when you take a 5-year out view. But from a near-term earnings perspective, near-term valuations perspective, they're already quite expensive. Some of them are trading at 30, 35 times plus multiples. So here I would say that, again, bottom-up work is very important. You can't just buy any stock in the name of pharma as a theme. You need to be ready with your work. You will get market volatility. In that, you'll get the opportunity to buy. Starting from the right, the biggest companies in the sector, there is value out there. You need to be prepared with your work, now, rather than just play the theme as a broad thematic index.
Okay, so a broad theme that is being played out as well. But thank you, Tushar, for speaking to us. We would love to have a detailed discussion with you, but we will connect on another time on this one as well. But moving on, Havells India, pull up that one. A strong revenue growth is what they've seen. Input costs have been a squeeze, Alex, and I think that's the conversation we should be taking forward.
Yeah, absolutely. That's exactly the point that I want to raise with the management joining us right now. Anil Rai Gupta, Chairman and Managing Director, speaking to us on NDTV Profit. Thanks so much, Mr. Gupta, for taking the time. I do want to ask about that. Revenue growth robust, but at the same time, margins under pressure. Why is that taking place? Are you not able to pass on the input cost increases?
I think, first of all, as you rightly said, the revenue growth has been strong. If we break down our margins into contribution margins versus net EBITDA margin of the PBT, our contribution margins have been fairly stable, which actually means that despite the volatility in the raw material prices, have taken a disciplined stance to maintain the contribution margins, and having passed on in the price increases in a staggered but well calibrated way. What has affected the overall margins is the higher spends on advertising and promotion in the quarter. We do believe that it's an exercise. We see a big jump in this year because last year the season for summer products was very bad, and we took some calibrated decisions of underspending on the advertising promotion last year. So hence we see a larger growth in this year. But having said that, overall in the entire year we should be coming back to normalized A&P spends, which would mean that our net margins will also come back to normalized levels.
Interesting. Okay. The question, though, is how much did the West Asia disruption impact the switchgear business in particular? And actually, before I get to that, have you managed to pass on the entire input costs that have taken place?
So depending upon product category to category, in cables and wires, for example, the rise was the highest because of highly commoditized nature of the product. And then again, in consumer product categories, I would say on average it was 7 to 8% increase. As I said, we had taken calibrated decisions to keeping an eye on the revenue growth as well as the margins. But by the end of the first quarter, we do believe that we have been able to pass on the entire cost increase, which would mean that if the raw materials continue to remain at the same prices, that we will not require to have more price hikes in the coming quarter.
Okay, all right. So that's certainly something to look forward to. The question, though, is how much additional disruption you're going to see. In fact, let me ask you about the switchgear business, because that clearly seemed to have an impact on account of the West Asia crisis. When do you expect normalcy to come through there?
I think, if you look at our switchgear business, some part of that comes from exports to Middle East and Africa. And out of our total exports, which is still a small number, it's a reasonable part of the switchgear business. So hence the lower growth or degrowth in the exports to Middle East and Africa did impact the overall growth for the switchgear business. Having said that, I think we should be in the coming quarters, we should be able to take care of that by the domestic resilience and demand. Right now, the West Asia crisis, how it pans out, it's difficult to say. So, which means the exports can be under pressure in the coming quarters. But I think we are quite enthused by the domestic demand.
Okay. So the domestic demand is proving to be a little bit of a foil. Let me ask you about Lloyd, Mr. Gupta, because it's underperformed the RAC industry. The question is, did you lose market share? There was also this entire situation with the inventories, and for the industry as a whole, it seems to have eased out over the course of the year so far. What's the strategy that you're using now to reclaim some of that lost ground?
I think overall, if you look at the first 6 months, there were various changes which happened in the industry. First of all, in air conditioners, the B ratings changed on the 1st of January. Then post end of February, there was a lot of raw material volatility. So I would say that, despite all that, we are fairly, positive about the kind of performance that we were able to achieve in the first quarter. And as you rightly said, there was high inventory into the system, which has been cleared by the end of the first quarter. So again, going forward, we should be looking at a reasonable demand for Lloyd products.
Okay, let me also ask you about what you're witnessing so far in the first quarter. I mean, second quarter rather, early days. But do you see some element of normalcy returning, particularly in the context of the uncertain external environment?
I think, as I said, the first quarter, the demand has remained strong despite the volatility. It does impact the volume growth a bit, but the value growth has remained strong. So hopefully, if things remain very stable and there is not high level of volatility, we should be expecting a decent growth in the coming quarters as well.
Okay. On the cables and wires business, which is your largest segment, there is increased competition. It's not a new story, but I'm wondering whether there's been an impact on pricing ability, on market share. What are you experiencing right now?
I think as far as cables and wires segment is concerned, it's a bit of a long-term play for a company because there is a high level of brand association, distribution, loyalty in the channel. So I do believe that any new player coming into this segment is actually good because it organizes the industry in a much better way. There is still unorganized and regional competition in this industry. So hopefully, organized players coming into the industry is overall better for the industry. So we do believe that, having said that, our efforts towards, capacity building, towards brand building, towards distribution use will continue to remain strong so that we, not only protect our market share, but also increase our market share.
Let me ask you a broader question at the end of this conversation, Mr. Gupta, which is, as a representative of India Inc., are you facing the remainder of FY27 with the idea of having to be more nimble than you have been in the recent past? Or are you optimistic, cautiously optimistic?
Well, the fact that we are nimble and agile, that's why I'm very positive about the coming year. And that, again, as you rightly asked this question about the representative of the Indian industry, not just for Havells, but despite the crisis in the first 6 months of the calendar year, I think India Inc. has done well overall, especially the companies who are more focused on the domestic demand. So I'm very hopeful, the India Inc. should continue to do well in the coming time as well.
All right, Mr. Gupta, thank you so much for taking the time, and certainly hope that is the case. All right, let's take a look at the intraday chart for Havells. It has risen from the low point of the day, up about 1.4% at this moment, and rising in a market that's not necessarily the most conducive this morning. Hiral, it must be said. Pull up the benchmark Nifty 50 and see whether it's moved too much at this point. And one would assume that it hasn't. It is, in fact, very close to the low point of the day on account of the pressure that you're seeing in the banks. And pull up the private banking index and then the constituents of that private banking index. You'll see what I'm talking about. It is the likes of HDFC Bank, the likes of ICICI Bank even, that is trading a little bit of pressure, despite the fact that the stock is performing better than the rest of the banking pack. But HDFC Bank losing 5%.
It's quite a lot, and that's the reason why if you talk about Nifty 50 as well, we're below that 24,200 mark. So the first support level that has been broken as well right now in the first hour of trade, and now 24,100 is what the street is eyeing as well. But with that, HDFC Bank, Axis Bank, Yes Bank, Kotak Mahindra Bank, all under pressure. What's interesting is the Punjab National Bank, which is nearly 4 to 5% on an uptrend in today's day of trade, and that is again reacting on the set of numbers. Let's pull up a Federal Bank as well, because they also posted a strong set of numbers. The net interest margins trajectory with regards to where Federal Bank was very strong, and that stock, however, down almost 0.4% as we speak. The other one that we need to talk about is a JSW Steel. A steady quarter is what they've reported, with volumes rising and EBITDA surging too. Nisha joins in as well with the highlights, and the conversation with the management is what she will be taking forward. Nisha, interesting set of numbers that we've seen from a metal counter. Everyone wants to now know as to what's going to happen with the West Asia crisis as well. But from an earnings perspective, what did the quarter look like?
So two important things really, Hiral, that really played out. One is the global price support. It's a global traded commodity, and therefore the pricing has been higher because of West Asia. That anyways they had predicted and projected. The second important thing is the demand. Jayant Acharya is joining in from JSW Steel to take us through the quarter. Now, Mr. Acharya, always a pleasure speaking to you on NDTV Profit. Of course, good set of numbers, record sales numbers, backed by demand as well as pricing. Take us through the internals in terms of the key factors and the drivers in the quarter.
The quarter one has seen a very strong operational performance. India demand, I think, was one of the basic drivers. It grew at 8.3%, the steel demand, and that has driven good growth. Our capacity utilization, excluding BF3, was at 94%, and that quarter-on-quarter basis showed a volume growth of 15% on production side, while on the reported number, it's 3.3%. Our sales consolidated sales were good. We had a good mix of flats where the pricing and the demand was better. The product mix was also helped by value-added and special products, which helped the overall mix from an EBITDA point of view. The sales realization increase of about roughly 6,500 rupees quarter on quarter was offset partly by higher cost and a better mix, as I've explained. So that has played into a better result for the quarter.
All right, so good demand really playing out. And of course, you've written that autos, renewables, these are some of the segments. Tell us, where is the demand really surfacing from? Are there new areas also developing for the steel companies to take benefit from?
So first on the automotive, I think the automotive growth momentum has been really robust. Post the GST cut in September last year, auto has been on a roar, and I think it continues to do well. What we see is a very good traction in the retail on the rural side, where the consumptions of passenger vehicles, two-wheelers have started moving up. Tractor sales are seeing good traction. I think that's a very strong one on the automotive side. On the renewable side, you're right, we had the highest again quarter here. We grew at 25% quarter on quarter, YOY in the renewable space. We are expanding, as you know, we are trying to go to non-fossil fuel in JSW Steel by 2030-31. Our effort is to see that we have everything through renewable energy. So we are expanding our capacities on solar and wind ourselves. In addition to that, the renewable energy demand overall in the country, as we require more energy for our own self-reliance, I think that overall in India is growing. Our plate facility at Anjar, our coated facilities are big suppliers to the renewable space, and that is benefiting us overall.
All right, so demand is strong and coming in from new areas as well. But when we talk about pricing, there is a strong support coming in from international prices. EBITDA per ton has been very strong, 23% growth. Is this sustainable? Give us an outlook on the pricing as well.
So the prices, just to come to the price first, the steel prices started improving, if you recall, from Jan 26 onwards. Jan to March quarter, it saw increase in line with what happened globally. Part of that price increase has actually fully flowed on into the quarter 1 of this year, and that has given us the tailwind price benefit. While during the quarter, the prices did moderate, somewhat in flat, but the secondary market on longs moderated much more. In spite of that, we did deliver a good, I would say, NSR improvement on volume and mix both. Sustainability of the price, I would just like to say that the prices in India are among the lower ones if you were to compare with many other parts of the world. We feel these prices are reasonable. However, there are seasonal impacts which do come in, as we know, during the July-September monsoon quarter. We should see better traction in terms of demand and prices as we go into H2. But quarter 2 will see increased volume from JSW Steel, and that from our BF3 Vijayanagar operations and Ohio operations, that would improve our overall absolute EBITDA as we go into the next quarter. It will be very difficult to put a number to what EBITDA or what margin would come next quarter.
All right. So there has been some shutdowns also. So what has been the impact of the war so far? It has only benefited on the price front, but what about the supply chain and also the volume guidance for the next quarter?
So this quarter, actually the last few months have been impacted geopolitically, you're aware. So whatever impact has been felt with respect to supply chain, with respect to elevated cost of energy, has impacted the cost in quarter 1, and some part of that flows into quarter 2 as well. We are hopeful that the Middle East conflict will get settled soon. It's difficult to say when. It remains a key monitorable. If you go into the demand for the full year, one thing good which we see is that the IMF has projected the world economic growth in 2026 to grow at 3%, marginally 0.1%, marginally lower than what they earlier projected. So in spite of the Middle East conflict, I think that's a very resilient number, and they are forecasting that it will improve to 3.4% in calendar year 27. Therefore, I think that's why I'm saying the second half of this year, you will see more traction. We will also see a lot of reconstruction and rebuild in the world as countries recover from the war and start rebuilding infrastructure across various parts of the world. So we feel that the demand in India will be very strong. We expect about 7 to 9% growth. Our estimate is that we would have a demand close to 177 million tons, incremental 12 to 13 million tons. And with our JVML capacities fully playing out this year, BF3 Vijayanagar adding capacity, I think we are very well poised to take advantage of this demand improvement in India.
All right, so very bullish commentary when it comes to H2, but let's really focus on Q2, which is seasonally weak quarter because of monsoons. So how is the raw material prices really putting pressure, or how is the outlook looking and the prices? Give us a guidance for this particular quarter, Mr. Acharya.
So this quarter, we see coking coal prices going up by about $12 to $15 in quarter 2 versus quarter 1. That would impact cost to some extent. Coking coal prices have started lowering in the last 2 weeks or so, but major part of that benefit would flow into the subsequent quarter, in quarter 3 of this year. Iron ore prices have also started correcting, which have been elevated for some time. And that also should benefit us towards the later part of Q2 and Q3. Having said that, the impact of pricing is difficult to forecast, but there will be a seasonal impact on prices in the quarter 2. However, we expect that H2 will be very strong. Our demand growth, as I said, in India is likely to remain robust. With this, we expect stronger volumes to be able to result in higher absolute numbers in terms of EBITDA.
And you are planning to really expand at a scorching pace. GSW1 will be a slight bit of monetization. Putting all together, give us a sense on debt EBITDA and what are the numbers you'll be comfortable with the expansion plan in motion.
So net debt to EBITDA has improved now to 1.46, and we had given our comfort that we would like to be below 2.5 as we grow our capacities. We maintain that direction, and we'll be financially prudent to see that that doesn't get disturbed when we grow. Net debt has reduced to 46,000 odd crores from the last quarter. And I think our balance sheet is now quite strong to be able to take advantage of the India growth story and go on our trajectory, which we have already indicated to you. So, yeah, hoping for the best as we go ahead.
All right, all the best, Jayant Acharya. Thank you so much for joining us on NDTV Profit. All right, from one quarterly result to another, and now we are talking about Federal Bank, which reported a solid Q1 performance driven by loan growth. And we spoke to Harsh Duggar, the Executive Director of Federal Bank earlier, and to discuss about the quarterly performance. Here's an excerpt of that conversation.
So as we know, Federal Bank has posted a strong set of numbers as well. And what's interesting is the trajectory from here on. Harsh Duggar, Executive Director at Federal Bank, joins in. Mr. Duggar, welcome to the show. Always a pleasure to speak to you. You know, my question is a 15%
Good morning,
loan
and thank you,
growth.
Hiral.
Good morning.
Yeah,
a 15% loan growth in the first quarter. The question is this something which is going to be sustainable in terms of FY27? And if so, which are the segments that will actually drive this incremental growth?
Okay, so this has been a reasonably strong operating quarter for us. And just to give you a little bit of a brief background before I step down into the numbers, this was one of the best quarters in terms of net profit, which grew by 37% year on year. Our NIM grew about 39 basis points, 3.3% at this point in time. Now, when the loan growth, as you mentioned, was at about 15%, we have been guiding that we are looking at mid-teens growth for the current financial year. Some of the segments we are looking very strongly on is the commercial banking, business banking, lab, commercial vehicles, gold loans. These are the segments which we are focusing on. And they will drive the growth as well.
Okay. So you're talking about segments that will drive growth. Now, if you have to talk about the corporate credit growth as well, Mr. Duggar, that has picked up across in terms of the banking segment system, right? Are you seeing adequate risk-adjusted returns in corporates, or will the focus actually shift to retail, MSME, and business banking?
Okay, so to give you a little bit of a background, the gross assets on the corporate banking side crossed the 1 lakh crore mark this quarter, and we do expect a reasonable growth. We've been guiding mid-teens. Corporate banking will be nothing too different. Let me a word of caution over here that we do not look at growth in corporate banking alone. We look at it mixed with viability, which is NIM being protected, and an ROE which is commensurate to what we are looking at, and asset quality, which is something which we are not going to compromise on.
Okay.
So yes, on corporate banking side, we are seeing growth happening, and we are set to leverage on that as well.
Okay. And how big do you think can the gold loan business become? Because that's continued to be a strong growth engine as well. So without creating any concentration risk, how large is that portfolio being aimed at?
So as we speak, we're about 41,500 odd crores in terms of book size, growing at about 33 odd %. This is one of the, as I mentioned, this is one of the key focus areas for us to grow. And to be fair, the industry has also been growing at a significantly good pace. And we are one of the largest banks in this space among the private sector banks. And we are reasonably sure to leverage it because we have the DNA among our branches to handle gold loans. We have a reasonably wide setup of 1,650 odd branches through which we do gold loan. So gold loans is definitely going to be, and it's a segment which has low capital requirements because of gold. It has very low slippages and reasonably high operating margins over there.
Okay. Mr. Duggar, the other conversation is with regards to the net interest margins. Now, earlier, you had guided for a gradual improvement when it comes to the net interest margins as well. We're talking of a number which is 3.3% now, despite the industry-wide pressure that we've seen in terms of margins, so which is, one of the brownie points that Federal has right now. After this stronger than expected Q1, would you then upgrade the guidance with regards to your net interest margins? What is the trajectory going to look like? Because high expectations on that front.
Sometimes having a good quarter also raises the bar a little too much. But let me also tell you that we are still sticking to the same guidance. We have been guiding at 5 to 6%, 5 to 6 basis points improvement in the NIM quarter on quarter for the current financial year. But let me also caution you over here, this is not going to be necessarily sequential, and it can be non-linear. So which means there will be some quarters which will see a NIM expansion much more than what we were anticipating or planning guiding for. But over the period of year, we will be looking at 5 to 6 basis points. But let me also add, it has a positive bias to it, so we are reasonably confident about it.
Okay, so that's with regards to net interest margins. How about the CASA? We've seen an improvement to over 32%, and this is in a highly competitive deposit environment, right? So what is your plan when it comes to defending the funding cost whilst maintaining the kind of growth that one should be watching out for? Because deposit growth remains a challenge for the sector as a whole.
So the play between growth and margin will always remain. I think this is something which every bank will have to grapple with. But I do see a reasonably good growth in terms of deposits. And I don't think we as a bank would like to buy CASA. We are reasonably good in terms of what we pay. And we are not the highest paying bank for the savings account as well. So the focus will be to grow our CASA. And they are not one, but there are multiple things which we are looking at in terms of how to improve our CASA, increasing the products per customer, more digital penetration, more convenience and more products to the customer is what we are looking at. And we grew about 190 basis points in terms of what we grew the CASA at. And we are reasonably confident to maintain the trajectory. We still not at the levels which we are looking to be at over the medium term, which should be at about 35, 36%. So we are seeing a quarter-on-quarter growth in terms of CASA is what we would be guiding.
And you mentioned about the asset quality as well. And I think these are amongst the best levels in years that we've seen in terms of asset quality for a federal bank, right? So should this be viewed as a new normal? Or do you think we are at a cyclical low in terms of credit costs? How are you looking at, this entire gamut? Because there is no visible stress in the MSME and the retail portfolios as well. So which are the segments that you will monitor closely in terms of potential asset quality risk, if anything has to worsen from here on?
So our NNPA was at 18 basis points, a decadal best. Our credit cost was at 41 basis points, and we have been guiding at 50 to 60 basis points in terms of credit cost. While we are not changing our guidance, we have a positive bias, and we feel that it will be at the lower end of the guidance which we have been giving for. The segments which we feel could see a little bit of a heightened stress or where we would be kind of focusing on would be on the unsecured portfolio. Personal loan, MFI would be the very clear ones. And also the lower end of the MSME, because that tends to be the more vulnerable segment in the chain. These are the areas which we're going to be watching out for as well closely.
Okay. The other question I have is in terms of FCNRB. Now, you've not disclosed the total inflows overall. So any update that you could give us on that front? And any target you have or any challenges that you're facing? Because some bankers are also saying that inflows may be less than what the street is actually anticipating. So just to get a mood check on that front.
So okay, so let me give you a background before I give you the futuristic thing. One, we have already put the product in place. We have launched the FCNR Max, which gives us 6 quarter. And we are also offering structured and leverage products to our customer. We have launched. So the return which we are offering to the customers, we have just recently launched it, and we are obviously seeing an uptick in that part. It's too early to comment at this point of time. Yes, the industry was expecting a slightly higher inflow, but there have been challenges in terms of getting leverage for the customer because there are country risk limits as well, which is preventing banks from getting enough and adequate leverage for their customers. So this is where we are at. But like I said, we still have 2.5 months to go to see how it flows out. And industry has been guiding at about $50 billion. And we are looking to gain our fair share in that. We'll be gaining share on that as well.
Okay. My last question, Mr. Duggar, is from an investor perspective. I know you're not going to be talking about valuations, and I shouldn't be asking you that as well. But historically, our federal bank, which is traded at a discount to your larger private banks as well. So if from an investor perspective, someone has to look at the key catalyst where a federal bank could be a re-rating candidate as well, what would those 2 to 3 metrics be that investors should actually track according to you?
Okay, so the share price in the market cap is something which the market determines. We deliver on the numbers and we guide on the numbers which we are giving, and we try to strengthen our operating performance. But the numbers which obviously the industry is looking at is obviously a NIM guidance, the ROA, the credit growth and the deposit growth rates, and obviously on asset quality. These are the broad parameters which we have been kind of monitored on and looked at, and we are reasonably confident of being at the positive guidance which we have given with a positive bias to it.
Okay, so that was the management of Federal Bank. Absolutely, seeming very positive when you talk about their FY27 guidance and achieving the same as well. And clearly, from a valuation perspective, as we know that Federal is way lower or way cheaper as compared to your larger private banks as well. So that catch-up is going to be interesting to watch out for as well. But another interesting thing that you need to watch out for in terms of NDTV Profit, after a pause of 13 years, one of the most prestigious honors in Indian business is back. And this is on the 26th of July, where NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who've not just built successful businesses, but helped shape India's economic journey. Now, this is not just another awards night. The Business Leadership Awards recognize excellence that stands the test of scrutiny. In fact, the NDTV Profit Business Leadership Awards, which is slated on the 26th of July, is a night that recognizes excellence, a platform that celebrates leadership, and a showcase of the businesses shaping India's future. All of us are going to be waiting for that as well, and it's just 6 days to go for the Business Leadership Awards. So stay tuned for that. But we'll quickly slip into a short break, and lots more lined up on the other side. We'll have the management of Borosil Renewables will be joining in to discuss their quarterly earnings.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26th July.
Back with India Market Open right here on NDTV Profit. Pull up the markets, and I think, considering the fact that HDFC, Kotak, and Axis are all three in the red and by a margin, I think we're doing reasonably okay. 0.5% is something that you settle for after the kind of moves that HDFC Bank in particular is doing and trading at the low point of the day, I would presume. but what Axis and some of the others are doing as well with oil at 92. I don't think this is a bad outcome really. Let's see how it shapes up during the course of the day. But let's listen into an exclusive NDTV Profit chat with the mighty Secretary, Mr. S. Krishnan, where he explained the importance of the second phase of India's production-linked incentive scheme.
First and the most recent being the development around the cabinet approval for two schemes roughly worth 2 lakh crore rupees. The larger one being, of course, the Semicon 2.0 that has come out. Sir, talk to us about what learnings we've picked up from the first Semicon and what are we going to implement in the second iteration of this much larger scheme that the government has now come out with.
I think Semicon 1.0, the biggest success was that we were able to establish that India could be a location where advanced manufacturing can take place, particularly of semiconductors. It's the first time that in India, large-scale commercial manufacture of semiconductors is being successfully done. And that actually lends a lot of credibility for India as a location and as a destination for investments in semiconductor manufacture. I think that is significant not just for the country but for the world as such because it diversifies the supply chain. So that is the first and most important message that I would like to highlight. Further, the need to take an ecosystem-based approach to semiconductors was the other important learning. Third important learning was that, in the design-linked incentive scheme, it is essential to provide larger volume of support, not necessarily as a grant or as a subsidy, but even as investable resources. We need to crowd in more investable resources in order to enable some of these companies to really grow. Otherwise, they would just be absorbed by global entities and other companies, and therefore it's important that we provide them an opportunity to truly grow. So these were the 2 or 3 key learnings which we have brought into Semicon 2.0 in its design itself.
Okay, so that's an interesting conversation with regards to where PLI 2.0 goes and what it would actually mean for sectors as well with the meaty SECI. But moving on, after months of underperformance, now footwear companies are finally putting their best foot forward. A mix of announcements, expectations that has actually brought the sector back into focus. But the question is this rally sustainable? Because valuations are extremely expensive. Sharad joins us with more details. Sharad, an interesting one that you've prepared in terms of where the footwear space goes. It reminds me of Bollywood completely now.
Exactly. And of course, there is a saying, jute do, profit do. Why? Because of the footwear stocks. Are they ready for a good technical up move? And of course, I'm also wearing my favorite sneakers, but I'm going to give you the entire picture about where the footwear stocks are there. 5 reasons why they are rallying. The footwear stocks have risen between 5 to 20% from July lows, and after a really long time, they have become a topic of discussion. So I've dug deep into the key reasons why footwear stocks would be there in a positive momentum. Smart money, volume-based buying we saw last weekend on Thursday and Friday. GST rate cut benefits might start playing out now, especially on the footwear side. Looking at the Q1 numbers, a strong Q1 is expected, and I'll give you the reasons in a while. Also, there are 2 other reasons you should note. DPIIT has extended the legacy stock clearance time. That's positive for the footwear stocks. And of course, there is a technical reversal at play and benefits of tariffs also coming in. So these are the 5 reasons which you should be focusing on. But how does the valuation stacks? Bata is at 52 times, Metro Brand still expensive, almost 74 times. Relaxo and Campus also is there, where the focus is there. Apart from the valuations, let's look at how the movement has happened of the stocks, and we see largely good up move has happened from the last weekend, and these are the numbers. Look at Relaxo Footwear, that is up almost 21%. So definitely the interest is there in this street for footwear stocks. Apart from this, apart from the moves and the valuations, the Q1 expectation, this is very much important. The demand remains healthy here, and Adhik Maas impact especially happened for apparels, not so much for footwear. There's a continued premiumization at play leading to a margin expansion. That is where the street is bullish on, especially on the higher average selling prices. Calibrated price hikes are already taken, and the expansion across the retail and the digital channels, that's where the strategy is also moving for the larger footwear players. So that is why street is quite bullish in this theme, and after a really long time. But remember, there are some risks also. more competition, there's a changing trends and preferences. If you look at it, valuations are still frothy and store expansion may still put in pressure on the financials as a whole. So this is the entire picture for the footwear stocks, and who knows, there might be a good technical reversal at play.
Let's wait and watch. Thanks so much for that, Sharad. Well, if a football World Cup can do something to footwear and sneakers, let's wait and watch. But speaking of results, Borosil Renewables delivered a strong quarter, returning to profitability or showing profitability in this quarter, if you will. Stronger realization, sharp margin expansion led by price hikes, presumably, and fresh capacity coming on stream as well. Let's get in the management to speak about what is slated up ahead. Mr. Pradeep Kumar Kheruka, Chairman of Borosil Renewables, with us on the show. Thanks, Mr. Kheruka. Thanks so much for joining in. How would you put the quarter into perspective, considering that the sector is going through a series of developments, which to somebody who's analyzing the sector makes predicting or forecasting what happens in the next 1 year extremely difficult. So in light of that, how would you say FY27 has started off for you?
FY27 has started well on a strong note, I would say. The government policy is very strongly pro-renewables, and they are welcoming people into setting up renewable capacities of their own. Our own company, Borosil Renewables, for instance, in the first quarter of this year, 93% of our electrical energy has been met from renewable sources. We ourselves are on renewable sources. And this is a story being repeated across industry around the country. And so therefore, quite in addition to what the government is doing in terms of adding capacity to the grid, these are private players who emerge and certainly want to set up their own renewable energy. And all of this is pointing to a very strong sentiment in the market. We have, of course, been at full production. The prices have stabilized. We have had, of course, a few ups and downs in the quarter because of prices of oil and gas fluctuating. But that's all, I suppose, par for the course, because we do have, there's uncertainty in every breath that we take, and we cannot be an exception to this universal rule. So yes, the portents are very good.
Okay, so Mr. Kheruka, good morning. This is Hiral on this side. A two-part question that I have is the revenue growth that you've seen, how much of it is driven by, say, realizations versus the volume growth, number one? And two, the margins have been on the stronger side for several quarters now. So is this going to be sustainable if solar glass prices soften in the coming quarters?
So the way the outlook seems to be today is that the demand remains very strong. That's one. Secondly, we have an anti-dumping duty in place, which is very much there, and so therefore prices appear to be fairly stable so far as import prices are concerned. The only the only shadow, as it were, was there's been a policy announcement recently which had made it mandatory for module manufacturers to use domestic cells, and there was a bit of a shortage of domestic cells. So some manufacturers of modules had cut back, but this does not affect us because what is being cut back is imports and not domestic production. So we continue to sell, but this is only to give you a complete picture. So I'm told that there's going to be some rethink on this policy, and there might be an extension of 6 months. I'm referring now to cells. So far as glass is concerned, of course, there is the prices seem stable, the supply is stable. We see new manufacturers coming into the fray during the next half of the year, which is from July to December. And we do expect that most of this glass will be used by them for their own self-consumption, except for Vishakha Glass, who will be supplying it to the market partly and partly for consumption by their partner. So all the portents are very good.
Mr. Kheruka, sorry, just on that, because we're going to be talking to Wari and then Premier immediately after your conversation as well. This ALMM2 extension, the management seem to believe that because some of the capacities, and because the extension is just for 6 months, the existing capacities having booked, it is not a big hit per se. I was thinking that the government would give an extension for making a difference to the situation as it stands right now, right? What are your views on that development?
My views are that the government has eased the situation for module manufacturers. And this extension will help them to make sure that the tempo of module production is not lost. That's how I understand it. So I have to study it in detail. I do not see that this is in any way an adverse thing. It's just good for the whole industry. That's how I see it. And of course, as soon as more capacity of domestic cells is available in the market, because it's not just enough to say that we've started production. It's important that the quality being produced is up to the demand of the customers. So yeah, that is what it is.
Mr. Kheruka, talk to us about that capacity expansion, because you've lined up 950 crore rupees to expand that capacity. What is the kind of return that you're expecting on this? You must have a benchmark for that. And how much of the new capacity is already backed up by customer demand and visibility of orders?
There is plenty of demand. So in terms of the new capacity coming up, there is no question of having to sort of having to negotiate with anybody or having to pre-sell it to anybody. We will do that as a matter of good governance. But I'm sorry that I'm sure that that is never going to be a problem for the new capacity. Regarding margins, the margins should be good, similar to what we have now, and we should have no problem with that at all. So similar margins.
So as I understand it, by December 2026, we're talking about a full commissioning, right? And so as things stand right now, based on what you have, what is the utilization and where do you anticipate taking it to the end by the end of the financial year?
Well, actually, December 26 is more an internal kind of a benchmark. But as far as publicly, we have mentioned that we should be having lit up both furnaces by the end of this financial year, which is March 27. So by March 27, both the furnaces should have been lit up. And once they are lit up, the protocol is to say that there will be a gradual ramp up of capacity. The practice has been that the ramp up of capacity has been quite rapid. And we may very well be in full production of 300 tons per day from each of the furnaces in the first quarter of the next financial year, which is April to June 27.
Mr. Kheruka, my question to you is, we're talking about higher realizations, we're talking about volume growth, we're talking about volume growth coming in from new capacities as well, and there is industry policy support that is coming your way.
Yeah.
If FY27 turns out to be a record year for Borosil Renewables, what are the key drivers out of these that you will be watching out for? And two, for the growth that you need to achieve, is there any further fundraise that you will look at over the next 12 to 18 months? Because you've already raised funds, you've already expanded by now.
So we do not expect any further fundraise for sure. And if things go according to plan, we should have a good next year. And there is everything is looking good. The only thing that remains to be done is to see what next for the company, which we feel is a bit premature now. And when we get into production, I think we will devote our full energy into that. But we do like to take it easy. We like to make sure that we consolidate expansion. We have expanded a lot in the last few years. And it's very important that we consolidate. We should be able to manufacture the entire quantity properly and with good governance. So that's very important for us.
Okay. Mr. Kheruka, just 10 seconds though, if you can. Are you at any point of time thinking of selling some part or some of the promoter's stake to a third party now or in the next 12 months?
I've been advised to say no comment to that by my people.
The street may take it differently, Mr. Kheruka, because if a promoter is not wanting to sell, the promoter will say a categorical no.
Yeah. Well, this is what I've been advised. My real feelings are not being expressed here.
All the best. All the best, Mr.
All the
Khurka.
best,
Thank you
Mr.
so much for
Khurka.
joining today and giving us your thoughts. Well, interesting answer.
Yeah.
But great. I mean, good path to FY27. Let's see. But in fact, as he invoked a particular part of that conversation, which is around the ALMM2 extension, Wari is in focus. It's commissioned a best container facility, and also the ALMM2 exemptions hurt the stock, but it's recovered a little bit of lost ground right now. Before we bring in the management chat, let's get in a quick perspective from Varsha. Varsha.
Well, thank you so much for that. They've started. There are two news, of course, floating around. One is they've started BESS container manufacturing facility, which marks first milestone in its 20 gigawatt energy storage roadmap, and this is part of Wari Energy strategies to build a domestic storage ecosystem. The container facility capacity is around 5.15 gigawatt hours, which has been upgraded from originally planned at 3.5 gigawatt hour. This is all about battery energy storage system. But the other news which is in focus is extension of ALMM part 2. Now MNRE has extended ALMM 2 exemption till December 31st 2026 from May 31st 2026, and there is no blanket extension for all solar projects. Overall ALMM policy remains unchanged. And now why the extension? Because domestic solar cell supply is still insufficient and helps avoid project delays and cost escalation, and hence you're seeing Wari Energies, Premier Energies, all the cells and module manufacturers having an impact when it comes to their stock price.
First the industry news, then the company news, Abhishek. I want to start off with this ALMM2 developments that have happened. This extension that is given, the belief on the street is that if this extension would not have come, and therefore the guidelines would have come in, it would have been beneficial for companies like yours and some of the others in margins for this intermediate period of 6 months, which is July to December. Now that it's been extended till December, maybe for FY27, basis the estimates that people had, there might be a bit of a margin hit. Would that be a fair assessment?
First of all, good morning and thank you so much for having me on the show. On the extension of ALMM, I think to understand this, we have to first see which framework has been approved under the extension notification day before. The current extension only circumvents around the C&I demand, the very limited next 6 months window for those projects which are either captive or which have some few connectivity approvals. So it's not a blanket approval, first of all. It does not extend to all the projects unanimously. It just extends to the particular window. Second, in terms of the impact on Wari, if you look at our total capacity of manufacturing of modules, right now it stands at around 25 gigawatt. 24 gigawatt is in India and the rest is in the US. Against this, our cell capacity today is 5.4 gigawatt. While we are adding another 10 gigawatt of cell capacity over next 6 months of time, but it will take another 5-6 months of time for that.
तो बहुत ही प्रोडक्टिव होते हैं और दोनों को प्रोडक्टिव होते हैं तो देश का कल्याण होता है, जीव मात्र का कल्याण होता है। और इसलिए हम यही प्रार्थना करते हैं कि मॉनसून भी प्रोएक्टिव रहे, मॉनसून सत्र भी प्रोडक्टिव रहे। साथियों, पिछले 1 महीने में देश ने अनेक सिद्धियां प्राप्त की है और देशवासी गर्व से भर जाएं, इस प्रकार की सिद्धियों का सिलसिला चला है। चाहे राष्ट्रीय हो, अंतर्राष्ट्रीय हो और अब तो अंतरिक्ष भी हो। एक प्रकार से भारत के लिए गर्व के पल रहे हैं। पिछले वर्ष मॉनसून सत्र के ठीक पहले भारतीय नागरिक इंटरनेशनल स्पेस स्टेशन पर पहुंचा था और कल ही परसों भारत का एक युवा स्टार्टअप, उसने बहुत बड़ी सिद्धि प्राप्त की है। विश्व के कम ही देश हैं जहां इस प्रकार से प्राइवेट साहस हुए हैं और भारत के युवाओं ने अंतरिक्ष में नई उड़ान भरी है। बहुत बड़ी सफलता है। और ये जो स्काईरूट स्टार्टअप है, उसमें जो नौजवान काम कर रहे हैं, मुझे बताया गया उनकी पूरी टीम की जो एवरेज एज है वो सिर्फ 28 साल है। ऐसे नौजवानों ने ये काम करके दिखाया है। मैं किसी 56 साल के नौजवान की बात नहीं कर रहा हूं। मैं देश के ये स्टार्टअप ने 28 के एवरेज वाले नौजवानों ने अंतरिक्ष में भारत का झंडा गाड़ दिया है। उनको तो बधाई है ही है, लेकिन ऐसी बातें जो हैं जो भारत को आत्मविश्वास से भर देती है। विश्व में भारत का प्रोफाइल सर्वमान्य सर्वस्वीकृत बनता जाता है। साथियों, ये संयोग नहीं, ये एक संदेश है और बड़ा मजबूत संदेश है कि हमारे देश के युवाओं की क्षमता और उनकी आकांक्षा अंतरिक्ष जितनी असीम है, इससे बड़ा संदेश देश के लिए कोई और प्रेरणा नहीं दे सकता है। साथियों, जो रिफॉर्म एक्सप्रेस पर सवार होकर के आज देश चल पड़ा है, उसी का नतीजा है कि भारत के नौजवान इतना बड़ा साहस कर पाते हैं और सफल भी हो रहे हैं। साथियों, पिछले दिनों राजस्थान में बहुत बड़ी ऑयल रिफाइनरी देश को समर्पित की गई। पिछले कुछ सप्ताह पहले एक सेमीकंडक्टर प्लांट यानी तीसरा देश को समर्पित किया गया। अभी कुछ दिन पहले ग्रीन हाइड्रोजन से चलने वाली ट्रेन, और विश्व में बहुत कम देश ऐसे हैं कि जिनके पास ये सुविधा है, लेकिन भारत ने जो हाइड्रोजन ट्रेन देशवासियों को समर्पित की है, वो सबसे ताकतवर इंजन वाली है और सबसे लंबी है। ये अपने आप में भारत के वैज्ञानिक, भारत के इंजीनियर्स, भारत के इनोवेटर्स, भारत के उद्यमी, भारत के श्रमिक, ये जो एक लक्ष्य लेकर के देश के लिए जी रहे हैं, देश के लिए काम कर रहे हैं, उसी का परिणाम है। साथियों, हम भली भांति जानते हैं और पूरी दुनिया चिंतित भी है, लगातार कहीं न कहीं युद्ध की स्थितियां बनती रही है। पश्चिम एशिया के युद्ध के कारण भारत जैसे देश जो एनर्जी के लिए औरों पर डिपेंडेंट है, उनके लिए ये पश्चिम एशिया का युद्ध एक बहुत ही बड़ा संकट का कारण रहा। पेट्रोल, डीजल, एलपीजी, फर्टिलाइजर, केमिकल्स, यानी हर विषय में अनेक बाधाएं, अनेक संकट आए। उसके बावजूद भी भारत 7.7% के ग्रोथ से दुनिया की मेजर इकोनॉमी में सबसे तेज गति से आगे बढ़ने वाला देश बन के रहा। ये भारत के सामर्थ्य का परिचायक है। भारत किस प्रकार से उत्साह और उमंग के साथ नई ऊंचाइयों को पार करना चाहता है, उसकी इसमें एक झलक है। और ऐसे में जब ये मॉनसून सत्र आरंभ हो रहा है, देश ने स्पीड पकड़ ली है और संसद का स्पिरिट उस स्पीड में नई ऊर्जा भर सकता है। सकारात्मक स्पिरिट राष्ट्र के लक्ष्यों को प्राप्त करने के लिए बहुत आवश्यक होता है। हमारे सदन में बहुत अनुभवी सांसद भी है, दल उनका कोई भी हो, लेकिन उनके पास एक लंबा अनुभव है। ऐसे समय में उनके अनुभव की, उनके ज्ञान की संसद को भी जरूरत है, देश को भी जरूरत है। आज इसके लिए संसद का चलना, सार्थक चर्चा होना, मिलजुल करके देश को आगे ले जाने के संकल्प लेना, ये मैं समझता हूं कि बहुत ही समय की मांग है। एस्पिरेशन से भरे हुए देश के युवाओं की मांग है कि हम आगे बढ़े। आज समय की मांग है कि राष्ट्र निष्ठा से भरे हुए, राष्ट्र भक्ति के लिए जी रहे आवाज को सदन में उचित मंच मिलता रहे, वे अपनी आवाज को बुलंद करे, देश को दिशा दे। और इसलिए मैं आशा करता हूं और मुझे पक्का विश्वास है, जहां तथ्य होते हैं, जहां तर्क होते हैं, वहां तूफान के लिए जगह नहीं होती है। अगर तर्क मजबूत है, तथ्य मजबूत है, तो शांत चित्त से भी अपनी आवाज को बुलंद बनाया जा सकता है। मैं आशा करता हूं तर्क और तथ्य के साथ सदन की चर्चा को समृद्ध किया जाए, हर आवाज को अवसर मिले, हर विचार को सम्मान मिले। ये संसद की हमारी भूमिका है। मैं सभी सांसदों से बढ़ चढ़ करके इस सदन में हिस्सा लेने के लिए निमंत्रित करता हूं। आज सुबह स्पीकर महोदय जी ने भी सोशल मीडिया के माध्यम से देश के सांसदों का स्वागत करने के अपने भाव को व्यक्त किया है। मैं भी उसमें अपना स्वर मिलाता हूं। आप सबका बहुत बहुत धन्यवाद। नमस्कार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in
across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
And we need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from me, Sharad Dubey. And let's take a look at the top headlines. Bitcoin above the support levels of $64,500 levels on consolidation. US Bitcoin ETFs extend inflow streak, adding almost $136 million of inflows. And South Korea proposes classifying crypto in national assets. Lastly, SFTC Chair Mike Selig says US has become global crypto capital. Looking at the Bitcoin levels, there is a support coming in of almost $64,500 on the consolidation. Now, range-bound move is expected as the geopolitical tensions continue to rise, but there is a little rotation happening from the Bitcoins to the altcoins, which is underway right now. The US Bitcoin ETFs have extended their inflow streak. BlackRock's iShares Bitcoin Trust EBIT ETF has posted net creations. Now that's attracting roughly $136 million of inflows, and the Bitcoin ETF assets have risen about $77.7 billion. Also, South Korea's proposed National Asset Basic Law would formally recognize the virtual assets. This includes, of course, crypto as national assets. Now, with this, there is a real impact contingent on legislative approval and detailed implementation. This also provides better regulatory clarity for the crypto investors. And lastly, Commodity Futures Trading Commission, which is called CFTC in crypto parlance, the chairperson Mike Selig has stated that the United States has become the global crypto capital just 1 year after the Genius Act. Now, the Genius Act is nothing but guiding and establishing National Innovation for US Stablecoins Act, now which has become a law last year. He credited US President Donald Trump and Senator Bill Hagerty for leadership that helped achieve this goal. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. Largely, if you look at it, there is a minor correction in Bitcoin, but the money or the volumes have shifted to the other coins, altcoins also. This includes Ethereum, Solana, Tron, slightly up going ahead, but a very tight support and resistance range between that $63,000 to $66,000 mark when it comes to Bitcoin. Now let's look at the crypto strategy for the day. Here's what's there to keep in mind for you. The sentiment is shifting from fear to optimism, but it's going to be a range-bound reaction, especially for Bitcoin, because we are seeing some movement happening in the altcoins, the range which we discussed between that $63,000 to $66,000. But remember, there are two triggers which you should be tracking. The first is the geopolitical tensions, how that is developing, and the Clarity Act. That also remains a key trigger. Now, the rise in the open interest, if and when it happens, they may trigger a fresh breakout going ahead as well, because the ETF flow support is there right now in Bitcoin as well. So as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumit Sarkar. And over the next hour or so, we'll try and solve all those stock-related queries. To do, start sending them in on the numbers that are flashing on the top of your screen right now. You can also call us, speak to our guest on those stock-related queries as well. The landline number for that is flashing up there too. But as we go through the day, you've seen two bouts on the Nifty 50 of buying from the lows, and that's something that we'll continue to monitor as we are almost 100 points down on the index today. If you also look at the heat map, it's largely dominated by the banking names as well. So pull up the heat map there, and HDFC Bank as well as Kotak Mahindra Bank and Axis Bank, those are the three ones that are the top losers for today on the back of quarterly results. You had ICICI as one of the top gainers at the start of the trading session, but that has also fizzled out. So Trent, NTPC and JSW Steel are the ones that are doing well in trade. In terms of the sectoral heat map though, the Bank Nifty and the Nifty Bank, Private Financial Banking Index, the PSU Banking Index, all three will be in focus today. And we monitor all of those. You're seeing the downtick on the Private Bank Index down 2.2%. The Nifty Bank down 1.3% at this point of time, and you're seeing a big move with the PSU Banking Index as the top gainer for trade. So you're seeing that divergence between all of the private as well as the public sector banks today. The advanced decline ratio is the other interesting one. Over the last week or so, has been converging, and largely the declines have been, having a bigger impact compared to the advances. Today as well, they have converged through, but the advances at this point of time is at the top right now. And in terms of the final individual names as well, the BSE 500, there too you're seeing some moves coming through on the BSE 500, but in terms of Aegis Logistics, that's up 5.5%, Supreme Petro, GE Shipping, some of the other ones that are doing well. But in terms of the losers, you're seeing that impact on the banking names, and India Cement, that's also reacting on the back of results as well. You have the big Ultratech numbers coming in today, so that will be in focus as well. But let's welcome in our guest now, Gaurav Sharma, Vice President and Head of Research at Globe Capital, and Saurabh Jain, Equity Head Research at SMC Global Security, joining in as well. Gentlemen, both of you, thanks so much for joining in. And the first query, and a lot of those which are coming in on result reaction today, this one's coming in on Reliance. Sunil from Vizag is holding shares at 1300 and wants to know what he should do with his almost 100 shares that he's holding. Can he continue to hold for the long term? Saurabh, good morning. What did you make of the results? Because largely a good set of numbers, right? And we've seen that the stock react as well. Should he continue to hold?
Good morning, Puneet. Good morning, Mark. See, in my opinion, I think Reliance it makes sense to hold Reliance because, the results were better than the expectations. Some segments have grown above expectation. It is the first time that the Reliance has clocked more than 3 lakh crore in quarterly revenue. As far as valuation is considered, it is trading at the lower end, in my opinion. And I think from the long-term perspective, I think things will move, up in various segments. So as of now, it is under pressure. But for the long term, I think it is a hold.
The next query is coming in from Madhav. It's on Union Bank. He's holding 1,928 shares, bought at a price of 172.16. Can he hold for short term? Gaurav, any view on this?
Hi, Soumit. A very good morning to you. Yes, he can hold on to the position. PSU banks are performing well. Union Bank has posted good set of numbers, so have PNB. It has actually set the tone. Further up move towards 178 in the immediate near term, followed by 185 odd levels can be expected for Union Bank.
Got that view, Gaurav, but and welcome to the show. The next question coming in, and this one's on the other banking name, right? HDFC Bank stocks are down almost 4% today. A viewer is asking, if it's a good time to average out. He's holding shares at 745, asking, and this is Sanjay from Bengaluru. Saurabh, the results definitely disappointed the street, but would you recommend, Sanjay, if firstly he should add more shares, and if this is a good time, because we've seen that consolidation for a really long time at that 740 odd level. So do you think if it's a good time to add more if someone wants to add, or should he wait for some further correction?
I think it will take bank will take some more time, maybe few quarters to claw back to its historical, normal net interest margin. And in fact, the business growth is even weaker than the industry growth and than its peers. If you look at the Axis Bank, ICICI Bank, the business growth was quite better as compared to the HDFC Bank. Since holding HDFC Bank, I will not recommend to add more, but certainly private bank space looks good to me, and in that space I would recommend him to add ICICI Bank in his portfolio.
Next query is coming in from Saurabh. It's on delivery. He's holding a few shares of delivery bought at a price of 787. He wants to know the target for the next few days. The buying price seems to be quite high compared to the current market price here. Gaurav, any view here?
So, Amit, a bit of reversal is likely in the stock. It has corrected reasonably from its recent peak of 524. So, a reversal toward 500, 510 can be expected in the immediate near term. As the query is just limited for a couple of days, I think 505 to 510 is the upside target that I'm eyeing at. Stop loss should be maintained at 465.
65 on delivery, got that view. But let's also take our first caller for today. This one's from Hyderabad. Chaitra has a stock query fast. Chaitra, good morning. What's your query?
Hello.
Yeah, hi Chaitra. We can hear you. Go ahead.
Yeah. Hi, Puneet. Good morning. My query is regarding the Aether Energy.
Okay.
I'm holding 40 shares at an average price of 986. I partially booked some profit recently. I'm holding the rest of them. I want to know whether I can add more at these levels or should I hold it at simply like that.
Got it, Chaitra. Firstly, a good one, Chaitra, and congratulations for buying it. The trade was Saurabh. Would you recommend adding more at the current valuation? I think stocks up almost 3-4 times from its IPO price in just the last year or so. Would you recommend that, or should Chaitra just continue to hold her 40 shares?
See, if you look at the financials, the company is still bleeding. I mean, the company is in net loss, and if you sees the valuation, I think it is close, trading close to 20 times to book value. And with 50,000 odd market cap, 1,000 crore of revenue, I think it is, frankly speaking, it is too expensive. And even if the things are going to not turn around for the company, then also, in my opinion, I think the stock price are already reflecting the future forward earnings. So in my opinion, I think it is the best time to take some money off the table rather than investing more.
Next query is coming in from Ram from Hyderabad. It's on Kotak Mahindra Bank. He's holding shares of 150 shares at 349 price. Should he hold or exit? Saurabh, any view on Kotak Mahindra Bank?
There's been a pressure on the net interest margin, as we have seen after the quarterly earnings, and that is what happened with the Axis Bank too. Market is probably looking how this net interest margin correction can be, gets corrected in the future, and that is the reaction which is coming in today. I think the best place to hide in the private space looks to me is ICICI Bank only. In my opinion, I think if you want to invest, go with ICICI.
It's been something I've been recommending on the show as well, Saurabh, for a while now, and definitely good set of earnings for the company. You're seeing again a 1% uptake on the counter now, so that continues to be buying from the lows. But the next question is on Techno Electric. Our viewers holding shares at 1183, holding 50 odd shares. Saurabh, largely post quarter four, stock's been in this range after that big fall. Should Harish continue to hold, and what can he expect from this quarter?
I think it is good to wait for this quarterly earnings, and after the correction in the last few quarters, now the stock is trading around 2 times to book value and 24 times to trailing earnings. I think it is good to, because it is an interesting space, I think, and it is a very old company. They have the management, and the company has many a times have beaten the expectations on the earning sides. I think after taking cognizance of the June quarter earnings, then take a call.
The next query is coming in. Okay. The next is a caller query coming in from Andhra Pradesh. Mahesh, you can go ahead and ask your query.
Okay. Actually, I bought Kalyan Jewellers stocks
at the price of 524.
Okay.
3,200 quantity. Can I hold or can I exit, or is there anything else? Please let me know.
Mahesh, for short term or long term?
For short term, it's 6 months.
Okay. Gaurav, any view on Kalyan Jewellers from next 6 months perspective?
The stock has rallied too very much in a very short span of time. First of all, he should take some profits off the table as he's having reasonable quantity and he's making some decent profits as well. For the remaining, it is better to hold on with a stop at 520 and look for targets closer to somewhere close to 610.
610, got it. Well, the next counter that's in focus is Biocon. Venkat, who's from Hyderabad, wants to buy into this counter. Gaurav, I'll stick with you because, after a really long time, we've seen that 400 rupee mark being breached. Is this move expected to continue? How are you looking at the stock now?
It is pretty much likely that the stock would perform better now. A long consolidation seems to be ending, and for the better only. It has posted a fresh round of a breakout. It is better to hold on to the long position. Do take a stop at 420 for a shorter term basis. If our viewer can hold it for a little longer, I think this stock has a reasonable potential to even surpass 475, 480 zone.
Right, the next query is on Infosys. Murthy from Bangalore has bought 100 shares at a price of 1,130. Saurabh, should he continue to hold this counter for long term?
I think difficult to take a call on the Infosys, but yes, some companies have surprised positively in the IT space, though we are underweight and we are not recommending as such to invest in the IT space. But since if you wish to invest, I think HCL Tech and Tech Mahindra are the two stocks which we like.
You also have earnings from Infosys this week, and it's going to be a crucial one, definitely in terms of numbers, also in terms of commentary too. So a good reaction on Tech Mahindra post results, but that's something to watch, as Saurabh mentioned as well. But Ashok Pai from Mangalore wants a short-term view on Medi Assist Healthcare. If you can pull up that counter, and Gaurav, what are you looking at this point of time, right? Because we've seen a sideways consolidation over this past month as well as the year. It's almost down 22%. But is there any up move visible in sight?
I still don't see any comfort in this stock. Very rightly said, it is trading sideways from quite some time now. Lackluster moves, indecisive candlesticks, no strength at all. I'll rather prefer taking a bet once the stock surpasses 400, 410 zone. Then only it will hit the breakout mark and a potential up move towards 450, 460 odd levels is possible. Until then, it is a clear-cut avoid from my side.
Next query is from Pravin from Pune. He is holding 2,400 shares of Indian Oil Corporation, that is IOCL, bought at an average price of 90 rupees. What's the view for the next 1 year on this counter, Saurabh? Indian Oil Corporation, should he continue to hold or book profits?
See, the way geopolitics situation is planning out and the crude has already started moving up close to $90, and seems this will be a longer battle. Initially, when it started in the month, towards the end of February, it was perceived it will go for 6 weeks or 8 weeks. Now we are seeing what is happening. I think the higher crude prices will be detrimental for companies like IOC because of the cost burden. So in my opinion, I think he has invested at a good price. Better take money off the table.
Got that view. But viewers as well as Saurabh and Gaurav, let's start the rapid fire round on this edition of the show. You both know the drill. The first question on Patanjali. Nala Murthy has been holding since the IPO at 156 odd. Saurabh, given what we've seen in terms of volatility, would you recommend him to exit or should he continue to hold?
Since he's a long-term investor, I will recommend to hold.
Next query is for you, Gaurav. It's on GAIL. Chetan wants to know the short-term view on GAIL. He's holding 105 shares, bought at a price of 189.
Hold GAIL with a stop at 165. Look for targets close to 180, 185 zone.
Also on MCX, Gaurav, a viewer, Srinivas has bought these shares at 2,900 odd, asking a 6 to 9 month view for his 500 shares.
Utilize any dip to add position till the point stock is holding above 2400 levels. It is in a sweeter spot. As of now, it is a clear cut hold.
The next query is for you, Saurabh. It's on Bharat Dynamics. Lalita from Chennai is holding 450 shares, bought at a price of 450 rupees. Should she continue to hold or sell?
If you are for long term, keep on holding.
The next one's from Murthy from Vizag. He wants to enter JK Tyres for the long term. Saurabh, should he wait for quarter 1 results? We've seen, CAT reacting very negatively to those earnings misses. What's your view?
Absolutely right. Cost pressure will be same. Better to wait.
The next query is for you, Saurabh. It's on ITC Hotel. Suman from Kolkata is holding 401 shares, bought at an average price of 177. Should he exit or hold for long term?
Hold for long term.
The next one's on HG Infra. Raja has actually bought it at very elevated levels at 1488. So he's sitting on massive losses. Saurabh, should he just continue to hold right now or average down?
Don't average, but hold.
The next query is for you, Gaurav. It's on Axis Bank. Amrut wants to know whether should he buy Axis Bank at current levels?
Better to wait for some more time. Further decline toward 20 odd levels is pretty much possible.
Arcade Developers bought at 132, Gaurav, by Ramesh. He wants to know if he should still continue to hold this counter. I know a smaller name, but any view?
Better to exit. It is too small, trades at very low volumes.
The next query is for you, Saurabh. It's on Azad Engineering. Sankara Narayan wants to know whether should he invest in this counter from long-term perspective.
Elevated valuation, buy in a staggered manner.
Got it. The next one's on KPI Green. Is it a right time to invest for the short term? Gaurav, would you recommend that?
One can consider buy in a staggered manner, add once the stock surpasses 420-425 zone.
Next query is for you, Saurabh. It's on Gabriel India. Malika is holding few shares of Gabriel, bought at a price of 360. Should she hold or book profits?
Hold for long term.
The next one's from Raghu from Bengaluru. He exited Dixon in the green, but wants to know if it's a good time to re-enter. Saurabh, would you recommend that? There's been a very sharp move from the lows. What's your view?
Avoid.
The next query is for you, Saurabh. It's on Campus Activewear. The viewer is holding 1500 shares, bought at a price of 257. Currently sitting on a loss. Should he continue to hold or exit?
Hold till Diwali.
Okay, got it. The next one is on Nalco. Gaurav, Ramesh wants to know, he's bought it at 190. Should he continue to hold?
190 is the buying price.
Yes. So he's in massive good profits right now. Should he hold or should he?
I mean, that's clearly a hold. He's a pretty long-term investor in that case. Utilize dips to add up. It is one of our preferred stocks as of now.
The next query is for you, Gaurav. It's on Lemon Tree. The Gayatri is holding few shares, bought at a price of 138. From medium term, should she continue to hold?
No, better to avoid. Switch to something like an ITC Hotels or India Hotels.
Got it. Well, that was the last question of the rapid fire. Gaurav, we'll let you go on that note. Thanks so much for joining in as always, giving us your views. Saurabh, stay on. A lot more stock-related queries on the other side after this very short break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn in
Welcome back. You're watching Ask Profit right here on NDTV Profits. Let's quickly take a check of the markets yet again, because on the Nifty 50 we spoke about the banking names that are continuing to dominate the headlines and the news flow, and we are in a sideways kind of momentum just above that 24,200 mark. So you're seeing in terms of contribution also HDFC Bank the biggest negative contributor at this point of time, and even those gains on ICICI are not helping at this point of time for the index currently on the Nifty 50. Look at the mid cap and the small cap too. We spoke about the individual movers at the start of the show. The mid cap index has climbed just very close to the high point of the day, up almost 0.3%. The small cap too has a similar trajectory at this point of time. So continue to monitor all of those gains right now. But let's go across and we still of course have Saurabh Jain with us to help us solve the fundamental side of the things. Let's also welcome in Krupali Nakar, independent derivative and technical research analyst, joining in now. Krupali, thanks so much for joining in. Let me go across and take the first question. This one's on Vari Energies. Kativaran from Tamil Nadu wants to know if it's a good time to enter for the long term. Saurabh, we of course seen that big announcement come through, that ALMM deferment essentially till December. Stocks recovered from the lows. Would you recommend it's a good time to enter, or would you wait for some more clarification?
I think it is good to wait for some clarification, because anyway you are investing for the long term, and I think the market's volatility and the corrections during this period will definitely give more better opportunities.
The next query is on Cera Sanitary, and the viewer is holding around 250. Okay. 250 shares bought at a price of, it doesn't, okay, bought at a price of 9,500. He's currently sitting on a loss. Should he continue to hold these shares, or do you see the share price coming back to the 10,000 level, Saurabh?
I think difficult to say, but for the long term, I think it is an interesting space, and if he remains invested, there are fair chance of seeing his buying price.
The next question, and this one, on Avalon Tech. Our viewer Sagar has bought these shares, almost 1,800 of them, bought at 400 rupees. So he's bought it at a very attractive level. Let's look at the 5-year chart, and he's bought it at the start of that move that he captured on Avalon Tech. He wants to know the future prospects of this particular counter. Now, Saurabh, definitely the valuations have caught up, but would you recommend him to just hold since he's bought it at such attractive levels?
I think it is always good to take some money off the table, because the valuations are still asking on the price to book and the trailing earnings. And in my opinion, I think book some profits.
The next query is on Praj Industries. The buy price of the viewer Sunny is around 345. Should he continue to hold or average at current levels? Saurabh, any view?
I think I won't recommend to average, but at the same time, he may continue to hold.
Got that view. But the next question, and this one's on JSW Energy. Jayashree from Coimbatore wants to, enter the stock right now. Is it a good time to do that? Krupali, good morning. Welcome to the show. Would you recommend that?
JSW Shell, I wouldn't recommend that to hold for a long term. If you have a profit, you can.
JSW Energy.
JSW Energy. Okay. So JSW Energy, I wouldn't recommend it to hold. She can sell it. She can book partial profits. And if she is in loss, I wouldn't suggest to average it down.
The next query is from Prabhakar Rao, and it's on JTL Industries. He's holding 235 shares. Should he hold or exit? Krupali, any view on this?
He's holding at what level? If you could give me the levels.
He hasn't mentioned the level here.
Okay, so if he is already in loss, I would again recommend it to not average it because the stock is consolidating. So it may take a time to come up. So I would suggest him to hold it if he's in loss and not average it out.
Well, the next question, it's coming in from Prashant, and he's holding on to a few names. Let me pick, because we've answered Vari as well as JSW Energy on Suzlon. He's been holding shares at 52 odd. Saurabh, should he still continue to hold this counter from the medium to long term is his question.
I think the last few quarters we have seen that the earnings have been good, but this stock is largely moving in a range. Things have been moving better for the company. If you look at from the balance sheet perspective and the earning perspective, my sense it can be a good hold for the long term.
The next query is coming in from Subrata Mukherjee on from Kolkata. It's on Power Grid. He wants to buy Power Grid for long term. Saurabh, should he do that?
Definitely, he can buy Power Grid, but at the same time, he may also choose to look at the utilities like NLC India, JSW Energy, or NTPC.
On NTPC as well. Got it. Well, the next question, and this one is on NetWeb. P. Srikumar is from Hyderabad, is holding shares at 4311. So he's bought it after quite a strong up move, but should he still continue to hold, Saurabh, or sell out is his question? He is a long-term investor, but stocks run up quite a bit, right?
I think on the valuation perspective, it looks quite expensive to me, and relative to which market cap, it is a smaller company. My sense, better to avoid. Exit.
The next query is on Havells. Sunita from Hyderabad is holding 30 shares. Bought at a price of 1,150. He wants to know whether should she book profits or hold for short term. Krupali, any view on this?
Havells seems it's giving a bullish outlook, so she can hold it for a long term as well, as it's one of the very good stock for FMCG. So yeah, she can hold it and she can wait for the good profits to come.
Got it. The next one's on Neil Kamal. G. Shrikant has actually bought these shares at 1300 odd, asking what's the first target from here that he should be watching out for on Neil Kamal. The stock's trading at just around 1500. Krupali, should he book out right now or still continue to hold?
He should still continue to hold it. I believe that it can touch R1 and R2 levels, so he should wait it.
The next query is on. The next query is on Neil Kamal. Neil Kamal is done. The next one is on Vikram Solar. Saurabh, your view is wanted here, and the viewer hasn't mentioned his name. Wants to know whether is it a good time, good long-term buy, Vikram Solar.
I think the way it has fallen, I think probably the why this stock has fallen so much and has come to this valuation is actually been not known. So in my opinion, whenever this kind of things happen, there may be some kind of a problem with the company or maybe something like that. My best, the best case would be better to avoid.
Got it. Well, another stock that's in focus today is Tata Power. Now, the company has gotten a 324 megawatt letter of acceptance from SECI. And this is a big one because almost 2,600 megawatt of pump storage facility also will be along with this order. It's a big, huge 40-year order for the company. But it's also important to get in the management's perspective as well. Let's go across to Praveer Sinha. He's the CEO and MD of Tata Power now joining in. Mr. Sinha, very good morning to you, sir. Thanks so much for joining in. It's Puneet this side. Just if you can give us some perspective of what is the total project cost that you are looking at this point of time, as well as the funding structure that could be in place for this 324 megawatt order?
Good morning. Thank you for having me on your show. This is a 1,000 megawatt Bhivpuri pumped hydro project which we are constructing. It consists of 3 units of 334 megawatt. And the first one is tied up through the SECI bid. And what is important is this is one first large bid that has come from a government entity, and we are successful because the project is in very advanced stage. The project cost is about 6,000 crores. We typically do 75-25 debt equity, and the project is in very advanced stage of construction. The upper reservoir, lower reservoir, as well as the main plant work is progressing very well, and we expect that in the calendar year 29, this will be commissioned, all the 3 units with a gap of about 3 months. So between January and June of calendar year 29, we'll have all the units.
Got it, Mr. Sinha. We've also seen that the pump storage order also becoming a very big opportunity. Are you also seeing that compared to, say, battery storage for grid scale application? Is that something that you feel can coexist, or are you seeing a bigger opportunity right now in the pump storage space?
I think the great thing about pump storage is that it has a very longer period of supply that it can do. In the sense that on an average, it can do about 8 hours of supply every day, 365 days. And because it is a pumped hydro project, it has a longer life. And that's why you would see that while most of the PPAs are for 45 years, this PPA is for 40 years. So there is absolute surety of supply. There is absolute one single tariff, which is there for 40 years. Without any escalation. So it's a great solution, and especially when today we are grappling when we have peak power requirement, and at that time we don't have so much of solar and wind. This would be very, very helpful. So it's great for the discoms, also for many of the industries and data centers who are now going for clean energy solutions. If we bundle with solar, wind, and pumped hydro, they can actually get 24 hours of clean energy.
And a very important point that you make, Mr. Sinha, as well, right? Because you are seeing both having individual applications as well as the advantages that you mentioned of PSP as well. So given that context, what is the mix of future storage additions that you expect between PSP as well as BESS at this point of time, or would there be an equal proportion? Because you're also seeing capital deployment in both those schemes. So how do you see the mix of future storage additions at this point of time?
So pumped storage is a little difficult project. It's a long gestation. You need to have adequate reservoir capacity, and also the whole process of clearances and permits is a little longer one. So we will have a challenge in terms of how many of them can come up in a given period of time. BESS is a much faster solution, but of course, BESS has much shorter duration of peaking power that it can supply, and it has also a timeline of 10 to 12 years in terms of life and replacement. So I think there will be a combination. It's complementary to each other. BESS will be used in some places, and where you need for a longer period of time storage, there a PSP will be there. And I think there is space for both of them, and it's a good solution for India, especially when we are looking at large solar and wind capacity additions.
Got that, Mr. Sinha. So, of course, it will also depend on the viability of the project, the players that are doing the project as well, and with your financial backing, that would make sense. But any kind of quantification that you can give us at this point of time, because we are looking at very long-term solutions as a country, even within this space, given that the current geopolitical uncertainty has given more impetus at this point of time to a lot of BESS as well as PSP projects. So, can we expect some meaningful storage capacity for you in the PSP space? Because you have some visibility, your current conversations on the order wins as well. So could we expect that there could be at least a 30 to 40% more focus now on PSP in terms of project or order wins, or is it too difficult right now to quantify?
No, I think there are large number of projects which are in different stages of approval, and I expect that many of them will start construction work. You will see a huge amount of capacity getting added between, I would say, 29 and 35. And we ourselves, apart from the 1,000 megawatt, will be starting work on our 1,800 megawatt Shirota project in later part of this year. So I think there are a large number of companies. The target, of course, the government has come out with is that we'll have about 35 gigawatt by 2030 and 65 by 2035. But I do believe that some of them will find a challenge in setting up these projects, considering that you need to make 2 reservoirs and the hydro plant approval process. But for companies like us who already have hydro plants, it makes a lot of sense because we already have 1 reservoir, and you need to only make 1 more settling reservoir and have a closed loop of supply of water to produce hydropower. So great opportunity for the country. And I think what I expect is there would be about 50% of storage coming from PSP and 50% from battery storage. That is the type of mix I would expect in the long term.
And thanks so much for giving us that perspective as well, Mr. Sinha. Just one final question. In terms of this particular project, the IRR as well as the return profile, is that between that 12 to 15% mark that we generally see as well over the next, of course, the timeline of the projects and giving us that perspective too?
It will be much higher than that because these projects are to that extent, more risk is there. So more risk is more reward also. And I do expect that it will be much higher returns than what is in the normal solar or wind projects.
18 to 20, sir, or will it be much more higher than that?
Very difficult, but I would say that it would be in a much higher teen range.
Much higher teen range. Got it. Well, Mr. Sinha, we'll let you go on that note. Thanks so much for joining in, giving us perspective about this big order win. Many congratulations to you as well. We look forward to our next conversation, sir. But thank you for joining in today.
Thank you. Thank you very much.
Well, that was the management of Tata Power, a big order win for the company and something to watch out for as well. But let's pull up, PNB. So stock's up almost 1.4% right now. Let's also pull up PNB because up 4.5% on the back of earnings. We also be joined by the management very, very shortly. But Piyush is now joining us to give us some perspective of what worked for PNB in this particular quarter. Piyush, take it away.
Yeah, Puneet, actually PNB's results were in line, actually better than the estimates. The bank's net profit grew almost 214%. This was essentially because in same period last year in Q1 FY26, the bank had to, after the wage revision, the bank had to make provisions for it. So that is not here this quarter. So that has, optically bumped up the bank's net profit. Apart from that, provisions of the bank has also fell quite sharply, and there is a decent growth in both net interest income and other income. Combined, these aspects have helped. In fact, the margins have also increased by a few basis points. The cost of funds is going down, and the lending yield rates are more or less, range bound. In terms of asset quality, also the bank's credit cost and slippage ratio has both come down. So a strong set of results for QNB in Q1. Yeah, as we speak, we are joined by Mr. Amitabh Kumar Srivastava, who's the ED at Punjab National Bank. Thank you, Mr. Srivastava, for joining us. I want to start with a strong set of results. In terms of FCNRB deposits, if you can share with us how many such deposits has the bank mobilized till now, and is there any target that you want to hit?
Good morning. Just a small correction. I am Amit Kumar Srivastava.
Okay.
Not Amitabh. And second point
My
is
apologies,
that
sir.
you have mentioned YOY profit growth basically. So last year it was not basically the wage revision. It was basically on the old regime to next tax regime, new tax regime. So that was the major issue. So because of that, one time provision has to be made for the tax at that time. Now it is the normal one. Now coming to your FCNRB point, basically, as far as we are concerned, we have projected that we will be raising around 2.5 billion as far as the FCNRB is concerned, deposit is concerned. And as far as OFCB is concerned, 500 million, that is 500 million we are targeting. As of now, we have raised 421 million in the FCNRB deposits so far.
And from the OFCB route, sir, 500 million is the target. How many have you raised funds through this scheme as well?
No, we are in the process basically. A lot of procedure has to be taken care of. And we are targeting that in Q3 basically. That scheme is available up to 31st December. So that we are targeting in Q3. In Q2, we are targeting FCNRB deposit.
In terms of the structure of the FCNRB scheme, are you also providing leverage to your clients? Have you set up arrangement with foreign bank for providing this additional leverage on this particular scheme which can be given? Or you're purely getting customers just through this FCNRB deposit, purely this scheme?
It is basically a mix of that. Both pure FCNR deposit as well as the leverage deposit. We are also providing a leverage on the FCNR deposit and we are providing 9x leverage.
Right. Sure. Thank you for that. I want to understand the margins have improved for the bank in Q1. For the full year, what would be your guidance? And, when can we expect the bank to go above 3%? Because right now it's at the, mid end of that 2 to 3% mark.
As far as margin is concerned and NIM is concerned, we have grown by 3 basis points. If you see from 2.47 to 2.50 in the global NIM and domestic NIM from 2.61 to 2.64. Earlier quarters, we were basically coming down NIM every quarter and quarter basis, but this is the reversal. And from here on, there will be a positive sign. For the full year, we have already given a guidance of 2.60 to 2.70. And that we are still holding good and will be able to achieve that.
Right. Finally, I want to understand how many loans have you sanctioned, are in the pipeline when it comes to corporate loans. How's the pipeline looking like? Most of the banks have registered, good double-digit growth in corporate loans this quarter.
As far as corporate growth is concerned, loan book is concerned, we have grown by 10% YOY, and we have a pipeline of 1,38,000 crore. That includes basically major in infra, power renewable basically, and the roadside, a few in the steel sectors also, in the chemical sector also, and a few in the emerging like data center and battery storage.
Right. Thank you, Amit sir. Thank you for talking to NDTV Profit. Puneet, back to you.
Well, thanks so much for that, Piyush, and thanks so much, Mr. Srivastava, also for joining in. But viewers, it's now time for the rapid fire round to start. Krupali as well as Saurabh, keep your answer as short as possible. Also, thank you to both of you for patiently waiting by. The first question is coming in on Siemens Energy. Shrikar from Hyderabad wants to know if it's the right time to enter. Saurabh, would you recommend that?
For the long term, you can buy in a staggered manner.
Next query is for you, Saurabh. It's on Trent. Ram from Hyderabad is holding 130 shares, bought at a price of 3,000 rupees. Should he continue to hold for the next 2 years?
I think wait for the quarterly earnings and then exit.
On ITC Hotels, also, Saurabh, Madhav has bought shares at 170. How did you see the results recently, and is it a good long-term bet?
It's a good long-term bet. It is a hold.
Next query is for you, Krupali. It's on GNG Electronics. Praveen from Hyderabad is holding 2,000 shares bought at a price of 586. Should he hold or exit?
He can hold the shares. The company looks good and it can grow further. Quarter 1 revenue, quarter 2 revenue. He should look for that, and after that he can book the profits and exit.
On Poonawalla FinCorp as well, Krupali, our viewers bought shares at 470. What's a stop loss and a target that he can look out for?
Stop loss he can expect around 420. The currently stock price is trading at 463. So if Poonawalla FinCorp it's showing downturn on a technical chart. So if it touches 420, he should exit.
The next query is for you, Saurabh. It's on ICICI Pru AMC. Isher from Kolkata is holding shares right from the time of IPO. Should he continue to hold or exit?
You can hold for long term.
Got it. The next one coming in, and this one's from Federal Bank. Uma wants to know if she can enter for the mid to long term. Saurabh, your view?
It's a buy in a staggered manner.
Next query is for you, Krupali. It's on Clean Science. Praveen from Hyderabad is holding 66 shares, bought at a price of 790. What's the short-term view on this for the next 6 to 9 months?
Short-term view looks bearish, and the currently share is trading at 757, and he has bought it 790. So I would recommend him to exit around 720.
The next one's on between Raymond Lifestyle or Arvind Fashion. What's a better pick for the long term? Saurabh, what would you recommend?
Arvind Fashion looks better.
Next query is for you, Saurabh. It's on Gaudium IVF. Ahmed from Delhi is holding 100 shares, bought at a price of 102. Should he continue to hold or book profits?
No view.
Any view, Krupali, on Gaudium IVF?
I think he can hold this shares because it's going to increase. The market is booming of IVF market, so he can hold it.
Okay. The next one's on HDFC Life, bought at 582. Saurabh, should our viewer still continue to hold this counter for the next year?
It's a hold.
Next query is for you, Saurabh. It's on MV Photovoltaics. Vasudev from Bangalore is holding 235 shares, bought at a price of 336. Is it good to hold for long term?
Hold for long term.
And the next one coming in, and this one continues to be on CEAT. I think we discussed a little bit on JK Tires, but Saurabh, what's the view on the stock now for someone who's already holding it?
Margin pressure is there, better to avoid.
The next query is for you, Krupali. It's on Greaves Cotton. Arjit from Tamil Nadu is holding 2,400 shares, bought at a price of 235. Should he hold for the next 6 months?
Yes, he can hold it for the next 6 months.
The next one's coming in on Hitachi Energy. Is it a good bet for the short term? Krupali, would you recommend that on the charts?
Not really. For short term, not really. But yes, definitely for a long term.
The next query is for you, Krupali. It's on Bank of Maharashtra. Surya Prakash is holding 1,000 shares, bought at a price of 60 rupees. Should he book profits?
He can book partial profits.
CG Power bought at 966 by Aryansh. He wants to know about his 290 shares. Saurabh, what would you recommend?
Hold for long term.
The next query is for you, Saurabh. It's on Vedanta Limited. E. Venkatraman wants to know whether is it a good time to buy Vedanta Limited at current levels.
Metal seems to be a good place, buying a staggered manner.
Got it. Well, that was the last question of the rapid fire as well as this edition of show. Saurabh as well as Krupali, thanks so much for joining in, giving us your views across a whole bunch of stocks and spaces. But viewers, before we wrap, the credibility of any award rests on the strength of its jury. And for that, the NDTV Profit Business Leadership Awards, the selection process was guided by some of the most respected names from the worlds of business, finance, and public policy. Leading the jury is Sunil Bharti Mittal, founder and chairman of Bharti Enterprises. Joining him are Noel N. Tata, chairman of Tata Trust, Cyril Shroff, managing partner at Cyril Amarchand Mangal Das, Kiran Majumdar Shaw, chairperson of Biocon Group, Biocon Group, UK Sinha, former chairman of SEBI, Jayant Sinha, president of Everstone Group, and former Union Minister Ramesh Damani, noted value investor and BSE member, and CS Sethi, chairman of State Bank of India. Now, the jury was supported by Sanjeev Krishnan, chairperson of PwC India, and Rahul Kawal, CEO and editor-in-chief of NDTV Group, in non-voting roles. Together, this distinguished panel brought deep expertise independent judgment and rigorous scrutiny to identify the leaders and enterprises shaping India's economic future. Join us on July 26th as the NDTV Profit brings back the Business Leadership Awards after a 13-year hiatus, celebrating the leaders, companies and entrepreneurs who have not only built successful businesses but have helped shape India's economic journey. Well, we'll of course see you on the 26th, but thanks so much for joining in for Ask Profit. Stay with us. KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT
that are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, interesting news-based stories, and yes, can you make alpha or not? Let's try to understand the company today which we have, but try to guess it. It's a Haryana-based solar pump manufacturer. I know there are three names coming in your mind, but I'll give you some more hints to get it. It was recently listed June 20, 2025. It's just been 1 year almost, you could say. The company has come in the market, but the stock is down 35% from IPO price. A little bit of concern, definitely, right? Also, apart from this, another hint is the beneficiary of PM Kusum scheme. I'm sure you must have got these names by now. 2 or 3 names are there. But the company in focus, and of course, recently there was an important corporate news development also.
is the company in focus is Oswal Pumps. Very interesting name, but we'll try to understand, is this just a B2G play or is there something more? But why are we calling this company and why right now? First question is, of course, the recent order wins and outlook. Does it change? Is it just the Kusum 1.0 scheme or are there any more government schemes to it? Second question, the rollout of Kusum 2.0. What's the impact looking like? Will it be different this time because there were pluses, there were minuses? We'll discuss that, but shortly. Addressing the higher receivables and cash flow issue, this is what has issued the entire industry. So we'll try to understand that, and is that pressure bottoming out? Any diversification from the government schemes, and that's what the investors and the streets want to hear from the company going ahead. Any R&D, any new tie-ups, tendering. Is there a competition right now also across its organized players as well as inorganized players? That's what we'll try to understand. And of course, the guidance from the solar rooftop segment seems like there is a bullish commentary in the fourth quarter, which the company had mentioned. Apart from this, of course, we'll have the conversation with the management, Vijay Yadav, the GM Finance for Oswal Pumps, to try and understand where does the story lie for this counter. But let's understand the company itself. What does the company actually do? And is there anything much more than just the industry tailwinds? It's of course Haryana-based solar pump manufacturer. Also, if you look at it, the company now is diversifying into solar irrigation. So yes, there is a diversification at play, but these things take time. Also, it was listed recently, which I had mentioned you earlier. And going ahead, one more interesting snippet about the company, of course, is that it's a fully integrated provider of turnkey solar pumping system. Remember, our monsoon is uneven this year, so solar pumps are definitely necessary. Solar powered and grid connected submersible Mont Blanc pumps, technically solar pumps, just to make it simplified for you. But yes, this is the product categories. They are also engaged in electric motors and solar modules. So solar modules is of course an extension of their product profile. There is one of the largest PM Kusum turnkey solar pumping system suppliers. Market shares bhi dekhe to alag-alag category mein they have a significant market share. Company is listed under the Ministry of New and Renewable Energies ALMM mechanism. So this is of course a good important certification to have. They have a pipeline of almost 25,000 pumps and almost 1 lakh plus pumps has already been supplied from different government projects. The recent order win, which we have been talking about and we'll understand from the management, is for 10,000 solar pumps. After a long time, the solar pump order has started coming in. And remember, the PM Kusum scheme Yojana, the Indian government scheme, is there to promote the solar energy in agriculture. Little bit more details about it. It helps farmers install solar pumps, solarization and the grid connected pumps. Also, apart from this, it helps in setting up of small solar power plants. So this is the PM Kusum scheme which we are talking about. Also, this will secure reliable daytime power and generate extra income as well for the farmers. So these are the important points you should be looking at. But let's understand how the business pans out. You know, the solar and the non-solar pumps, how it is. Around 1.81 lakh pumps have come in FY26. It almost looks like even Stevens for both of these categories. And this is the story of the overall setup. But how big is the industry? The government has allocated 22,000 crore rupees for PM Surya Ghar Muft Bijli Yojana. This is also one of the different, you could say, products which the company is focusing in. The utility scale, CNI, PM Kusum and the rooftop target, if you look at it, that's at 65 gigawatt by FY30. Interesting, right? Also, looking at the new opportunities in the solar space, where the things are looking like. So we have broken it down into rooftop solar and the utility segment, largely the up and coming tenders. This is around 1546 megawatt. Compare that, it's around 2470. The tenders which the company has participated, that's around 131170. That's almost half up. Almost you could say 50 to 60% of tender participation is coming in. But let's try to understand what may work for the company. The new announcements in Kusum 2.0, is it different this time? That's the question. Second is the improvement in cash flows. Is there a turnaround at play in the Q1 numbers? If that happens, we can see a good technical rally. The company is diversifying away from B2G contracts. We'll try to understand more about it, but from the management. Also, valuations are attractive. Corrections have been there. Stock is down 35% from its IPO price. This is the reason what may work. And of course, this is the new one. PM Surya Ghar Muft Bijli Yojana. This is where they are focusing on. So yes, there might be a different story at play for this counter. But what may not work? That's the problem. The rise in receivables, that's what Street is not liking it. There's a B2G risk involved, and this is a business model, inherent business model. DIs, FIs have been reducing their positions, but take it with a pinch of salt. It's just been 1 year. But yes, the numbers are there to show you. Return ratios are muted right now. And we'll try to understand when will this ROC, ROE numbers go up. The tender pricing, that's the pressure which is coming in from the industry, and that pressure, has that bottomed out or not, we'll understand. And yes, of course, there's a lack of analyst coverage as well. So these are the reasons what may not work for the company. But we have the interesting KYC ratings for you, where we judge a company in KYC. We have income statement, balance sheet, cash flow, return ratios to make it. And also, I'll give you 4 more ratings. Of course, the shareholding street trade, take things with a pinch of salt. It's just been 1 year of the listing history which company has. Valuations, we'll try to understand and compare it with its peers and the outlook itself. Short term, medium term, long term, everything for you we'll get. But let's start with income statement, what's happening here. And income statement, largely the long term ratio numbers are showing a good strength, and the way this momentum has come in, this is pretty strong. Be it PAT, be it EBITDA, be it revenue, a good growth coming in. But the Q4 numbers, a little bit of pressure was there, especially on the margins front. So this is a little bit of concern coming in, but top line and bottom line growth was there. But a little bit of margin profile change is happening in the company. And is this because of the pricing pressure? Because it was continuously going up. It seems to have moderated a bit. Net, the long-term numbers are pretty strong. Short-term, there is a little bit of hiccup. And because of that, I have given this a neutral rating when it comes to the income statement. Balance sheet, interestingly, is pretty strong. The borrowings, however, has come down from FY25. From 324 crores, it has come down to 225 crores, and it's decently managed as of now. Of course, the stretches are there in the receivables, and we'll see that in the cash flow also. But as of now, balance sheet is strong. So I'm going to give this a thumbs up as well. But let's talk about cash flows. There might be a little bit of lumpiness, and whenever a business is in the B2G segment, that is where payments at times becomes an issue. The receivables start rising, and that's why we are seeing variations in the cash flows. Look at the cash flow from operations from FY25 and look at FY26, how things are moving. So a little bit of concern definitely comes in, but take things with a pinch of salt. At times there is a pressure also in the overall working ratios. Let's move on after this neutral rating of cash flows to the overall return ratios, and that is where the story seems like the pain is there. Look at that net worth returns, in 65% in March 25. Now it has come down almost half. And ROC is also the same story, almost half it has become. So concern is definitely there in the return ratios. As a long-term shareholder, you will be concerned. So I have given this a thumbs down when it comes to the return ratios. But let's look at the shareholding. Remember, only 3 quarters of data we have because it listed only in June last year itself. FIs, DIs is something I'm watching at. Promoters haven't sold any stake, so that's a good sign. But FIs, DIs has reduced the stake from 4% coming into just 1%, and DIs also, they have taken off positions. It's at around 7%. So yes, the institutions are clearly selling. That's what we have seen over the last 2 quarters. So it's a thumbs down when it comes to the shareholding segment. Come, let's explain you the street cred, whether the stock has made money for the investors or not. From the IPO price, if you had applied, stock is down 35%. So yes, there is an issue. Also from 2025 highs, the highs which was there, we saw the entire theme doing well. From there, the correction is still down 54%. So concern is there. But from March lows, there's a kind of a recovery happening, up almost 37%. So right now, I'll give this a neutral rating because we need to judge the company on a longer time frame. But let's get in the valuations. With this so much of sell-off happening, are the valuations turning attractive? And yes, it is. 12-month forward P ratios, how we have taken Shakti Pumps is around 26 times. KSB on the other hand, 51 times. That solar theme I'm talking about, largely you should compare the first two, and it's still cheaper, almost 50% discount coming in from its peer and almost 70-80% discount from the peak of the numbers which we had seen in 2025. So right now the valuations look quite attractive for Oswal Pumps. Let's talk about the outlook. This is the last but the most important rating, the Kusum 2.0 rollout. Everybody's talking about it. Will this be different? How the timeline is looking like? And of course, company will be one of the key large tender makers here. But the pricing, the competition is still there. So that's a little bit of concern. But long term, the story is definitely very much important. They are proactively diversifying beyond the government-driven solar irrigation. So there are much more, story lines which are expected to come in, but we'll try to understand that from the management. And the rooftop solar segment, those numbers have been pretty strong and important government push is coming in. So as of now, I'm going to give this a neutral rating. But let's give you the entire picture of what are the KYC ratings coming in for Oswal Pumps and where does the company stand. Of course, the balance sheet management has been strong. I've given neutral ratings for income and cash flow. Return ratios has been disappointing. So has been the FIs and DIs. There's a sell-off happening there. Street cred, let's keep it neutral right now, where the valuations are attractive because of the correction and the long-term story is very strong, but of course, medium-term, there is hiccups. That is why a very balanced approach in KYC rating. I've given 4 out of 8. It's largely in line with the numbers which we give for this company of Oswal Pumps. Interesting story, right? But to make the story more interesting, we'll have Vijay Yadav. He's the General Manager for Finance at Oswal Pumps. He'll be talking about these important details about the company and also explaining us that is the pressure over in the industry. So for that, stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right.
Welcome back to Know Your Company, and now we are joined in by Vijay Yadav. He's the General Manager for Finance at Oswal Pumps. Good afternoon, Vijay ji. It's always a pleasure to have you with us at NDTV Profit. And over the last 1 month, the orders have started coming in, and you have announced, the company has announced important order wins also. So we'll start with this, the recent order wins. What does this mean for the company and the order book outlook going ahead?
Sir, thank you and good afternoon. So you explained properly that we have sufficient order book and management is also planning accordingly, and we are in the line with the current year budget, and this quarter definitely we will be in the line. And yes, future planning for capex and other activity that has been mentioned earlier. So we are on the same track, and commercial production is likely to come post Q2. So definitely those period will be best era for the companies, and the other activities such as R&D and other advancement of product is being done with the proper team. So let's see how the everything goes, and we believe that everything is going well.
The belief is everything is going well, and at least that benefit will start coming in from the second quarter onwards as well. We'll discuss the capex plans as it is. We'll understand a little bit more in that detail. But Vijay ji, I just want to understand the Kusum 2.0. That's also a very important story to track the rollout. How much incremental benefit will that be for your company, and will it be, a bit different than what was there in the PM Kusum scheme part 1?
See, the entire industry, on our industry specifically, everyone is just talking about Kusum 2, right? What we will get and how much we will get. But everything is just, it's a long discussion point. So definitely, unless everything is announced, because this is unless it is announced appropriately, and then every stakeholder or all the market participant can consider that how much they are getting. So right now, yes, the government is also planning self-dependent on this power and solar power to the nation. So yes, sooner or later the project will definitely will be announced, and that will all the participants accordingly they will get as per their bidding. So that's a very good. That will be also very plus point and advantages for us to get the proper share and continue the business and those activities. We are actually planning for everything, right?
Fair enough. You are planning for everything. That's interesting. But investors and stakeholders have raised a little bit of concern, sir, especially on the higher receivables because there is a B2G angle involved and also the cash flow issues. Can you just address that? And when will things improve?
So, data collection is improving, and in Q2 financials definitely will be much better. Right now, if you see the March 26, 190 days of days data recovery. So yes, till the Q2, the scene will be different, and collection is being improved by the government. All the data are actually government data. So yes, they take some time, but we are in the process, and collection is being improved.
So that's a very important statement coming in, Vijayji. Collections are improving and the magic or the benefit or the turnaround, whatever you call it, will happen from the second quarter onwards, especially on the execution front as well as, helping out your working capital ratios. But apart from this, everybody knows you about the solar pump theme which is there, your company. But what else Oswal Pumps is doing which is different? How are you diversifying, especially from the government schemes or maybe in the non-government areas? Are you looking at something, any R&D, any tie-up? Is there anything else?
Yes, actually, for the new capex in the both solar part and motor part and inverter area. So the activity for the marketing, branding, research, and other interaction with the other business participant for improvement and absorb the additional capacity of production. So everything is planned, and these final the execution will start from post quarter after the trial run. So once trial run is completed properly, because if anything goes wrong, all the product went in the market and then calling back, it will be not good for the financials as well. And the other thing which is not good, that's also a very major step. So each and everything we are planning, and everything is in the line, just waiting to come in the commercial production of the new additional capacities and testing of those activities, and thereafter the things which are in the line and under the discussion, that will be minutized and documented. Then we will discuss more appropriately in the post second quarter.
Right. So we have some time. Q2 we might do discussions, but the benefit of these executions will start from the fourth quarter. And remember, there will be trials also which will be done, especially on the new capex, new business. The interestingly put, Q2 and Q4 is something which we'll be watching out for from our conversation. But Vijayji, the pressure of tendering, is that pricing pressure or the competition still there, or is it bottoming out now?
It's under the closing situation, and in a very few periods that will be removed from the business. But yes, there is a, you are seeing the yearly financials. So yes, it's seen very clear that there is a pressure. And also now the management is also considering for to have a professional and professionally driven organization. They are the that is first generation organization and business. So now the process of to transforming the from promoter driven organization to professional driven organization. So during this transition period, it's taking some time, and the activities that are being performed. So definitely that will result very well for the organization. For long term, there is no issue. But yes, temporarily there is a pressure.
Fair enough. So look at the long term. That's what Vijayji is talking about. And 2 points are very important in our conversation. One, that pricing pressure, yes, it's there. It's the honesty of the management, and that's a good thing in KYC, which management talks about. But maybe that pressure would be coming out going ahead, and the management is also focusing on the professional side. Yeah.
It is a pressure on industry, sir, not only on us.
Fair enough. Yes, that's true. And I was mentioning the industry itself, not just your company, because things go together in the markets, especially in your theme. But the guidance for the solar rooftop segment, that is where you're trying to do something new. And if yes, CapEx, timelines, what is it for our viewers?
Sir, I said for everything. Specifically, we are now discussing only for solar. So the advanced equipment and machinery is being installed, and that will also commercial production will come post Q2 in phase wise, and that's why we are considering the post Q2 the seen scenario for financials numbers and ratios will be much different, because we will consider now non-government activities as well. That's why we are diversifying. So right now you are well aware, everyone well aware that major sales are coming from the government project. So now we are the improving our capacity to non-government project, and we are in the discussion with the several participants. So to absorb those and data turnover ratio, improving the data turnover ratio, we are considering in an aggressive mode for non-government project as well. So definitely the scenario is different.
Right, Vijayji. And of course, next time when you come to in our KYC show, the story will be different, the ratings will be different, and you won't just be a B2G player, you'll also be a B2C player. Of course, we spoke about the Q2 numbers, 2 important things coming in, the commercial production for your solar rooftop segment, that comes in Q2. All the benefits, all the changes in the ratio starts coming in Q2, and you have, of course, Q4 also, where new CapEx is moving on. The last question I would like to understand, we have spoken about industry and your company and everything else which is possible for your stock right now from the people who have written about in our KYC show. But the CapEx plans, any number is there which you can assign, say this year this much, next year that much for FY28, FY30, anything which is there to track the CapEx amount?
Yes. I don't think that because we are sharing the financial to auditor for a review and publishing. So please, I request not to disclose the number, but that has been written in the prospectus and DRHP. We are in the same process and the same activity is being done.
Okay, sir, not a problem, but you have given us a lot, especially in a silent period like that coming ahead and talking so much about your company. That's, of course, thank you for that. And best of luck, sir, for the future. And hopefully, from the second quarter onwards, you are just not a B2G company, but you are, of course, a B2G as well as a B2C company. Best of luck for the future, Vijayji.
Thank you, sir. Thank you, sir. Thank you.
So that's the management of Oswal Pumps. Of course, the street has punished the stock. It's down for 35% almost from its IPO price. But the story might be different in the second quarter. And if that happens, we'll get the company in KYC and show you whether there has been an up move or the downward move in our analysis for this counter. So for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
stocks of the day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamara.
Benchmarks under pressure today with Nifty and Sensex hovering near day's lows. Nifty struggles near 24,170 levels while the Sensex sheds nearly 600 points today. Banks and auto trade under pressure. PSU banks, pharma remain resilient. HDFC Bank and Kotak Bank trade under pressure after mostly in-line Q1 numbers for banks, but margin pressure continues. ICICI Bank and PNB gain after a strong quarter, while Axis Bank lags as asset quality declines. Oil prices surged after fresh escalation between the US and Iran reignited the concerns over energy supplies. Brent climbed above $90 per barrel as fears of disruption through the Strait of Hormuz really pushed geopolitical risk premiums sharply higher. Solar stocks in the spotlight after the government ruled out a blanket extension of ALMM2 norms, while allowing a limited transition period for select projects. Chat with Premier Energies lined up on the show. Parliament's monsoon session has been adjourned amid ruckus and heightened security arrangements. The opposition is seeking discussions on issues including question paper leaks and other key issues. Hello and welcome. You tuned into Markets at 12. I'm Nisha Poddar. Let's take you through the market first. And yes, there is pressure that is being seen on the Indian markets. Nifty 50 is down over 0.5% in trade at the current moment. So is Sensex. And a large part of that can be owed to the weaker global cues, the resurgence of war in the weekend period. And that has really taken the crude oil prices to $90 a barrel. Now, that particular level being crossed is a worry for the Indian economy, as most of the economists have been penciling in $80 per barrel as an average price for our import barrel of crude for this particular year. So that is one concern that is really impacting the overall market. When we take a look at the mid-cap universe, the broader markets is far more resilient than the mainline yardstick benchmarks really coming in, and mid-cap 100 is about 0.28% up in trade. And in fact, if we really take a look at some of the sectors, it's the banking sector which is really taking a lead and also impacting Nifty 50. Because of the numbers, there has been a mixed impact on the banking sector. So HDFC Bank has been a dragger while ICICI Bank is really gaining in trade. In terms of other contributions really coming in, Bharti Airtel is also on the gaining side. But remember, a large part of Nifty 50's really gains are being shaved off by exactly two counters in particular. First largest HDFC Bank and second is Axis Bank. So those two counters really putting pressure when we talk about the index, which is not giving a full picture of the overall market in terms of the sectoral play. It's half and half, with Bank Nifty really taking a charge, auto also on the downward side, but pharma, metals, energy, these are the sectors doing well. Nishal Maheshwari, market expert, joins in now. Nishal, always a pleasure to speak to you on NDTV Profit. What do you make of the resurgence of the war, and how much more downside can we really see because of the crude-related impact on our economy?
Good afternoon to you, Nisha, and your viewers. Yes, I think these are all temporary blips is what I believe at the moment. I do not see this escalating too much. I think both the parties are trying to get back on a negotiating table, and this is one of the ways basically which they are trying to pressurize each other. So I do not see much prolonged war at the moment. That's my view at the moment. I think things are going to get sorted out, and I think every fall is a buying opportunity in the market.
Buying opportunity, yes, with HDFC Bank seeing a huge erosion in terms of pricing, Nishal, and also Axis Bank, and especially after the results that came out over the weekend. How do you assess the banking sector now, and how will you segregate the winners and losers and where to put money in?
So I think there was some disappointment on the NIM side, basically for both HDFC and Axis Bank. I think the NIMs came down by 4 basis points or 3 to 4 basis points for both of them, and that's why the market is disappointed. But the growth is there, so we have to keep in mind that the growth is now coming from the corporate side, and if you are going to be giving loans to the AAA kind of corporates, obviously there is going to be some pressure on NIMs. I believe in the September quarter, NIMs should come back to normal. And given that the stocks are down, both of them 4 to 5%, I think it's a good time to keep on accumulating both of them.
Right. When we talk about the other sectors coming in, Nishal, which are the sectors which you are now probably bearish on at the current moment? Looking at the earnings cycle, the consumption pattern, the monsoon data is also out, and the margin pressure will continue with crude oil prices really being at elevated levels even in this quarter. How are you assessing, and is there any change and any sectors going on the bearish side?
So I think one of the sectors which looks toppish and could see more downside from here is the metals. They have really peaked out in the last 2-3 months and gained quite a lot. And I think given that the dollar is weakening, I think this could be a good thing for actually looking at metals also getting weakened in the process.
All right, so metals is, of course, is overblown at the current moment. The results are also coming out pretty good for the metal sector. But next quarter is where there could be a little more, also because of the monsoon season, as seasonality is also a weaker sector. When we talk about one particular sector, that is the semiconductor-led and the electronics-led, Nishal, government is putting a lot of thrust on this particular space. Because of the recent announcements of more outlay and more thrust by the government, is there a change? And also, what kind of companies would be more valuable for an investment now for 3 to 5 years?
So I think we have to understand the first phase of the government's policy was about setting up the semiconductors. Now I think the second phase government is very focused on saying that the designing and making of the chips basically is supposed to be happening in India, and that's where they are supporting it. So for the second phase, I don't think so. There are many listed plays, but I think the first part of this we have already seen there is a listed play, CG Power, I think, and Keynes. I think these are the two companies which are positive on that side. But for the second phase, we yet to see any company basically which is on listed side, which has got large amount of business basically coming from the designing side of the chips. So I don't think so. We have much to play there.
Right. Thank you so much, Nishal, for your expert take on the markets. Always a pleasure to chat with you. All right, so that was about the market, and take a look at rupee at the low point of the trading session. Remember that it is now getting closer to its all-time lows, also pretty fast, 96.51. So 96.5 is what the economists had really penciled in if the crude oil prices really flare up. And with crude really touching $90 per barrel, rupee has again tied itself to that particular momentum and is depreciating. So weaker rupee definitely not a good news to keep an eye out for, and closer to 97 is where its historical low really lies, and at the moment 96.5. All right, let's shift focus to the real estate and the property space, and Prashant Thakur, who's the executive director and head of research as well as advisory at Anarok, joins in now. Prashant, good to have you on NDTV Profit. Of course, the GCC backed demand for office space is something which is giving a lot of benefit to the overall property market. How do you see the trend at the particular moment, and what's really differentiating when we talk about this area of strong demand coming in from GCC?
I think you are completely right. GCC-led leasing, I think it has surprised all of us. While people were anticipating that amidst this global turmoil and the AI-led disruption, the overall leasing would fall. But everybody's surprise, it has kind of really held up quite significantly. And the prime reason behind this is strong confidence that the GCCs have, put in the Indian office sector. Just to give you stats, in the first half of 26, 45% of the space that was leased out was done by GCCs. And then, this number becomes more pronounced when you look at the southern part of the country. The overall GCC leasing in Bangalore accounted for 70%. And if you take into account the three cities of South, Bangalore, Hyderabad, and Chennai, close to 50% of the space occupied was by GCC. So I think there are a couple of factors because of which I think GCCs have kind of really continued their confidence. Number one is definitely the kind of stability this economy provides, the talent that is available. And the best part is that, the appreciating dollar has always kept the unit economics quite in check. So it's obviously the talent factor is the primary pull. And I would say the added advantage also is that for them, the rental has always remained, close to $1 or so. So I think these factors will continue to kind of drive the GCC leasing in India. And also, if you look at the way the various state governments have kind of really started to focus more on GCC-led policies, is kind of also giving a lot of strong confidence to these global occupiers.
Right, it's a very big, strong, confidence booster, Prashant. But my question to you is, if GCCs are really showing that much demand, how is the supply-demand dynamics? Because there are other many MNCs, and especially IT and ITES, which is a very big sector, which really generally takes huge office spaces and the high-end office spaces for leasing. So how is this particular structure and this impacting the overall business as well as the pricing?
See, first of all, let us talk about the net supply that hit during the first half of 26. So the new supply was slightly down by almost, I would say, 10%. And that also was a plus factor for the overall vacancy. The vacancy came down to 15%, and because of which the rentals also firmed up in a few of the cities. Again, having said that, I think the completion would kind of resume. It was temporarily kind of delayed. A few of the supply that was supposed to hit the market got delayed because of this ongoing disruptions, because of global tensions that we are seeing. But again, if you have to kind of really peel the onion in terms of the kind of players who are leasing the space, it comes out to be a multifold story. While GCCs definitely are taking the center stage, it is manufacturing and BFSI also that are kind of really ramping up their presence. So I would say a couple of things. While GCC would continue to dominate the overall leasing landscape, but the underlying story that is also unfolding is that because of this strong Make in India manufacturing push, the manufacturing companies are also slowly ramping up their grade A offices, followed by BFSI. And of course, the new segment which emerged after COVID was co-working. That has also kind of really flourished well, and then continues to account for almost 20 plus share in the overall leasing. So that's how well diversified this entire leasing story is folding out. And yes, the grade A I think story remains quite intact. And one thing has emerged out very clearly. Whenever there is any kind of global tension or uncertainty, be it COVID-19, be it Russia-Ukraine war, and be it the current war, I think the Indian economy has somehow kind of held its forte. And we have always seen that the grade A office and the confidence of global occupiers has kind of always increased in these kind of uncertain scenarios.
All right. So unfazed because of the global uncertainties on the kind of opportunities they see being here in India and having a base here with their office space. But Prashant, when we talk about the other side of the spectrum, which is the suppliers as well as the property builders and developers, how are you seeing that new pipeline being created to cater to the demand coming in from newer segments along with GCC push?
See, the supply pipeline is quite robust. So in 2026, we are expecting close to 50 million square feet of total grade A office space that would come into the market. I think that is quite significant amount, and it's quite a healthy supply that is going to balance the incoming demand. And the good part is that which is also leading to a healthy vacancy level. Because unless the developers don't see a real appreciation in rental, they will not be encouraged too much to build grade A office supply, which I think has played out quite well as of now. Because inherently, if you see, we are, I would say, in terms of grade A office stock, we are still undersupplied, and the kind of demand that has started to come in, the supply side is definitely kind of slowly lagging. But I think in coming years, they will pick up definitely, because there's a huge, strong pipeline by good grade A developers.
All right. And just one final question, Prashant, a quick answer to that. How is the pricing momentum and the occupancy panning out? If you can give us an outlook for the rest of the financial year.
So I think the vacancy levels have been quite healthy. We have seen good improvement. It has come down to 15%, which is a healthy number. And because of the supply dip that we saw in the first half of 26, and also a strong gross leasing numbers, the rentals have also gone up by almost 9% across the top 7 cities that we track.
All right, Prashant, always a pleasure to chat with you about the office space, the rentals, and how this particular sector is really developing. Thank you so much for joining in.
My pleasure.
All right, let's move on to another important news which really impacts the renewable energy and especially the solar energy space. The government has extended the ALMM2 till 31st of December. It has given a 6 months extension only for certain categories of solar PV cells. And this ALMM2 extension is something that impacts the overall sector. Let's get chatting with one of the players in this particular space. Vinay Rustagi, who is the Chief Business Officer of Premier Energies, now joins in to give us a view. Now, Vinay, with this particular extension, what is the impact on the sector as you see, and what was the requirement? I know that the sector itself had asked for this particular extension.
So maybe we just start quickly with what is the policy and what is the intention of the government. So ALMM2, as you said, is basically designed to make sure that all the cells that are used in India are actually manufactured in India rather than being imported. And the government had set the policy timeline as 1st of June for about 70% of the total market demand. Now, within this 70% itself, there are three market segments. There is residential rooftop solar, there is Kusum or solar pumps, and then there is the corporate market. Now, the government has taken the view that given the limited supply and the fact that the demand is very, very strong, some time relief be given to one of these three segments, that is a corporate market segment. And the government has basically given an extension till 31st of December. So, our view is that in terms of the industry impact, the demand from the residential rooftop solar and the Kusum segments is extremely strong. Both these policies are set to expire, I would say, in the next 9 to 12 months. And the government wants to make sure that installations under these two schemes don't have any negative impact because of limited supply. So the government has continued the policy for these two segments. In general, I want to also reassure everybody that the policy stays intact. The government support for Make in India remains intact, only because of the limited supply for one of the segments that the government has given a limited time relief. So net, I don't see much of an impact on the overall market, partly because this segment had actually not started placing orders yet. So as of today, there was some expectation already in the market that there will be a government relief coming because of limited supply. And most of these customers were sitting back on orders. So there is no impact on the market because in terms of incremental demand or production process.
All right. Since you said that most of the, the demand had not even kicked in because the expectation of extension was already there. So one quick question on your company itself. Is there any margin impact or business impact because of this extension on Premier Energies?
Yeah, sure. So, in terms of our business, for the next 6 months or so, our cell as well as domestic module production is completely sold out over the next 6 months. And that is being earmarked mainly for the residential rooftop solar and the Kusum customers. So we have, in fact, very little, if anything, any orders from the corporate market, which are going to be impacted because of this. So as a result of that, we don't see any impact over our business, either in terms of production volumes or pricing or margins, etc.
Right. So no impact on Premier Energies is what you're mentioning. But when we talk about this particular, project and the government's push, the technological requirement as well as capacity demand both have been evolving. And that's what is also delaying this from really taking off. Like the TOPCon, advantage of advanced technology is something that is there in demand. How much do we have in terms of supply? Give us a sense whether this extension is enough.
Yes, sure. There are solar is a very dynamic sector. There are a lot of market trends underway. One is that the demand overall is booming and is growing very strongly. Last year, we saw about 90% increase in demand over the year before that. And this year, again, we expect the demand momentum to continue. The second thing, as you said, is that technology landscape is changing quite rapidly. Monoperk was the dominant technology until about 2 years ago. Now it is TopCon, and in the next three to 4 years, we expect new technologies to come into play. As of today, we have about 21 gigawatts of monoperk capacity and about 10 gigawatts of TopCon capacity. But we do see a lot of new capacity coming online over the next 6 to 9 months, most of which is expected to be TopCon. So the industry is fully geared to meet both the demand as well as the technology, the changing technology landscape and the needs of the customer. So I don't see any problem in the industry, failing to meet any of these requirements.
All right. So while we are talking about ALMM2's execution, there is also a roadmap for ALMM3 execution, which is to be done by June 2028 for ingots and wafers as well to be domestically used. Now, how are we in terms of readiness and execution for that particular roadmap? Give us a sense on that.
Sure. So as you said, ALMM3, the timelines are about 2 years away. What the policy means is that all the ingots and wafers have to be made in India, as part of that framework. Now, ingot and wafer is quite unlike cells, is a business where we have almost zero expertise right now. So we have a lot of work to do to find the best technology, develop our local know-how and the ecosystem. It is also an extremely capital-intensive process. So, the ingot wafer manufacturing business, to our estimation, needs a total capex of about 50,000 crore rupees over the next 3 years. So there is a lot of work to be done. Having said that, many companies, including ourselves, have announced plans to start developing capacities from end of 2027 onwards. Our request to the government is that given the criticality of the investments, the huge investments and the technology requirements, the policy framework should be upheld to basically make sure that the investment sentiment is not affected in this process.
All right. So that particular technology is still some time away. A lot of work needs to be done. But before we let you go, give us a sense on the huge ramp up that you have planned and the guidance with timelines for this particular financial year.
Sure, Nisha. So actually, it is a very exciting time for the business because we've just commissioned our 11 gigawatt, our 5.6 gigawatt module plant, taking our capacity to 11 gigawatts. And from July onwards, that plant has fully turned into production. Second, we have a massive 7 gigawatt cell capacity, which is coming online in the next 2 months. And that will also fully ramp up by the end of the year. So what you will see in terms of, I would say, the next 3 quarters, the cell and module production numbers will inch up quarter on quarter, which will give us a massive benefit of scale and profitability. At the same time, even in the transformer business, we made an acquisition last year. The transformer business capacity is also set to more than increase by about 5 times in the next 2 months. So we will have a capacity of 16 GVA. And that will also come into production by the end of this year. So I think we will see a massive uplift in the scale of the company and overall operations.
All right, Vinay Rustagi, thank you so much for giving us a whole host of clarity about this particular new development in the solar PV cell space. Thank you so much for joining in on NDTV Profit. That particular counter has really recovered in trade because of especially the company clarifying that the extension on ALMM2 is not going to impact their business. So the stock in the green. Now let's move on. After a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Award, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. Now, the nominees for the Business Leader of the Year Private Sector are Dr. Anish Shah Mahindra Group, transforming a legacy conglomerate with sharper focus, stronger returns and disciplined growth. Dr. Anish Shah of Mahindra Group. Now, K.N. Radhakrishnan, TVS Motors driving the innovation, global expansion and EV leadership. K.N. Radhakrishnan has really accelerated TVS Motors' growth journey. Now, the architect behind India's retail success story, scaling brands and delivering exceptional growth at Trent, P. Venkateshalu, and he is also one of the important business leaders candidates. From cables to electrical leadership, Inder Jaisingh has really powered Polycab's rise into an industry powerhouse, advancing the global healthcare through innovation and execution. Vinita Gupta, who's continuing to strengthen Lupin's international footprint, a visionary who transformed a homegrown manufacturer into a global mobility powerhouse, is Rajiv Bajaj of Bajaj Auto, also steering India's largest car maker through a new era of growth, innovation and mobility transformation, is also Hisashi Taikuchi, who's from Maruti Suzuki. So that's a strong contender coming in this particular space, leading India's engineering giant with scale, also ambition and execution excellence. S.N. Subramanian of Larsen & Toubro, SNS, is known as the top leader and a top contender there. So watching out for the Business Leadership Award. Out of time on markets at 12. Keep it with NDTV Profit. Thank you so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। P-Mark सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is
Hello and welcome to NDTV Profit. You're watching Trending Stocks from NDTV Profit Suzlon Studio. With me, Hiral Datia and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. Interesting day of trade because in terms of opening, we were seeing a cut of 15 to 20 points. Now we're up almost 0.6%. So if you pull up Nifty 50 on the screens as well, the first support level is something that we did break in intraday trade, but again a bounce that has come in yet again. Right now 0.6% lower, below that 24,200 mark as we speak. Sharad, what are the cues that you're picking up, and what should investors watch out for the second half of the trading session?
Exactly. Good afternoon, Hiral. And you're right, the markets are absorbing the earnings impact which is coming in from the heavyweights over the weekend. Almost 34% of constituents has come in. Nifty, of course, getting dragged by the banking names, and I'll get you that story in a while. Nifty Bank, let's see what's happening here. Of course, after the gap down opening, there's a minor recovery attempt coming in, but it's still down almost 800 points. So yes, the gashes are deep for the Nifty banking names. But what are the factors you should be watching out for today? It's pretty much interesting. Remember, it's largely index specific moves there coming in, and Nifty is seeing a technical reversal, a little bit of profit booking if you see the charts from last week as well. Also Nifty Bank, that's where the technical setup is quite weaker. And remember, HDFC Bank, Axis Bank, Kotak Bank, these are the ones dragging the Nifty Bank down. And HDFC Bank especially, more than 130 point downtick coming in just from one counter. And this is the overall setup looking like. But small and mid cap, the story is not that bad actually, to be honest. And a better performance is coming in, and it's almost 1:1 bulls versus bear. It's slightly on a better position on this trading day. Apart from this, also buying is seen in pharma, which is of course a defensive, and PSU banks. It's a churn happening from the private to the PSU space. So this is something which we should be watching out for. Other sectors are in a range. Rupee has weakened past that $96.5 mark. That's a concern coming in. Hopefully RBI intervention does come. Oil yields are up on the rising geopolitical tensions, and this is continuing going ahead. So this is a negative macro trigger, and the Parliament's monsoon session kickstarts today. To expect a lot of bills coming ahead, which are expected to come in. Also, earnings season is on. We have Ultratech Cement, Paytm and Shyam Metallics. Of course, with the fundraise also announcement for Shyam Metallics, we'll be focusing on all these three major counters. And of course, apart from this, any other geopolitical development comes, that's what we'll be getting. But right now, focus is on earnings and Smiths right now as the larger banks weigh in on the benchmark indices.
Okay, so interesting moves there. So there are slightly Monday blues also that you're watching out for. Let's just quickly pull up the Nifty 50 heat map right now before we go to the watch list to understand which are the stocks which are firing and which are the ones which are actually putting pressure. Because when we started off the day for trade, you had ICICI Bank as one of the top gainers, whereas Kotak, Axis, all the others were trading under pressure. There you go, Kotak, HDFC, Axis. Cuts to the tune of almost 2.5 to 5.5% coming in there. What's ruling the roost is a Cipla, which is the top gainer today, followed by a Trent, which is seeing some smart moves. JSW Steel also is actually reacting to the first quarter numbers. ONGC is up in trade on the back of the way crude has been panning out. We are back again to that $90 per barrel mark. But let's look at the watch list. Axis Bank, the margins have dipped for a fifth consecutive quarter. So that stock is in focus in today's session, 5.5% downtick there. You have HDFC Bank, where the Q1 has missed estimates. The asset quality has weakened. ICICI Bank is an outlier. Q1 has beat estimates. It's a strong credit growth, and it's far better as compared to a HDFC Bank as well, if you have to do a like-to-like comparison in terms of size. Kotak Mahindra Bank under pressure. Margins have dipped. Your credit cost has been high. PNB Bank as well, where the margins have improved, the provisioning is lower, and that's what has kept that stock afloat in today's session, trading in the green. Craftsman Auto, pull up that one. There's an initiation report coming in by Goldman Sachs. 11,600 is the target price. That stock is up 2.5%. Viatech Wabag is up in trade on the back of a 250 to 600 crore order. CleanMax, a clear beneficiary in terms of ALMM2 extension. That stock is buzzing as well. JSW Steel reacting to numbers where brokerages have remained bullish. Ultratech Cement, that stock is in focus ahead of the numbers. Double-digit growth is expected in the first quarter, and ahead of numbers, you're seeing some green on that one. Sansera Engineering as well has got an initiation by Goldman Sachs, and they have a target price of 4,130. Tata Tech reacting to numbers where brokerages have now maintained a sell. They have a target price of 550. That's a Goldman Sachs yet again. Havells is up 0.6%, though the margins have normalized on this one. So, I mean, no major downtick coming in there. Landmark Cars, that stock is marginally lower, though you have a Helios mutual fund, which has acquired 2.5 lakh shares in the company. R3 Drugs is in focus as well, and that's because GBCB the orders has ordered a closure in terms of the Gujarat plant, and that's what is having a negative impact there. Tatva is one which is reacting to numbers, and Turtleman Fintech. The EBITDA loss has reduced on a sequential basis. We will be speaking to the management as well on India market close today. 9.5% up move coming in on this counter. But Sharad, over to you to take the rapid fire as well.
Thanks a lot, Hiral, for that. We're joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you. We'll start our rapid fire round, but it's the day of banks. One side we have HDFC Bank, other side we have ICICI Bank. Let's start with HDFC Bank. A big drag coming in both Nifty Bank and Nifty. Do you think the selling will continue going ahead, some more downgrades coming in, or the selling seems to be over for HDFC Bank?
Very good afternoon, Sharad and Hiral. Well, today we have seen a breakdown in HDFC Bank. Counter is broken below its 21 as well as 100-day moving average. So looks like there could be possibility of another leg on the lower side, maybe towards 760, 750 going forward. So avoid taking any contrabet. I think there could be possibility of a follow-up move going forward.
Right. So any stop losses which we can see for HDFC Bank? Any short strategies?
Right. So as long as it trades below 800, there are high possibility of a move towards 750. So technically, your stop loss should be at 800. Just in case if you see counter going forward reclaims 800 level, then there could be possibility of a short covering move. But as of now, that should be a stop loss, and a sell on rise kind of a strategy can be deployed.
Right, sell on rise for HDFC Bank. But what about ICICI Bank? It's a different story altogether. Do you think that the charts have strength, or it's a consolidation play?
Well, Sharad, there is a strength because the counter has given a good breakout. So it is exactly opposite to HDFC Bank. Buy and decline setup I can see on the chart. Keeping a stop loss below 1390, if you get any dip towards 1430, 1420, that can be used as a buying opportunity. And there is still possibility of a move towards 1500 in the near term. Not on immediate basis, but yes, a gradual up move is something that we can expect.
Right, and the next stock is Vatek Babag. Order flows have started coming in, but does the chart give any better risk reward here, or should one avoid this?
Well, after today's spurt, better wait for a dip towards 2050. That's a good entry point. Keeping a stop loss below 1980, it can be bought on declines. The counter still has a strength and can move towards 2123, 2150 in the near term.
Right, foreign brokerages are turning bullish for Sansera Engineering. Right time to make a positional bet in this counter?
Well, Sansera has already spiked around 5% today, but it is in a secular uptrend, can be added in a staggered manner. I think the counter has the potential to move towards 3600 to 3800 in the near term. So keep a stop loss at 3200, buy and decline should be the strategy.
Nilesh, let's do a chart check for Havells and let's understand any important key levels and any trade can be made here.
The only positive I can see on the chart is that the counter has formed a very good base formation. So from a risk and reward perspective, it has a very strong support at 1120. So 1120 should be the stop loss. We can expect a pullback towards 1250 to 1300 going forward.
Right, Arcade. The next stock is the Landmark Cars. That's what we are looking at. And see, the long-term charts, there was a big correction coming in, but now the mutual fund addition has started coming in, value buying coming in. Just wanted to understand overall, is there a momentum at play here? Any more follow-up or volume-based buying is happening in this counter, Landmark Cars?
Well, the momentum is missing as of now, but yes, can be added on decline because the stock is trading well above its 200-day long-term moving average. So stop loss should be at 462 and can be added if at all it falls in the range of 500 to 505. We can expect a gradual uptick maybe towards 580 to 600 in the near term.
Right, stay with us, Nilesh, and now we are talking about an interesting theme, ALMM2 extension. Now it's of course positive for some categories of stocks and it's negative for some categories of stocks. So which are they? Varsha is here to decode that.
Well, first of all, the news is that the ALMM extension has been done till December 2026 from May 2026. Now, what is ALMM? It's nothing but that this requires solar projects. ALMM requires solar projects to use approved Indian-made solar cells. So earlier, so by May 31st, 2026, all the solar projects were supposed to use Indian-made solar cells. Now that extension has been till December 2026. Now, why government is doing this? Because the domestic solar cell supply is insufficient, and this will also help project delays and cost escalation. Now, coming to the impact on which all companies will be negatively and positively impacted. All the modules and cell players will actually be negatively impacted. You have kind of Worry Energies, Premier Energies. If you see, there will be a near-term negative impact. This will delay benefit from mandatory domestic cell sourcing and also will reduce pricing power for some of the integrated players. Now, who will benefit from this extension? Of course, you have developers like Clean Max, which will actually benefit. Why? Because of the low project cost for open access projects. So hence, Worry Energies Premiers will have a near-term negative impact, while Clean Max and developers will have a positive impact.
Thanks a lot, Varsha, for clearing that out. But over to you, Hiral. What are you gathering on the markets?
It's interesting. Before we go to market, Shyam Metallics, let's just pull up that one on the screens right now. They've just reported their numbers, and that's the reason why you're seeing that spike coming in there. 5.5% to 6% upside on a Shyam Metallics. If you look at the numbers, the revenues have seen a growth of almost around 30 to 33% as we speak. And that's the reason why you're seeing that growth. Margins have also come in at almost nearly 14% versus a 13.1% that we were tracking in the previous quarter as we speak. In terms of the calculated EBITDA, 5.3% at 765 odd crores on a sequential basis. In fact, if you have to talk about the EBITDA margins as well, the calculated one is 14% versus a 13.9% on a sequential basis. And they've approved raising almost 4,500 odd crores via QIP and others. So a very strong set of numbers that has been reported by Shyam Metallics, and that's the reason why you're seeing this kind of a rise coming in terms of the stock price. Let's just once again pull up the intraday chart of Shyam Metallics to see the kind of uptick that's coming in there. 8.5% up move on a sequential basis, a 33% up move on a year-on-year basis is what you're seeing in terms of the top line as well. And and the net profit is up almost 8%. Top line is up around 4% on a sequential basis. So strong set of numbers coming in there. Nilesh, on the charts, a 5.5% up move on a Shyam Metallics. Would you advise investors to book profits with this kind of a surge, or are you seeing further momentum from here on where investors can enter?
Well, in terms of a fresh entry, I think one should wait for a dip towards 1,040, 1,050. But if somebody is already holding the long position, can ride this rally up to 1,100 to 1,130 on the upside by keeping a trailing stop loss at 1,055. So the structure is still looking strong, and there could be a momentum play. Maybe 1,130, 1,150 can be seen in the short run. So keep a trailing stop loss in order to play this particular momentum.
That's with regards to Shyam Metallics. But thank you, Nilesh, so much for joining in. Always a pleasure to speak to you and get your views as well. Now, moving on, Laser Power and Infra, a recently listed company that is in focus. They've secured their first commercial order for the next generation AECC conductors as well. Let's discuss more about this order win and business outlook with Deepak Goel, Chairman and Managing Director at Laser Power and Infra. Deepak, welcome to the show. Always a pleasure to speak to you. Now, help us understand, this is one of the first orders that you have received since listing as well. And this is coming in from Himachal Pradesh State Electricity Board. What is the size of this order, and what does this actually do in terms of your revenue growth and outlook for FY27?
Thank you for having me on your show. I would like to take this opportunity to tell you and your viewers that this is actually the first LOA that we have received for this new technology. Now, for this technology, we have tied up with a company in US, which is going to help a lot in our transmission sector. Now, just to let you know a little bit about the transmission sector. Now, our national electricity policy is very ambitious. What we are thinking of is that we are going to increase our power generation from 500 gigawatt to 900 gigawatt by FY32. And the challenges that we are going to face is not from the generation side, but from the transmission side, because the transmission side will involve acquisition of new land and a new right of ways and erection of new towers. So this technology helps eliminate that to some extent. This is called high temperature, low sag conductor. It plays a very big role in this sector. What happens is that in a transmission corridor, which is already existing, if you need to carry the power 3 times of the current power carrying capacity, this is the technology that helps. Now, our tie-up has been with a company in US, which has very recently in 2016 developed this technology and has patented it. And post that patent, they have tied up with us in India, and the product that they have developed in 2016 has already been in use worldwide successfully. So this will mark the first commercial manufacturing of the product in India by us, and that will bring about much benefit to the company as well as to the transmission sector of India.
Deepak, this is more of a prototype. So what is the ambition that you have in this segment that you want to achieve in the next 12 to 18 months in terms of revenue, and how margin accretive is this business?
See, for us, this business is already existing in India. It's just that we are coming up with the next generation of this technology. And for us to capture this market, we have already started this as a first step towards capturing that market. Now, we expect to grow this market from this financial year. So we are expecting a healthy revenue to come in from this year, last quarter, and maybe the first quarter of next year. So we expect healthy revenues to come in from there. So that is how we are looking at it.
So Deepak, with the current order book that you have, can you help us understand what is the revenue and profitability guidance that you're looking at in terms of achieving in FY27, and what's the pipeline visibility that you have in terms of the bidding part of it on the orders?
So this current financial year, we started with an order book of 3,200 crores, which is providing strong visibility for the manufacturing and EPC business of ours. And in the past few years, we have demonstrated reasonable growth in our company. And the current order book is also showing the same. So we expect a double-digit revenue growth in the current financial year. And accordingly, the EBITDA margin should also improve going forward.
What does that number look like?
Numbers, we expect a double-digit growth in our revenue, and the EBITDA margins have also been healthy, and we expect that to happen. But what I will say is that our results are going to be out very soon, and we can discuss about this in details in August when the results are declared.
All right. So I think we will wait for that as well. But thank you, Deepak, so much for joining in. Always a pleasure to speak to you as well. So that's the management, in terms of laser tech. Clearly, there is some bit of pressure in terms of today's session as well on the counter. But ambitions are very strong. Stock down nearly 3.6%. But moving on some earnings conversation now. Suresh Iyer, MD and CEO of Canfin Homes, joins in. Let's pull up the stock. Stock down almost 2.5% as we speak. Let me get in Suresh Iyer as well, who's the MD and CEO. Mr. Iyer, welcome to the show. Always a pleasure to speak to you. My question first coming to you is, in terms of the first quarter of FY27, that the numbers that have been reported, what does that tell you for financial year 2027 as a whole?
We had actually began the year with a target of 2,500 crore disbursement for Q1. As against that, we have seen a very good demand across all geographies, and then we ended up with 2,600 crore, which is higher than what we had estimated at the beginning of the year. So in terms of demand, in fact, it is looking very good, and across all geographies, it is looking positive. So going forward, also we expect that in terms of disbursement, we should be able to deliver the numbers, and that should help us, slightly inch up our AUM growth also. Because last year we had an AUM growth of 10.4% and we expect to end the year with an AUM growth of about 14%. So I think that is one thing. The second, in terms of, the first quarter performance, you will see that even after, passing on the entire benefit of 50 basis points in terms of the rate cut last year to our customers and also moving our customers from annual reset to quarterly reset, we still have been able to maintain a healthy, NIM and spread. Against a guidance of 2.75% spread and 3.75% NIM, we have been able to deliver a higher spread as well as NIM. So I think that is also positive. And in spite of the impact of the geopolitical situation and, the risk that could have happened because of on the demand, we are seeing that delinquencies are, in fact, very strong. We are finding that, we are having a very good recovery. Our delinquency numbers are showing an improvement in SMA 1, 2 and NPA compared to even March numbers. So in absolute value, our delinquencies have come down. That shows that our, credit costs also for the year, we expect it to be very benign.
Hi Suresh, sir. Good afternoon. This is Sharad here. Wanted to understand the disbursements, how the outlook is looking like, because you have done better than what the street was estimating.
Correct.
And secondly, the SMA business, that has also been stable. So do you think the Q2 numbers will also be stable? What are the current trends suggesting, sir?
Actually, in terms of Q2, we expect to do about 3,000 crore disbursement, which will also be, in fact, healthy growth over Q2 of last year. And the present trend also in terms of the logins, in terms of the demand, in terms of the project launches, we feel that it is pretty good. We have added about 60 additional APF projects also in the first quarter. So our pipeline in terms of our tie-ups is also pretty good. So I think, we are expecting that the numbers should be possible. We are definitely, geared for it. And with our IT implementation also going successfully, we are very well, confident about these numbers. That 13,000 crore disbursement numbers that we are talking about, I think we should definitely be able to reach that.
Regards to where the AUM and disbursement rate goes, how about the shift in terms of where the ticket size is concerned? Because we've seen loans above 30 lakhs that have surged to nearly 48% of your total disbursements in the first quarter of FY27. So is this a result of deliberate premiumization that you're seeing in terms of the portfolio, or is it driven by inflation in core urban housing markets?
See, there is an element of inflation which has resulted in an increase in our ticket size, but there are also some conscious efforts that we have made. One, in terms of our sales team and the APF tie-ups that we have made. That, in fact, we are observing is giving us a higher ticket size business. And second thing is, of course, that, in terms of our product, we are, seeing that the quality of the loans also, we have definitely having a little bit of a shift. Our Karnataka and Telangana markets, where the ticket sizes have generally been higher, are also picking up now, because we had a problem with the e-Khata some time back, but now we are getting a stable business, and Karnataka is also growing at 18%. Even Telangana, where the ticket sizes have been generally higher for us, there also it is starting to pick up. So that's why, this ticket size is what we are seeing. However, in fact, we would still like to operate overall in the ticket size of about 25 to 35 lakhs only. I don't think it will go beyond that. As of now, also, our average ticket size is somewhere around 27 lakh on the entire book, because we still have a large amount of DSA book, which is DSA source business, which is bringing in around 25 to 27 lakhs.
My last question is in terms of the net interest margins. They've expanded beautifully. Now, do you expect to comfortably maintain the net interest margins above your internal 3.75% floor for the remainder of FY27?
Definitely for Q2, we are very confident, because, we have a good pipeline of sanctions from banks and term loans and everything, wherein even if we incorporate all those things, I think we will be comfortably able to meet the borrowing for the next quarter also. And with if there is no increase in our repo rate or anything, I think we should be able to maintain this, because we have seen a good amount of pipeline in terms of bank sanctions. We are still having a lot of other bank sanctions which are likely to come in the coming months. So therefore, I think we should have that possible. Plus, normally our NHB sanction, which is a sizable chunk and which comes at below the bank term loan rates also, that is is also expected, which normally comes around September and October. So I think, in terms of cost of borrowing, while there will be a little bit of an increase, but we will also be able to pass on some in terms of our product mix and our segment mix, and we'll be able to maintain a healthy spread so that our guidance for 3.75 NIM, I think, will be possible. I don't see a problem as of now.
So no issues seen in terms of maintaining net interest margins as well. But thank you, Mr. Iyer, so much for joining me. Always a pleasure to speak to you. Though the stock is reacting slightly negatively, 2.5% downtick coming in on the counter. But you know what, everyone? It's just 6 days. All of us have been waiting for this event eagerly, and I'm sure all of you will be enthralled to see what's actually coming. Now, the credibility of any award, as we know, rests on the strength of its jury. And for the NDTV Profit Business Leadership Awards, the selection process was one that was guided by some of the most respected names from the worlds of business, finance, and public policy. Now, leading the jury is Sunil Bharti Mittal, founder and chairman of Bharti Enterprises. Joining him are Noel N. Tata, chairman of Tata Trusts, Cyril Shroff, managing partner at Cyril Amarchand Mangaldas, Kiran Majumdar Shaw, chairperson of the Biocon Group, UK Sinha, former chairman of SEBI, Jayant Sinha, president of Everstone Group and former union minister, Ramesh Damani, noted value investor and BSE member, and C.S. Sethi, chairman of State Bank of India. In fact, the jury was supported by Sanjeev Krishan, chairperson of PwC India, and Rahul Kaval, CEO and editor-in-chief of NDTV Group, in non-voting roles. Together, this distinguished panel brought deep expertise, independent judgment, and rigorous scrutiny to identify the leaders and enterprises shaping India's economic future. Join us on the 26th of July as NDTV Profit brings back the Business Leadership Award after a 13-year hiatus, celebrating the leaders, companies, and entrepreneurs who have not only built successful businesses but have actually helped shape India's economic journey. And this is something that all of us are eagerly awaiting and looking forward for all of you to join us virtually to enjoy the moment on the 26th of July. But completely out of time. With that, it's a wrap on this edition of Trending Stocks, and this is something which is going to be trending as well, Sharad.
Well, exactly, and of course, it's thanks from the entire team who has put together this wonderful show. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Benchmarks under pressure with Nifty and Sensex now recovering from days low, though Nifty struggles near 24,170 while the Sensex sheds nearly 600 points as well. Bank, financial services and auto trade under pressure nonetheless. PSU Bank and Pharma remain resilient. HDFC and Kotak Bank trade under pressure after mostly an inline set of numbers in the first quarter when it comes to the entire bank space as well, but margin pressure continues. ICICI Bank and PNB though gain after a strong set of numbers, while Axis Bank lags as asset quality declines. And oil prices surge after fresh escalation between the US and Iran reignite concerns over energy supplies. Brent climbs above $90 a barrel as fears of disruptions through the Strait of Hormuz push geopolitical risk premiums sharply higher. Solar stocks in the spotlight after the government rules out a blanket extension of ALMM 2 norms while allowing a limited transition period for select projects. And that's the update coming in when it comes to ALMM. Parliament's monsoon session has been adjourned amid ruckus and heightened security arrangements. The opposition is seeking discussions on issues including question paper leaks and other key issues as well. The session was adjourned until about 12 p.m. and has just about resumed. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the Nifty 50 and where it is right now. Slight bit of recovery that you've seen really coming in from the day's low. You can see that really reflecting when you talk about Nifty 50, but also Sensex as well. That's also seemed to have recovered from that day's lowest point as well. Slight bit of uptick coming in. Nonetheless, about 600 odd points lower, and that's the Sensex for you, still hovering very close to that day's lowest point as well. And when you talk about the entire sectoral picture, it's actually tilted surprisingly in the favor of green as well in terms of some of the sectors that are holding on to some bit of resilience. In fact, a little bit of a mixed picture is something that you're looking at. Financial services on the back foot, Nifty Bank, Nifty Auto, as well as Realty and India Defense, as well as IT, all of those sectors a little bit on the back foot right now. What's doing quite well in terms of resilience right now is something like Nifty, Pharma, PSU Bank, Media, Energy, as well as Metals. So those are the sectors that are holding on to some bit of resilience right now. When you talk about the entire broader market space as well, that entire pack is doing better for itself than are some of your benchmarks as well. So that's largely the kind of update that you have coming in when you talk about some of the sectors as well. When you quickly talk about the list of gainers and losers as well, it's actually quite interesting to see some stocks like Gabriel India or Aegis Logistics, some of those counters that are buzzing away in trade. But when you talk about the entire Nifty 50 pack as well, some bit of resilience really reflecting through in stocks like Cipla, Trent, JSW Steel, ONGC, Bharti Airtel and Nestle that are holding on to some bit of resilience. On the flip side, what's trading under pressure right now is some of your banking counters. So some of the counters like Axis Bank with a 5.5% downtick, HDFC Bank after the numbers. Some bit of concern really raised in terms of the margin expansion trajectory as well, and that's something that's sharply in focus after a largely inline set of numbers. But 5% lower, that's HDFC Bank, and a key drag coming in when you talk about the Nifty 50 as well. And Maruti Suzuki, some of the other banks as well, Kotak Bank, that's also trading under pressure. It's very important to note what's going to be happening in terms of the change of guard as well. And you do have Ashok Vaswani at the helm who's going to be handing over his authority as well later, and not a lot of clarity that really emerged. That still is a little bit of an overhang that you're looking at in terms of some of the commentary that has come out for Kotak Bank as well. And other than that, something like a Jio Financial Services, SBI Life, as well as Shriram Finance and Bajaj Finance. So a lot of finance names really in focus. And speaking of finance and banks as well, let's also talk about Indian Overseas Banks. That bank that has reported its numbers, and they're reflecting on the bottom of your screen. So when you talk about the profit figure, you're seeing quite the sharp uptick coming in. Same about the stock as well, about 4% higher right now. When you talk about the profit figure, that's where some of that gain has really come in terms of what really stands out for the first quarter as well. So as you can see on your screens, about 49.3% higher coming in terms of the profit figures, 1,659 crore rupees versus 1,111 crore rupees. That's what you're looking at in terms of the profit figure. When you talk about gross NPAs, 1.33% versus 1.42%. That's what you're looking at on a quarter-on-quarter basis. When you talk about net NPAs as well, 0.18% versus 0.21% on a quarter-on-quarter basis. So that largely is the update coming in. But, the NII number is the real standout as well, with that 34% uptick. And we'll keep getting you all of those details. What really stands out is that, high double-digit profit figure and the NIIs that have seen that sharp uptick as well. But, speaking of sharp uptick, let's also talk about oil prices that have seen quite the appreciation coming in terms of the price levels. When you talk about Brent, 2.5%, almost 3% uptick is what you're looking at. Very close to $91 a barrel. And when you talk about WTI as well, close to $85 a barrel, but 2.5% uptick really coming through for WTI as well. Let's also get you some more insights. In fact, Kunal Shah, Head Commodities Research at Nirmal Bang, is joining us right now. Thank you so much, Mr. Shah, for taking time out and joining us on the show. It is very interesting when you talk about oil prices right now, because that $90 a barrel level is something that we were talking about last week as well. And, the escalation has really gotten that level yet again back in focus. What are the key levels from here on that you're really tracking at this point?
Okay, so I think if you look at the fundamentals right now, there is a major issue going on with the product market. So there is a shortage in diesel, there is a shortage in petrol, that is gas oil, and the product market is very tight. And one of the major reasons for that is a lot of refineries have been shut down in the Middle East, in Russia, in other parts of the world. So more than the crude oil demand, the product demand is very strong, and that is driving the energy prices, number one. Number two, now regarding the escalation. So as far as the geopolitical thing is concerned, at $91, a lot of these positive developments from the crude price point of view is discounted. So I think another $3 to $4 of upside maximum, $94, $95. That's what we are eyeing in a shorter term right now. The fundamentals are not bearish, they are bullish. And looking at the way US and Iran, both are the way they are retaliating at each other and the other allies of the US. So I think considering if anything goes wrong for a while, oil can really shoot up abruptly. So no point in going short right now. Buy the dip, and that should be your strategy, and stay long until there is any positive resolution regarding the ongoing conflict.
No, absolutely. And there seems to be a lot of factors that we're really watching out for. You do have the Red Sea shipping threats that do persist, and some bit of commentary has really come out for that as well. There's still the escalation that is, it looks like, here to stay right now. You do have Hormuz transit that is really in question as well in terms of some of the volumes that are trickling out of the Strait of Hormuz as well. So against this entire backdrop, are you then perhaps penciling in higher for longer oil prices? And is that something that's yet again baked into the pie then?
Well, if oil prices continues to hover the way it is hovering right now, the likelihood of it going up is very high. And if there is no de-escalation, then why oil should go down? Because again, the traffic at Strait is almost turning nil. So when there was a ceasefire, you were seeing 40, 60, 80 tankers. They were basically getting... So I think right now, one should wait, and see the development. what kind of development which are taking place in crude oil, and then determine, whether this is the only one trigger which is there in the market is ceasefire talks materializing, and that as of now, no chances. So my take is that oil $95 Brent and $90 WTI very much possible in shorter term. So stay long till then.
Absolutely, and thank you so much for helping us out with those exact price levels as well to really watch out for when it comes to oil prices. And it's just a stone's throw away when you talk about the escalation as well. So it is very much in sights when you talk about Brent and WTI as well, for that matter. But let's also talk about gold as well in terms of, watching out for catalysts. That's something that you ought to be doing for gold prices that seem to be awaiting that little bit of a catalyst right now, right? It's steady, close to that key $4,000 announced level as well, and that's key to really watch out for. But going forward from here, what do you expect for the rest of the week then?
See, the narrative so far was higher oil prices, higher rate cut, and that's why gold should go down. That's done because already gold prices have corrected from $4,800 to $4,000. So right time to buy gold. Right now, the only thing which is certain is looking gold. Because you saw what Mr. Trump was saying. He was again planning to put a sanction on Russia, Iran, and whoever buying oil or buying commodities from them. I think this kind of talk will again, reignite the central bank demand for the gold. And at $4,000, nothing to lose. So the highest alpha conviction call here is go long in gold. Don't worry about this volatility. You brace it, and the directional view from here, it definitely looks to be on the upside.
Absolutely. And speaking of the upside that is in store as well, and some of those calls, just really quickly wanted to try and get a sense of if you think this sentiment also extends, to physical gold buying, to also the domestic market that you see in steady shape. Usually you do have prices that move in tandem, but that's been a little bit of a concern as well when you talk about the domestic prices in the country. Lots of volatility, lots of factors, lots of government announcements as well that you're tracking when it comes to gold prices in the country. So against that backdrop, physical as well as, domestic buying for gold, what is your call there?
I think looks pretty strong. Looking at the way in India also, the festive season is just about to start in next 1.5 months. August onwards, the festive season starts. And I think that will be a time when people will start buying gold, start stocking gold for the season. So I see physical demand also improving going forward, number one. Number two, on the futures front, we believe that the stronger physical demand will lead to higher future prices because that has been a laggard. And number three, central bank buying is likely to accelerate in days to come. So gold looks absolutely poised to buy. I don't think so there's going to be any rate hike. Even if there is a quarter basis point of rate hike, it is purely discounted. So the road looks very clear from here. And the bulls are likely to take a charge of the bullion market.
There is some very, very upbeat commentary as well. So anybody who's listening in right now should have their to-do list as well ready. Kunal, just wanted to also try and understand what you think about central bank buying as well, because Goldman, in fact, has come out with a very interesting note where they're talking about how the actual reported figure is actually China's gold buying is actually 5 times more than the reported figure as well. And they've been flagging that for quite some time as well. Do you think that central bank buying, be it through China, Poland and other countries, seems to be really ramping up now?
See, you just think from the central bank point of view for a moment. Okay, if I'm a central bank and if I'm having an additional foreign exchange built up in my books, in my asset side, and if I have to deploy that money, where I'm going to deploy that money? Japanese bond? The answer is no. US bonds? The answer is no. Both are having a tremendous amount of debt. Europe? No. UK? No. So where I'm going to put my money? Where I see safety? I don't think so. There's the biggest safety right now in the world, which central banks foresee, that is in gold. And like Poland, they came up with a statement that they have to buy another 100 tons of gold going forward in times to come. China, Why to keep money in US Treasury? Why they would keep money in US Treasury? So, for example, if PBOC sells $100 billion worth of US Treasury and they'll buy gold or other commodities. So that makes more sense because at $40 trillion US debt will be $40 trillion in next 2.5, 3 months. So at $40 trillion at 4% interest rate, what is going to be their debt servicing cost? So their debt servicing cost will be much higher than the defense cost. So this is
No,
the state of the
absolutely.
US fiscal scenario.
Yes.
So you
And
have
Kunal,
to remain in gold.
the ECB also very much agrees with you as well, because as of 2nd June 2026, they've also called this fact out as well in terms of gold officially outpacing US treasuries as well to become the world's largest reserve asset as well. So very much in line with the kind of data that seems to be reflecting this strong upbeat sentiment as well. Thank you so much for taking time out and joining us this afternoon in terms of the update coming in and how to really be pricing in the changes in terms of the market. And he's saying that the bullion market is going to be looking at the bulls really taking charge. And if you're waiting for fresh buys, now's the time when it comes to gold. Now, let's also move on and talk about Waaree, that is in focus. After commissioning its BESS container facility, securing an additional solar module order, and impact from the extension of ALMM2 exemption as well. In fact, you did have Neeraj Shah who spoke to the management of Waaree Group. Let's go across and listen in to a slice of that conversation.
First the industry news, then the company news, Abhishek. I want to start off with this ALMM2 developments that have happened. This extension that is given, the belief on the street is that if this extension would not have come, and therefore the guidelines would have come in, it would have been beneficial for companies like yours and some of the others in margins for this intermediate period of 6 months, which is July to December. Now that it's been extended till December, maybe for FY27, basis the estimates that people had, there might be a bit of a margin hit. Would that be a fair assessment?
First of all, good morning and thank you so much for having me on the show. On the extension of ALMM, I think to understand this, we have to first see which framework has been approved under the extension notification day before. The current extension only circumvents around the C&I demand, the very limited next 6 month window for those projects which are either captive or which have some few connectivity approvals. So it's not a blanket approval, first of all. It does not extend to all the projects unanimously. It just extends to the particular window. Second, in terms of the impact on Waaree, if you look at our total capacity of manufacturing of modules, right now it stands at around 25 gigawatt. 24 gigawatt is in India and the rest is in the US. Against this, our cell capacity today is 5.4 gigawatt. While we are adding another 10 gigawatt of cell capacity over next 6 months of time, but it will take another 5-6 months of time for that capacity to go live commercially. So as of now, we have both sales, DCR sales as well as non-DCR sales, which we are having in the Indian markets plus the export one. So this really helps us to keep supplying until the cell capacity comes up to the non-DCR market a big way. At the same point in time, our DCR supplies are also running at full stack scale.
Okay. Does this, though, just to understand, while your capacities are coming on stream for the existing capacities, does it impact the near-term margin opportunity? Could margins have been higher if the extension wasn't given, Abhishek?
So it would have been true if you look at a scenario wherein there is over of cell capacity, and then either it is like module capacity is lower than cell capacity, or it is partially sold off. But in Waaree's case, if you look at our cell capacity, we are already having a cell capacity gap against the module capacity that we have, and we are trying to catch it up over next 6 months of time. Another one is our overall DCR capacity also is broadly selling at and running at 90% plus of capacity for next couple of months. We are already booked. So that way we are fully secured in terms of the extension that has come.
Got it. Just one more question on this, Abhishek, and then I want to talk about your best capacity. How much of your cell and the DCR module production is booked for? For some companies, it is maybe 3 months. For some, it is 6 months. In your case, how much is it booked for?
Though we don't give this exact number in terms of our disclosure, but I can help you out with broad maths. If you look at our overall retail consumption, retail sales that we have, roughly we do 20-25% of our gross revenue from our retail, which is cash and carry. and there is a 3 to 6 months of order which are always in hand from the retail sector also. So from that logic perspective, our 5.4 gigawatts of capacity for next a couple of months, especially December or maybe March, is broad.
All right, then there you go. So that's the word coming in from Vari Energies as well. But let's also move on and talk about Indian Overseas Bank again as well. When you talk about the margin figure as well as the NII figure, quite the sharp expansion coming in on both counts. In fact, Piyush is joining in with some more details. When you talk about the stock as well, given up slight bit of some of its gains as well, Piyush. But let's talk about the numbers nonetheless.
Right. Indian Overseas Bank has come out with a strong set of Q1 FY26 financial results. The bank has been able to post 49% growth in its net profit for the quarter ending June at around 1,659 crore. Now, what helped this profit was the bank posted handsome growth in its other income. Its other income stood at 2,160 crore in Q1 as against 1,481 crore in the same period last year. The bank's asset quality has also improved. The gross NPA ratio has come down to 1.33% from 1.42% last quarter. The net NPA has improved to 0.18% from 0.21% in the last quarter. The provisions have gone down a bit to 834 crore versus 1,106 crore in the last quarter. NII has grown sharply, loans and deposits in double-digit growth. Margin has slightly expanded and overall a strong set of numbers.
Thank you so much, Piyush, for getting us all of those details. Let's also talk about Indo-MIM's 3,800 crore rupee IPO as well that opens for subscription on July 23rd. The precision engineering company, in fact, plans to use most of the fresh issue proceeds to repay their debt. In fact, you do have Puneet who caught up with the management. Let's go across and listen in to a slice of that conversation as well.
We're now being joined by the management. Krishna Chivukale Jr., he is the whole-time director and chief executive officer at the company. We are also being joined by P. Balasubramaniam, vice president finance and chief financial officer of the company. Gentlemen, both of you, thanks so much for joining in. Let me first start off, with the company, right? It is operating in an industry that's, that's showing very high growth in the precision manufacturing space. Talk to us a little bit in brief about what the company is about and the key areas that you operate in.
Sure. Thank you very much, and thank you for having us today. I think in terms of the areas that we operate, the company is a component manufacturer using a large array of advanced forming technologies like metal injection molding, investment casting, machining, ceramics processing, along with fine powder production. But primarily we make components.
And 3D printing.
And 3D printing as well. We are a component manufacturer, heavily export oriented, shipping to about 45 plus countries around the world across a diverse range of component applications. So we're making everything for parts for hand tools, power tools, firearms, jet engine components, landing gears, components for automotive systems like turbochargers and seat belts, selective catalytic reduction systems, components for medical devices, whether that's endoscopic, laparoscopic, or instrumentation, even in some cases, components for implant systems. So it's a very diverse product mix across the entire world. Maybe about 10% of our business is in the Indian domestic market. So, I think in a nutshell, that's sort of what we're about. We're a component manufacturer. We supply high precision, high performance metal and ceramic components to a wide array of global industries.
All right, then there you go. So that's one IPO that you're really watching out for. But in terms of what else to really watch out for, if you're planning a flight or a ticket or booking your tickets for a trip to Dubai and Abu Dhabi, you should be listening in right now. Because we're talking about a letter that NDTV Profit has accessed. The ALPA India has urged the DGCA to suspend flights to Dubai and Abu Dhabi, citing rising security risks in the Middle East. Sessa joining in with some more details when it comes to this one.
Right, the Airline Pilots Association of India has urged the Ministry of Civil Aviation and the DGCA to immediately suspend commercial flights by Indian Airlines to Abu Dhabi, Dubai and other affected Gulf destinations. The pilots body says that the worsening security situation in the Middle East, including reported threats and ongoing military escalation, has significantly increased risks to civil aviation. ALPA has also warned that the aircraft could face dangers such as missile attacks, GPS interference, electronic warfare and rapidly changing airspace restrictions. It has also called for flights to resume only after an independent and comprehensive threat assessment, confirming the risks have been adequately addressed. ALPA says that passenger and crew safety must remain the highest priority, stressing that preventive action is always better than responding after a tragedy. So far, we know that major airlines such as Emirates, Etihad have announced cancellations of services to Kuwait due to the escalating Middle East tensions. However, if Indian Airlines will follow suit remains to be seen.
No, absolutely, and we'll definitely monitor that as well. Thank you so much for getting us all of those details. After a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who've helped shape India's economic journey. And this year's nominees for Business Leader of the Year Public Sector are: from strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise, this nominee has steered a strategic national champion to new heights. Captain Jagmohan, Chairman and Managing Director, Mascot Docks Shipbuilders. And leading one of India's energy giants through a period of transformation, growth and evolving consumer demands, this nominee has balanced scale with strategic vision. Manoj Jain, Chairman and Managing Director of BEL. Up next, let's also talk about revitalizing a cornerstone of India's industrial ecosystem. This nominee has championed execution, engineering excellence and renewed growth. K. Sadasivan Murthy, Chairman and Managing Director, BHEL. Driving the transition from power generation leader now to energy transition champion, this nominee is helping shape India's energy future. Gurdeep Singh, Chairman and Managing Director, NTPC, is who I'm talking about, and at the helm of India's energy explorer. This nominee has led with resilience, scale and strategic foresight in a rapidly changing global landscape. Arun Kumar Singh, Chairman and CEO, ONGC. All right, then, those are some of the nominees that you're looking at, counting down to 6 days. But that's all the time that we have on the show as well. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focus not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Lohia Corp is an upcoming IPO which we are going to discuss. Is a book build issue of around 1,101 crores. The issue is entirely an OFS, that is offer for sale. Opens for subscription on July 23rd and closes on July 27th. Just for the benefit of viewers, this company is a global manufacturer of machinery and equipment for technical textiles. But to speak more about this and what lies ahead for the next 2 to 3 years, we are here joined by Mr. Gaurav Lohia, who is whole-time director at Lohia Corp, and Anupam Agrawal, who's CFO at Lohia Corp. Welcome, gentlemen. Pleasure to have you at NDTV Profit. My first, the primary question is, of course, if you could, help us understand what is your business model in a very quick way.
Thank you. So we are a machine building company operating in the capital goods space for technical textiles. We manufacture machinery for various packaging and non-packaging applications. So various packaging applications include packaging of cement, fertilizer, chemicals, food grain, agro-produce, sugar, etc. And then there are various non-packaging applications also, like manufacturing of geotextiles, which goes under road construction, etc. Tarpaulins and pond liners, roof underlayment, etc.
Right.
So we are a global player, manufacturing machinery. Yeah.
Right, understood. Mr. Lohia, the IPO is entirely an OFS with no fresh issue. I mean, why was fresh capital raise not needed at this stage?
Ma'am, we are a cash generating company, and we did not we did not envisage any requirement of capex or etc. So all our growth plans will be entirely internally funded, and so we did not foresee any growth capital requirement for the company.
Okay, so then how much additional growth can existing facilities support before major capex will be announced?
We are currently operating at around 75% capacity, and so that we have sufficient capacity available in-house to cater to us for the next 2 or 3 years. And so the next capex plan would happen after that.
Okay, understood. And with that, so what is the current order book and how much revenue visibility does it provide for you?
Ma'am, the order book at the end of March was something like 1350 odd crores, and so we are expecting a revenue of so we did a revenue of around 1750 odd crores in the last FY.
Okay, understood. Sir,
just to clarify on this, please go ahead.
Yeah, please go ahead. Please go ahead.
So basically, the last year end we were at around 800 crore order book. This year we closed at around 1300 crore. We did a revenue of around 1700 crore last year. And since our is a short cycle order book, we generally tend to execute orders within the period of 6 to 8 months. So we believe that ongoing order book will be sufficient to take us to a growth path this year.
Okay, understood. And Mr. Agrawal, there was a good strong spike when it comes to your EBITDA margin, which currently, if you see, it's at around 90% odd. Will you be maintaining, or are these EBITDA margins sustainable, for maybe for the next 2 to 3 years, or you are expecting some kind of inch up there?
We are definitely looking at some kind of inch up there. because our revenues are a mix of domestic revenue and exports revenue. Exports revenue are a better margin revenue. Since we exports is a big contributor to our revenue. We export to around 100 countries currently. And we believe that as exports grow, our margins will inch up.
Okay, understood.
Well, that was the management of the new company that will be coming out with its IPO. Now, if you look at the market, yes, we are close to around 100 points down in trade. But the good point is that from the day's lowest point, we have recovered over 100 points. The day's low was around 24,135. We are currently trading at around 24,240. But one of the key factors what led to this recovery is the fall in crude oil prices. And that is one of the reasons why the benchmark has recovered in trade. If you look at the indices here, most of the indices are trading in red, Nifty Private being the worst contributor, down around 2.5% in trade, largely because of HDFC and Axis Bank. And on the flip side is the PSU Bank Index, which is the top performing sectoral index in trade. So clear shift of funds that we are seeing from private to PSU banks coming in. Apart from that, it's Nifty Pharma and Nifty Energy, which are also up close to over 1% in trade. But when it comes to the mid and small cap space, a good day. Despite the fall in overall market, Nifty and small cap, mid cap and small cap indices continue to trade in the in the green. But Varsha, which are the key stocks here that have been buzzing?
Well, a good set of stocks buzzing, of course, on the back of Q1 FY27 numbers and, of course, on volumes as well. You have Beta Drugs, strong volumes there. Tattva Chintan, very good set of numbers, though sequentially, if you see, margins have declined due to, delay in passing of the raw material cost, but overall year on year a very good set of numbers, and Tattva Chintan is actually buzzing on the back of its 18% stock is up. Pansali Engineering, again on the back of Q1 numbers, good realizations over here also. Strong numbers that the company has posted, stock is up almost 17%. You have Cross, strong volumes there. Turtle Mint is also buzzing on the back of Q1 numbers, strong numbers there, and DCM Shriram is also buzzing on small cap on the back of strong volumes. But one stock which is in focus is, of course, Concord Control System. Lot of triggers actually working for this company, if I were to ask, and to decode what are the opportunities when it comes to Kavach and different kind of segments. To speak about that, we are here joined by Mr. Gaurav Lath, who is a joint managing director for Concord Control System. Sir, welcome at NDTV Profit. Pleasure to have you. My first question, of course, would be just wanted to understand the scale and roadmap of Kavach development in India, and what opportunity lies when it comes to Concord Control.
So, thank you so much for having me here. I think Indian Railways story today is no longer just adding more tracks or more coaches. It is about making railway network more safer, smarter, and more intelligent. And we believe Concord is well positioned because we operate exactly in those technology layers where there are smarter railway technologies, intelligent control systems, and safety platforms, diagnostics, and advanced manufacturing, which we are focused at. Kavach represents one of the most significant railway safety initiatives undertaken anywhere in the world. It demonstrates India's commitment to making rail transport significantly safer. And from Concord's perspective, we see Kavach not as one project, but as part of a much larger transition towards intelligent railway infrastructure.
All that is great, but if you could just tell me what contribution you are expecting from Kavach orders to come into your overall order book. Currently, how much is it contributing? Going forward, say 1 year down the line, what would be Kavach contribution to the overall order book?
So to answer that question, today we stand at a very robust order book, and in that total order book of about 1,000 crores, we would have roughly about 500 crores coming in from Kavach as an order book. And as the rollout of Kavach is increasing in the country, this is bound to improve for us, and Concord is not only a Kavach company, but we are positioning ourselves as a railway technology company, participating in multiple railway safety transformations. Kavach happens to be one of them, where we are positioned and strongly moving ahead.
So on that note, since you're not only a hardware company currently, if you see over the next 3 years, what percentage of revenue do you expect when it comes to software, diagnostics, monitoring, and of course life cycle services versus pure hardware company?
So when we look at technologies, I think India is going through a transformation where all these different technologies are becoming more and more prevalent. Not only from a hardware perspective, Concord sees growth coming in from all these sectors in a very structured way, more from the software or the life cycle products where Kavach is being deployed, where all these smart electronics around locomotive is being involved, and then the use of more and more real-time diagnostic and sensing solutions along the connected railway platform. So all put together, there will be a decent shift from a very strong shift from just hardware, but more data-oriented connected railway systems.
Given that currently 50% of your order book is coming from Kavach, don't you think that abundance is too much? Because in past we have seen order delays happening specifically when it comes to Kavach system. So aren't you worried about that?
So as I was talking earlier, Kavach is one of the offerings which we offer as part of our intelligent railways offerings. But every locomotive, every signaling system, every safety platform, every maintenance activity, I think day by day they are more connected. And the use of electronics and software content per locomotive is also increasing. And all this put together will support Concord's future revenues and will not be largely dependent on only one technology or one product.
The kind of growth that you're expecting when it comes to revenue and EBITDA, say over the next couple of years?
So in the past couple of years, we have been demonstrating a significant CAGR, and we always keep promoting that we will be doing 30 to 40% on a CAGR basis year on year, which we have successfully delivered in almost every result which we have published. And we foresee a similar, rather a stronger growth going forward.
I also wanted to understand on the fusion. You said that the fusion could do almost 200 crores of revenue at an installed capacity. Where are you today when it comes to the revenue of fusion, and what's the utilization levels, if you could speak on that?
So fusion is one of the strongest strategic stories which Concord is on the verge of panning out as a complete system integrator and vertically integrated railway electronics company. This acquisition is not just a financial one, but it's more a technology-driven acquisition for us, and it completes the end-to-end electronics for us as a whole. In next couple of years, we see doubling of the entire capacity from 200 to 400 crores, and with an EBITDA of at least 25 to 30% coming in from fusion.
Okay. As you're mentioning, 1,000 crore is your total order book right now, but if you could just give us some sense on what is the total total worth of orders for which you have already placed bids, and usually in past, what has been the success ratio for the company?
So it's very difficult to put a number to it, because as the Indian Railways is shifting, the government focus is shifting from the civil infrastructure, which was earlier there, to more of a more connected and a safer railway platform. Day by day, the deployment is becoming faster in the railway industry. And because of that, multiple orders and bid opportunities are being created for Concord. And we are participating many of them, where we see that there will be a significant growth coming in near future.
And also I wanted to understand on the green mobility. You demonstrated India's first indigenous battery locomotive retrofit. What commercial opportunity pipeline has emerged since that demonstration, and are discussions, limited to pilots or progressing towards, I would say, in a fleet scale deployment?
So I think the green mobility as a space is going to be more and more prevalent. The most important aspect is that today globally railway mobility is moving towards the direction of green mobility, hydrogen based solutions, hybrid solutions, battery solutions, and alternative fuel cell solutions. And India is wisely developing these capabilities across multiple technologies rather than depending on a single solution. Concord wants to participate in this transition through the entire propulsion electronics, control systems, and the battery integration, which we are already a very strong contender of and are extremely focused in this direction.
Understood. Thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you at NDTV
Thank you
Profit.
so
Thank you
much.
so much. With that, let's also invite Narendra Solanki, who's a Senior VP and Head Fundamental Research at Investment Services at Anand Rathi. Narendra, what's your view when it comes to Concord control system, considering it is moving from a hardware company to software, and Kavach coming up in their segment? So just wanted to understand what's your view on this counter.
Yeah, good afternoon. First of all, let me start with my disclaimer. We do not have any active recommendation on this stock. Having said that, I think we are very positive on the sector. If the modernization of the railways are concerned, as far as the modernization, then the railways are in a very aggressive capex mode, and especially the Kavach 4 system, which is right now approved for installation. If you see the overall market size for this Kavach 4 system is somewhere around 45,000 to 50,000 crore, of which around 70 to 80 lakhs per locomotives, and there are around 10,000 locomotives, and there is 50 lakh per kilometer kind of track modernization which is going to happen for this Kavach 4 system installation. And there are very few companies in India going to implement that, and this company is one of them. So there is a huge headroom for the growth looking at the size of the company. Now, two critical things investors should keep watchful of. One is because it's a government-sponsored scheme, so there may be some lumpiness in the order booking activity, so that may impact the company, and it's a cyclical nature, so that cyclicity should also be kept in mind. And the working capital days are generally longer for these kind of projects. So these are the operational execution issues which the company should be able to maintain. And if it does so, then I think growth-wise, there is very good opportunity for this company in Kavach 4 system.
All right, got that view. Well, viewers, time for a quick short break. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क, और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P-Mark, the mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
India Inc.'s most respected names chose India Inc.'s best and brightest.
these kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Good afternoon, you're watching Small Cap Buzzers. The next stock that we'll be talking about is Bhansali Engineering. The stock's been gaining after reporting a solid set of numbers. The stock is up nearly 15% in trade. Let's get in part to understand what were the key factors that led to this outperformance for Bhansali Engineering.
That's right. Bhansali Engineering is on a 3-day gaining streak, up over 15% today, and the stock has touched the highest level since January 2025. In fact, in the last 8 sessions alone, the stock has gained over 35%. So a huge momentum is what we are seeing in this counter. If we talk about the company a little bit, the company makes ABS and styrenic resins, and they have 2 manufacturing facilities, one in Rajasthan and one in Madhya Pradesh. Now let's move on to the key reason behind today's move, that is a solid set of Q1 numbers. The company saw a revenue growth of 51%, that was driven by higher realizations. Also, the PAT growth of 43% was driven by operating leverage and improved cost efficiencies. And despite all of the capex that they have been doing, the company has mentioned that they still remain debt free. Talking about the capex, let's have a look at their plans as well. They currently have a capacity of 75,000 metric tons per annum, which they are targeting to increase up to 1 lakh MTPA. This would require an investment of 200 crores, which will be fully funded via the internal accruals. The commissioning is targeted by the September of 2026, and the company expects that optimal utilization levels will be reached by FY28. This capex matters a lot for Bhansali Engineering because it makes them India's lowest cost, one of India's lowest cost ABS producers, and the domestic demand for ABS has been growing pretty fast, and currently 30 to 40% of that demand is met via import. So the company is trying to capture that part of the market right now. It will also upgrade their product mix into the higher margin ABS segment as well. So this is the entire outlook about Bhansali Engineering, and the key thing to track going forward will be, number one, if the capex yields any results for them and the utilization levels they are able to achieve in that.
Narendra, any view on Bhansali Engineering? The capital expenditure that the company has been doing could result into good incremental revenues. Your views on this?
Yeah, definitely. Right now, we do not have any recommendation, but the company has been strategically diversifying. Plus, it has just completed an exercise of debottling its one of the manufacturing plants, and hence the impact of that is visible in the results. Also, the kind of demand and the kind of industries the company caters, which caters to its products like automotive, durables. So there has been a good growth in both these segments. So there is a good growth for the company's product in medium to long term. So plus it is one of the lowest cost producers of ABS. So that also gives an advantage to the company, to retain the margins and retain the market share. So overall, the company has posted decent results in this quarter as well.
All right, got that view. Well, thank you so much, Narendra, for joining in and having a conversation with us. Pleasure to have you. Thank you so much.
Yeah, thank you.
Well, moving on, Tattva Chintan, let's pull that chart up. The stock is buzzing. This is on the back of strong Q1 numbers that the company has seen. Stock is up almost 19%. But we have Shivam to give us more details on how were the numbers.
Yes, the stock is seeing a good momentum on the back of a strong Q1 results. In fact, the revenue growth was led by the volumes, and also the segmental growth has seen a good performance this quarter, except the electrolyte salt segment, which has seen a temporary disruption, which is due to shortage of raw materials. And in terms of capex, the company has announced around 200 crores worth of greenfield multipurpose manufacturing facility, which is to be operational within 21 months. And in terms of revenue potential, the company is expecting around 300 crores if that new manufacturing facility is being operated at full capacity. In terms of guidance, the company has maintained its FY27 revenue growth guidance at 25 to 30%. The EBITDA margin guidance has also been maintained at 20 to 22%. And in terms of revenue target for the electrolyte salt segment, which saw disruption, the FY27 revenue target is being kept at 40 to 60 crores. In terms of stock performance, the company has given a good performance and in past few periods.
Good. Well, thank you so much, Shivam, for all the details. Well, viewers, before wrapping the show, after a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26, NDTV Profit brings back the Business Leadership Award, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And this year's nominees for the new economy leader are: number 1, Eternal, pioneered food delivery and building a multi-vertical consumer internet powerhouse. Then you have Policy Bazaar, brings transparency to one of India's most complex industries, transforming insurance from a product sold to a decision informed. You have Nykaa, a category-defining consumer brand reshaping how millions of Indians discover, shop and engage with lifestyle products. Car Trade Tech, streamlined vehicle discovery, transactions and ownership across the automotive ecosystem. Then you have Delivery, which is a refined supply chain efficiency through technology, scale and relentless execution. Well, this is all the time that we have on this edition of Small Cap Business. Stay tuned to Ask Profit Afternoon Edition coming up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में.
P Mark, the mustard specialist since 1933.
बरसों से सरसों.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve those stock-related queries. But as we do, it's been an interesting day for the markets because in the morning we did recover back to that 24,200 mark, and today, right now, yet again, continuing to hold this level at this point of time. So 24,250 is where we're at. There still continues to be the 85-point downtick from Friday's session where we had a good session for the markets. But in terms of what we've seen for the heat map today, banks continue to be under pressure, and you saw a whole host of earnings on Saturday. So Kotak Mahindra Bank, Axis Bank and HDFC Bank, all of those three counters are down right now. Seeing almost a 5% downtick on Axis Bank. You've also seen actually Maruti slip to today's low point, down 2.4%. And on the other side, you're seeing some good gains on Trent, Cipla as well as JSW Steel post earnings as well. While ICICI Bank had started off well and now seeing and essentially through the day has seen some profit booking, still up 1.3% right now. In terms of the sectoral though, and here is where there is a clearly a divergent picture because you're seeing the Nifty Bank as well as the private banking space down right now, while 2.5% uptick on the PSU bank space led by the PNB earnings. IOB also came in just a while ago. Those earnings have also been seen a good reaction. So definitely a clear trend forming at least in this quarter for the banking names, continuing from the last couple of ones as well. In terms of the advanced decline ratio, and here as well, it's been a very, very divergent picture over the last few days. You've seen the declines as well as largely having an impact on the advances. Today though, there's been quite a big fight as you can see on your screen right now, but the advances at this point of time continue to be higher than the declines. That is clearly visible on the mid cap and the small cap too. We're not seeing very big gains on both those indexes, but compared to the Nifty 50 benchmark, seeing some buying, and that has carried forward through the day. So now the mid cap 150 up 0.6% at the highest point of the day. Small cap 250 getting there, but might see some pullback. You have to watch out for those levels. And also in terms of the BSE 500 for the individual names as well, because you're seeing some good moves coming in on Sham Metallics after a good set of numbers. PNB as well up 5% right now. VMart and JSW Energy also seeing a good move, while Campus, Axis Bank, of course we spoke about it, and India Cements also decent numbers, but we'll wait for the bigger Ultratech numbers that might come out anytime now, so we'll wait for those earnings on standby as well. But let me welcome in our guest who'll solve your stock-related queries. Vishnukant Upadhyay, AVP Research at Master Capital Services, and Rajesh Agrawal of Om Capital now joining in. Gentlemen, both of you, thanks so much for joining in today. The first question, and this one is coming in on as we've spoken quite a bit about over the last few sessions on Ashok Leyland. Now, one of those counters which had started to see some good moves as crude oil prices receded, but now yet again with the geopolitical crisis, it'll be something to watch. Shankar is already holding 1,500 shares of the counter at 155. Wants to add more, but for a short duration, what would you recommend, Vishnu? Good afternoon. We've seen that, on the fundamental factors, crude oil prices spike yet again. Do the charts reflect that volatility?
Hi, Puneet. A very good afternoon. If you look at a technical chart, prices are forming a sort of inverse head and shoulder kind of pattern, but yes, still it is trading below. It's a very crucial 200 exponential moving average. I believe as long as prices are trading about 150, 149 sort of levels, one can consider buying with a potential gain toward 167, which if broken decisively, the next target will be somewhere around 177, 178.
178, got it. The next question, and this is from Kavita, who's from Bengaluru. On Canara Bank, she has 60 shares bought at 158. Wants to know if she should still continue to hold this counter or switch out and invest in something like SBI. Rajesh, good afternoon and welcome to the show. Would you recommend her to switching out right now out of Canara Bank? It's one of those PSU banks that has seen some deceleration from the highs, but overall the basket continues to be in focus today.
Good afternoon, Puneet. Good afternoon, Vishnu. You said it right. The basket is in focus today, while the
bank Nifty is down, private sector index is down, but PSU banking index is up, and that's a divergent trend, I would say. But if you look at the numbers starting from Indian Bank, when they came out numbers around 10 days back, and then Bank of Maharashtra, followed by PNB and all those PSU banks are giving very decent numbers. And this is an indication that times have changed in the entire PSU space as such. The balance sheets have been cleaned, credit offtake has increased, and IMs have increased. They have become aggressive in their businesses. So I think continuing with PSU Bank is a good idea. If you have a medium-term horizon for maybe 6 to 9 months, I think Canara Bank is also good. SBI being a large cap, no doubt, it's the best out of that. But Canara Bank can be held. If you want to put new money, you can put in SBI. But switching is not recommended at this point of time.
Got that view, Rajesh. And you'll also see, of course, the big SBI AMC IPO coming tomorrow, SBI funds, of course. And that benefit also will be visible in SBI numbers too in this year sometime around. So watch out for all of those aspects too. And good advice coming in from Rajesh. The next one is on PFC. Srinivas Rao has been holding the shares at 425. Asking if he can still continue for the long term. Rajesh, let me come back to you. The merger process largely, getting at the fag end of things, but would you recommend him to continue holding PFC?
Of course, the kind of government's focus in increasing power in our country, the capex going around, and the direct beneficiary is a company like PFC and REC. REC, of course, is going to be merged into PFC. The dividend yield is around 5%, trading at less than 1 times price to book. With good order book. Even the asset quality has improved a little bit from what it was in the past. So I think at these 410, 420 odd levels is a good hold. By any chance it comes to around 380, it would be a add at that point of time. For somebody holding it, one can continue to hold.
Got that view. And viewers, you can also call us on the landline numbers that are flashing on the top of your screen right now. Speak to our guest for your stock-related queries. But the next one's on Cupid. Radhakrishnan from Bengaluru is asking if what's a good target to watch out for over the next few months. But Vishnu, this has been a rank outperformer, right? Today seeing some pullback, but is the moment expected to continue?
Definitely, it has been a little overstressed, but for last few trading sessions, it has been consolidating in a very thin horizontal band of 225 on the higher side, while 197 on the lower side. And the good thing is that the prices are gradually correcting towards the lower range value. So I believe as long as it is trading above, it's a short-term moving averages, that is 21, and which aligns somewhere 185. One can consider buying in the stock. On the higher side, I'm expecting 250, 260 sort of levels can't be ruled out in short term.
Correct. And that was also Nand Gopal's query. So hopefully that answers our question, Nand Gopal, as well. Next one coming in, and this is part of the, we've seen the demerger as well go through for Vedanta. A few companies listed, or most of the companies, all of those companies listed now. But Dilip wants to know about Vedanta Iron at roughly around 29.5 is what he's holding at. He wants to know if he should continue to hold his 600 shares for the long term. Rajesh, just in terms of the listed entities, a lot of focus on the aluminum business, but how are you looking at the iron and steel business as well?
See, iron and steel business as such is doing good. The electro steel business, which was previously merged into Vedanta as a whole, has been demerged into Vedanta Iron and Steel. They have some iron mines too. The correction which we are witnessing at this point of time is basically for two reasons. After the listing, the stock has gone circuit to circuit, given a massive rally. And if I'm not wrong, this stock has been moved into ASM. That's why we have seen volumes going down and a correction coming in. For somebody ready to hold for a long period of time, by long, at least 1 year down the line, I think 40, 45 would be a decent target.
40, 45 would be a decent target. Got it. But Rajesh, also on Sansera Engineering, let me stick with you because Bindu from Hyderabad has actually bought these shares at 2480. So she bought it after some good moves. But from there also you've seen another very strong 30% move as well. So she's sitting in good gains. We had a big brokerage note actually coming from Goldman Sachs on the auto ancillary space, and Sansera was one of their big picks. Hence you're seeing a good reaction on the stock today as well. But Rajesh, there's a lot more getting unpacked apart from auto ancillaries. The aerospace division now coming into fruition. Should she continue to hold since she's bought her at good attractive levels?
Yes, she bought it at attractive levels, no doubt on that. But the valuation at this point of time has become somewhat stretched. Around 3,500 odd levels, I would suggest booking at least partial profit. So her acquisition costs come down. And then she can continue to hold. Maybe book at least 20% of your holding. That would be better at around 3,500.
3,500, got it. The next question is on Bank of India. We discussed a few with Rajesh on the PSU banking space that are doing well. But Krishna is holding these shares at 137, asking if he should still continue to hold this counter right now. Vishnu, would you recommend that? What should he do with the 75 shares?
Yes, undoubtedly, prices are in a rectangle formation, and it is giving an early sign of initiation of a bullish journey. So I believe as long as prices are maintaining above 140, one can consider buy or one can do averaging as well if someone is already have this stock in the portfolio from the higher levels. So this is a very good point to accumulate the counter. I believe on the higher side, 168, 172 kind of levels will be definitely on card in short term.
Got it. Well, let's go to our first call for today. This one's coming in and dialing in from Ghaziabad. प्राण जी डायल करें एक स्टॉक रिलेटेड क्वेरी के लिए. प्राण जी, वेरी गुड आफ्टरनून. शो में आपका स्वागत है. सर कैसे मदद कर सकते हो?
हमारी क्वेरी इज रिगार्डिंग बजाज हिंदुस्तान शुगर. आई बॉट 18,000 शेयर रिसेंटली रिजल्ट.
ओके.
दैट इज ऑन नेट प्रॉफिट. कंपनी टर्न अराउंड हो गया था. तो उसके बाद से ये चल नहीं रहा, मतलब 17 तक आ गया. उल्टा बढ़ना चाहिए था, गिर गया.
अच्छा.
तो मैं और भी लेना चाह रहा था इसको वैसे नीचे में.
हाँ जी.
कभी तो किसी टाइम तो ये लीडिंग कंपनी थी इंडिया की. क्या ये इसका कुछ भविष्य का टर्न अराउंड दिखता है? मतलब इतना स्टोरी भी चल रही है, सब चल रही है.
गॉट इट. एंड प्राण जी, आपका सवाल समझ गया मैं. बट राजेश जी, क्या रेकमेंड करेंगे आप प्राण जी को? उन्होंने बजाज हिंदुस्तान लिया है. जैसे उन्होंने कहा कि पुरानी कंपनी है. रिजल्ट्स आई डोंट नो आपने देखे कि मैंने नहीं देखे थे, बट आपके की राय क्या रहेगी इस पे? क्या उनको कंटिन्यू करना चाहिए, होल्ड कर दे, या कोई दूसरा स्टॉक लेना चाहिए?
रणवी, ऐसा है कि आपने सही कहा, एथेनॉल की स्टोरी है. बहुत पुरानी कंपनी है, टर्न अराउंड हुआ है, बट बहुत बुरे दिन देखे हैं कंपनी ने. और एक क्वार्टर के रिजल्ट्स पे ये नहीं कहा जा सकता कि कंपनी के फॉर्च्यून्स बदली हो गए. तो आपने बड़ा पैसा 18,000 क्वांटिटी ऑलरेडी ले ली है, और क्वांटिटी ऐड करने के लिए मैं नहीं कहूंगा. आपको शुगर की अगर स्टोरी प्ले करनी है, एथेनॉल की स्टोरी प्ले करनी है, तो आप थोड़े से जो अच्छी कंपनियां हैं उसके साथ रहें, तो कम से कम आपका रिस्क कम रहेगा. जैसे बलरामपुर चीनी है या ईडी पैरी है, इनको चुने बेहतर होगा. यहाँ मैं समझता हूँ थोड़ी सी क्वांटिटी कम कर लें जब भी उछाल आए.
विष्णु, मैं आपकी भी एक राय लेता हूँ इस स्टॉक पे, बिकॉज जैसे राजेश जी बता रहे कि कोई भी उछाल पे थोड़ा क्वांटिटी कम करे. एट दिस पॉइंट ऑफ टाइम आपको कोई दिख रही है उछाल आते हुए चार्ट्स पे? आई नो बहुत पुरानी स्टोरी है, बट जस्ट बिकॉज वो प्राण जी ने बहुत सारे शेयर लिए हुए हैं, कोई आपको दिख रहा है इसका कोई आउटकम?
देखिए पुनीत जी, अभी तो फिलहाल मेरे को कोई उछाल आता हुआ नजर नहीं आता है. इवन मैं कहूंगा कि डाउन साइड में ये 16.5 और 16 रुपये, ये जो कि इसकी जो प्रीवियस जो तेजी है उसका लगभग 78% का एक फिबोनाची रिट्रेसमेंट है, वहां तक एक बार आ सकता है. सो लेट्स कीप द फिंगर क्रॉस. यदि कोई राइस मार्केट में आता भी है 18.50 और 19 के आसपास का, तो डेफिनेटली राजेश सर ने जैसा सजेस्ट किया है लिक्विडेट करने का एटलीस्ट 50% पोजीशन, तो वहां हमको डेफिनेटली करना चाहिए. और ईआईडी पेरी और बलरामपुर चीनी डेफिनेटली आल्सो ऑन माय कार्ड, तो वहां एक बार ये माइग्रेट कर सकते हैं अपनी पोजीशन.
Got that view, Vishnu. But next question coming in, and this one's from Pranjal Gowda, who's from Mandya. Wants to know about the wealth, the water as well as the water management sector. He wants to invest 1.5 lakh rupees for the next 3 years. Anything that you like, Rajesh, in this, the VA Tech, Wabags, Eon Exchange, anything from this space that you like, that you would still buy into for the next 3 years?
You said both the names which I was going to say, Ion Exchange and Vatekberg. Vatekberg is an Indian multinational company doing very well, not only in India, but in international markets too. order book is very strong, the kinds of government focus and the kind of water shortage that's being talked about because of data centers and all is going to help these kind of companies. And Ion Exchange is trading below their book value, doing very well. It has corrected quite a lot from its high. If I'm not wrong, almost 40-50% correction it has witnessed. So there is a lot of room left. The only problem with Ion Exchange is the volumes are very low, but for an investor, volumes doesn't matter because they are basically for traders only. So both are on a buy list for a long term.
Got that view, Rajesh. But the next one, and this one, Gabriel India, it's another counter that has done very well. When you look at beyond the mid 2025s, where they announced the unlisted companies to come back into the listed entities, and then you've seen that run up from 400 all the way up to what the current levels that you're seeing. But, Sabita has actually bought these shares at 1070. Vishnu wants to know if the trend continues. I also have to let you know because the results are tomorrow. So would you trade in this current range, or the momentum should continue, Savita should continue to hold? What's your opinion?
Well, Puneet, so the entire auto insurance pack is doing extremely well. And the good part is that the stock is enjoying the sectoral tailwind as well. And we are continuously witnessing every rise in the prices is being accompanied by a healthy volume. If you see at today's 5% gain in the stock has also been accompanied by a very good volume. So I believe on the higher side, prices should remain, in a bullish trajectory on the higher side. I believe 1600, 1650 sort of levels can't be ruled out. So if someone already have this counter, so please keep trailing stop loss below 1290 and, keep enjoying the rally.
Got that view, and most certainly the rally has been one that's been very enjoyable for all existing shareholders as well. The next one, and this one's on Apollo Microsystems or Shriram Finance. Either of those is a good time to enter, Vishnu, is the question from Bala Subramaniam. What's a better pick in the near term?
Well, so, Apollo Microsystem is, currently technically, chartically, if I look, just consolidating in a very thin horizontal band of 379 on the lower side, 448 on the higher side, in fact. So from the risk reward point of the view, prices are trading currently very close to its lower range value, that is 380. One can go long with keeping the stop loss below 175, while on the higher side in short term, 440, 442 kind of levels can be seen. While as second stock, you mentioned Shriram Finance, right?
Got it. Well, let's now start the rapid fire round in this edition of the show. Viewers as well as Rajesh and Vishnu, you know the drill. Keep your answers as short as possible. First question from Hyderabad. Lakshmi is holding on to Balakrishna Industries at 2050. Rajesh, since entry into the two-wheeler space, the stock's actually not done well. Would you recommend that she should continue to hold, but what's your opinion?
Continue to hold.
The next one coming from Rakesh, who's from Vijayawada. He's holding on to 11,200 shares of Sagility at 41. I think results this week as well, Rajesh. What's your opinion on the stock?
After result, try to reduce your quantity.
Got it. The next one's from Rajesh from Hyderabad. He wants to know between BSC and HDFC AMC, what's a better pick for the next 2 years? Rajesh, what would you recommend?
BSC.
BSC, got it. The next one's Apollo Microsystems. Srinivas Rao has bought these shares at 128 once and almost 3 years ago. So he's sitting on good gains. Should he continue to hold, Rajesh, since it's bought at such attractive levels?
Continue to hold.
Also on TD Power, bought at 1279. Vishnu, what would you recommend? Our viewers sitting on losses currently. Should he continue to hold?
Currently hold with a stop loss below 1070.
1070, got it. Pawan has bought into NSDL for the long term, holding shares at 1,000 rupees. Should he buy more, or Rajesh, would you prefer CDSL? What's the better pick?
I would prefer BSE.
You would prefer BSE?
Add BSE.
Add BSE. Okay, got it. The next one coming in, and this one's on First Source Solutions. Our viewer has bought these shares very recently. Vishnu wants to know what he should do with this counter now. What's your opinion?
That's a FSR, right?
Yes.
Yes, one can hold the position.
And the next one coming in on SW Solar, our viewer is holding currently at a 20% loss. He's not mentioned his buying price, but mentioned that he's at a 20% loss right now. Should he continue to hold here, Rajesh?
Try to exit.
Next one on Pheniotex Chemicals, our viewer Murli has bought these shares at 26. Stocks currently trading at 40 odd. Rajesh, should he continue to hold?
Book profit.
Book profit. Okay, got it. The next one coming in, and it's on Trent. Venkat has bought these shares at 2765, asking a 3-year view. Rajesh. Add. Okay. The next one on Happiest Minds, Raja has bought these at elevated levels at 872. Any strategy here that you can recommend, Vishnu, if he should still, because he's almost down 50% odd, what should he do with his holding now?
The breakout will take place only above 420. If prices manage to settle the day above that level or week above that level, one can add the position, as long as currently prices are looking little dicey.
Got it. Well, that was the last question of the rapid fire, but Vishnu as well as Rajesh, thanks so much for helping us solve almost 85 queries. This is of course of both the shows, but thanks so much for helping us solve all these queries, Rajesh as well as Vishnu. Appreciate your inputs today. But viewers, after a pause of almost 13 years, one of the most prestigious honors in Indian business is back. On July 26th, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. The nominees are Punjab National Bank, a banking institution woven into India's economic fabric for more than a century. Indian Bank, combining a strong legacy with disciplined execution. Union Bank of India, with a nationwide footprint and growing a growing digital presence. Power Finance Corporation, financing the infrastructure behind India's growth story. Canara Bank, one of India's most enduring financial institutions. State Bank of India, the backbone of India's financial systems. And Bank of Baroda, blending global presence with domestic strength. That was, of course, the nominees for the Financial Powerhouse of the Year in the PSU category. But join in on Sunday, July 26 to cash in all the key winners and what else is on the cards as well. Just 6 more days to go. But with that, it's a wrap on this edition. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to get a point of view as to how different jury members were looking at various participants, and the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element in on who they chose, but also that they had consistently delivered on it. They had thought about change, they had thought about resilience in their own businesses. So the soft factors that they eventually chose the winners with is something that stood out for me. In fact, when we were actually doing the work, if there was a governance concern on any of the nominees, they were struck down. Or if there was something which was potentially in the grey zone, the jury was notified of it, etc., etc. In many cases, the jury themselves, very knowledgeable jury, themselves were very, very aware of some of those situations.
Hi, I'm Tamanna Inamdar. Watch me on NDTV.
Hi, thanks so much for joining in. You're watching India Market Close. It's turning out to be an exciting end to trading because you have numbers of Ultratech Cement that we've just about flashed on the bottom of the screen. But of course, we're coming to you live from the NDTV Profit Suzlon studio. Some of those numbers on your screen right now, I'm just going to let you have a look at it. Seems like the revenue number has come in line with expectations.
No, somewhere
the margin
slightly to a beat because 24,648 Alex versus 24,100, right?
Yeah.
So a beat at least in terms of where the top line goes, I would say. And in terms of the profit number as well, yes. What you're
more or less in line.
More or less in line.
So I look at a more than 5% deviation either up or down, and if that is the case, then there is either a beat or not. But 2,600 crore net profit seems to be a beat as well, right? So this is where the real
the margins is going to be interesting to watch out for.
20.3% in line with expectations.
I think at the entire cement pack as a whole, I think has been done pretty well in terms of the first quarter so far with the numbers that have come in. Like even from the smaller names, if you go to see like a Nuvoco Vistas, a very strong set of numbers. Ultratech Cement, India Cement, I think post-market hours on Friday.
But JK Cement was not good.
Was not good. But on the higher side, overall it's a good set of numbers, and I think best is to get Puneet to decode this for us because he tracks this place pretty closely. Puneet, Alex and I are just having a discussion in terms of how would you make, what would you actually make of these numbers, because some of them are in line with what the expectation was. One or two parameters, a beat.
Well, thank you for that. It's definitely a good set of numbers for the company because you were expecting a 13% growth in this quarter. It's coming at 16% in terms of revenue growth, and that's led by strong volume growth as well. So the estimate of volume growth was roughly 9 to 10%. It's actually coming at 13%, and hence you're seeing that big spike up on the stock right now because the profitability number also has come in higher by at 16% in terms of growth. We were expecting a 9% growth as well. So the positive factor here is that they have been able to manage costs, and I think we'll get a more detailed view of how have they managed fuel costs as well as the packaging costs. Seems to have been that both of those have been managed in this quarter. The EBITDA per ton also number is a very interesting one at 1,214. It's very similar to the Q4 high number that we saw as well, and this is versus 1,198 per ton on a YY basis. So they have been able to manage costs. The volume growth has come in this quarter, and I think as Alex mentioned that the JK Cement numbers were not very good because of the higher exposure that JK Cement has in central as well as in eastern India. So a lot more better performance by companies having more exposure to North India as well as the West. And Ultratech Cement, of course, with 200 million ton capacity, has been able to have a higher exposure to those regions. But it's a good set. It's a good set of numbers for the company. A lot more on commentary of how have they been able to manage costs, because that will carry forward into Q2 for the companies as well.
Actually,
Puneet. I like the analogy when it comes to the region-specific performance that you're seeing, and that's the reason why you've not seen that with the JK Cement as well. But if you just pull up a long-term chart of Ultratech Cement as well, Alex, that tells you in terms of the levels where the stock is trading at. I mean, look at it, 240 right now. It's corrected from those April-May highs, come down again, and then that marginal recovery has come in. So still far away from where the stock was 6 months ago. So that's something that we need to take into consideration.
It certainly is.
Along with this, let's just pick up ACD Ambuja as well and see what's happening there, because these are companies which have exposure to the same regions on a higher scale. There you go.
Okay.
You are having that rub-off effect in terms of Ambuja Cement as well. That stock is at the day's highest levels. Likewise, when you talk about a ACC, 0.6% higher on this one.
Very interesting. So you would look at pricing trends from the perspective of region, right? West, East, South, and then
right
North.
now, West and North is what is actually playing up really well.
Is doing well. So bear in mind that we'll have to look at the numbers and see how they pan out. Pull up the intraday chart for the Nifty 50, because we'll be off the low point of the day, certainly. We're trading with cuts of about 0.4%. Really interesting to look at the contribution to this, right? So before we get into the heat map, take a look at the contribution chart, because you will see that on the one end, and I was just adding all of this up, Hiral, it comes to about 140 points, 138 to 140 points, all of this together, 132 points, right? All of that together is 135 points on the other side by just one counter.
Yeah, it's just HDFC Bank which has come in. And to counter that, ICICI, yes, a like-to-like peer to an HDFC, but the weightage is what is not giving it that kind of heft over there as well. But it's the banking majors which are a downer. I think an interesting conversation is going to be the PSU and the private banking space, that the kind of gains that have come in terms of the PSU banking space versus what's happened to the private banking space is interesting. But I'm looking at a Maruti also, which is contributing to the cuts today. Infosys is, again, I mean, six points contribution, not too much. But I think we will have to watch out for what's happening to a Bajaj Auto, TVS Motors, because these are companies which will be reporting on numbers
Bajaj Auto tomorrow. Pull up the heat map for the Nifty 50 and take a look at this, because ICICI Bank is doing okay. There is actually much more green on the screen than not. So it is one or two counters that are proving to be a big drag on the screen. Reliance Industries not doing too much either, having posted numbers in. Some have argued... some have argued that it came in better than expected, but that retail drag is proving to be a reason why the stock is not doing too much.
But look at a trend. The pickup in terms of trend is very interesting. Apart from that, you have Bharti Airtel. Your pharma pack is doing categorically well in terms of today's session. So Cipla nearly up 2%, Dr. Reddy's up almost 1.3%, Sun Pharma also contributing, and you have from the healthcare space, Apollo Hospitals, which is contributing. Steel, again, JSW Steel reacting to the set of numbers that have been reported as well. So that stock is up nearly 1.6%. So it's a very interesting, screen that you're seeing over here. Let's quickly look at the sectors, and then we look at the broader markets along with the advanced decline ratio as well, because in terms of sectors, there you go. I mean, look at the PSU Bank Index, Alex. 3% up move coming in there. And look at the private bank index. 2% down take.
Polar opposites. I think Punjab National Bank is a big contributor to the move that you see in the PSU banking pack. But as you pointed out, healthcare and pharma is doing reasonably well. That was the case at the start of the day today as well. But broadly, more green than red here too. Pull up the mid cap and the small cap indices, the intraday charts, and you will see that they're off the low point of the day, certainly, in fact, at the high point of the day for the mid cap index. I wouldn't be surprised if the small cap index is also significantly off. It has come off from the high point, but it's still trading in the green with gains of about 0.1%. Lastly, just pull up the advanced decline ratio, and then Hiral will take you through what you need to bear in mind. Quite a bit of changing of winners, right, over the course of the day so far. Now,
we are back to those close to 1400, 1500 kind of advances. So there is that bull market push that's coming in right now, and that's the reason why you're seeing this kind of an open mouth.
Certainly buyers in the broader markets and buyers on dips. But what are the key levels that you need to watch out?
It's going to be interesting to see in terms of Nifty, because we've been talking about a support of around 23,200 on the downside. Let's just pull up the lines in terms of the factors you should be watching out for. 130 points recovery is what you're already looking at. Now, the reason, Alex, why we're seeing this is also because of the fall that has come in terms of crude prices. So that is one. Secondly, the value buying has continued in terms of the broader markets, as Alex was pointing out, in terms of the advanced decline ratio and how the broader markets have come off lows. The bullish bias remains intact, and this is as as long as Nifty is holding 24,200 to 24,100. So those are the levels that you should be tracking on the downside. Resistance on the upside is 24,350 to 24,500. So watch out for 24,500 as the major resistance level on Nifty 50. Moving on, let's look at what's happening in terms of Bank Nifty as well. Or before that, if we break above 24,500, there is a potential that we could eventually go to 24,000 as well. So there is that positive bias that continues. And the support is coming in at 24,000. That's the strong support on the downside. But before that, 24,200 is also there. In terms of Bank Nifty, the funds are shifting from private to the PSU banking space, as we're seeing in terms of where trade goes, because both the indices are poles apart right now. Resistance at 58,500 and support at 57,815. That's what you're watching out for as we speak. But let's get in our guests. We have Hemen Kapadia and Dilip Bhatt who are joining us to talk to us about what's happening in terms of markets as we speak. Hemen, good afternoon and welcome to the show. In terms of levels that we are tracking, a good recovery that's coming in from the day's lowest levels. The bias is where, funds are shifting between PSU and the private banking space as well. What are the key levels that you're tracking on Nifty and Bank Nifty?
A very good afternoon, Hiral. Thank you for having me on the show. It's always a pleasure. Hiral, there's a 25th trading session where the Nifty has gone nowhere. The VIX has been below 14 all this time with maybe 1 or 2 days of an exception. So 25 trading sessions, the range is between 23,800 on the downside and 24,588 on the upside. So we've gone nowhere. Yes. The bias seems to be more positive than negative simply because many stocks and few of the indices, Hiral, have posted all-time highs or are breaking out or have broken out, so on and so forth. But after 25 trading sessions, we need a closing about 24,588 for a trending bias to emerge. Now that still doesn't look like happening, so we are going nowhere. So levels 24,344, 24,588. Support Hiral comes in at 24,150, 23,800.
Okay. MOS Finance.
All right. It seems like there is a clarification that has come through from the government. Hiral says it's from the finance ministry. The flashes that are at the bottom of the screen, and we'll get you details on who exactly has said this. But official statement coming through, seemingly, that says that the government is not mulling a review or a change in the way that LTCG on equities is taxed. As things stand, of course, there is a 12.5% tax on long-term capital gains in the equity market that kicks in after 1 year. And there is also a certain amount that you can gain with regard to long-term capital gains before you pay that tax, which is 1.25 lakh rupees. There is no change as things stand right now. That is in consideration. That's the word coming in from the government. But Hemen, just a quick follow-up to that. You've talked to us about your index view, but what are the individual stocks that you're liking at this moment?
Okay. Alex, a very good afternoon. Firstly, a buy call on Ambuja Cements. We're on the verge of giving a mini breakout above 440. We haven't closed today. There's the first day of the week, so on and so forth. But it's up for the 55-week exponential move, 55-day exponential moving average. Daily oscillators, MACD, RSI, stochastics are giving crossover buy. The weekly picture is also positive. The same oscillators are in a crossover buy on the weekly chart also. Oversold. We don't have a cement index as long as I can remember, but the entire cement pack is set for a bounce. So one can buy Ambuja Cement at 440, stop loss 420, target of 480. It's a positional call. The second one is a 15-month call, 15-month Alex on Sun Pharma. It's on the verge of giving a 22-month breakout. Hasn't yet, but is on the verge. So a buy call on Sun Pharma at 1955, stop loss of 1805, target of 2255. It's a modest target. I believe it should get comfortably overshot. 22 months looks great going forward. And the Nifty Pharma Index has given a breakout already, is at all-time highs, is safely ensconced in a short, medium, and long-term uptrend. Alex.
Okay, so Sun Pharma, an interesting one. In fact, the entire pharma pack is up in trade. But let me go to Dilip Bhai in terms of what's happening with the cement space. Ultratech Cement just reported numbers. The stock has seen a good spike. In fact, apart from JSW Cement, all the others that have reported numbers like an India Cement or for that matter even Nuvoco Vistas reported a good set of numbers. What is your take, Dilip, in terms of where the entire cement pack goes? Because our analyst is of the opinion that it's the west and the northern region cement players who have done pretty well so far in terms of the first quarter.
Hiral, I think cement was significantly lagging behind as an industry, and possibly in the last 2.5 years, it has not gone anywhere. As we have seen that even the volume growth has not come in a very significant way, nor the EBITDA per ton of cement has really improved in any significant way. I think maybe we are seeing some changes now. I think with this quarterly results, with this volume numbers showing a pickup, I think one should definitely look at it, but because it has not moved at all, it has not participated at all, maybe now this is hinting that it's going to make a move. But I will still prefer to wait and watch till the time it gives a clear, green signal in terms of buying, because I'm still not convinced on the volume growth. I'm still not convinced on the EBITDA per ton. The cost is something which possibly continues to go northwards for them at the moment. But not to forget, almost all the cement companies are very well managed. Their cash flows are very good. So that is certainly on the positive side. But in terms of the fundamental performance, I will still prefer to wait and watch and buy maybe after it has moved up a little more decisively.
Got it. Okay. All right. So that's the view on the cement pack as a whole, and we'll see numbers come out soon enough. Maybe JK Cement was an aberration, and broadly you will see an improvement in the performance for some of these companies. But let's head over to the stock of the day, and the team has selected Tattva Chintan Pharma, and the shares have jumped quite sharply at the upper circuit right now, and that's on the back of a strong performance in the first quarter. The management also reiterating the FY27 guidance to talk about what happened and what worked in the first quarter, as well as what the numbers are for FY27 as a whole. Let me head across to Varsha, who's joining in. Varsha, certainly the stock of the day.
Yes, absolutely. And this is the 5th straight quarter where the company has seen double digit of EBITDA margin. So a solid set of numbers when it comes to this counter. Why the buzz? Of course, strong Q1 FY27 earnings that they've seen, and management has retained FY27 guidance of around 25 to 30% when it comes to revenue growth and 20 to 22% when it comes to EBITDA margin. Now, let's focus on the key highlights when it comes to Q1. The growth was largely a volume-led, not a pricing-led, and of course, the growth was driven in all their major business, be it SDA, PASE or PTC. We'll deep dive into this. Even SDA and PASE were actually the highest contributors when it comes to this company, and EBITDA margin, if you see, is lower quarter on quarter due to raw material cost pass-through lag. Now, talking about this company, just for the benefit of viewers, makes specialty chemicals for emission control, pharma, agrochem and energy. Now, individual wise, if I were to talk about on segments, SDA, which is a structure directing agent, saw revenue growth of around 46%. This is used in your diesel vehicle to meet stricter pollution norms, and the demand was actually driven by Euro 7 emission norms implementation in Europe. Then you have electrolyte chemicals, wherein the revenue is down almost 52% quarter on quarter. This is used in your energy storage, in your batteries and supercapacitors. But this was hit by temporary raw material shortages due to Middle East disruptions. But management is expecting almost 40 to 60 crore when it comes to the revenue in FY27. Moving on, you have pharma and agro specialty chemicals. Over here, if you see, grew 35%, which is used in your pharma and agrochemical production, and the peak revenue potential over here is almost 200 crore, and this is supported by repeat orders for commercialized molecule. Even semiconductor chemicals, which is the new growth segment for the company, well, they qualified its first semiconductor chemical molecule. The meaningful revenue you will only see beyond FY28. Talking about the guidance for FY27, well, they are expecting 25 to 30% of revenue growth with 20 to 22% of EBITDA margin, and also they're targeting 20 to 25% of CAGR growth for the next 4 years, and FY27 revenue target for electrolyte also stand at around 40 to 60 crores. So overall, if I were to conclude, strong Q1 FY27 numbers, good guidance given by the management is the reason why you're seeing the stock is up almost 20% in trade.
Okay, that's interesting. 20% locked in upper circuit. Dilip bhai, what do you make of the pharma pack? Because today itself that sector has been buzzing in trade. Strong set of numbers that have been reported by Tattvachintan as well. And I think from 22nd onwards, you will have a lot of other, pharma companies that will start to report numbers. Ahead of the earnings, any call or any action that you would want investors to take on this segment?
So, Hiral, without any doubt, the pharma has been one of the best performing sectors in the last 1.5 to 2 years. And I think it has been a very broad-based kind of a thing, right from the front lines to mid-caps, even to micro-caps. I think almost all of them have done pretty well. One must say that as far as the front lines are concerned, the threat of US FDA, which used to be very serious in the past, has now considerably diluted, because most of them have got multiple plans, and the US FDA observation here and some there doesn't really impact, which used to impact them earlier. So in that sense, there's a lot of predictability from them. And second, of course, the fact that too many molecules are now coming into the generic categories, which also is a very good news for the Indian pharma, plus, of course, the rupee depreciation. I would say that as far as the frontline stocks are concerned, Lupin, Sun Pharma, I would say Divi's Laboratory are some of the stocks which I think can go places in the next 1.5 to 2 years. I think they will continue to show a very strong, at least 15 to 20% bottom line growth. And if you ask me, Divi's Laboratory is the one which really stands out, because they have taken advantage of China plus one from in Europe itself, and I think they have got enough capacities to take on the fresh contracts. So that is one stock which I like quite a bit. And I think in the mid-cap space too, there are a lot of buzzing around, like Vocard is there. Then I think there is Orchid, and there is Natco Pharma. I think all of them, there are a lot of things happening within those companies. So in that sense, I would say that pharma still looks good. One should continue to hold, one should continue to invest in some of the stocks, which I think.
Yeah, absolutely. And from an earnings standpoint, of course, a lot of these export-oriented companies will benefit from the depreciation of the rupee as well. Point taken. In fact, those are the two cohorts that are doing particularly well in trade today, the pharmaceutical index as well as the healthcare index. But for now, let's head across to my colleague, Somit Sarkar. This is the time of the show where we get you all of the action from the dealing rooms. And Somit Sarkar has heard some interesting things today, I must tell you. Somit, good afternoon. What's on your list today?
Well, first couple of names on the hotel side, Indian Hotels and Oriental Hotels. Now, there are buy flows in Oriental Hotels in the HNI desk. Now, dealers indicate that Indian Hotels will acquire the other promoters a stake in the company, that is in Oriental Hotels. And dealers are also expecting, because of this, there will be an open offer which could be at a premium compared to the current market price. So, keep an eye out for Oriental Hotels here. For NTPC, dealers indicate that the selling pressure is largely over and the stock could bounce from the current levels. Multiple other stocks like Shell Engineering, Newland Labs and Inox Wind, dealers indicate strong buy flows on institutional desk in all the three names. Both foreign and domestic institutions have been accumulating this counter, and delivery volumes are expected to be on the higher side for these three names. And given that it's earnings seasons, Infosys, AU Small Finance Bank and Delivery, there are sell flows on the large HNI and PMS desk. Dealers expect weak Q1 numbers from these three names. And on the flip side, there is Colgate and Navin Fluorine. There are buy flows on both these counters, and dealers are expecting strong Q1 numbers from these two names, specifically Colgate and Navin Fluorine.
Okay, so those are interesting names in terms of the cover that Somit is getting us as well. But, one segment which is actually buzzing in trade, you have the private banks, you have the PSU banks, ICICI Bank versus the other four major banks from the private side as well. On the charts, Heyman, Are you seeing the dip as an opportunity to buy, or would you say the momentum is expected to continue for the likes of an ICICI?
Well, Hiral, I think I'd go with what you only said. I think the momentum should continue with ICICI. If you look at things, Kotak Bank hasn't done anything in the last 6 years. HDFC Bank has flattered to deceive, but more or less, if you take the whole view, it's also not done anything in 6 years. You had State Bank moving, then you have the PSUs moving, and ICICI Bank made a new high. Now it's come back within striking distance of its all-time high, and the setup, which was slightly wobbly, is now on the mend. So yeah, I would continue with ICICI Bank rather than go with anything else here.
Okay, Dilip, I want to extend that to include the PSU banks as well, and Punjab National Bank, for example, stands out. A great set of numbers, and the stock is reacting to it. But you put ICICI Bank on one end, and maybe you throw in a couple of public sector banks, and then you put HDFC Bank, Kotak, Axis on the other end, right? And all of them doing particularly badly in trade today for good reason. They've all seen erosion in their net interest margins. The question is, if the corporate lending book is going to grow more than it was earlier on account of working capital, etc., and incrementally you can have pressure on NIMs from that perspective, then we haven't seen the bottom. But there are some that are arguing that the bottom has been hit. How would you approach this?
A couple of things in this. I think the sheen which the private sector bank had, I think that to a great extent has worn off. I think ICICI Bank certainly stands out as an exception, largely because of a good leadership out over there. I'm not telling the leadership at the other place not good, but the sheen that HDFC Bank or even Kotak or some of these banks really had, I think over the time, because of the lackluster performance, the lackluster credit growth, or their whatever you call it, I think almost all the parameters, they were left behind. So, by default, you have to look at the PSU banks, and in the same time, in the same period, they have continued their journey northwards, improving their NIMs, improving their ROAs, improving their credit growth, and even NIIs. So I think both of them have played their part very well. And I think the distinction between private sector and the public sector possibly now is very slim in my opinion. So it would still be merit-based. For example, I would still go with the SBI, with the PNB, with I think even BOI as far as the public sector bank goes. And maybe ICICI, possibly in my opinion, I may be wrong, but I think it's going to peak out in next 6 months to 1 year in terms of all the parameters that they have shown.
Interesting take there, Dilip Bhai. So ICICI Bank may peak out in the next 6 to 8 months, but it's the PSU banking space that is preferred. Thank you, Hemant. Thank you, Dilip Bhai, for joining in. Always a pleasure to speak to you, both of you as well. But moving on, Turtle Mint. Let's pull up that one on the screens because the street is really rewarding the profitability milestone of the company. The stock has come off the day's highs, but still seeing gains of 6.5%. It's the first ever profitable quarter in Q4 of FY26, while the company's revenue growth momentum has remained pretty strong. You have seen an expansion in terms of service EBITDA margins as well. And, just to know that the company was actually listed on the bourses last month, we have Dhirendra Mahayavanshi, Chairperson, MD and CEO of Turtle Mint, joining us in our studio as well. Welcome to the show and happy to have you in the studio. My question to you is, first up, congratulations on achieving the milestone in terms of profitability. And I think the street is really rewarding you for it. The question is, has this improvement come in from operating efficiencies or is it coming in from the non-recurring factors?
So it's come from the business itself. So I should highlight that Q4, we grew 42%. Service EBITDA expanded by more than 60%. And the corporate overheads as a share of the overall revenue dropped by a few percentage points. So the way to think about the Turtle Mint business is that there is a operating leverage that you get from the corporate overheads because that doesn't expand and the revenue keeps growing. So in the last 4 years, revenue has grown at a certain CAGR, whereas the corporate overhead has stayed the same. At the same time, the service EBITDA, because of the renewal book that we build, the renewal book allows us to expand the service EBITDA margin. And so both has happened. Service EBITDA is expanded by 2 to 3 percentage points. Corporate overhead as a percentage of the revenue has dropped. There is I must also highlight, there is a seasonality factor here because as the as the year goes by, Q4 becomes a big quarter from an insurance point of view, and there is a season benefit that we get. But this is the first ever quarter profit that we have achieved, and sort of demonstrates the operating leverage and also the profitability of the model. As we have grown for the last 4 to 5 years, that is a growth rate that we have had in the Q4.
Okay, so are you expecting a similar growth rate to continue in terms of FY27? Because, as you know, from what you're talking about as well, the targeted profitability in every quarter for FY27, will that be similar to what you've achieved right now, or will it look slightly more different?
So for the year, we will be profitable, but there will be a seasonality. But every quarter will be better than the previous year's quarter at the same time. So Q1.
So a year-on-year comparison
Year-on-year
is what you're saying.
will, yeah. So all the growth in revenue will translate into an improvement in EBITDA, is what.
Okay, so you've talked about the seasonality factor, whereby Q4 is the strongest quarter, right? But you've also said that operational efficiencies come through, that leverage factor comes through, right? So what is the trajectory that you will see particularly that will reflect in your service EBITDA margins that come through, right? So what is the trajectory for that you anticipate in FY27?
It's very similar to the historical trajectory. So our revenue has grown historically by 40% plus, and service EBITDA has expanded by more than 60%. So service EBITDA grows faster than the overall growth rate, and that is a trajectory that has played out well, and that is sort of an indication of how things will play out for us in the future.
With regard to the investments that you're making at this moment, and you say that would it be fair to say that your cost base will not rapidly increase? You've already made the investments that you have to make, and now with the scale that you will achieve over a period of time, because that's essentially what platform companies tend to work towards. At what point would you say that you've spent enough and you're done with your spending and you can now grow your overarching pie?
Right. I would say we've achieved that.
You've achieved that.
Yeah. So the corporate overheads won't grow other than the inflationary effect that you will see. But the revenue growth rates will continue without us having to, in this particular business, continue to invest. So that has already achieved in the now.
So then you probably have an idea for FY27, not asking you to come up with a number and say, this will be our profit for the full year. But you've achieved a profitability in the fourth quarter, FY26. There is a seasonality element, but for the full year, you anticipate profitability. Do you have a rough idea of where you will end up?
So we were last year minus 105 crores. Sure. The year before that, we were about minus 200 crores, and the year before that was minus 300 crores. Yeah. So minus 300 to minus 200 to minus 100 to Q4 becoming profitable. It sort of indicates how the trajectory has been. And the insurance is a large industry, and we have been growing along with the industry slightly faster than the industry. So that will continue to play out, and we will get the benefit of the platform.
So is it going to be renewals or is it going to be new issuances? And what is that mix looking like right now? And where do you see that mix reaching in the next 2 to 3 years?
Great question. So renewal, we are in the business of book building. So we build a book that comes basically out of the renewal. Our renewal book is about 20% of our total revenue.
Okay.
So last year we did 225 crores, which grew 51% over the previous year. So on a revenue of 1,098 crores for the entire year, 225 crores was the renewal book. Renewal book comes at a significantly higher service EBITDA margin, about 2 to 3 times of service EBITDA margin compared to the new business. So as the renewal book keeps building, because we get a new business and next year, basis the product, the renewal rates play out, and that renewal rate also keeps improving every year. So this year also we anticipate the similar benefit coming from the renewal book that we've had historically, and that will drop directly into the service EBITDA and then into the EBITDA.
Okay. And if you have to tie this up in terms of where your partners on the platform go, how does their productivity tie up to your earnings as well? Because is it higher productivity which is paying off, or is it adding new agents paying off?
Right. So we do both. So I would say that we have mastered the skill or the art of recruiting at scale, activating them, and then putting them into production. So last year we recruited 1,15,000 POSPs from the market and put them through a training program which is through Turtlemint Academy, is available free of cost. Basis their background, we do a skill-based training, and then they get activated and then they start producing. So internally we call it RAP, recruit, activate and produce. So once a person gets activated onto the platform, they go through a learning curve of how to build their business. So subsequent years, they start doing more productivity. So if we start the year, we will have a cohort of existing partners who have already done business with us. They grow in their productivity every year. So there is an improvement. So 2018 cohort in FY26 grew by almost 30% over the previous year. So that is a growth rate that we see. And the new partners who come in, they again go through that journey of producing and then starting to grow. So we have both existing and new that contributes to the growth.
Is there a threat? And now maybe for those people who don't understand the model, you can explain this, right? So ultimately you are facilitating the sale of insurance products by having a cohort of people that you work with, right?
Right.
In a sense, you are the middleman, right? So just like in mutual funds, where there are people who have gone direct, you can through various platforms or through the mutual fund website itself, you can go to an AMC and you can buy mutual funds directly. Is that a threat in the insurance industry for you?
Right. So this comes to goes back to our primary thesis of our business. We believe that insurance is a complex product.
Yes.
Nobody wakes up thinking that they want to buy insurance today, and they need to be told. So intent needs to be created. That creation of intent is the single most valuable activity in the entire distribution value chain. Once the intent is created, decision making requires an expert. So in India, 95% of insurance distribution in retail happens through an expert. So it could be like a POSP, insurance agent, bank advisor, somebody who is involved in the validating the decision making. This is true for not only India but also for US, where insurance awareness is far higher. 70% of insurance distribution there is through an expert.
Okay.
They are called independent experts. In China, it is 90% plus. So the nature of the product is such that intent has to be created and decision making requires an expert. And claim is the moment of truth. It's not the actually buying the policy.
Yeah.
And a policyholder needs that comfort that when he makes a phone call, he will have a familiar voice at the other end and help him settle the claim. So these factors combined sort of lend to our business model and our thinking around it, is that it's an expert-led model, and hence digitizing and democratizing technology and empowering those experts can create a lot of value in the ecosystem.
Okay. Last question from my side. Ambitious goal that you have in terms of FY27 to be the first profitable year, right? What is that milestone that you are tracking internally for you to exactly 1 year from now, if you have to meet, to come out and say that, you know what, FY27 was a successful year? May it be in terms of revenue growth, margin growth, profit milestone?
All of that. So getting the revenue growth that just mentioned.
No, I'm saying in terms of the number. What number do you think would you call it a successful year?
So historically, if I maintain the average that I've done, that will be a successful year.
Let's look at CAGR.
Right. So historically, we've grown at a CAGR of 45%. And that is something that we would like to continue to maintain for several years to come.
Okay.
On the top line side?
On the top line side.
And profitable full year?
Profitability just gets delivered as we grow from the on the top line, because the incremental revenue drops into the EBITDA because corporate overheads don't expand.
Excellent. All right. On that note, I look forward to seeing what Turtlemint delivers in FY27. Wish you all the best for the year ahead. Thank you so much for coming by to our studios.
My pleasure.
Okay, so that's an interesting conversation that we've had with the management of Turtlemint as well. But staying with the earnings season, Numoco Vistas, a strong start to the year. Healthy growth is what they've reported as well. Let's actually listen in to the management with whom Neeraj spoke. We have Jaikumar Krishnaswamy.
You are one of the companies in Bengal, and I just want to take that mention there because there is a new government at the helm of affairs in the state of Bengal. Is that throwing up the opportunities of very large infrastructure projects which could help you because you would be cost competitive by virtue of your presence there?
So typically when elections have happened in every state and the new governments have come, they make a lot of announcements in terms of infrastructure. Is the first announcement any government makes, and which has also happened in the state of Bengal. But for the impact of the announcement to take shoots on the ground, it will take at least 2 to 3 quarters. It's not going to be press the button and suddenly people will start investing. So, and also as we enter now Q2, it's monsoon time in Bengal. I don't see a big improvement in demand in Bengal, and then followed by Puja. So I am really looking at sometime from November onwards when the demand will pick up, and maybe it will also be 6 months since the new government would have come. And on the ground, impact will start happening November, December, or Q4 of this year. So I'm really looking at an improvement of demand in Bengal from Q4 onwards. And certainly fiscal 28 will be a good year because that's when the monies will start flowing on the ground. Infrastructure will develop. Housing will kind of improve big time in those places, and cement consumption will automatically improve. So FY28 is a good time to kind of look at the impact of the announcements made by the government of Bengal.
Capacity expansions, are they on track? I believe you have your guided range is for a fair degree of capacity expansion between now and FY28.
Our cement has to be looked at two ways. One is clinker capacity and grinding capacity. So clinker capacity eventually decides the overall throughput of the company. And every company will have excess of grinding capacity when compared to clinker capacity. Our clinker capacity in East, the amount of clinker which we have and that can be converted to cement is close to about 21 million tons. So with the kind of 21 million ton clinker capacity and the kind of sales we've achieved in the last year and this year as well, I still have additional headroom for next 4 years in East. So I've got additional capacity all the way up to 2029 or 2030. The bulk of the capacity expansion Nuvoco is putting is in Gujarat, where we acquired Vadraj business and rebuilding the facility and getting the system on place. So we have close to about 4 million tons of clinker in Rajasthan and close to about 3.5 million tons of new clinker capacity coming in Kutch. This 7.5 million should translate anywhere to about 10-11 million tons of cement in the north and west. So put together, in the next 4 years, I'm targeting Nuvoco from last year we did 20.5 million tons. I'm looking at a 10% CAGR for the next 4 years. I should end up going close to about 30 million tons in the next 4 years. That's the kind of number I'm working on. Give or take here and there, a million here and there. But I think the broad trajectory is we are targeting to hit about 30 million tons by 2030.
So just want to clarify, would it be 30 or 35 million metric tons and by what time?
No, I would just want to clarify. Capacity will be 35 million tons, but there will always be a gap between capacity and actual throughput because no cement industry works at 90% capacity utilization. Even if you hit 80% capacity utilization, you have done your job well.
Okay. And is there any fundraising that the company needs to do for executing this capacity expansion?
For Vadraj expansion of 900 crores this year, another 900 crores next year, with a little bit of internal capex, I think it's going to be funded internally fully. There's no plans to kind of do more than whatever funding we have done through the CCPS and CCD road. That's sufficient for us. Then we go 2 years from now, we would generate adequate cash from our business to fuel the next set of expansion. So it's from now on to the next few years, I think we'll generate adequate cash in the business to fuel our growth for the current Vadraj and the subsequent growth in the company.
Okay, so that's the management of Nuvoco Vistas. Key levers for profit growth is what we're talking about. The stock, though, at the day's lowest levels. But we'll quickly slip into a short break. On the other side, we'll get you more on the markets and the top buy today and sell tomorrow picks as well. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा आप अपना देख लो
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of the choice that we made.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Welcome back to India Market Close on NDTV Profit. Let's quickly pull up Nifty 50 on the screens as well, because that recovery that we've seen from the day's lowest levels, whether that is sustaining or not, there you go. Still seeing cuts of 0.4%, but above the 24,200 mark on Nifty 50. Let's get in Osho Krishnan, Chief Managing Technical and Derivative Research at Angel One, and we have Siddharth Khemka of Motilal Oswal Financial Services as well joining in. Welcome to the show, gentlemen. Osho, let me come to you first. With the kind of recovery that we are seeing in the markets as well in terms of today's session, anything that comes to your radar that we should be actually spotting as good momentum picks?
See, overall, firstly, today's momentum has basically been backed by PSU banks. So PSU banks are looking very positive on the technical time frame chart. There has been very strong breakout in some of the counters. So PNB will be the first counter which will be which is in my radar, and I'm expecting the momentum to get followed up in the next coming session also. So there has been a breakout around 110. Currently, it is hovering around 111.70. It is looking very positive. There has been very strong volume-backed buying in the counter, and I'm expecting that it might test the 200-day simple moving average, which is near the zone of 116. So 116 should be the target that one can expect in the counter, while on the lower end, 107 should be kept as the stop loss. The other counter which is looking very positive is PFC. So PFC, REC, both the charts have started being on a constructive note, but PFC specifically has now is now turning from the 200-day simple moving average, and there have been positive crossovers in the RSI as well. So there is positive development in the counter, and I'm expecting that with the kind of reversal this counter is showcasing today, there is a strong potential for a bullish reversal in the coming period. So one may look for PFC, but that will be from a short-term perspective. I'm expecting a target of nearly 435 to 438. While 400 should be kept as a stop loss for short-term trades.
Okay, so PFC, that stock is also at the day's highest levels. And staying with the financial space, we have 4 of the top private banks that has reported numbers over the weekend, and interesting moves there, interesting comparisons that are coming in. My colleague Piyush is here to tell us more in terms of what the fine print from the large private sector banks actually tells us. Piyush, good afternoon. An interesting comparison between HDFC Bank, ICICI, Kotak and Axis. What are you picking up?
That's right. The top 4 private banks came out with their earnings on Saturday, and here is what we have made a nice exhaustive list for you to check out on how large private banks have done on both credit and deposit growth in Q1. If we see, HDFC Bank continues to post deposits, higher pace of deposit growth than credit. Deposits have grown 15% while credit has grown 12% year on year. The NII of HDFC Bank too is up around 7% odd. So decent set of numbers by HDFC. ICICI outperforms everyone else. 20% growth in its advances, 14% growth in deposits, and we're talking about year-on-year growth. The NII again has grown handsomely by 13% more than any other bank. Axis Bank too has been able to post robust 19% growth in credit, 18% growth in its deposit, and 8% growth in NII. Kotak Mahindra Bank too has posted 15% growth in its overall advances. When we look at net interest margins, only ICICI is the one to stand out. Rest top 3 banks have reported a decline in NIM. HDFC's NIM has dropped by 12 basis point, Axis 16, Kotak Mahindra Bank 14 basis point. The net profit, however, of HDFC was up 5%, ICICI 16%, Axis Bank 23%, and Kotak Mahindra Bank at 26%. Now, if we look at the credit cost or the asset quality picture, HDFC Bank's gross NPA ratio is up around 2 basis point. Net NPA ratio is largely flat, whereas the credit cost has gone up by 5 basis point. ICICI Bank, again, the gross NPA ratio has come down by 2 basis point. Net NPA ratio is slightly up at 2 basis point higher than the last quarter. ICICI Bank does not disclose the credit cost figure, so we have kept this as empty. And Axis Bank, again, the gross NPA ratio is up 5 basis point. Net NPA is up 2 basis point. Credit cost is up sharply by 17 basis point. And finally, Kotak Mahindra Bank, improvement in GNPA by 2 bips. Net NPA ratio has risen by 2 bips, whereas the credit cost ratio is also up 7 bips. Back to you, Hiral.
Okay, so, interesting number crunching there as well. In fact, let me get in Siddharth Khemka to get his view in terms of the private banking space. Siddharth, good afternoon. What do you make of the numbers that have been reported by the four majors, and what stands out where there is good visibility, not only from an earnings perspective, but even from a returns perspective?
Yeah, hi, good afternoon, Niril. I think if you look at Saturday was it in a way kind of banking day for Indian markets with almost five banks, including some of the smaller ones reporting numbers. And I think largely what stood out was ICICI Bank, another solid quarter of numbers, robust performance all across. So I think net profit was a 12% beat higher than our expectations. ROA is at 2.5%, remains the best in class. And the bank seems to be well positioned to sustain its sectoral leadership. If you look at what we have done, we have raised our earnings estimate by about 4 to 5%, and we are factoring in an ROA of about 2.3%, ROE of 16.8%. So I think the bank ICICI continues to surprise the street, delivering growth as well as profitability. Best in class across the street. So I think that's the preferred pick there. We have a buy rating with a target price of 1750. Now coming to the second one, I think HDFC, while the show is in line with expectation, NIMS declining, that was something that the street did not like. Even we cut our estimates while we believe that things look like growing and improvement. Growth outlook for HDFC is improving. Asset quality is now stable, and I think business growth is now healthy. Plus lower provisions. The key challenge remains the NIMS, which kind of contracted 12 basis points. Growth in terms of loan book was decent, and what we see is that there is a meaningful scope for improvement in terms of the borrowing cost that continues to remain and mature over the next 2 years, which could bring some improvement in the NIMS. Hence, while the company business-wise does well and we see gradual improvement in NIMS, we believe at current valuations, HDFC Bank looks very attractive, given that on a standalone basis, it trades at about 1.5 times 1 year forward. I think that is definitely gives a lot of comfort. But till the time the company doesn't show improvement in numbers, I think the stock could remain under pressure. It's already down, but we believe that downside could be limited for HDFC Bank.
Downside limited, but the company needs to perform as well to actually justify the earnings or the purchasing of the stock as well. But moving on, a whole host of other numbers or companies that have reported numbers which are moving in trade today. Puneet will walk us through the key counters that are in focus. Puneet, what is on your list?
Well, thank you for that. Well, there are multiple key earnings that continue to be in focus. The first one's Mahindra Logistics. The results came in today, market hours. The revenue is up by almost 23%. EBITDA is up almost 49%. But the supply chain management vertical continues to show good growth, and that has helped the company in this particular quarter. Shyam Metallics is the other one, another counter which is reacting strongly to earnings. Revenues up 4% on a quarter-on-quarter basis, but the value-added products has actually led to higher realizations, and that has helped the company in terms of maintaining those margins. The company is also approved raising roughly 4,500 crores via a QIP. So that counter is also buzzing in trade. Third one that we have is PNB. Now, the earnings were a strong set in the PSU banking space. You also saw the NIM largely being maintained at the 2.5% level. But the gains as well as the recoveries have also kept the return of asset actually afloat. So, the stock's also doing well today in trade on the back of good results. The last couple of counters, India Cement was one. Now, we got earnings from Ultratech, pardon me. And you saw good standalone profitability for India Cement in this particular quarter. Profits have actually, from a loss-making entity, it's become a profit-making entity. And, the EBITDA is up almost 85% on a YY basis. Operating EBITDA per ton has come in at 603. versus just around 400 odd rupees in the same time last year. And finally, it's Bhansali Engineering. The revenue, EBITDA, as well as the profitability is up almost 50% odd on all three key metrics. They have mentioned that 200 crore new capex is what the company has announced, and that will all be internally funded via the company's internal accruals as well. So all of these counters continue to be in focus, most of them buzzing in trade today as well.
Right, absolutely. Thanks so much, Puneet, for that. Bhansali Engineering in particular gaining as much as 13.4%. I don't want to come to you, Osho, on any BTST calls that you might have, because particularly at the broader end of the spectrum, and by the way, good afternoon to the both of you, at the broader end of the spectrum, there seems to be buying at lower levels, right? So are there any opportunities that you're seeing for a short-term trade?
Definitely, there are many counters which are looking very positive, but for BTST, Ultratech Cement will be the preferred pick because the results has been quite positive as well, and even on the technical fronts, there has been positive development. The counter has seen very strong volumes, and after a very long period, the counter has emerged above the 200-day simple moving average. So I'm expecting that this counter can be seen as a BTST candidate. Although at current levels, one may accumulate at current levels, nearly 11,890, 900 is the zone. On the lower end, 11,600, which will be approximately 2.5% kind of a stop loss one should keep in the counter. Along the higher end, 12,300 to 12,400 should be the target that one can expect from Ultratech Cement as a BTST candidate.
Got it. Okay. All right. Let's head across now to Parth, who's joining in to talk about a few stocks from the broader markets, I think, that are buzzing quite considerably, likely on the back of volumes. And Parth, I must say that your choice of tie and jacket is very nice. It looks just like mine.
Yeah, that's right. And I've got 5 really interesting names in my list today, starting with the buzzing stocks. The first one is JG Chemicals. The stock has gained over 8% today and has touched the highest level since August 2025. This was the biggest single day gain for the stock that it has seen in the last 12 months. Volumes today as well are 12 times the 20-day average. The second one is Supreme Petrochem, which has snapped its 4-day losing streak. Earlier today, it had seen the biggest intraday gain for the company since March 2026, and volumes today are 10 times the 20-day average as well. The third one is Beta Drugs. The company reported a very strong set of numbers for the first quarter of FY27, and the management has said that they are on track to deliver a 20 to 25% growth in FY27. The stock has again snapped its 4-day losing streak, and earlier today it had also hit the 20% upper circuit. The stock touched a new all-time high, and volumes today are 8 times the 20-day average as well. Now moving on to some of the trending stocks. The first one is Mrs. Bector Food Specialities, where a few days back a Bacchus Investment had bought a 1% stake in the company. The stock has gained over 10% today and over 25% in the last 3 sessions. Also, the stock today has hit the highest level since Feb 2026. Now lastly, moving on to the Himadri Specialty Chemicals. The company had reported a very strong set of Q1 numbers a few days back, where revenue saw a growth of 28% and PAT also saw a growth of 27% year on year. The company had also announced a capex of 240 crores, and as a result of this, the stock is on a 8-day gaining streak and has gained over 20% during this period. Today as well, the stock has gained over 4%. So these are the 5 stocks that are buzzing on both on the back of volumes and good news flow as well. So you should definitely keep them on your radar.
Ones coming in there. In fact, let's just pull up a Steel Exchange of India, which is that stock company has just reported numbers. Net profits up around almost 21%. Revenues are down 6.5%. You have your margins, which have gone down as well, 12.7% versus a 17.5% on a sequential basis, and that's the reason why you're seeing that marginal downtick coming in on the counter. In fact, it did see a spike, mainly I think I'm assuming on the net profit number, but after that, all the other parameters are a downer on this one. Apart from this, I think Keynes, let's pull up that one on the screens, because that stock is seeing a sudden move right now. If you can just have, there you go, a sudden downtick coming in terms of Keynes Technologies as well. 1.5% is the kind of correction that you're seeing right now. No major reason right now, but Keynes is one that we need to talk about as well. And very lastly, on the brokerage radar, you have Sincera Engineering, where Goldman Sachs has initiated a buy. They have a target price of 4,130. That stock is seeing gains of 3.5%. You have Craftsman Auto as well. That stock is buzzing in trade on the initiation by Goldman Sachs. Again, 11,600 is their target. JSW Steel post earnings, JP Morgan has maintained an overweight and they've increased the target price. That stock is up in trade. Power Grid as well on Macquarie maintaining an outperform for a target price of 800. So interesting names coming in there. On the charts, if you have to look at any of these names, Osho, Sansera, Craftsman Auto, JSW Steel, anything that you like?
See, JSW Steel will be the preferred pick because technically this counter has been into a kind of a strong consolidation in the past 10 to 12 days, and in today's trading session, we are witnessing a kind of a consolidation breakout in the counter. So in the coming period, it is expected that the counter can see a kind of a potential bullish reversal from here onwards, and 1290 to 1300 can be seen as the positional target for the counter. So I'm expecting that this is a decent chart structure. There has been a kind of a positive development in this, so one can look for opportunities in JSW.
Got it. Okay. Let's talk about a couple of stocks from the Nifty 50 as well, where obviously you have the likes of HDFC Bank and Axis that are really losing ground, and we've spoken about them at some length. But from the automotive pack, Osho, you have Maruti Suzuki that's also under a tad bit of pressure today. And one might argue that the worry about crude oil spiking once again will have a bearing on some of these counters. But specifically Maruti Suzuki, do you think that any further declines are opportunities to buy into a stock that one can argue is part of a cohort of companies that has seen demand stay resilient and strong despite external pressure?
See, overall, the counter has already seen a very strong correction, but from current financial year, there has been a kind of a recovery.
I meant to ask Siddharth this. Let me amend my Siddharth. The question is for you.
Okay, I think you went to on the technical side. So I think the last, if you see the second half of FY26, Maruti Suzuki's underperformance has been largely due to the capacity constraints, even as the overall demand remains strong. And this is visible in Q1 of FY27, where it has outperformed the industry as soon as its new phase 2 capacity came on stream. And I think among the biggest positives for Maruti, the post the GST rate cut has been that the car demand has also helped revive after the GST cut. So while we expect the company Maruti to sustain its outperformance in the coming quarters, it has a healthy pipeline of launch of new vehicles. The small car demand has seen a revival, as well as the inventory the channels have, that has come down. So overall, if there is any further correction, I think that would be only an opportunity to get into the stock, because the ongoing tensions in Middle East is only adding to the near-term pressure. We believe that cannot continue for a long time, and as we have seen in the past, any resolution will be an opportunity, given that India is also reducing its exposure by adding the ethanol blending. Plus, the newer vehicles coming up will have more demand, given that now people are also increasingly looking at EVs, where finally Maruti has launched some of its products. So overall, we expect a 20% earnings CAGR over the next 2 years. We have a positive view buy rating with a target price of almost 17,000, so around 20% upside from current levels.
Something to look forward to. On that note, Osho, Siddharth, I've got both your names right at the end of the show. Thank you so much for taking the time. Pleasure speaking with you.
Thank you.
All right, just about 2 minutes, 20 seconds left for the close of trade. And I think it's a couple of things that you can take from this trading day. One is it's a story of two sets of banks, ICICI Bank and PNB on one end, and all of the other private sector banks on the other
side. Yeah,
that's a heat map. You'll see exactly what we're talking about.
I mean, there you go. I mean, on your top gainer, if you have to look at where an ICICI Bank right now is, it's actually come off the highs as well.
It's still gained
1.2% kind of gains, but the pressure has continued on an Axis, HDFC, Kotak Mahindra Bank. In fact, Kotak Mahindra Bank slightly it's come off the low, so that is an interesting point. Maruti Suzuki has come down over here. M&M also slightly under pressure. In fact, we have Bajaj Auto and TVS Motors from the auto pack that will be reporting numbers tomorrow, so keep your radar on that. But Trent, Nestle, you know, that consumption pack, the pharma pack is something which is in focus. In fact, pharma also, if you go to see Alex, has come off in that last hour of trade.
Yeah, you know what? It just goes to show, and we were talking about this post-market hours on Friday, the fact that 35% of the benchmark Nifty 50 is posting numbers over the weekend, and it just goes to show how much of a bearing a few stocks can have on the index as a whole, because it's a couple of stocks that are contributing most of it. In fact, HDFC Bank with cuts of over 5%. Pull up the contributors list and you'll see cuts of 130 points or beyond, 145 points at this point, more than all of the gainers together. And you have a bulk of the Nifty 50 that is gaining ground.
Absolutely. So I think interesting names coming in there. Let's just look at the broader markets as well, and then we look at how the advanced decline ratio chart is looking like, because that has seen major gyrations. You have the mid cap 150 slightly off from the day's highest levels, but still in good shape, 0.5% up move there. Likewise, if you have to look at the small cap 250 as well, off trying to make that recovery, but it's still in the positive. So I think it's more of the mid cap space which is seeing action. Small cap is slightly off, very much where we started off in terms of trade in terms of closing. Your advances are still ruling versus your declines. So there is that moat that we are seeing in terms of broader markets as well. Let's look at the NSE 500 components, because that's where the juice is on the back of earnings reaction. There you go. PNB, Torrent Power, JSW Energy.
Torrent Pharma, that is.
Yeah, you have a couple of, textile companies also, Vedant Fashion, V-Mart, which are good in trade. But look at the ones which are losing out.
On the losing end, of course, you have Axis Bank, HDFC Bank, both in the top list. You don't often see this, right? You see smaller counters that make it to this list. See, Info Systems has gained quite considerably in the recent past, and so some money being taken off the table. So too, I think Campus Active, where in India Cement, you have eClerx, Ipca Labs, CEAT, not too much in the way of big movers, but CEAT losing.
But again, it's on the back of crude, and crude is playing spoilsport. So OMCs also have been in focus in today's session from an ONGC, IOC, which have been gaining. So I think a pretty mixed day of trade. There was no particular trend that I could see that emerged, except it was mainly banking.
It was mainly banking, and the question remains, I think, whether for some of these large private sector banks, the bottom hasn't been hit on the net interest margin. Of course, ICICI Bank keeps surprising on the upside when everybody else is witnessing a contraction in margins.
But it was interesting to see when Dilip Bhatt said that in the next 5 to 6 months there will be that peak that ICICI Bank will peak. So it's going to be interesting.
It's a brave man who calls a peak to the ICICI Bank role with regard to its financial performance. But from here on, myself and the team that put the show together, it brings us to the end of this particular program from the NDTV Profit Suzlon studio. Thank you so much for tuning in. Do stay tuned. This is NDTV Profit.
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin remains above that 64,500 levels on consolidation. US Bitcoin ETFs extend inflow streak. They add $136 million of inflows. And South Korea proposes classifying crypto into national assets. Lastly, CFTC Chair Mike Selig says US has become global crypto capital. So there is a very interesting take on the crypto basics, and the term is, what is tokenomics? Now we hear this term often in crypto, but what does this actually mean? Now, think of tokenomics as the economics of a crypto. Just like a country's economy depends on how much money exists, how it's distributed and how it's used, every crypto token has its own economic design. Now, there are 4 things to understand. First one, supplies some cryptos like Bitcoin. They have a fixed maximum supply of 21 million coins. Others can have a large or even changing supply, and scarcity often plays a role in value. Second, the distribution we look at, who owns the tokens, are widely distributed amongst users or are a large number held by a few investors or the founding team. A more balanced distribution generally reduces the risk of price manipulation. Third, utility. Ask yourself, what is this token actually used for? Can it be used to pay transaction fees, access services, or maybe participate in governance, or maybe get in awards. The more real-world use cases a token has, the stronger its long-term fundamentals can be. Finally, incentives. Many crypto projects reward users for participating in the network, such as staking tokens, or help secure the blockchain. And these incentives, remember, encourage people to stay entangled with the ecosystem. So, before investing, don't just look at the token's price, understand how it works, why it exists, and of course, whether its economic model is sustainable. That's what the entire picture is for tokenomics, which is all about, and it's one of the most important factors to evaluate before making any investment decision in the crypto world. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे, गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello and welcome viewers, you're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have really fared today first. So viewers, benchmarks have ended a choppy day of trade and Nifty has ended the day near 24,200 levels while the Sensex has lost over 400 plus points. So broader markets have outperformed the benchmarks as well. In fact, markets have ended with a positive sectoral breadth there, with most of the sectors closing in the green. Public sector banks and pharma stocks have led the gains, while financial services and auto stocks have lagged, and this is reflecting a mixed but largely constructive trading session. Let's look at some key buzzers. First up, we have pharma stocks that were among the top gainers, with the Nifty Pharma Index rising around 2%. Torrent Pharma, Mankind Pharma, Cipla and Aurobindo Pharma, they've gained up to 5% and are also leading the rally. The sector has benefited from the renewed buying interest after recent weakness, and this has been supported by optimism around earnings and even resilient domestic demand. Next counter to look at is Reliance Industries, and it will remain in focus after the stock came under pressure following its Q1 results and even slipped towards its 100-day moving average, which is a key technical level watched by the traders. So analysts are saying that the zone around the 100 DMA could really act as an important near-term support area, while a decisive move below it may really trigger further selling pressure. So the stock has been consolidating after recent weakness in the energy and retail businesses, and the market participants will now watch whether Reliance can hold these technical levels and also stabilize after the earnings reaction. Next counter to look at is Ultratech Cement, which has delivered a strong first quarter performance, also reporting healthy double-digit growth in the revenue, profit and even cement volumes. So while margins have moderated slightly there, robust operational execution and the consolidation of India Cements, they've continued to support the earnings, and the company has also reaffirmed its aggressive expansion plans, also targeting nearly 16 million tons of fresh capacity in financial year 2027 and also close to 30 million tons in financial year 2028. So also reinforcing its leadership position and long-term growth strategy in India's cement sector. Here's next counter to look at is Indian Overseas Bank, which has also reported a strong first quarter performance, with net profit rising 49% annually to 1,659 crore rupees. The PSU lenders' earnings were supported by healthy growth in interest income and also improved asset quality. The bank also continued to strengthen its balance sheet with lower bad loans and also better provisioning there. So the robust results really reflect improving business momentum and even sustained credit growth, keeping the investor focus on the bank's asset quality and even the loan growth trajectory going forward. Next counter to look at is Axis Bank. So the shares have dropped nearly 5% after several brokerages have trimmed their earnings estimate following the lender's first quarter results. So while the bank has reported a healthy rise in profit, analysts have flagged pressure on the net interest margins, slower fee income growth and even a cautious near-term outlook. So brokerages are continuing to remain constructive on the bank over the long term, but have really lowered the target prices to reflect near-term profitability challenges. And keeping with the banks, we have HDFC Bank now. So the shares have slipped nearly 5% despite reporting a strong first quarter performance. As investors have booked the profits after results, analysts remain positive on the country's largest private lender, citing healthy loan growth, resilient asset quality and even stable earnings. However, some brokerages, they've highlighted pressure on the net interest margins and even moderated the growth expectations in the near term. Here's next up, we have Karur Vyasya Bank, which has reported a strong first quarter with net profit surging nearly 45% annually, and this has been supported by robust growth in net interest income and also operating profit. Now, lower provisioning further strengthened the earnings performance, while the asset quality, they remain stable with gross and net NPAs at comfortable levels. The numbers reflect healthy business momentum and even continued balance sheet resilience despite a challenging operating environment. Next bank to look at is ICICI Bank. So the shares have gained around 2.5% after the lender has reported a strong first quarter performance, also beating the street expectations. Now the earnings were driven by healthy loan growth, stable asset quality and even robust profitability. Now, following the results, several brokerages have reiterated their positive view on the stock, with some sort of seeing, up to 25% upside there from the current levels. And analysts believe that ICICI Bank remains well placed to deliver consistent earnings growth, and this has also been supported by its strong balance sheet and improving operating metrics. Next counter to look at is Larsen & Toubro, which has secured multiple orders worth between 10,000 crores and 15,000 crore rupees in its metals and mining business, also classifying them under the mega order category. So the contracts really include an iron ore handling plant in Chhattisgarh, which is a steel plant in expansion in West Bengal, and also an EPC order for a zinc processing plant. So these deal wins strengthen L&T's order book and even reinforce its leadership in the executing large-scale industrial infrastructure projects as India really accelerates investments in metals and mining capacity. Here's SBI Funds Management is set to make its stock market debut with grey market signals pointing to a strong listing. Now, according to reports, the IPO is commanding a grey market premium of around 18%, and this is indicating healthy investor appetite ahead of the listing day. Now, the issue had attracted overwhelming demand during the subscription period, and this was led by strong participation from the institutional investors. So, while the grey market, I beg your pardon, it was actually led by strong participation from the institutional investors, and the grey market premium really reflects positive sentiment there for the company. And viewers, moving on, we have India's pilots body, ALPA India, which has urged aviation regulator DGCA to really suspend flights to Dubai and Abu Dhabi amid escalating tensions in the Middle East. Now, in a letter really accessed by NDTV Profit, the association has warned of growing risk to civil aviation, including missile threats, GPS jamming, and even electronic warfare. Now, ALPA has called for a comprehensive independent threat assessment before the normal operations resume, and has also offered technical support to the DGCA for conflict zone risk evaluation. Here, Samsung Electronics is restructuring its US consumer electronics business as it really shifts its American headquarters from New Jersey to Texas. So the company has confirmed that around 739 roles at Samsung Electronics America, primarily in New Jersey, have been impacted by this move, and the restructuring impacts the operations across its display, smartphone, and even broader consumer electronics businesses, but does not include its semiconductor division. So this relocation is part of Samsung's broader operational realignment in the US as the company looks to consolidate the functions and even position itself for its next phase of growth in one of its largest global markets. And viewers, Alibaba-owned AliExpress has been hit with a record 550 million euros, and this has been fined by the European Union for failing to curb the sale of illegal, unsafe and counterfeit products on its platform. Now, the penalty is issued under the EU's Digital Services Act, also marks one of the toughest enforcement actions under the new rules. Regulators have also warned that AliExpress could really face additional penalties if its proposed compliance measures really fail to meet the EU requirements later this year. Here's moving on to some national news now. The monsoon session of Parliament has really got off to a disrupted start, with repeated adjournments in both the Lok Sabha and Rajya Sabha following opposition protests. Now, opposition leaders have demanded discussions on issues including question paper leaks and protests at Delhi's Jantar Mantar. Now, amid the impasse, the Rajya Sabha chairman has convened a meeting of the Business Advisory Committee as efforts have continued to restore normal proceedings before both the houses, reconvene later in the day. And security was also heightened as thousands of protests outside the parliament as Cockroach Janta Party demands resignation of the Union Education Minister Dharmendra Pradhan. And viewers, the Central Bureau of Investigation has intensified its probe into an alleged 1,109 crore bank fraud case by conducting coordinated searches at 6 locations across West Bengal, Odisha, Tamil Nadu and Uttarakhand. Now, the multi-state operation is part of an ongoing investigation into suspected financial irregularities linked to the case. Officials are examining documents and even electronic evidence as the agency seeks to uncover the alleged fraud and also identify those responsible. Yes, the government has introduced a bill in the Lok Sabha to increase the sanction strength of Supreme Court judges from 33 to 37, excluding the Chief Justice of India. So the legislation seeks to replace an ordinance issued earlier this year and is also aimed at strengthening the apex court's capacity to handle its growing caseload. So the proposal will now be taken up for parliamentary consideration during the monsoon session. And viewers, floodwaters have damaged railway tracks in Upper Assam, disrupting the crucial rail link connecting the region with the rest of the country. Now, railway authorities have launched restoration work on the affected sections, but the train services are likely to remain impacted until water levels recede and safety inspections are completed. Heavy rainfall continues to pose challenges across several parts of the state. And the Middle East conflict is escalating rapidly, with the United States carrying out a 9th consecutive night of airstrikes against Iran. Now, President Trump has ordered fresh military action after another US soldier was reportedly killed in an Iranian attack. And CENTCOM is saying that the latest strikes are aimed at degrading Iran's military capabilities linked to attacks on commercial shipping in the Strait of Hormuz. Meanwhile, Iran's Revolutionary Guard has expanded its retaliation, launching attacks targeting Syria, Kuwait, and even Bahrain, raising fears that the conflict could really broaden further and even deepen risk to regional security and even global energy markets. Yes, fresh concerns have emerged over the security of commercial shipping through the Strait of Hormuz after Iran has claimed that 2 oil tankers exploded and were left immobilized near the strategic waterway. So the development comes amid intensifying military exchanges between the US and Iran, also raising fears of further disruption along one of the world's busiest oil transit routes. So markets are really closely watching whether tanker traffic slows further, as any prolonged disruption could really tighten the global crude supplies and even keep the geopolitical risk firmly in focus. US American drivers are once again feeling the impact of the rising geopolitical tensions. US gasoline prices have climbed above the key $4 per gallon mark as renewed hostilities between the US and Iran, they've continued to disrupt the energy flows through the Strait of Hormuz, and retail fuel prices have risen more than 30% since the conflict escalated earlier this year, highlighting how geopolitical shocks are quickly translating into higher costs for consumers and also adding to global inflation concerns. And here's a food delivery rider in China has won one of the country's highest literary honors. Now, 56-year-old Wang Jibing, he's received the prestigious Lu Xun Literary Prize for his poetry collection, Low Flight, much of which was written between food deliveries on scraps of paper. So, having left school due to financial hardship and worked a series of odd jobs, Wang's remarkable journey is now inspiring many, while also shining a spotlight on the lives and struggles of workers in China's rapidly expanding gig economy. Here's moving on to some sports news now. Spain is the new FIFA World Cup champion, defeating Argentina in a total score of 1-0 after extra time in a gripping final. Now, substitute Ferran Torres scored the decisive goal in the 106th minute, ending Argentina's hopes of defending their title, and Spain has dominated the possession and also created better chances before finally breaking the deadlock. So the defeat also marks an emotional end to Lionel Messi's World Cup journey, as Spain lift their second FIFA World Cup title in a memorable night of football. And NDTV brings us this report.
A war of attrition in the New York Stadium as Spain took on Argentina in the final. Spain constantly complained about referee Slavo Vincic's leniency. The first yellow card came after 40 minutes when Lisandro Martinez brought down Mikel Oyarzabal. The game boiled over in stoppage time when Enzo Fernandez, who had already been cautioned, received a second yellow card for a reckless challenge on Spain defender Pau Cubarsí. Argentina was reduced to 10 men. The Albiceleste keeper Dibu Martinez denied Spain in the final seconds of normal time, keeping out a superb free kick from Lamine Yamal. He was in action again with another crucial stop from Nico Williams' header. Spain kept pushing, probing, attacking and asking incessant questions of the Argentina rearguard. Barca boy Ferran Torres was the hero for Spain. He collected a Nico Williams header to beat Argentina keeper Emilio Martinez with a powerful shot from close range after 106 minutes. The Argentinians could not find a comeback on Monday morning. Messi has put in some of the great World Cup performances, a few of them coming this summer. But the 39-year-old had his quietest night of the tournament with just a single touch in the opening 15 minutes. The scoreline remained 1-0, and that meant Spain became the first nation ever to be men's and women's world champions at the same time.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision and have a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. And we need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
9 days of US strikes, yet diplomacy stays on the table. Iran warns of consequences if Karg Island is targeted as the standoff deepens. Trump reiterates Iran can't have nuclear missiles. Fresh escalation between the US and Iran has pushed crude prices higher. Brent is trading closer to the $90 per barrel mark as fears of disruptions through the Strait of Hormuz keep the energy markets on the edge. India's pilots' body ALPA urges DGCA to suspend flights to Dubai and Abu Dhabi, citing escalating security risks in the Middle East. It warns of missile threats, GPS jamming, and electronic warfare, calling for a fresh safety assessment before operations continue. Market ends in the red today, with Nifty closing near the 24,250 mark after recovering most intraday losses amid the Iran Foreign Ministry's comments on mediation in the Middle East war. Axis Bank and HDFC Bank are the top losers. Broader markets outperformed the benchmarks today. Solar sector impacted after the government ruled out a blanket extension of ALMM2 norms while allowing a limited transition period for select projects. Wari and Premier Energies say unaffected by the government's extension. Samsung Electronics cuts jobs in its US consumer electronics business as headquarters move to Texas. 739 jobs affected. Samsung offers relocation to employees ahead of shifting headquarters to Texas. Both houses of the parliament have been adjourned for the day following continuous protests by the opposition. The opposition is seeking discussions on issues including NEET paper leaks and other key issues. Spain climbs again to the summit of world football. The Red Fury crashed Argentina dreams when substitute Ferran Torres struck in the 106th minute to prize the World Cup from holders Argentina with a 1-0 victory. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the top headlines and the news developments you must know about. Starting with the war situation, well, the United States really carried out a 9th consecutive night of strikes on Iran, with the CENTCOM really confirming fresh attacks targeting military command centers, air defense systems, as well as the communications networks. Now, this escalation comes after a US soldier was killed in northern Iraq.
during a controlled detonation of the unexploded ordnance from a downed Iranian drone. Meanwhile, also remember tensions in the Strait of Hormuz really continue to rise. A vessel caught fire after being struck by a projectile off the coast of Oman, forcing the crew to really abandon the ship before being rescued. Now, Iran has warned of consequences if the U.S. really targets Kharg Island, while Secretary of State Marco Rubio says that Washington remains open to diplomacy, but only if Iran changes its behavior and halts attacks on shipping. In fact, the U.S. President Donald Trump has really warned that the United States could target Iran's critical infrastructure in Tehran and takes further action on this war. Listen in.
But we hit him very hard again tonight. And we did that in honor of the probably three as opposed to two great patriots. What we're doing now is we're ending any chance where they could have a nuclear missile. If you look at it, after a week and a half, not 4 weeks, a week and a half, 2 weeks, we stopped them from probably, but I don't want to have the word probably.
Well, they're not complying with it. I mean, the straits are supposed to be open, free of tolls, free of attack, free of all the things they're doing against these ships. So they can't have an MOU that's alive if they're violating the terms of it. What I will say is that the United States always remains open to a diplomatic solution. We've tried multiple times with Iran, and we'll continue to try. If that door opens, we'll be happy to see it open. But and they continue to send signals that they want to talk, that they want to negotiate. But their behavior is what we're responding to. And their behavior is they're launching missiles and drones against ships, including tonight.
All right, amid the growing Strait of Hormuz tensions, Aditya Raj Kaul explains the risks for India as shipping routes really face fresh disruptions and global energy supply really chains also come under pressure. Aditya Raj Kaul.
Even after months of relentless fighting and conflict, the West Asia conflict is only continuing further. The United States and the US Central Command has ended the 9th day of consecutive attacks against Iran. This after the ceasefire broke between Iran and the United States, which was mediated by Pakistan. The main conflict remains at the Strait of Hormuz, where the US blockade continues, as does the Iranian one. The big question really is how long will this conflict continue, because this has direct ramifications on the energy crisis, the energy sourcing between different countries, but also the supply chains in this regard, be it energies that India requires or several other countries. There's been a huge disruption that we have been talking about over the last few weeks and months. As of now, Trump has given a go-ahead to the U.S. Central Command and the U.S. forces to target the Iranian maritime capabilities as well as their defense and other strategic capabilities inside Iran. The war continues, the conflict is continuously underway, and there are provocative remarks coming in from Iran as well as from the United States. But there is no mediation that has been successful so far to end this latest round of the conflict between these countries. As of now, this has a direct ramification on the cost of the Brent as well as the supply chains that are impacted. And that's why India and several other countries are looking at other ways of supply chains and also to diversify when it comes to energy sourcing. At NDTV, we are keeping a very close watch on the entire conflict in Iran and at the Strait of Hormuz, even as several commercial ships have been attacked over the last few weeks. Many Indian seafarers have been victims of these attacks as well. And India has strongly urged for diplomacy and dialogue to pave forward and a free and open Strait of Hormuz for the commercial shipping.
All right. Thank you so much for explaining what's really transpiring and the impact. And also in the impact of the escalating conflict is clearly visible on the oil market, where crude prices really remain elevated amid the growing fears of supply disruptions through the Strait of Hormuz. And Brent hovers around the $90 per barrel mark, while WTI really continues to hover about $80 per level mark. Now, geopolitical tensions are keeping the energy markets on the edge and not a good news for the Indian market. And that's where our money market and the currency has already weakened. The rupee closed at 96 rupees 45 paise against the US dollar, ending the session at the day's low. And the domestic currency, remember, remained under pressure as the surging crude oil prices, persistent dollar demand, as well as the escalating tensions in West Asia continue to weigh on the sentiment, keeping the rupee close to its record low levels, which was at a kissing distance to 97 to a dollar mark. All right, moving on, ALPA, which is ALPA India, which is the pilots association that urges the DGCA to suspend flights to Dubai as well as Abu Dhabi, citing the rising security risks in the Middle East. In fact, my colleague Sessa has been poring over these details and joins us with all the details that she has gathered. What is it that the pilots really want, and what is the big concern really coming in, Sessa?
Right. The Airline Pilots Association of India has urged the Ministry of Civil Aviation and the DGCA to immediately suspend commercial flights by Indian Airlines to Abu Dhabi, Dubai and other affected Gulf destinations. The pilots' body says that the worsening security situation in the Middle East, including reported threats and ongoing military escalation, has significantly increased risks to civil aviation. ALPA has also warned that the aircraft could face dangers such as missile attacks, GPS interference, electronic warfare and rapidly changing airspace restrictions. It has also called for flights to resume only after an independent and comprehensive threat assessment, confirming the risks have been adequately addressed. ALPA says that passenger and crew safety must remain the highest priority, stressing that preventive action is always better than responding after a tragedy. So far, we know that major airlines such as Emirates, Etihad have announced cancellations of services to Kuwait due to the escalating Middle East tensions. However, if Indian Airlines will follow suit remains to be seen.
All right, Sessa, thanks so much for all the details. So pilots' body really showing concerns on flight to certain war-affected areas. Now moving on to the equity markets, and benchmarks really ended a choppy day of trade today. Nifty ended the day near 24,200 odd levels, while Sensex lost 400 points in the trading session. Now the broader markets, they outperformed the key benchmark indices. In fact, let's take it straight across to Parth, who's joining in with the complete roundup of the highlights of the market action today. Parth, tell us.
So Nifty has ended in red today, down almost 0.4%. This was led by Axis Bank and HDFC Bank, both of which were the top losers of the index, each seeing a downtick of over 5%. This was on the back of weaker Q1 results that both of the banks had posted over the weekend. If we talk about the broader markets, then they have ended in green compared to the benchmark, outperforming Nifty. Nifty Midcap 150 ended over 0.5% higher. This was led by Union Bank and Gujarat Fluorochemicals, both of which were the top gainers of the index, both seeing an uptick of over 4% today. On the other side, Nifty Small Cap 250 has also ended in green, gaining almost 0.2% for the day. This was led by Emcure Pharma and Metropolis Healthcare, both of which were the top gainers of the index, both gaining over 4.5% today. Now let's look at the sectoral side as well. Well, sectors have ended on a mixed note, with Nifty PSU Bank being the top gaining sector, up over 2.5% for the day. The Nifty PSU Bank has ended in green for the second day in a row now, and this was led by PNB and Union Bank. PNB gaining over 5.5%. Again, this was on the back of strong Q1 earnings that the bank had posted over the weekend, while Union Bank also saw an uptick of over 4% today. On the other side, Nifty Financial Services was the top losing sector, down over 1%, and this was again led by Axis Bank and HDFC on the back of weak earnings, both seeing a downtick of over 5% for the day. On the trend side, we saw Nifty IT snapping its 2-day gaining streak, while Nifty Auto has snapped its 3-day gaining streak as well. Nifty Oil and Gas has ended in green for the 4th day in a row now, while Nifty FMCG has ended in green for the 3rd consecutive day. And lastly, Nifty Metal has also snapped its 3-day losing streak.
All right, thanks so much, Parth, for putting it all together for us. But one particular sector really stood out in the markets today. It was the big private bank sector, and it was a mixed bag after the spate of results that came out over the weekend. HDFC Bank, one of the top draggers on Nifty 50, fell the most. Axis Bank also showed the same momentum, but much lesser in degree than HDFC Bank, and ICICI Bank was on the winning side. So the major banks have reported their Q1 earnings. Let's straight get to Piyush to share the highlights of the earnings and why such a divergence between the same private sector banking units really performing, and also the market reaction to their numbers. Piyush.
We'll start with HDFC Bank. The bank has come out with a mixed set of results. The PAT is up 10%, essentially led by, lower provision that they did in Q1. If we see, the provisions have actually come down by around 79% year-on-year to 3,060 crore rupees in the Q1. The net interest income of the bank, the NII, is up around 6-7% at 33,530 crore rupees. The other income of the bank is down very sharply by around 41% to 12,820 crore, essentially because of lower treasury gain, as other banks have also seen that. The biggest factor is that net interest margin of HDFC Bank has actually dropped by 12 basis points quarter-on-quarter to 3.26% in Q1. On the deposit front, the bank has continued growing deposits faster at 15% and advances at 12% year-on-year in Q1. The fresh slippages, thanks to agri portfolio seasonality effect, has gone up to 8,000 crore from 6,200 crore quarter-on-quarter. The management key guidance that they have given is that the NIM will improve going ahead. We have come at the bottom end. The loan growth is also expected to pick up in the coming quarters, and the CEO reappointment, that is expected in a short window, which is what the DMD, Mr. Kaizad Barucha, said. Now let's talk about ICICI Bank. My few key takeaways were that the results were expected. It was better than expectation. Further, the NII of the bank was up around 13%. Strong credit growth helped the NII to grow at the pace of 13%. Other income also saw a strong growth. They reported treasury gains, in fact, in this quarter, which not many banks have done. The NIM has gone up by around 4 basis points quarter-on-quarter at 4.3.
All right, so that was Piyush really recounting the results and what were the key highlights. Now, the government has extended the ALMM2 exemption for select solar projects until December 2026, easing the sourcing constraints and also lowering the costs for the developers. How will it really impact the key stakeholders? Varsha is here to share the details. Varsha.
Well, the relief is only for net metering and open access solar projects. Earlier deadline was around May 31st, 2026. Now, overall, ALMM policy remains unchanged. Now, what is this? This is nothing but this requires solar projects to use Indian approved solar cells, and the aim is to boost the domestic, solar manufacturing. Now, this extension has been done as domestic solar cell supply still inefficient. But, which are the companies and which who will be benefited or which will have a negative impact, starting with the Wadi Energies and Premier Energies, which will have a negative impact in the near term. Why I say this? Because this delays benefits from mandatory domestic cells sourcing, also reduces pricing power for integrated players, now also weakens the near term margin opportunity. Now, non-DCR module demand may rise, but margins over here are lower, and DCR modules use Indian solar cells. The reason why I am saying this, and non-DCR modules, if you see, can use imported solar cells. But overall, if you see, a net impact seemed negative for FY27 earnings. Now, which companies will have a positive impact? The positive impact will be on CleanMax and developers. Why? Because they'll have a lower project cost for open access projects, and of course faster project execution and commissioning, and they'll have a better returns for commercial and industrial customers. So negative for all the cell and module players like Worry and Premier, but positive for the developers like CleanMax.
All right. Thank you so much, Varsha, for putting it down into perspective and the impact. Now, Paytm is set to announce its results, and Shivam is here with what the street is really penciling in from the Paytm results and other developments. Tell us, Shivam.
Yes, Paytm is expected to post its Q1 FY27 earnings today, and let's look at the what the street is expecting. Starting with the first metric, which is revenue growth, that is expected to be led by the payments and financial services. And in terms of financial services, too, it is expected to remain a key growth driver, which further will be led by the merchant lending. In terms of gross merchandise value and contribution margin, it is expected that both of the metrics will remain largely stable, and payments revenue growth will be aided by higher gross merchandise value, as I said, and also the payment margins is expected to be better. In terms of marketing services, a slight moderation can be seen here, and in terms of EBITDA margin, it is expected to expand sequentially and on higher basis due to improving mix. In terms of revenue growth, the revenue is expected to be up around 5%. EBITDA margin is expected to be at 7.88% versus 6% in previous quarter, and in terms of PAT, it is expected to be around 2.7% up on quarter-on-quarter basis. Talking about the key factors that investors should to look in the results, first one is the payment margin expansion, and also merchant lending growth and recovery in marketing services can be one of the factors that should be noted, and FY27 growth outlook also remains under the radar.
All right, Shivam, thank you so much for giving us a heads up on what's expected from Paytm results today. Now, addressing Tech Mahindra's 39th annual general meeting, well, chairman of the group, Anand Mahindra, explained why artificial intelligence alone will not define the winners of tomorrow. He also shared what he believes will also give enterprises a lasting competitive edge in the AI era. Listen in to what he had to say about how AI is to develop.
In the AI era, companies like Tech Mahindra provide just that enabling layer, turning a very powerful technology into an intelligent business partner that delivers real value. I've said recently that while building sovereign models is important, enterprises will increasingly need the ability to work across models. Some models may become more interchangeable over time. What will truly differentiate an enterprise is its own alpha, as it's known, which is its data, its workflows, its judgment and domain knowledge.
All right, as the Parliament's monsoon session began today, well, the government has answered key questions on market taxes, dormant EPFO accounts, and also overseas remittances, offering clarity on LTCG tax and also inoperative funds and West Asia-related concerns. In fact, my colleague Rishabh joins us for all the details coming in. Rishabh, government has really clarified that there's no plan to really scrap LTCG tax on equity. Give us a sense.
Absolutely. Some key updates coming in, largely from the Finance Ministry today. A lot of questions being answered by the MOS and the Finance Minister herself. What we're seeing is that, firstly, the government has clarified that there is no proposal at the moment to change the capital gains tax rates. What they've said is that these policies are already reviewed periodically as part of the annual budget process, and it will continue to do so. Essentially, the LTCG tax has now generated about 1.3 lakh crores in the annual year for 2026 for the government. And that's what you have on that front. On the unclaimed funds part, the Finance Ministry has revealed that about 7,400 crores worth roughly is what is lying as unclaimed funds with the LIC. When it comes to the EPFO, about 9,300 crore rupees is what is lying across its inoperative accounts. Now, what they've also said is that the EPFO is already starting to pilot auto credit of any balances that are up to 1,000 rupees. So if you have less than 1,000 rupees that are pending with the EPFO, that will automatically get credited to your bank account. That is something that the government is also doing to reduce the unclaimed funds that are lying with them. they're also saying is that currently there's no proposal to use these unclaimed funds for any other purposes. They will continue to remain with the government for now. On the remittance inflows that are coming in as the impact of the West Asia war also unfolds, what the stats are telling us is that about $145 billion is what has come in FY26. That is compared to about $125 billion compared to the previous year. So you are seeing remittances still strong despite the war. The government is saying that these flows do tend to be more stable than capital flows. So that is something to be noted here. And the government has also said that it does not maintain any sort of war-wise data on these remittance inflows. So that's what we're picking up across sectors. Another key update, what we're seeing is that on the capex front, the government has clarified that there is about a 5x rise in the sort of capital expenditure that the government has done from the year 2014 to now 2026. What we're seeing is that alone, capital expenditure alone has increased from 12.4 lakh crores to about 64 lakh crore rupees now. So that's what the government has put out, the finance ministry. Lots of interesting statistics coming out on the first day of the monsoon session.
That's right. Lots of important developments there and clarifications. But Rishabh, the clarity on LTCG on equities not going is one of the very important ones that market was really hoping for. Thank you so much for joining. Well, we talk about the monsoon session. Well, it witnessed a stormy start as repeated sloganeering over the NEET paper leak issue really disrupted Lok Sabha proceedings today. Both the houses of the parliament have been adjourned for the day amid protests and also ruckus by the opposition. Also ahead of the session, Prime Minister Narendra Modi sought constructive debate in the parliament. Listen in to what did PM Modi as well as Mallikarjun Kharge, the leader of the opposition Rajya Sabha, said in the parliament.
ये पश्चिम एशिया का युद्ध एक बहुत ही बड़ा संकट का कारण रहा। पेट्रोल, डीजल, एलपीजी, फर्टिलाइजर, केमिकल्स, यानी हर विषय में अनेक बाधाएं, अनेक संकट आए। उसके बावजूद भी भारत 7.7% के ग्रोथ से दुनिया की मेजर इकोनॉमी में सबसे तेज गति से आगे बढ़ने वाला देश बन के रहा।
सर, ये स्टूडेंट का मामला है, ये स्टूडेंट का मामला है जो लाखों बच्चों की जो भविष्य है, उनके भविष्य के बारे में मैं बात कर रहा हूं और उसके लिए आज यहाँ जंतर मंतर पे हजारों बच्चे वहां पर आए हैं, वहां लाठी चार्ज हो गया है, गवर्नमेंट मारने की कोशिश कर रही है, गवर्नमेंट दबाने की कोशिश कर रही है।
And as we say goodbye, well, the credibility of any award rests on the strength of its jury. And for the NDTV Profit Business Leadership Awards, the selection process was guided by some of the most respected names from the world of business, finance, and public policy. Leading the jury is Sunil Bharti Mittal, founder and chairman of Bharti Enterprises. Joining him are Noel N. Tata, chairman of Tata Trust, Cyril Shroff, managing partner at Cyril Amarchand Mangal Das, Kiran Mazumdar Shaw, chairperson of the Biocon Group, and UK Sinha, former chairman of SEBI. We also had Jayant Sinha, president of Everstone Group and former union minister, and also Ramesh Damani, the noted value investor and BSE member. Also with them, C.S. Shetty, the chairman of the largest bank, State Bank of India. So the jury was supported by Sanjeev Krishnan, who's the chairperson of PwC India, and Rahul Kanwal, the CEO and editor-in-chief of NDTV Group, in non-voting roles. Together, this distinguished panel brought deep expertise, independent judgment, and rigorous scrutiny to identify the leaders and enterprises shaping India's economic future. Join us on July 26th as NDTV Profit brings back the Business Leadership Awards after a period of 13 years, celebrating the leaders, companies, and entrepreneurs who have not only built successful businesses but have really helped shape India's economic journey. With that, it's a goodbye. Thank you so much for tuning in.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the piece.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, interesting news-based stories, and yes, can you make alpha or not? Let's try to understand the company today which we have, but try to guess it. It's a Haryana-based solar pump manufacturer. I know there are 3 names coming in your mind, but I'll give you some more hints to get it. It was recently listed June 20, 2025. It's just been 1 year almost, you could say. The company has come in the market, but the stock is down 35% from IPO price. A little bit of concern, definitely, right? Also, apart from this, another hint is the beneficiary of PM Kusum scheme. I'm sure you must have got these names by now. 2 or 3 names are there. But the company in focus, and of course, recently there was an important corporate news development also, is the company in focus is Oswal Pumps. Very interesting name, but we'll try to understand, is this just a B2G play or is there something more? But why are we calling this company and why right now? First question is, of course, the recent order wins and outlook. Does it change? Is it just the Kusum 1.0 scheme or are there any more government schemes to it? Second question, the rollout of Kusum 2.0. What's the impact looking like? Will it be different this time because there were pluses, there were minuses? We'll discuss that, but shortly. Addressing the higher receivables and cash flow issue, this is what has issued the entire industry. So we'll try to understand that, and is that pressure bottoming out? any diversification from the government schemes, and that's what the investors and the streets want to hear from the company going ahead. Any R&D, any new tie-ups, tendering. Is there a competition right now also across its organized players as well as inorganized players? That's what we'll try to understand. And of course, the guidance from the solar rooftop segment seems like there is a bullish commentary in the fourth quarter, which the company had mentioned. Apart from this, of course, we'll have the conversation with the management, Vijay Yadav, the GM Finance for Oswal Pumps, to try and understand where does the story lie for this counter. But let's understand the company itself. What does the company actually do? And is there anything much more than just the industry tailwinds? It's of course Haryana-based solar pump manufacturer. Also, if you look at it, the company now is diversifying into solar irrigation. So yes, there is a diversification at play, but these things take time. Also, it was listed recently, which I had mentioned you earlier. And going ahead, one more interesting snippet about the company, of course, is that it's a fully integrated provider of turnkey solar pumping system. Remember, our monsoon is uneven this year, so solar pumps are definitely necessary. Solar powered and grid connected submersible Mont Blanc pumps, technically solar pumps, just to make it simplified for you. But yes, this is the product categories. They are also engaged in electric motors and solar modules. So solar modules is of course an extension of their product profile. There is one of the largest PM Kusum turnkey solar pumping system suppliers. Market shares bhi dekhe to alag-alag category mein they have a significant market share. Company is listed under the Ministry of New and Renewable Energies ALMM mechanism. So this is of course a good important certification to have. They have a pipeline of almost 25,000 pumps and almost 1 lakh plus pumps has already been supplied from different government projects. The recent order win, which we have been talking about and we'll understand from the management, is for 10,000 solar pumps. After a long time, the solar pump order has started coming in. And remember, the PM Kusum scheme Yojana, the Indian government scheme, is to promote the solar energy in agriculture. Little bit more details about it. It helps farmers install solar pumps, solarization and the grid connected pumps. Also, apart from this, it helps in setting up of small solar power plants. So this is the PM Kusum scheme which we are talking about. Also, this will secure reliable daytime power and generate extra income as well for the farmers. So these are the important points you should be looking at. But let's understand how the business pans out. You know, the solar and the non-solar pumps, how it is. Around 1.81 lakh pumps have come in FY26. It almost looks like even Stevens for both of these categories. And this is the story of the overall setup. But how big is the industry? The government has allocated 22,000 crore rupees for PM Surya Ghar Muft Bijli Yojana. This is also one of the different, you could say, products which the company is focusing in. The utility scale, CNI, PM Kusum and the rooftop target, if you look at it, that's at 65 gigawatt by FY30. Interesting, right? Also, looking at the new opportunities in the solar space, where the things are looking like. So we have broken it down into rooftop solar and the utility segment, largely the up and coming tenders. This is around 1546 megawatt. Compare that, it's around 2470. The tenders which the company has participated, that's around 131170. So that's almost half. Almost you could say 50 to 60% of tender participation is coming in. But let's try to understand what may work for the company. The new announcements in Kusum 2.0, is it different this time? That's the question. Second is the improvement in cash flows. Is there a turnaround at play in the Q1 numbers? If that happens, we can see a good technical rally. The company is diversifying away from B2G contracts. We'll try to understand more about it, but from the management. Also, valuations are attractive. Corrections have been there. Stock is down 35% from its IPO price. This is the reason what may work. And of course, this is the new one. PM Surya Ghar Muft Bijli Yojana. This is where they are focusing on. So yes, there might be a different story at play for this counter. But what may not work? That's the problem. The rise in receivables, that's what Street is not liking it. There's a B2G risk involved, and this is a business model, inherent business model. DIs, FIs have been reducing their positions, but take it with a pinch of salt. It's just been 1 year. But yes, the numbers are there to show you. Return ratios are muted right now. And we'll try to understand when will this ROC, ROE numbers go up. The tender pricing, that's the pressure which is coming in from the industry, and that pressure, has that bottomed out or not, we'll understand. And yes, of course, there's a lack of analyst coverage as well. So these are the reasons what may not work for the company. But we have the interesting KYC ratings for you where we judge a company in KYC. We have income statement, balance sheet, cash flow, return ratios to make it. And also I'll give you 4 more ratings. Of course, the shareholding street trade, take things with a pinch of salt. It's just been 1 year of the listing history which company has. Valuations, we'll try to understand and compare it with its peers and the outlook itself. Short term, medium term, long term, everything for you we'll get. But let's start with income statement, what's happening here. And income statement, largely the long-term ratio numbers are showing a good strength, and the way this has momentum has come in, this is pretty strong. Be it PAT, be it EBITDA, be it revenue, a good growth coming in. But the Q4 numbers, a little bit of pressure was there, especially on the margins front. So this is a little bit of concern coming in, but top line and bottom line growth was there. But a little bit of margin profile change is happening in the company. And is this because of the pricing pressure? Because it was continuously going up. It seems to have moderated a bit. Net, the long-term numbers are pretty strong. Short-term, there is a little bit of hiccup. And because of that, I have given this a neutral rating when it comes to the income statement. Balance sheet, interestingly, is pretty strong. The borrowings, however, has come down from FY25 from 324 crores. It has come down to 225 crores, and it's decently managed as of now. Of course, the stretches are there in the receivables, and we'll see that in the cash flow also. But as of now, balance sheet is strong. So I'm going to give this a thumbs up as well. But let's talk about cash flows. There might be a little bit of lumpiness, and whenever a business is in the B2G segment, that is where payments at times becomes an issue. The receivables start rising, and that's why we are seeing variations in the cash flows. Look at the cash flow from operations from FY25 and look at FY26, how things are moving. So little bit of concern definitely comes in, but take things with a pinch of salt. At times there is a pressure also in the overall working ratios. Let's move on after this neutral rating of cash flows to the overall return ratios, and that is where the story seems like the pain is there. Look at that net worth returns, in 65% in March 25. Now it has come down almost half. And ROC is also the same story, almost half it has become. So concern is definitely there in the return ratios. As a long-term shareholder, you will be concerned. So I have given this a thumbs down when it comes to the return ratios. But let's look at the shareholding. Remember, only 3 quarters of data we have because it listed only in June last year itself. FIs, DIs is something I'm watching at. Promoters haven't sold any stake, so that's a good sign. But FIs, DIs has reduced the stake from 4% coming into just 1%, and DIs also, they have taken off positions. It's at around 7%. So yes, the institutions are clearly selling. That's what we have seen over the last 2 quarters. So it's a thumbs down when it comes to the shareholding segment. Come, let's explain you the street cred, whether the stock has made money for the investors or not. From the IPO price, if you had applied, stock is down 35%. So yes, there is an issue. Also from 2025 highs, the highs which was there, we saw the entire theme doing well. From there, the correction is still down 54%. So concern is there. But from March lows, there's a kind of a recovery happening, up almost 37%. So right now, I'll give this a neutral rating because we need to judge the company on a longer time frame. But let's get in the valuations. With this so much of sell-off happening, are the valuations turning attractive? And yes, it is. 12-month forward P ratios, how we have taken Shakti Pumps is around 26 times. KSB on the other hand, 51 times. That solar theme I'm talking about, largely you should compare the first two, and it's still cheaper, almost 50% discount coming in from its peer and almost 70-80% discount from the peak of the numbers which we had seen in 2025. So right now the valuations look quite attractive for Oswal Pumps. Let's talk about the outlook. This is the last but the most important rating, the Kusum 2.0 rollout. Everybody's talking about it. Will this be different? How the timeline is looking like? And of course, company will be one of the key large tender makers here. But the pricing, the competition is still there. So that's a little bit of concern. But long term, the story is definitely very much important. They're proactively diversifying beyond the government-driven solar irrigation. So there are much more story lines which are expected to come in, but we'll try to understand that from the management. And the rooftop solar segment, those numbers have been pretty strong and important government push is coming in. So as of now, I'm going to give this a neutral rating. But let's give you the entire picture of what are the KYC ratings coming in for Oswal Pumps and where does the company stand. Of course, the balance sheet management has been strong. I've given neutral ratings for income and cash flow. Return ratios has been disappointing. So has been the FIs and DIs. There's a sell-off happening there. Street cred, let's keep it neutral right now, where the valuations are attractive because of the correction, and the long-term story is very strong, but of course, medium term, there is hiccups. That is why a very balanced approach in KYC rating. I've given 4 out of 8. It's largely in line with the numbers which we give for this company of Oswal Pumps. Interesting story, right? But to make the story more interesting, we'll have Vijay Yadav. He's the General Manager for Finance at Oswal Pumps. He'll be talking about these important details about the company and also explaining us that is the pressure over in the industry. Now we are joined in by Vijay Yadav. He's the General Manager for Finance at Oswal Pumps. Good afternoon, Vijay ji. It's always a pleasure to have you with us at NDTV Profit. And over the last 1 month, the orders have started coming in, and you have announced, the company has announced important order wins also. So we'll start with this, the recent order wins. What does this mean for the company and the order book outlook going ahead?
Sir, thank you and good afternoon. So you explained properly that we have sufficient order book and management is also planning accordingly, and we are in the line with the current year budget, and this quarter definitely we will be in the line. And yes, future planning for CapEx and other activity that has been mentioned earlier. So we are on the same track, and commercial production is likely to come post Q2. So definitely those period will be best era for the companies, and the other activities such as R&D and other uh, advancement of product is being done with the proper team. So let's see how the everything goes, and we believe that everything is going well.
The belief is everything is going well, and at least that benefit will start coming in from the second quarter onwards as well. We'll discuss the capex plans as it is. We'll understand a little bit more in that detail. But Vijayji, I just want to understand the Kusum 2.0. That's also a very important story to track the rollout. How much incremental benefit will that be for your company, and will it be, a bit different than what was there in the PM Kusum scheme part 1?
See, the entire industry, on our industry specifically, everyone is just talking about Kusum 2, right? What we will get and how much we will get. But everything is just, it's a long discussion point. So definitely, unless everything is announced, because this is unless it is announced appropriately, and then the every stakeholder or all the market participant can consider that how much they are getting. So right now, yes, the government is also planning the self-dependent on this power and solar power to the nation. So yes, sooner or later the project will definitely will be announced, and that will all the participants accordingly they will get as per their bidding. So that's a very good. That will be also very plus point and advantages for us to get the proper share and continue the business and those activities. We are actually planning for everything.
Fair enough. You are planning for everything. That's interesting. But investors and stakeholders have raised a little bit of concern, sir, especially on the higher receivables, because there is a B2G angle involved, and also the cash flow issues. Can you just address that, and when will things improve?
So data collection is improving, and in Q2 financials definitely will be much better. Right now, last if you see the March 26, 190 days of days data recovery. So yes, till the Q2, the scene will be different, and collection is being improved by the government. All the data are actually government data. So yes, they take some time, but we are in the process, and collection is being improved.
So that's a very important statement coming in, Vijayji. Collections are improving, and the magic or the benefit or the turnaround, whatever you call it, will happen from the second quarter onwards, especially on the execution front, as well as, helping out your working capital ratios. But apart from this, everybody knows you about the solar pump theme which is there, your company. But what else Oswal Pumps is doing which is different? How are you diversifying, especially from the government schemes, or maybe in the non-government areas? Are you looking at something, any R&D, any tie-up? Is there anything else?
Yes, actually, for the new capex in the both solar part and motor part and inverter area, so the activity for the marketing, branding, research, and other interaction with the other business participant for improvement and absorb the additional capacity of production. So everything is planned, and these final the execution will start from post quarter after the trial run. So once trial run is completed properly, because if anything goes wrong, all the product go went in the market and then calling back, it will be not good for the financials as well. And the other thing which is not good, that's also a very major step. So each and everything we are planning, and everything is in the line, just waiting to come in the commercial production of the new additional capacities, and testing of those activities, and thereafter the things which are in the line and under the discussion, that will be minutized and documented. Then we will discuss more appropriately in the post second quarter.
Right. So we have some time. Q2 we might do discussions, but the benefit of these executions will start from the fourth quarter. And remember, there will be trials also which will be done, especially on the new capex, new business. The interestingly put, Q2 and Q4 is something which we'll be watching out for from our conversation. But Vijayji, the pressure of tendering, is that pricing pressure or the competition still there, or is it bottoming out now?
It's under the closing situation, and in a very few periods that will be removed from the business. But yes, there is a, you are seeing the yearly financials. So yes, it's seen very clear that there is a pressure. And also the now the management is also considering for a to have a professional and professionally driven organization. They are the that is first generation organization and business. So now the process of to transforming the from promoter driven organization to professional driven organization. So during this transition period, it's taking some time, and the activities that are being performed. So definitely that will result very well for the organization. For long term, there is no issue. Yes, temporarily there is a pressure.
Fair enough. So look at the long term. That's what Vijayji is talking about. And 2 points are very important in our conversation. One, the pricing pressure. Yes, it's there. It's the honesty of the management, and that's a good thing in KYC, which management talks about. But maybe that pressure would be coming out going ahead, and the management is also focusing on the professional side. Yeah.
It is a pressure on industry, sir, not only on us.
Fair enough. Yes, that's true. And I was mentioning the industry itself, not just your company, because things go together in the markets, especially in your theme. But the guidance for the solar rooftop segment, that is where you're trying to do something new. And if yes, capex, timelines, what is it for our viewers?
Sir, I said for everything. Specifically, we are now discussing only for solar. So the advanced equipment and machinery is being installed, and that will also commercial production will come post Q2 in phase wise, and that's why we are considering the post Q2 the seen scenario for financials numbers and ratios will be much different, because we will consider now non-government activities as well. That's why we are diversifying. So right now you are well aware, everyone well aware that major sales are coming from the government project. So now we are the improving our capacity to non-government project, and we are in the discussion with the several participants. So to absorb those and data turnover ratio, improving the data turnover ratio, we are considering in an aggressive mode for non-government project as well. So definitely the
right.
scenario is different.
Right, Vijayji. And of course, next time when you come to in our KYC show, the story will be different, the ratings will be different, and you won't just be a B2G player, you'll also be a B2C player. Of course, we spoke about the Q2 numbers, two important things coming in, the commercial production for your solar rooftop segment, that comes in Q2. All the benefits, all the changes in the ratio starts coming in Q2, and you have, of course, Q4 also, where new capex is moving on. The last question I would like to understand, we have spoken about industry and your company and everything else which is possible for your stock right now from the people who have written about in our KYC show. But the capex plans, any number is there which you can assign, say this year this much, next year that much for FY28, FY30, anything which is there to track the capex amount?
Yes. I don't think that because we are sharing the financial to auditor for a review and publishing. So please, I request not to disclose the number, but that has been written in the prospectus and DRHP. We are in the same process and the same activity is being done.
Okay, sir, not a problem, but you have given us a lot, especially in a silent period like that coming ahead and talking so much about your company. That's, of course, thank you for that. And best of luck, sir, for the future. And hopefully, from the second quarter onwards, you are just not a B2G company, but you are, of course, a B2G as well as a B2C company. Best of luck for the future, Vijayji.
Thank you, sir. Thank you, sir. Thank you.
So that's the management of Oswal Pumps. Of course, the street has punished the stock. It's down for 35% almost from its IPO price. But the story might be different in the second quarter. And if that happens, we'll get the company in KYC and show you whether there has been an up move or the downward move in our analysis for this counter. So for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस तेल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
The hottest trends.
the smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can become.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, when somebody tells you that you should invest in the mutual fund space and they say you should be investing in equity mutual funds, that's usually a message to you to start investing if you haven't invested. But if you've spent a little time and you've started investing and you've cut your teeth, then you'll move beyond the first few questions that you might normally ask, which is which mutual fund to invest in, because you will familiarize yourself with how these mutual funds work. Now, within actively managed equity mutual funds, there are various strategies that are used. The most common ones are value, quality, growth at a reasonable price. And that last one is what we're speaking about today. What does growth at a reasonable price mean? How has this strategy worked over the last 5 years? How does it compare to value? And what should you bear in mind if you're choosing to invest in a mutual fund that says that it invests or it selects securities or stocks based on a growth at a reasonable price framework? Joining me to talk about that is Mohit Kang, the founder and chief executive officer of Moneyfront. Mohit, thanks so much for taking the time. Let me start with that question, GARP, as it is called. It's another acronym, but we'll break it up. We'll talk about it in simple terms. Growth at a reasonable price. What does it mean?
Thank you, Alex. Always a pleasure being on your show. So look, I think the words in itself are indicative of what the underlying tone and the meaning is, which is that fund managers under this philosophy are chasing growth, but they are not willing to pay any price for growth. So they will pay a price which they think or which they deem as appropriate price and at a reasonable levels of entry. So you are investing in companies which are high growth companies, which are growing rapidly, right, where the multiples on earnings growth are pretty decent, but you're not overpaying for them. Right. So typically the ratios which any fund manager in Indian industry will use is the most common ones are PEG. You will track the EV by EBITDA ratios. You will these days also track price on sales multiples and so on and so forth. But you will not kind of chase any story at any price, which means you will not pay absurd price for any growth. There are companies which can go absurdly at higher rates, but then those multiples could be on 100 times price to earnings multiple and even beyond in some cases, which we are seeing, which we call the frothy zones. So the fund managers will avoid those zones and buy it only if the price fits their overall framework.
So if you were to chart out a matrix for the way that mutual fund managers look at this, on the one end is value, where they look for opportunities where the street has punished a particular stock or a sector and it's dropped quite considerably. Usually this is based on cyclical factors or other factors where a company has not been doing well. And they see that there is a turnaround that is visible either in the next 1 year or maybe 2 years, and they get in at that price. That is value. On the other end of the spectrum, there's quality and there's growth in particular, where you're saying that these are companies that are growing very, very rapidly and you can't ignore them. So irrespective of what price they're at, you will put money in. So they're the other end of the spectrum. Growth at a reasonable price would fall somewhere in the middle, correct?
Yes, absolutely, Alex. I think that's the most apt way of putting it across. So value is where intrinsically or fundamentally the stocks are coming cheap to you, whether on price to earnings multiple or price to book multiple. These could be for cyclical reasons. These could be for reasons which are unknown to many investors. These could be PSU stocks for all you know, where fund managers typically don't like to pay higher premium, or they don't think that the growth could be a secular kind of a growth story because of whatever multiple government interventions and so on and so forth, right? So value is a pretty defined style and art of investing, and you are willing to wait out for long cycles to get your returns out there. On the other end of the spectrum, which you rightly mentioned, is growth, and growth is what in emerging economies or in markets like India you are chasing actually. But over a period of time, I think fund managers in India have realized that you can't really buy growth at all out prices. Because India is a less deep market, I think at times because of liquidity into particular segments, sectors or stories which are getting hot, the valuations can like really go out of hand. So you can't buy growth at any price, any valuation. So the fund managers will then determine basis the ROEs of the companies, basis the PEG multiples and everything, what is a reasonable price to be paid. So it is 2 notches below the growth parameter or style of investing. You will have GARP, which is growth at reasonable prices, but it is also 2 notches above the value parameter. So somewhere in the middle of the spectrum is what you find this matrix to be.
Okay, so the next step is to identify which are the proponents of this growth at a reasonable price philosophy. And there are quite a few of them, aren't there? What comes to mind when I ask you about that?
Look, honestly, Alex, if you go out and read the commentaries from multiple fund managers, or if you hear them over media and everything, you will find a lot of them saying that we would like to bet on Indian growth story. We would like to bet because India is a growth market, is a growing market. You're growing at around 7.5% GDP at a real basis. Maybe this comes down to around 6.5%, but on a nominal basis, you're growing, or you will typically tend to grow at around 10 to 12%. Though that's not been the case for last 2 years, but yes, I think at a nominal basis you tend to grow at low double-digit numbers. So India becomes like a growth story. So fund managers, you will find in their commentary often saying that we are growth fund managers and our style of investing is growth. And there are many who say that our style is now changed, or style has now attuned to more adjusting to India-related factors because we don't want to overpay, and that's why we are going towards GARP. So I think few of the prominent names there perhaps could be a Mirai, perhaps could be a Nippon, perhaps could be a Canara Robeco, Sundaram. So these kind of fund houses and few of their fund managers, I'm not saying all their styles are growth or GARP oriented, but multiple styles of theirs are GARP oriented. On the other end of the spectrum, Alex, when you go towards the value style, there are very far and few names who inherently believe in value style. So let's say the good old names which we used to talk about, HDFC during Prashant Jain era, was typically a fund house dominated by a strong value philosophy, looking for value bargains. All the Prashant Jain funds were actually good value funds. Even S. Narain, for that matter, who has been running through ICICI Value Discovery Fund for many ages now, is a deeply I would say embedded value fund manager. There are certain dividend yield funds. There are other value funds from some other fund houses. I often remember Templeton used to run a Templeton value fund, which was run by erstwhile. The erstwhile fund was run by Mark Mobius himself, actually, which has now gotten changed. But they also ran a very intrinsically value philosophy. But there are very few names who are deeply value in Indian context. Most of the fund houses waver on the scale. It's not a particular scale. So ऐसा नहीं है कि a fund will typically only have GARP. They might have some traces of growth. They might have some traces of value. But inherently a fund manager's style will be defined, and he will very well proclaim it in various media interactions, saying that whether he's a pure growth manager, a GARP manager, or a value manager.
And how is GARP or growth at a reasonable price as a strategy worked over the course of the last 5 years, Mohit, when you compare it with the other strategies?
Okay, so Alex, I would rather take few examples here and maybe give you some numbers. Let's say if I were to take just 3 funds, for example, and I've just prepared some example out here. Maybe let's say I take a Mirai Asset Large and Mid Cap, which was the erstwhile Mirai Emerging Blue Chip Fund. And then you have a Nippon India Growth Fund, which is one of the oldest mid cap funds in India. And from a pure value perspective, perhaps let's say I pick up a Pru ICICI Value Discovery because that's a blue-blooded value fund in the industry. So from a return perspective, clearly if you see last 3 to 5 years, growth oriented or GARP funds have done much better than value funds. So Pru ICICI Discovery is not like a real laggard kind of a fund. It is almost there. But yes, Nippon Growth will take precedence over it, maybe because of a slightly more mid-cap dominated portfolio. Mirai Large and Mid-Cap will come third in the pecking order, but that's also because perhaps they have a few large cap companies also in the portfolio. So it's also a blend of market cap at which you are playing in, and not always the philosophy. But from a pure risk perspective, Alex, if I were to analyze these 3 schemes, the standard deviation in value funds is a real indicator whether or not they are value or not. So if you take the standard deviation of Pru ICICI Value Discovery Fund, it's around 13, right? Which shows that the deviation from the mean returns is only 13% plus minus in this case. But if you take standard deviation in Nippon India Growth Fund, that's almost 18, 17.9 to be precise. So the standard deviation is much higher, which shows that the funds could be really volatile because there are periods or phases where growth just doesn't do anything. Value inherently is a slow mover, but is also kind of a cushion in your portfolio because it falls a little less in deep market corrections. But value moves always in cycles. Again, if I were to just take one example, let's say post-COVID era, you had a typical cycle of value from, let's say, 2021 was a typical year where value overshined and did fantastic returns. 2023-24 was a small value kind of a phase again. But if you see last 2 years in India, it's rotated very well between GARP, growth, and quality, a fair mix, but the rotation has been a little fast. So that's how the strategies have moved for last 2-3 years.
Okay. And so therefore, just to close out, if you are investing in value, then you should be willing to wait for 3-5 years to see real benefits of having invested. But having said that, you're also providing a base, because one would assume that the fund managers are buying stocks that have already gotten beaten down. So the margin of safety in those stocks is relatively higher. So as a result of which, based on the data that you also shared with that one example, they don't fall as much when the market falls. But equally on the other side, you're buying into a growth at a reasonable price, which could potentially give you faster returns in shorter periods of time, but at the cost of higher volatility, because it can actually fall when the market falls as well. So just to close out, what are the schemes in this philosophy that you like? 1, 2, when somebody is constructing a portfolio, what is the role of growth at a reasonable price in their portfolio? They say, I really like value, but should they also have a growth at a reasonable price fund?
Okay, so Alex, look, on the value side, as I said, there are very few true blue-blooded value funds. Yeah. So you will have to go with a Pru ICICI Value Discovery. It's the most long-lasting and as a more stable name out there. So I think that's a very, very clear choice. Again, I think any investor or any portfolio needs to have a fair blend. You can't always have one tilt or a one heavy tilt in your portfolio. You will have to have some tilt of GARP, growth, value, and small traces of quality and momentum depending on your risk appetite. But growth and value are two sides of this spectrum which you will have to balance out your portfolio with. So I think on the value side, it's very clear. On the growth side, I think it's again segmenting it out as per market cap where you want to operate in. If it's a large cap market cap segment, then perhaps maybe you go with a Invesco large cap or a Mirai large cap or those kind of names which are more growth oriented and GAP oriented. If it's the mid cap, then I've already taken some names. Let's say Nippon India mid cap, which is the erstwhile Nippon India Growth Fund, or maybe the Canara Robeco Fund, or a few of those names. In the large and mid cap segment, against the similar fund houses, which is Invesco, Mirai. These are few names which are Helios, which are few names which are more GAP oriented, right? So again, it will depend on the overall philosophy of the fund house and the fund manager, but you will have to segment it out as per the market cap in which you want to operate in, and pick out your choices from there.
Yeah, it's a good. I think that was a good answer. Mohit, thanks so much for taking the time today. Pleasure speaking with you.
Thank you, always.
I have to slip into a very quick break. There's more on the other side. Stay tuned.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Welcome back. You know, it's unfortunate, but the West Asia crisis is not showing any signs of easing out. You've had, over the course of the last week and a half, a restart in the warfare between the US and Iran. The US has repeatedly struck targets in Iran, and Iran has struck targets in Bahrain and certain other countries. Now, what does that mean? Of course, oil prices have gone up, and it should generally mean that there's a natural gravitation to what has traditionally been the safe haven, which is gold. But the thing is, gold prices have not moved the way that they have moved in the past in light of conflict. This time around, particularly over the course of this year, gold prices have actually come off from what they were last year. The question that I'm asking right now, though, is what should you do with your gold strategy from this point on? My next guest believes that we may be poised for a multi-year bull run in gold. Nasir Salim, who's MD at Flexi Capital, is joining me to talk about this. Nasir, thanks so much for taking the time. Why do you say that gold prices are heading higher from this point on when they've underperformed all through the year and they've not moved the way, as I said before, they have in the past?
Hi, Alex. Great to be back on NDTV Profit. So again, a very pertinent question given where we are in terms of geopolitical pressures, and especially with reference to West Asia. So, Alex, clearly, I think the thesis is very, very simple, right? if confidence is traditional currencies, especially the US dollar, for example, I'd like to bring in the US dollar here, comes under pressure over the coming years, which we are expecting it to be. Investors in countries increasingly seek assets that are independent of any government interference. Now, one spectrum, we have the West Asia crisis, which is continuing and looming large. The other one, of course, is that, dollar assets continue to be under pressure because, US has borrowed extensively. And therefore, gold, the asset class, which is independent of, and whenever geopolitical pressure continues to build, it is that safe haven, as you rightly said, starts to look at, starts to be considered by a lot of investors. And therefore, gold historically then serves that role and, could potentially benefit significantly, both on two counts. One is, the current West Asia crisis, if it, balloons. Number two, the dollar will also be under pressure over the next few quarters and years. And therefore, gold as a strategic asset class is something which is looking very interesting at this point of time.
So you say that the dollar is expected to be under pressure, but Nasir, what we've seen in the recent past is the opposite of that, where if you look at the dollar index, which measures the value of the dollar, excuse me, against a basket of currencies, a basket of major currencies in the world, it's actually not too far away from that $100 or that 100 mark. It is above that right now, which is indicative of significant strength. In fact, if I remember correctly, last year it was in the early 90s. And so it's gained value over the course of this conflict.
You see, so two things, Alex. Number one, dollar and gold, usually work
opposite
as in inverse relationship. Yeah. Absolutely, inversely related, right? Now, with the West Asia crisis, when they had signed that treaty of peace deal in Europe a few weeks ago, we saw prices of gold started to simmer down a bit, and we saw also prices of of US, the index started to go up a little bit. Today, the way we see this is while this geopolitical pressure in West Asia will continue for some time. That's what we believe largely, and will continue for some time until we find some solid resolution. Our belief is that the US is trying to achieve multiple objectives simultaneously. Right? They have four key objectives. One is strengthening of the domestic manufacturing units in the US. Then there is another big issue that the US is trying to target is managing inflation. Then there's obviously supporting economic growth and outlook on that. And last is hedging large fiscal obligations, Alex, which is in dollars. Now, basically, a balancing of all these goals simultaneously can be difficult. In any major adjustments in monetary policy, interest rates, government spending or currency strength can influence investor confidence in paper currencies. Now, my point to you is that there is little control on geopolitical pressure and war-like situations on currencies. Now, the first currency reserve is the US dollar globally, right? That the US has no control on. But if I look at those four conditions that I mentioned to you right now, which is domestic manufacturing boost, inflation, supporting economic growth, handling large fiscal obligations, all of these collectively also means to say that the US will look at something called the debasement theory, which is to make sure that the dollar starts to depreciate against all currencies. And therefore, in that event, gold as an asset class will start to attract more numbers, which is also evident, and it will go up, which is also evident from its historical peak. It's come down to 30%. And last month, we saw some major buying happening. And that is evident in the numbers itself.
Okay, but having said that, if we look at the value of gold compared with 3 years back, Nasir, we're talking about a doubling, right? And that is despite the fact that over the course of the months so far this year, you've had a drop in the value. So one might argue that it had heated up a little too much and some money got taken off the table. It was an attempt to revert to mean. And so therefore, you're not sure whether now is the best time to start deploying into gold. What would you say about that argument?
So two things there. One, if we look at just pure technicals in terms of dollar values, I think a price point of $3,800 to about $3,900 to troy ounce is something which is also suggesting a very strong support level, Alex. Number one. Number two, I think the other core point here is that when you look at gold as an asset class, you look at the overall macro picture and you see who has been the largest buyers of gold. And that comes in to a very interesting point where we look at data and we say that, look, central banks have been buying a lot of gold since the last few quarters, and it had kind of also eased over the last few months. However, in June, I must tell you, data as published by the People's Bank of China tells us that they have added 15 tons of gold to its reserves. Now, that is making it the largest monthly purchase since October of 2023. Now, as I told you, prices have come down from its peak of 30%, drop down. The support level today on gold prices seems to be about $3,800 to $3,900. Last month, we were on the same price, roughly, maybe a percent or two around that number in terms of troy ounce to a dollar. And therefore, the one of the world's largest economies and its central bank decisions are closely watched, which in this case happens to be that of China. And when a country of this size, as an example, again, consistently accumulates gold, markets interpreted it as a strategic move rather than short-term speculation, Alex.
Okay.
And therefore, when we look at the central bank data, it is suggestive that, and technicals tell us, and the case that I made for the US case for debasement, tell us that we are looking at a strong run up here on gold over the next few quarters.
Okay, so let me ask you this from the perspective of individuals that currently have gold assets. It is traditionally said that you should have anywhere between 10 and a maximum of 20% of your portfolio in gold, right? Because getting more than that is running the risk of having concentration risk. But having said that, there are a lot of people that have avoided gold as well. People don't own gold as an investment. I'm not talking about jewelry because, again, you don't go out and sell your gold jewelry in order to invest in another asset, right? So not counting gold jewelry, if you're talking about investment at 10 to 15% or not having any gold at all, what should the strategy be for these two cohorts of people?
So great question again, Alex. So two things here. One, when you are buying gold, today we have two options available, as you rightly said. One is in paper format, the other one is in physical gold. Now, given where we are, we feel that physical gold obviously is a better bet because there is a lot of price distortion that may happen on paperless gold, on paper gold without backed by physical gold, right? But clearly, I think from a portfolio perspective and from an investing perspective, because that is what we're discussing today, barring the jewelry part, it's better to buy paper gold, which is backed by physical gold. Now, physical gold means, actual bullion stored in vaults, Alex. Paper gold refers to financial products such as ETFs and EGRs, right? I must tell you, ETFs everyone knows of. EGRs, I remember doing a show with you at NDTV. We spoke about EGRs. These are electronic gold receipts that provides exposure to gold prices, which are backed physically, right? And they're being managed between SEBI and RBI. So the argument is that during times of monetary uncertainty, which we're going through now, investors may place greater importance on assets backed by actual physical metal, Alex. The second quick point is on the portfolio allocation or the exposure. I clearly and firmly believe that an exposure of beyond 20% may be a little overambitious. And obviously, this comes in under the risky asset classes and could be a part of your core holdings. But anything beyond 20% is not recommended. Is obviously subject to one's risk, attribution and risk-adjusted returns. But a 10 to a 20% overall allocation at a household level, from an investing perspective, again, I'm saying remove the jewelry physical holdings, may be something which can be looked at very considerably at this point of time. Because, as I told you, gold acts as a store of value. and hedge against all major currencies, including, and most importantly in this case, the US dollar. We need to, and we need to focus on important triggers and indicators, such as what we discussed in terms of central bank purchases, how currencies are evolving, and how global investors are positioning themselves vis-a-vis gold.
Yeah, that's a good point. By the way, gold ETFs also backed by physical assets. It's mandated based on the rules the regulator follows. And
Yes.
the other thing, Nasir, is that investing in gold is also a hedge against the rupee.
Yes.
Because and if you look at the rupee returns of India gold ETFs over a long period of time, then they will give you that additional 3.5% per year of the depreciation of the rupee as well, because this is gold that is pegged or benchmarked to the international level. I think it's been a comprehensive conversation. Nasir, thanks so much for taking the time, and a pleasure speaking with you.
Thank you, Alex. It's always a pleasure. Thank you very much.
All right. Well, irrespective of whether you believe it's going to be a multi-year bull run in gold or not, it is proven to be beneficial as an addition to your portfolio. So you could look to have that allocation either through gold ETFs or EGRs, as Nasir just pointed out, or as a lot of people are doing, allow a fund manager to do that. So you can invest in a multi-asset fund which devotes a certain amount of its money based on what the fund manager thinks into gold assets. That's a great way to do it as well. We'll talk about that in more detail in an upcoming show. But that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in. Do stay tuned. This is NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The entrepreneurship in India is currently defined by innovation, technology, more customer orientation is something what is visible today. And those companies who innovate, collaborate more importantly, are the ones who are going to be more successful in the decade to come. And the formalization also had helped in terms of expanding the entrepreneurship across the geography of the country.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Viewers, India's travel sector is seeing a new wave of momentum. Domestic tourism remains strong. International travel is recovering despite geopolitical tensions and volatile airfares, and also technology. So from AI to digital payments is reshaping how Indians really plan and book their trips. At the same time, competition among online travel platforms is only getting sharper. Against this backdrop, ClearTrip has been expanding its offerings, from strengthening its hotel business and also launching trains to focusing on a more integrated travel experience. The company has also said that it has seen steady growth over the past year. Joining us now to discuss the changing dynamics of India's travel market, consumer behavior, and even ClearTrip's growth strategy is Manjri Singhal, Chief Growth and Business Officer at ClearTrip. Welcome to the show, Manjri.
My pleasure, Makshi. Thank you for having me.
So, Manjri, the travel industry has had to deal with multiple headwinds over the last year. Geopolitical tensions, higher airfares at times, and currency volatility as well. So, yet the demand really seems resilient. So, how would you really describe the state of the Indian travel market today?
I think, like you rightly said, right, there is a lot of headwinds for sure, and we would honestly like it to be much better than what it is. But I think travel is ingrained in all our need states. and every opportunity we get, we like to travel. So also if you look at it, there are multiple things happening around us that is enabling a user to travel more, right? And one thing I'd like to talk about is the entire social media and influencer ecosystem, which is acting as a proxy to inspire people to take more trips. We recently, in that stead order, have launched a creators club for ourselves, wherein a creator can actually act as an affiliate for the platform and at the same time inspire users to travel more, earn more money, and of course we benefit because all those users become ClearTrip users.
Right, Manjari. In fact, I just wanted to ask that has traveler behavior fundamentally changed over the last few years, and what are the biggest shifts that you're witnessing in terms of destinations, booking patterns, or even spending habits for that matter?
Oh, 100%. I think one is this emergence of Gen Z as a traveler, right? We are seeing good 60-70% growth in this traveler segment itself. And if we narrow down into what their needs are, one is they want to be more experiential in nature, right? 4-5 years back, 3 years back, when somebody was planning a trip, it would be probably to the most standard destination and probably the most ideal itinerary that you would see, right? People are wanting more experience, wanting to add destinations or activities that probably are not the most standard ones. We are also seeing the most non-standard, like Japan is doing really, really well for us. Even in India, Northeast, Jammu Kashmir, those kind of destinations, which are probably not the goers of the world, are starting to pick up and doing really, really well. The other thing we are seeing pick up is spiritual tourism, right? And this is not backed by just the senior citizen or slightly older millennial population. We are seeing resurgence across all age groups, wherein people are wanting to visit Varanasi more, are wanting to get a spiritual experience added to their.
Right. So Manjari, ClearTrip has spoken about consistent growth over the last year. So what has been the biggest driver of that growth? Is it more users or higher transaction values or even, better repeat customers? So, or is it all of these?
You've answered it actually. It is a bit of all of these. I think what changed fundamentally for us is this understanding what the user ka primary expectation is and how is it evolving, right? Like some of the expectations are fairly standard in nature. For example, while your travel has a lot of joy in it, the booking journey, it has a lot of anxiety, unpredictability. I mean, more so given the situation that the world or the country is in, right? So how do we elevate and understand that part of the world for the user? How do we make his booking journey more seamless? How do we give them more power in decision making? And how do we give them more options to travel itself, right? In doing that, we, like you started the interview saying that we've expanded our repertoire from being a just air business. Hotels is doing really well for us. We've just launched train. We are also expanding our presence in the bus business, which would mean all the 4 big transport or travel modes are covered by us.
Right,
we are
right.
also in the process of building a holidays business, which will get launched very soon.
Okay.
Which allows for people to use almost a DIY system that they can plan their travel. Where do we want to go? What activities do they want to do? Where do they want to stay? And build it on their own and check out. So I think that we are very, very excited about.
That's really interesting, Manjari. In fact, like you really pointed out that you've expanded into the trains and even you've strengthened your hotel inventory as well. So how important do you think that this is becoming a full stack travel platform versus simply, competing on the flight bookings front?
If you look at it from a user's point of view, right, they want to go to a platform which can serve their needs. Now, the needs are both horizontal in nature, which is if I want to book a bus, I should be able to, or if I want to book a holiday, I should be able to, versus depth also, right? Like if we talk of either air booking or hotel booking also, and air booking particularly has a lot more anxiety because the cost of going wrong is very, very high, right? So we've spoken enough about it, but we launched a visa denial cover, right? If your visa gets rejected, the booking is on us. We refund the booking price to the user. We've also launched price trends, which allows for user to understand what is the right time to book. It gives you a historic representation of how the prices have been faring historically. In hotels, we've just launched and you get the sneak peek of it today we've launched a flexibility product called Book at Zero. The biggest challenge we realized with the user was they all wanted to plan ahead, but everybody has to put the money on the table, right? When you make the booking, and which is not necessarily per se. So in hotels where we said that we'll reserve the booking for you, and only like couple of days before you have to travel is when you have to come make the payment. So be stress free, make all the bookings that you want, choose what you want to, and then just pay for that later.
Right. So Manjari, the online travel market is highly competitive with established players and even new entrants being there. So beyond discounts and the new schemes that you are telling our viewers right now, so do you think that this is becoming the biggest differentiator today?
Of course, right? See, one part of it is that how do you provide value, and value is not just in terms of discounting, right? Flexibility is also value for the user, affordability is also value to the user. Second is that how are you evolving with the needs of the user, right? If user today wants more visual representation while making a booking, are you doing that? If a user wants to be able to just talk to an agent and say, I want to go to Bangalore tomorrow, can you book a flight ticket? Or I want to stay at a beach facing property which is kids friendly, can you help me make that booking? If you continuously evolve with the user, you will stay relevant, otherwise you will fall behind, right? And that is the task that we are all here doing, where how do we continuously keep working hard such that we are not catching up, but we are building for the future.
Right. And also, Manjari, being part of the Flipkart group as well. So what tangible advantages does that really give ClearTrip? Is it customer acquisition, payments, technology, loyalty, or even something else that you would like to share?
I think you should be sitting at my seat, right? You're giving my answers. A lot of it is what we borrow from Flipkart. I think the biggest one, like you mentioned, one of them is the currency that we hold. So Supercoin is a currency that is tied to the Flipkart ecosystem. Along with that, we have multiple partners outside the Flipkart system also that use Supercoin. So we do see retention to be higher for a user who's already holding Supercoin. On affordability also, there are a couple of co-branded cards that Flipkart owns. One is Axis, the other is SBI. We've partnered with the banks and Flipkart to provide higher value to a user while making a booking on a platform. For example, when you make a hotel booking through your Flipkart Axis Bank card or your SBI card, you get 20% flat discount. On air, you get 12% flat discount, committed irrespective of what discounting is running on the platform. So a lot of partnership, the affordability construct, loyalty construct, we've been able to partner with Flipkart to tap into the user base and use it at scale.
Right. Manjari, and before we wrap up this interesting conversation, I would like to ask that everyone is talking about AI. So beyond the buzzword, where has AI actually improved the customer experience or the business outcomes for ClearTrip?
Okay. We are somewhere in the middle of our journey of AI. So I will talk about what it's done now and what do we see it doing. I think you rightly said, right? Till the time it's not serving a core problem, it's still a buzzword. We do believe in decision making, AI can play a very, very strong role, right? And I was giving a couple of examples. So if let's say, for example, my need is I am going on a family vacation with my child. I want a place which allows or has nannies. Now, if you have to search this by your own without the help of an agent, you will probably not be able to do it very successfully. An agent should be able to translate what is there in spoken language in your head to giving results which are more relevant. So that is what we are wanting to solve for. It's a couple of months away. Similarly, right, I want to go to Goa in December. Tell me the dates that the flight ticket is the cheapest. Or I have a 50,000 rupees ka budget. Plan a holiday for me to, let's say, Europe, or give me suggestions to where can I go if my budget is 50,000.
Yeah.
So a lot of these questions today are very, very hard to maneuver and get to because the search naturally is very boxed in this industry. I think if we just unbox it and are able to translate the mind voice of a user into actual results, AI can play a phenomenal role.
Yes, absolutely.
So some of those that we are working on. I think another place where we felt that users, it's a pain point, not just for a user, for us also. Sometimes when you make the booking, right, the anxiety is, has the hotel reached, registered the booking? Is my booking confirmed? Have I got the right room or not? We have an agent running in the background which is calling all hotels to confirm.
All right. Okay.
Just to be sure that booking is there, the right room, the requests have been met or not. And that is done through an agent at scale.
So AI is being used judiciously at ClearTrip is what I can see, and you have plans to, better that in the future as well. So Manjri, before wrapping up, just very quick rapid fire round if I would like to have with you. So one travel trend that has surprised you this year?
I think the spiritual tourism. I wouldn't think Gen Zs would want to...
All right, but I think I would like to differ on that note, because I think Gen Zs are also, moving and pivoting towards spiritual, spirituality, and they're also exploring that domain. But on that very interesting note, Manjri, thank you so much for joining us on the show today and sharing your perspectives with our viewers. Thank you.
Thank you so much. Thank you for having me.
Jayant Acharya is joining in from JSW Steel to take us through the quarter. Now, Mr. Acharya, always a pleasure speaking to you on NDTV Profit. Of course, good set of numbers, record sales numbers, backed by demand as well as pricing. Take us through the internals in terms of the key factors and the drivers in the quarter.
The quarter one has seen a very strong operational performance. India demand, I think, was one of the basic drivers. It grew at 8.3%, the steel demand. And that has driven good growth. Our capacity utilization, excluding BF3, was at 94%, and that quarter-on-quarter basis showed a volume growth of 15% on production side, while on the reported number, it's 3.3%. Our sales consolidated sales were good. We had a good mix of flats where the pricing and the demand was better. The product mix was also helped by value-added and special products, which helped the overall mix from an EBITDA point of view. The sales realization increase of about roughly 6,500 rupees quarter on quarter was offset partly by higher cost and a better mix, as I've explained. So that has played into a better result for the quarter.
All right, so good demand really playing out. And of course, you've written that autos, renewables, these are some of the segments. Tell us, where is the demand really surfacing from? Are there new areas also developing for the steel companies to take benefit from?
So first on the automotive, I think the automotive growth momentum has been really robust. Post the GST cut in September last year, auto has been on a roar, and I think it continues to do well. What we see is a very good traction in the retail on the rural side, where the consumptions of passenger vehicles, two-wheelers have started moving up. Tractor sales are seeing good traction. I think that's a very strong one on the automotive side. On the renewable side, you're right, we had the highest again quarter here. We grew at 25% quarter on quarter. YOY in the renewable space. We are expanding, as you know, we are trying to go to non-fossil fuel in JSW Steel by 2030-31. Our effort is to see that we have everything through renewable energy. So we are expanding our capacities on solar and wind ourselves. In addition to that, the renewable energy demand overall in the country, as we require more energy for our own self-reliance, I think that overall in India is growing. Our plate facility at Anjar, our coated facilities are big suppliers to the renewable space, and that is benefiting us overall.
All right, so demand is strong and coming in from new areas as well. But when we talk about pricing, there is a strong support coming in from international prices. EBITDA per ton has been very strong, 23% growth. Is this sustainable? Give us an outlook on the pricing as well.
So the prices, just to come to the price first, the steel prices started improving, if you recall, from Jan 26 onwards. Jan to March quarter, it saw increase in line with what happened globally. Part of that price increase has actually fully flowed on into the Q1 of this year, and that has given us the tailwind price benefit. While during the quarter, the prices did moderate, somewhat in flat, but the secondary market on longs moderated much more. In spite of that, we did deliver a good, I would say, NSR improvement on volume and mix both. Sustainability of the price, I would just like to say that the prices in India are among the lower ones. If you were to compare with many other parts of the world, we feel these prices are reasonable. However, there are seasonal impacts which do come in, as we know, during the July-September monsoon quarter. We should see better traction in terms of demand and prices as we go into H2. But Q2 will see increased volume from JSW Steel, and that from our BF3 Vijayanagar operations and Ohio operations, that would improve our overall absolute EBITDA as we go into the next quarter. It will be very difficult to put a number to what EBITDA or what margin would come next quarter.
All right. So there has been some shutdowns also. So what has been the impact of the war so far? It has only benefited on the price front, but what about the supply chain and also the volume guidance for the next quarter?
So this quarter, actually the last few months have been impacted geopolitically, you're aware. So whatever impact has been felt with respect to supply chain, with respect to elevated cost of energy, has impacted the cost in Q1, and some part of that flows into Q2 as well. We are hopeful that the Middle East conflict will get settled soon. It's difficult to say when. It remains a key monitorable. If you go into the demand for the full year, one thing good which we see is that the IMF has projected the world economic growth in 2026 to grow at 3%, marginally 0.1%, marginally lower than what they earlier projected. So in spite of the Middle East conflict, I think that's a very resilient number. And they are forecasting that it will improve to 3.4% in calendar year 27. Therefore, I think that's why I'm saying the second half of this year, you will see more traction. We will also see a lot of reconstruction and rebuild in the world as countries recover from the war and start rebuilding infrastructure across various parts of the world. So we feel that the demand in India will be very strong. We expect about 7 to 9% growth. Our estimate is that we would have a demand close to 177 million tons, incremental 12 to 13 million tons. And with our JVML capacities fully playing out this year, BF3 Vijayanagar adding capacity, I think we are very well poised to take advantage of this demand improvement in India.
All right, so very bullish commentary when it comes to H2, but let's really focus on Q2, which is seasonally weak quarter because of monsoons. So how is the raw material prices really putting pressure, or how is the outlook looking and the prices? Give us a guidance for this particular quarter, Mr. Acharya.
So this quarter, we see coking coal prices going up by about $12 to $15 in Q2 versus Q1. That would impact cost to some extent. Coking coal prices have started lowering in the last 2 weeks or so, but major part of that benefit would flow into the subsequent quarter in Q3 of this year. Iron ore prices have also started correcting, which have been elevated for some time. And that also should benefit us towards the later part of Q2 and Q3. Having said that, the impact of pricing is difficult to forecast, but there will be a seasonal impact on prices in the Q2. However, we expect that H2 will be very strong. Our demand growth, as I said, in India is likely to remain robust. With this, we expect stronger volumes to be able to result in higher absolute numbers in terms of EBITDA.
And you are planning to really expand at a scorching pace. JSW1 will be a slight bit of monetization. Putting all together, give us a sense on debt EBITDA and what are the numbers you'll be comfortable with the expansion plan in motion.
So net debt to EBITDA has improved now to 1.46, and we had given our comfort that we would like to be below 2.5 as we grow our capacities. We maintain that direction, and we'll be financially prudent to see that that doesn't get disturbed when we grow. Net debt has reduced to 46,000 odd crores from the last quarter. And I think our balance sheet is now quite strong to be able to take advantage of the India growth story and go on our trajectory, which we have already indicated to you. So, yeah, hoping for the best as we go ahead.
All right, all the best. Jayant Acharya, thank you so much for joining us on NDTV Profit.
Abhishek Parikh, CFO of Wari Group, Johnson United, to talk about both these things. Abhishek, thanks so much for taking the time out and being with us. First, the industry news, then the company news, Abhishek. I want to start off with this ALMM2 developments that have happened. This extension that is given, the belief on the street is that if this extension would not have come, and therefore the guidelines would have come in, it would have been beneficial for companies like yours and some of the others in margins for this intermediate period of 6 months, which is July to December. Now that it's been extended till December, maybe for FY27, basis the estimates that people had, there might be a bit of a margin hit. Would that be a fair assessment?
On the extension of ALMM, I think to understand this, we have to first see which framework has been approved under the extension notification day before. The current extension only circumvents around the C&I demand, the very limited next 6 month window for those projects which are either captive or which have some few connectivity approvals. So it's not a blanket approval, first of all. It does not extend to all the projects unanimously. It just extends to the particular window. Second, in terms of the impact on Wari, if you look at our total capacity of manufacturing of modules, right now it stands at around 25 gigawatt. 24 gigawatt is in India and the rest is in the US. Against this, our cell capacity today is 5.4 gigawatt. While we are adding another 10 gigawatt of cell capacity over the next 6 months of time, but it will take another 5-6 months of time for that capacity to go live commercially. So as of now, we have both sales, DCR sales as well as non-DCR sales, which we are having in the Indian markets plus the export one. So this really helps us to keep supplying until the cell capacity comes up to the non-DCR market a big way. At the same point in time, our DCR supplies are also running at full stack scale.
Okay. Does this, though, just to understand, while your capacities are coming on stream for the existing capacities, does it impact the near-term margin opportunity? Could margins have been higher if the extension wasn't given, Abhishek?
So it would have been true if you look at a scenario wherein there is over of cell capacity, and then either it is like module capacity is lower than cell capacity, or it is partially sold off. But in Wari's case, if you look at our cell capacity, we are already having a cell capacity gap against the module capacity that we have, and we are trying to catch it up over next 6 months of time. Another one is our overall DCR capacity also is broadly selling at and running at 90% plus of capacity for next couple of months. We are already booked. So that way we are fully secured in terms of the extension that has come.
Got it. Just one more question on this, Abhishek, and then I want to talk about your best capacity. How much of your cell and the DCR module production is booked for? For some companies, it is maybe 3 months. For some, it is 6 months. In your case, how much is it booked for?
Though we don't give this exact number in terms of our disclosure, but I can help you out with broad maths. If you look at our overall retail consumption, retail sales that we have, roughly we do 20-25% of our gross revenue from our retail, which is cash and carry. And there is a 3 to 6 months of order which are always in hand from the retail sector also. So from that logic perspective, our 5.4 gigawatts of capacity for next a couple of months, especially December or maybe March, is broadly booked.
I hear you. Okay. Abhishek, you also, guys, and congratulations on this best manufactured container facility as well, because you started that. And I believe there is an upgrade that has happened to the capacities as well. Talk to us a bit about it.
Sure. So our announcement of the best capacity is basis two phase. Phase one is, say, phase one, which we announced earlier, was 3.5 gigawatt lithium-ion cell capacity, added by 3.5 gigawatt of pack manufacturing as well as container manufacturing. While last week, that what we announced is our container capacity has commissioned to the scale of 5.1 gigawatt. Why this difference or change in the capacity? It is largely on account of debottlenecking of few processes in the entire line, plus supported by the higher cell density compared to earlier plan. So that way, within the similar set of capex or the framework that we had, we are having a higher capacity now, driven by these two reasons. So 5.4 1 gigawatt cell container line is active. It is already commissioned. We are also expecting our pack line to go live in another month or so. Our cell line is expected to start within current financial year. So we are broadly in line with all three levels of manufacturing of BESS.
And appreciate. So I won't ask you too much more on this because we'll want to talk to you post your numbers. We're in a liberty to speak about them in detail. But thank you so much for joining in today. Appreciate your time.
Thank you, sir.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are quantifiable numbers which can be compared. So these are comparable, these are quantifiable. So that is the more important thing. So an investor now can know how a company is doing and he can make comparison between one company and the other and also over a period of time. So far as the other players are concerned, the proxy advisory firms, they are also helping the investors in evaluating the companies, how they are doing. And in doing this, India has reached at a level today where we can claim that we are one of the best in the world.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India.
5, 4, 3, 2, 1, 0. Lift off.
Yes, indeed, the rocket has reached orbit. Now comes the harder mission. Can India turn rocket science into real commerce and real scale and real global leadership? That is indeed our big question tonight. Hello and welcome. I'm Vikram Oza. Like you just saw, India's space story has just entered this brand new orbit. Skyroot Aerospace's Vikram 1, successfully reaching low Earth orbit. And with that, it has become India's first privately developed orbital rocket. It puts India in a very exclusive global club. Now, it successfully delivered 6 payloads, which actually just simply means that it carried 6 satellites and experiments into orbit, which is a first for India's private space industry. But here's the thing, building a rocket is one challenge. Building a business around it is a very different mission. India today has more than 400 space startups, a space economy that's worth more than $8 billion, and there are ambitions of touching $100 billion by the year 2040, That is the hope. Now, our share of the global commercial space market currently is still under 2%. And mind you, SpaceX dominates the launch business as it stands right now, which is the big one. But what helps the growth of India's space economy are the government reforms, the 100% FDI in several space activities, the access to ISRO infrastructure, and also fresh funding support, all of which have opened the floodgates, as it were. The question is, can Indian companies now in a position to scale? Here at NDTV Profit, we spoke exclusively to Skyroot CEO Pavan Kumar Chandana, and this was after the successful launch of Vikram 1. He says the company is now moving into commercial launches and is now targeting to launch a rocket every month. That is the ambition. But there are questions, of course, to this. Is there enough demand right now? Is there enough capital? Are there enough customers? And in the space economy of the future, will the real money be in the rockets, in the satellites, in data and communications, in downstream services? So that's the reason why tonight we're asking on the big question. Yes, we've got success with the Vikram 1, which proves that when it comes to rocket science, India is really at the top of the heap. But now, can we turn that into a global space business? Does it open up the floodgates to our space economy? That's the question we're posing to our panelists. Let me introduce you to them. We've got a stellar panel as well. Former senior scientist and program manager at the Gaganyaan project at the ISRO, Devadatta Mishra, is joining us, along with Rajiv Jyoti. He is director at the Technical Directorate at InSpace. Former ISRO scientist and director of Nimbus Education, Manish Purohit, is also with us, along with co-founder of Galaxy, Pranit Mehta. Gentlemen, thank you for joining us on The Big Question. Such a pleasure to see you all. Manish Purohit, India having had these successful rockets before, but this is India's first privately developed orbital rocket. Certainly a lot of significance associated with that. It reached orbit on its very first attempt, which is very rare. But how do you think Vikram 1 is going to open up India's space economy?
Yeah, actually, the purpose of motivating the space startups was to open the Indian space economy, because the bigger challenge was not that ISRO was not doing enough, but the challenge was that there is much to cover, and we can't simply ask ISRO to keep doing everything that they are doing. So we need some support hands, we need some helping hands, and then there was an opportunity where that vision came in that we can start private startups that can for sure contribute to this, the bigger picture of capturing the economy. Now let's understand how Vikram is going to change the things that are happening in India. So Vikram 1 is on-demand launch vehicle. We have a small satellite launch vehicle with this also, that is SSLV. But when we have a private player and that says that we are planning to launch one launch vehicle every month, that means we have more possibilities, more opportunities for our startups who are building satellites, who want to try their payloads. We have seen in this first orbital launch, there were payloads from the startups. They were testing their technology. And there was, even there was a piece of information which says that if we go with SpaceX for such a small demonstration of the technology, it might cost us 1 or 2 million, but here it was much cheaper. So now that is the equation which comes in when we talk about business and economy and we talk about profits.
So when you keep the costs under control, that is a great starting point to open up the space economy, and startups in our country know how. InSpace, of course, has its own journey right now. Rajiv Jyoti, India's ambitions seem very clear. But yet when you consider our share of the global commercial space market, it remains below 2%. So we're seeing all this technological advance, our capabilities out there in the open. But why is commercial success lagging, you'd say?
No, I think there is a demand is a major thing which is going to take the scale. And when we are going to take the domestic market requirement, and of course we need to take also the global share. And once the satellite manufacturing will be requirement will go up as per the demand based on which is required for the common citizen. So that is going to give a traction to and business to these companies who are building the launch vehicles. And we are in space. We are ensuring that India becomes a global hub, both for small satellites manufacturing and as well as global launch for the small satellite launch vehicles. So I'm very sure that demand will be coming both from domestic requirement as well as from the global requirement.
Let me ask Mr. Mishra, Devadatta Mishra, when you hear about the prowess that SpaceX has in that particular space that InSpace is talking about, SpaceX really dominates the global launch market. It has transformed economics with all the reusable rockets. Where do you think India can realistically compete? And where do you think it cannot? What are the strongest points available to us right now technologically and being able to kind of push the space economy further?
Yeah, thank you. First of all, thank you, Vikram and NDTV Profit, and good evening to all of my co-panelists. Is a really elated moment for all of us because a private entity like Skyroot reaching the orbit in its maiden flight is really remarkable achievement. And hitting the bullseye in the first shot, definitely, I can say that is an engineering marvel. They have achieved it. Of course, with the guidance and support through InSpace from ISRO and from other entities to Skyroot. Coming to the international scenario, SpaceX, of course, has a dominance right now because SpaceX started, I think, 2 decades back. And it is obvious that what they achieved so far, they have come through their up and down. And compared to that, Skyroot, what they have done recently with the launch, I don't think so or see that they are competing with each other because they are dealing with different segments. So SpaceX is a right-share missions, and Skyroot is going to provide support for low Earth orbit small satellites, which if you see the statistics in the coming years, more than 1,000 satellites are in the pipeline, small satellites in the low Earth orbit category. So Skyroot definitely has a good footfall. And India is notoriously known for cost efficient and making things in a cost-effective and economical way compared to Western countries. So I think I foresee there is a bright future for the startups like Skyroot who are into low Earth orbit launch vehicle.
Pranit Mehta is a young entrepreneur. He's joining us on this discussion. Pranit, you're building a space tech startup yourself. Do you agree with that point of view, that the market that SpaceX has is very different from the kind that we need to cultivate, and our cost efficiencies are going to come to the fore when it comes to building our own businesses? From an entrepreneur's perspective, though, what are the changes you'd expect after the successful launch of Vikram 1? Does it make it easier for you to attract customers, to attract talent, and very importantly, to attract capital, which is the most important part?
I think 100%, right? To be able to have domestic launch capability means a lot. For example, today as a satellite operator, when we are looking to launch satellites, we only look up to SpaceX and they have a 2-year wait list. But with Skyroot, I can go to them and tell them that I want to launch in the next couple of months and they will build a launch vehicle for it. So I think fundamentally there is a lot of advantage, which means I can now give better promises to my customers. Secondly, on the question of the demand and the market itself, I don't think that is going to be a problem, right? And this is purely due to the factor of one domestic launch requirement. So the number of space startups that you're showing up right now as well, the number of startups we have, the number of satellites we're looking to launch, if all of that happens from local capacity, that changes the game of economics internationally, right? And second, the export potential is huge, right? Now, India is also very geopolitically favored. So now we can also provide this launch capacity to a lot of our friends across the global south, which means now our technology stack across launch, satellites, and even the downstream applications are not just for domestic consumption, but now space becomes an export market, which is something that we are all working towards. So I think it's very, very possible.
So Pranit, when you say that it is possible because there is the demand, and Skyroot is saying that it wants to move into commercial launches, eventually targeting a launch every month. So is there that much demand to support that kind of ambition? Where is that primary demand coming from? Is it domestic? Is it global? Where is it coming from?
I think it is global, Vikram, because so SpaceX today does launches, once a week, if not sometimes twice a week. And yet they have a wait list of more than 18 months.
Right.
So that's the kind of capacity we are looking at. And for all I know, Skyroot might be booked up for the next year as well.
So what are the economics looking like? Sorry, what were you saying, Pranit? What were you saying?
I'm saying I wouldn't be surprised to hear if Skyroot is already booked for the next 1 year.
Right. So we'll have to see exactly what that waiting book is looking like. But Manish Purohit, when you talk about the economics of this, a successful launch being one thing. Now, India needs to build a profitable space business. How do you build it? According to you, what is the best route? We're not in the business of just making world-class rockets, but an entire economy around this. So, in your opinion, what's the access?
Yeah, first of all, I would like to add one point here
Sure.
that specifically Vikram 1 will never be slated against SpaceX Falcon 9, but rather at a global scenario, mostly people will be looking at Rocket Lab's Electron, because Rocket Lab's Electron has captured that small satellite segment much more than SpaceX. SpaceX is launching multiple launches, but most of them are consolidated for the Starlink. And they have launch capability of around 17,000 kgs to low Earth orbit. If I don't have the complete gamut of 17,000 kgs for my own, that means I have to ride share. And when it comes to the ride share, then as Pranit has mentioned, there is a wait list of 2 years.
Right.
And if you can take the complete Falcon 9 for your mission, then the equation totally differs. Then you can't afford such a expensive mission when you talk about 60, 70 million you're spending on the launch services, because we are talking about startups. That is one thing. And we are not talking about big satellites. We're talking about the coming edge where we have small CubeSats and small satellites which are going to capture the market, and we are seeing huge number of launches from that. That is one thing. Now let's come to the second question that you were asking. You were asking about?
So in terms of the kind of demand that we are seeing and
Yeah, so
the
if you talk
access
about
route to
demand,
building business right now, it's one thing to
See,
have the successful launch, but now if we have to build business, how do you build our core strength and then the other bits around it?
See, when you talk about building the business out of the complete space system, then there is one upstream, there is one downstream, and there is something that is in the orbit.
Yes.
So how you are going to get the recurring revenue? We talk about business means you are talking about recurring revenue every time. What is that particular part of your whole system that gives you revenue back to back? So that will be something that stays in the orbit. Once done with the launch, that's all. So, it's like those 10, 15 minutes, you put the satellite in the orbit, then that satellite will be generating data, and that will be used by multiple agencies. Strategic applications might be there, civilian applications might be there, communication, weather forecasting, so many Earth observation. There are so many applications, means data, and data holds the value. So downstream market is a bigger chunk of space economy. If you look at even SpaceX, their launch segment and the earning from the launch segment is not that big as compared to what they are making money from their Starlink business. So even they have understood that thing, because launch segment is one part. Let's say they cover 10 to 15% of the whole segment when you talk about launch services. But downstream, that's where the business lies. So if we have to build the whole complete ecosystem, that means not just good launchers. Of course, sure, we need good launchers, because else how our satellites will reach the orbit. But then, as we have Pranit here with us with Galaxy, their Optosar kind of a technology will be something that will be turning out, more revenues continuously, and that's how the whole circle will get completed.
So, yes, indeed. So, I mean, every startup is going to generate its core strength in the space business. But when you look at the overall picture, Rajiv Jyoti, are we generating enough demand for our own space startups? And would you agree with that point being made by Mr. Purohit that it's the downstreams that is really going to really pick up pace and help us grow?
Yes, indeed. I think the downstream economy is going to take the lion's share of the total economy, which we talk about 44 billion. If you have to take 10% of the global share, the 60% will come from the downstream. And that is not only the Earth observation, which we are talking about, whether it's optical SAR and all other any resolution images, but also we have to talk about the PNT services, which you require to be created in the country, where right now there's hardly any player even globally. And now our startups are right now working on that. And also on the IoT-based services, which is required for all types of application, whether it is for disaster, it's for agriculture, or it is for the automobile sector, or any mobility sector. I think their demands is very huge. And this particular development is going to pave the way for creating a huge demand for small satellites, which would need to be launched in the next 5 to 10 years.
So, Mr. Jyoti, what do you think India's next priority should become? Should it be launch vehicles? Should we concentrate on more more satellite manufacturing, more investment, or you think we should look at more space-based applications?
I think it has to come from a space-based application, which will going to push the requirement both for small satellite manufacturing and also going to give services to the launch services which is required to be built. And I'm very sure that the moment we get data fusion of various types of sensors which are required to be given through drone, through space, through IoT-based sensors or the ground-based sensors, and that focus has to be to generate the awareness of the also the space, what space can bring for easing the life of a common citizen. Once the requirement goes up, there is going to be acceleration in the automatically, organically. This is going to give a growth to the both satellite manufacturing as well as for the launch. The upstream is going to take care of that.
So on that point, Mr. Mishra, many satellite operators today, they opt for rideshare launches. They go on larger rockets because that becomes cheaper. Does that make the business case for dedicated small satellite launchers that much more challenging?
Rideshare mission like SpaceX company, Rocket Lab, and Arianespace, these all big launch vehicle companies are doing nowadays because their lift-off capacities are so huge. If you are coming with a 15, 20 or 100 kg also, it is inadequate for them to have the trade-off. So they need multiple satellites once it is booked. So in one shot, they will send to the orbit. But coming to the small satellite launch vehicles, probably their carrying capacity will be around 500 or 1000 kg in maximum. So they just don't wait, or they don't want to keep so many satellites waiting. So as long as their slots are filled, they will launch. And one better advantage is, unlike rideshare, these small satellite launch vehicles will take you to your desired orbit. They will not leave you loitering in other orbits, and you have to struggle to reach your own intended desired orbit. So that is the advantage with this low capacity launch vehicles for this low Earth orbit missions, especially.
So, I ask you this because India often talks about becoming a launch hub. But now with everything that I'm hearing, is the real opportunity actually going beyond launches into satellites, into communications, into Earth observation, into data services? Mr. Mishra.
See, launch vehicle, of course, it does not contribute much with respect to the space whole economy.
Right.
If you see 35-40% comes for data, then 30-35% from satellite manufacturing, then remaining in ground segments like ground centers, and then balance falls with launch vehicles. But to master the launch vehicle technology itself is a Herculean job. There is a joke people say that there is no insurance company provide insurance for launch vehicles, but you will get insurance for satellites. It means once you master this launch vehicle, definitely you can master other technologies. Of course, coming to economy point of view and cost and generating revenues, still data is the king. Processing satellite data and information is the king. However, we cannot ignore launch vehicle because if you don't have the vehicle, then how will you reach your destination and how you will generate the revenue?
But yet you say there is no insurance for the launchers. And at this stage right now, if the satellites are getting the insurance, Pranit, how do you build your startup ecosystem?
Oh, I think, it is the backward economy, right? The thing with launches is your confidence with launches increases with the number of launches. But with a satellite, it can always go wrong because your satellite keeps changing.
We seem to have lost connection with Pranit, but Manish Purohit, looking at now India's space economy, projected to grow dramatically over the next decade, I want to understand from you whether it's launches, services that are built on space assets, the route that you think is going to serve us best at this stage, considering the success of Vikram 1 at one level, but also considering where the startups are placed right now, where our capabilities are getting concentrated.
See, actually, at this moment, we are talking about Vikram, but I'm involved with multiple startups.
Yes.
And over the period of last around 10 to 12 months, I have come across some 50, 60 brilliant startups that are right now active in India. So we are not just building launch vehicles, I'm telling you. As the sir was saying that about the P&T position and navigation and timing information, we have startups that are specifically working for the navigation stuff. We have the startups that are specifically working for the strategic forces, for data relay, for optical communication, for high fidelity information. Almost everything right now is happening in our ecosystem. And the best part is funds are flowing. So that is the big thing that the right now, the venture capitalists, they are believing into the story of Indian space ecosystem with the startups, and they believe that coming decade we will be very strong, getting good businesses, and these startups, what we are talking about, what about whether upstream, downstream, about the satellite manufacturing. Yes, there are startups who are actively involved right now, and they are progressing in a really positive way. So the future is really promising right now as we sit here.
It is promising, but it is capital intensive. This business, Rajiv Jyoti, wouldn't you agree?
Yes.
This is a highly capital intensive business. So is enough long-term financing available for all these ambitious private ventures?
Yeah, I think you said this, that it is a very highly capital intensive, and that's why from the government of India, from InSpace, we are bringing a lot of manufacturing hubs in the country where we are creating facilities, because those facilities which will be commonly used by all these companies for manufacturing, they could not concentrate on developing their individual facilities. This will be available with each state. Right now, we are talking about Gujarat and Tamil Nadu. We are talking about both for launch vehicles as well as for the small satellite and also for the data applications, where common facilities will be made available to them, so for which they will pay per use. And also we are making sure that the satellite companies require two types of technologies. One is a satellite bus, which carries a payload. Payload can vary every time. And so we have created from InSpace the satellite bus as a service, which is going to give a platform. Right now, 3 companies we have awarded the contract, and they were going to give services to the satellite bus as a service. So payload companies are going to develop their payload, and hosted payload services will be given by the satellite bus services providers. And also ground station services also are going to be equally important, which is required to develop the whole ecosystem.
Yes.
So the whole ecosystem is very important. It's not only the manufacturing, not only it's also ground station, the satellite, the payload hosted services, the launch services, and also our requirement which will be coming from our common citizen, the space-based applications, which will be through all the sectors. And also we need to tap all the companies those countries which are non-faring space-faring countries.
Yes.
Where those demand also have to be captured by some at the low-cost solution, which will be coming out of this ecosystem which is developing in the country.
Well, the consensus seems to be that Vikram 1 is far more than just a successful rocket launch. It is actual proof that India's space reforms are working and that Indian private enterprise can deliver world-class technology. But tonight's debate is also saying that reaching orbit is the milestone. It's not the destination. Now the real test begins, because in the space race of the future, success is not going to be measured by how many rockets we launch, but by how much value we are able to create. And for that, we need reforms push as well, that kind of support coming through from the government side now that the private sector is participating in such a huge way. My thanks to Manish Purohit, Debadatta Mishra, Pranit Mehta and Rajiv Jyoti. Thank you very much for joining us with your insights. So yes, Vikram 1 has shown that India can build rockets. The next challenge is proving that India can build a world-leading space economy around them. That is the big question. Now going ahead, as far as our programming on NDTV Profit goes, we're looking at the big awards coming through, the Business Leadership Awards. And that's taking place. It's only 6 days to go now. So we're looking at the big event unfolding. After a pause of 13 years, this is taking place. It's one of the most prestigious honors in Indian business. It is back on the 26th of July. NDTV Profit is bringing back the Business Leadership Awards. It celebrates the leaders, the companies, the entrepreneurs who have helped shape India's economic journey. And this year's nominees for Business Leader of the Year Public Sector there are several. And of course, there is going to be the big reveal that is going to take place not too far away from now, 6 days to go. From strengthening India's maritime capabilities to building a globally respected shipbuilding enterprise, this nominee has steered a strategic national champion to new heights. We're talking about Captain Jagmohan, the Chairman and Managing Director of Mazagon Dock Shipbuilders. Also, leading one of India's energy giants through a period of transformation, growth and evolving consumer demands, this nominee has balanced scale with strategic vision. This is Manoj Jain, the Chairman and Managing Director of BEL. And then, revitalizing a cornerstone of India's industrial ecosystem. The third nominee has championed execution, engineering excellence and renewed growth. This is K. Sadashivan Murthy, the Chairman and Managing Director of BHEL. And then driving the transition from power generation leader to energy transition champion. This nominee in particular is helping shape India's future energy. Gurdeep Singh is Chairman and Managing Director of NTPC. Also at the helm of India's energy exploration, this nominee has led with resilience, scale and strategic foresight in a rapidly changing global landscape. This is Arun Kumar Singh, the Chairman and CEO of ONGC. The wait is not going to be too long. 6 days to go to the Business Leadership Awards of NDTV Profit. We hope to see you there.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933। बरसों से सरसों। कुछ तो बात है इस दिल में।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में। पी मार्क द मस्टर्ड स्पेशलिस्ट सिंस 1933।
सरसों से सरसों।
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term way, without harming the environment and the climate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome viewers. You're watching Market Express and I'm Himakshi Bhogna. Let's get straight into the show and see how the markets have really fared today first. So viewers, benchmarks have ended a choppy day of trade and Nifty has ended the day near 24,200 levels while the Sensex has lost over 400 plus points. So broader markets have outperformed the benchmarks as well. In fact, markets have ended with a positive sectoral breadth there, with most of the sectors closing in the green. Public sector banks and pharma stocks have led the gains, while financial services and auto stocks have lagged, and this is reflecting a mixed but largely constructive trading session. Let's look at some key buzzers. First up, we have pharma stocks that were among the top gainers, with the Nifty Pharma Index rising around 2%. Torrent Pharma, Mankind Pharma, Cipla and Aurobindo Pharma, they've gained up to 5% and are also leading the rally. The sector has benefited from the renewed buying interest after recent weakness, and this has been supported by optimism around earnings and even resilient domestic demand. Next counter to look at is Reliance Industries, and it will remain in focus after the stock came under pressure following its Q1 results and even slipped towards its 100-day moving average, which is a key technical level watched by the traders. So analysts are saying that the zone around the 100 DMA could really act as an important near-term support area, while a decisive move below it may really trigger further selling pressure. So the stock has been consolidating after recent weakness in the energy and retail businesses, and the market participants will now watch whether Reliance can hold these technical levels and also stabilize after the earnings reaction. Next counter to look at is Ultratech Cement, which has delivered a strong first quarter performance, also reporting healthy double-digit growth in the revenue, profit, and even cement volumes. So while margins have moderated slightly there, robust operational execution and the consolidation of India Cements, they've continued to support the earnings, and the company has also reaffirmed its aggressive expansion plans, also targeting nearly 16 million tons of fresh capacity in financial year 2027 and also close to 30 million tons in financial year 2028. So also reinforcing its leadership position and long-term growth strategy in India's cement sector. Here's next counter to look at is Indian Overseas Bank, which has also reported a strong first quarter performance with net profit rising 49% annually to 1,659 crore rupees. The PSU lenders' earnings were supported by healthy growth in interest income and also improved asset quality. The bank also continued to strengthen its balance sheet with lower bad loans and also better provisioning there. So the robust results really reflect improving business momentum and even sustained credit growth, keeping the investor focus on the bank's asset quality and even the loan growth trajectory going forward. Next counter to look at is Axis Bank. So the shares have dropped nearly 5% after several brokerages have trimmed their earnings estimate following the lender's first quarter results. So while the bank has reported a healthy rise in profit, analysts have flagged pressure on the net interest margins, slower fee income growth and even a cautious near-term outlook. So brokerages are continuing to remain constructive on the bank over the long term, but have really lowered the target prices to reflect near-term profitability challenges. And keeping with the banks, we have HDFC Bank now. So the shares have slipped nearly 5% despite reporting a strong first quarter performance. As investors have booked the profits after results, analysts remain positive on the country's largest private lender, citing healthy loan growth, resilient asset quality and even stable earnings. However, some brokerages, they've highlighted pressure on the net interest margins and even moderated the growth expectations in the near term. Here's next up, we have Karur Vyasya Bank, which has reported a strong first quarter with net profits surging nearly 45% annually, and this has been supported by robust growth in net interest income and also operating profit. Now, lower provisioning further strengthened the earnings performance, while the asset quality they remained stable with gross and net NPAs at comfortable levels. The numbers reflect healthy business momentum and even continued balance sheet resilience despite a challenging operating environment. Next bank to look at is ICICI Bank. So the shares have gained around 2.5% after the lender has reported a strong first quarter performance, also beating the street expectations. Now the earnings were driven by healthy loan growth, stable asset quality, and even robust profitability. Now, following the results, several brokerages have reiterated their positive view on the stock, with some sort of seeing, up to 25% upside there from the current levels. And analysts believe that ICICI Bank remains well placed to deliver consistent earnings growth. And this has also been supported by its strong balance sheet and improving operating metrics. Next counter to look at is Larsen & Toubro, which has secured multiple orders worth between 10,000 crores and 15,000 crore rupees in its metals and mining business, also classifying them under the mega order category. So the contracts really include an iron ore handling plant in Chhattisgarh, which is a steel plant in expansion in West Bengal, and also an EPC order for a zinc processing plant. So these deal wins strengthen L&T's order book and even reinforce its leadership in the executing large-scale industrial infrastructure projects as India really accelerates investments in metals and mining capacity. India's pilots body, ALPA India, which has urged aviation regulator DGCA to really suspend flights to Dubai and Abu Dhabi amid escalating tensions in the Middle East. Now, in a letter really accessed by NDTV Profit, the association has warned of growing risk to civil aviation, including missile threats, GPS jamming, and even electronic warfare. Now, ALPA has called for a comprehensive independent threat assessment before the normal operations resume, and has also offered technical support to the DGCA for conflict zone risk evaluation. And viewers, Alibaba-owned AliExpress has been hit with a record, 550 million euros, and this has been fined by the European Union for failing to curb the sale of illegal, unsafe and counterfeit products on its platform. Now, the penalty is issued under the EU's Digital Services Act, also marks one of the toughest enforcement actions under the new rules. Regulators have also warned that AliExpress could really face additional penalties if its proposed compliance measures really fail to meet the EU requirements later this year. Viewers, moving on to some national news now. The monsoon session of Parliament has really got off to a disrupted start, with repeated adjournments in both the Lok Sabha and Rajya Sabha following opposition protest. Now, opposition leaders have demanded discussions on issues including question paper leaks and protests at Delhi's Jantar Mantar. Now, amid the impasse, the Rajya Sabha chairman has convened a meeting of the Business Advisory Committee as efforts have continued to restore normal proceedings before both the houses, reconvene later in the day. And security was also heightened as thousands of protests outside the parliament as Cockroach Janata Party demands resignation of the Union Education Minister Dharmendra Pradhan. And viewers, the Central Bureau of Investigation has intensified its probe into an alleged 1,109 crore bank fraud case by conducting coordinated searches at 6 locations across West Bengal, Odisha, Tamil Nadu and Uttarakhand. Now, the multi-state operation is part of an ongoing investigation into suspected financial irregularities linked to the case. Officials are examining documents and even electronic evidence as the agency seeks to uncover the alleged fraud and also identify those responsible. Yes, the government has introduced a bill in the Lok Sabha to increase the sanction strength of Supreme Court judges from 33 to 37, excluding the Chief Justice of India. So the legislation seeks to replace an ordinance issued earlier this year and is also aimed at strengthening the apex court's capacity to handle its growing caseload. So the proposal will now be taken up for parliamentary consideration during the monsoon session. And viewers, floodwaters have damaged railway tracks in Upper Assam, disrupting the crucial rail link connecting the region with the rest of the country. Now, railway authorities have launched restoration work on the affected sections, but the train services are likely to remain impacted until water levels recede and safety inspections are completed. Heavy rainfall continues to pose challenges across several parts of the state. And the Middle East conflict is escalating rapidly, with the United States carrying out a 9th consecutive night of airstrikes against Iran. Now, President Trump has ordered fresh military action after another US soldier was reportedly killed in an Iranian attack. And CENTCOM is saying that the latest strikes are aimed at degrading Iran's military capabilities linked to attacks on commercial shipping in the Strait of Hormuz. Meanwhile, Iran's Revolutionary Guard has expanded its retaliation, launching attacks targeting Syria, Kuwait, and even Bahrain, raising fears that the conflict could really broaden further and even deepen risk to regional security and even global energy markets. Here's fresh concerns have emerged over the security of commercial shipping through the Strait of Hormuz after Iran has claimed that 2 oil tankers exploded and were left immobilized near the strategic waterway. So the development comes amid intensifying military exchanges between the US and Iran, also raising fears of further disruption along one of the world's busiest oil transit routes. So markets are really closely watching whether tanker traffic slows further, as any prolonged disruption could really tighten the global crude supplies and even keep the geopolitical risk firmly in focus. Here's American drivers are once again feeling the impact of the rising geopolitical tensions. US gasoline prices have climbed above the key $4 per gallon mark as renewed hostilities between the US and Iran, they've continued to disrupt the energy flows through the Strait of Hormuz, and retail fuel prices have risen more than 30% since the conflict escalated earlier this year, highlighting how geopolitical shocks are quickly translating into higher costs for consumers and also adding to global inflation concerns. And here's a food delivery rider in China has won one of the country's highest literary honors. Now, 56-year-old Wang Jibing, he's received the prestigious Lu Xun Literary Prize for his poetry collection, Low Flight, much of which was written between food deliveries on scraps of paper. So, having left school due to financial hardship and worked a series of odd jobs, Wang's remarkable journey is now inspiring many, while also shining a spotlight on the lives and struggles of workers in China's rapidly expanding gig economy. Here's moving on to some sports news now. Spain is the new FIFA World Cup champion, defeating Argentina in a total score of 1-0 after extra time in a gripping final. Now, substitute Ferran Torres scored the decisive goal in the 106th minute, ending Argentina's hopes of defending their title, and Spain has dominated the possession and also created better chances before finally breaking the deadlock. So the defeat also marks an emotional end to Lionel Messi's World Cup journey as Spain lift their second FIFA World Cup title in a memorable night of football. And NDTV brings us this report.
A war of attrition in the New York Stadium as Spain took on Argentina in the final. Spain constantly complained about referee Slavo Vincic's leniency. The first yellow card came after 40 minutes when Lisandro Martinez brought down Mikel Oyarzabal. The game boiled over in stoppage time when Enzo Fernandez, who had already been cautioned, received a second yellow card for a reckless challenge on Spain defender Pau Cubarsí. Argentina was reduced to 10 men. The Albiceleste keeper Dibu Martinez denied Spain in the final seconds of normal time, keeping out a superb free kick from Lamine Yamal. He was in action again with another crucial stop from Nico Williams' header. Spain kept pushing, probing, attacking and asking incessant questions of the Argentina rearguard. Barca boy Ferran Torres was the hero for Spain. He collected a Nico Williams header to beat Argentina keeper Emilio Martinez with a powerful shot from close range after 106 minutes. The Argentinians could not find a comeback on Monday morning. Messi has put in some of the great World Cup performances, a few of them coming this summer. But the 39-year-old had his quietest night of the tournament with just a single touch in the opening 15 minutes. The scoreline remained 1-0, and that meant Spain became the first nation ever to be men's and women's world champions at the same time.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honor?
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Jayant Acharya is joining in from JSW Steel to take us through the quarter. Now, Mr. Acharya, always a pleasure speaking to you on NDTV Profit. Of course, good set of numbers, record sales numbers, backed by demand as well as pricing. Take us through the internals in terms of the key factors and the drivers in the quarter.
The quarter one has seen a very strong operational performance. India demand, I think, was one of the basic drivers. It grew at 8.3%, the steel demand, and that has driven good growth. Our capacity utilization, excluding BF3, was at 94%, and that quarter-on-quarter basis showed a volume growth of 15% on production side, while on the reported number, it's 3.3%. Our sales consolidated sales were good. We had a good mix of flats where the pricing and the demand was better. The product mix was also helped by value-added and special products, which helped the overall mix from an EBITDA point of view. The sales realization increase of about roughly 6,500 rupees quarter on quarter was offset partly by higher cost and a better mix, as I've explained. So that has played into a better result for the quarter.
All right, so good demand really playing out. And of course, you've written that autos, renewables, these are some of the segments. Tell us, where is the demand really surfacing from? Are there new areas also developing for the steel companies to take benefit from?
So first on the automotive, I think the automotive growth momentum has been really robust. Post the GST cut in September last year, auto has been on a roar, and I think it continues to do well. What we see is a very good traction in the retail on the rural side, where the consumptions of passenger vehicles, two-wheelers have started moving up. Tractor sales are seeing good traction. I think that's a very strong one on the automotive side. On the renewable side, you're right. We had the highest again quarter here. We grew at 25% quarter on quarter. YOY in the renewable space. We are expanding, as you know. We are trying to go to non-fossil fuel in JSW Steel by 2030-31. Our effort is to see that we have everything through renewable energy. So we are expanding our capacities on solar and wind ourselves. In addition to that, the renewable energy demand overall in the country, as we require more energy for our own self-reliance, I think that overall in India is growing. Our plate facility at Anjar, our coated facilities are big suppliers to the renewable space, and that is benefiting us overall.
All right, so demand is strong and coming in from new areas as well. But when we talk about pricing, there is a strong support coming in from international prices. EBITDA per ton has been very strong, 23% growth. Is this sustainable? Give us an outlook on the pricing as well.
So the prices, just to come to the price first, the steel prices started improving, if you recall, from Jan 26 onwards. Jan to March quarter, it saw increase in line with what happened globally. Part of that price increase has actually fully flowed on into the Q1 of this year, and that has given us the tailwind price benefit. While during the quarter, the prices did moderate, somewhat in flat, but the secondary market on longs moderated much more. In spite of that, we did deliver a good, I would say, NSR improvement on volume and mix both. Sustainability of the price, I would just like to say that the prices in India are among the lower ones. If you were to compare with many other parts of the world, we feel these prices are reasonable. However, there are seasonal impacts which do come in, as we know, during the July-September monsoon quarter. We should see better traction in terms of demand and prices as we go into H2. But Q2 will see increased volume from JSW Steel, and that from our BF3 Vijayanagar operations and Ohio operations, that would improve our overall absolute EBITDA as we go into the next quarter. It will be very difficult to put a number to what EBITDA or what margin would come next quarter.
All right, so there has been some shutdowns also. So what has been the impact of the war so far? It has only benefited on the price front, but what about the supply chain and also the volume guidance for the next quarter?
So this quarter, actually the last few months have been impacted geopolitically, you're aware. So whatever impact has been felt with respect to supply chain, with respect to elevated cost of energy, has impacted the cost in Q1, and some part of that flows into Q2 as well. We are hopeful that the Middle East conflict will get settled soon. It's difficult to say when. It remains a key monitorable. If you go into the demand for the full year, one thing good which we see is that the IMF has projected the world economic growth in 2026 to grow at 3%, marginally 0.1%, marginally lower than what they earlier projected. So in spite of the Middle East conflict, I think that's a very resilient number. And they are forecasting that it will improve to 3.4% in calendar year 27. Therefore, I think that's why I'm saying the second half of this year, you will see more traction. We will also see a lot of reconstruction and rebuild in the world as countries recover from the war and start rebuilding infrastructure across various parts of the world. So we feel that the demand in India will be very strong. We expect about 7 to 9% growth. Our estimate is that we would have a demand close to 177 million tons, incremental 12 to 13 million tons. And with our JVML capacities fully playing out this year, BF3, Vijayanagar adding capacity, I think we are very well poised to take advantage of this demand improvement in India.
All right, so very bullish commentary when it comes to H2, but let's really focus on Q2, which is seasonally weak quarter because of monsoons. So how is the raw material prices really putting pressure, or how is the outlook looking and the prices? Give us a guidance for this particular quarter, Mr. Acharya.
So this quarter, we see coking coal prices going up by about $12 to $15 in quarter 2 versus quarter 1. That would impact cost to some extent. Coking coal prices have started lowering in the last 2 weeks or so, but major part of that benefit would flow into the subsequent quarter, in quarter 3 of this year. Iron ore prices have also started correcting, which have been elevated for some time. And that also should benefit us towards the later part of Q2 and Q3. Having said that, the impact of pricing is difficult to forecast, but there will be a seasonal impact on prices in the quarter 2. However, we expect that H2 will be very strong. Our demand growth, as I said, in India is likely to remain robust. With this, we expect stronger volumes to be able to result in higher absolute numbers in terms of EBITDA.
And you are planning to really expand at a scorching pace. JSW1 will be a slight bit of monetization. Putting all together, give us a sense on debt, EBITDA, and what are the numbers you'll be comfortable with the expansion plan in motion?
So net debt to EBITDA has improved now to 1.46, and we had given our comfort that we would like to be below 2.5 as we grow our capacities. We maintain that direction, and we'll be financially prudent to see that that doesn't get disturbed when we grow. Net debt has reduced to 46,000 odd crores from the last quarter. And I think our balance sheet is now quite strong to be able to take advantage of the India growth story and go on our trajectory, which we have already indicated to you. So, yeah, hoping for the best as we go ahead.
All right, all the best. Jayant Acharya, thank you so much for joining us on NDTV Profit.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across.
Good evening. Breaking down the day's biggest business news, we take it from the headlines right down to the bottom line. Welcome to this Monday show. I'm Vikramoda, and these are the top news stories that we're tracking tonight. The government responds in the Rajya Sabha over ethanol blending. Minister Suresh Gopi says that E20 petrol has not caused widespread engine failures or vehicle issues. As Parliament's monsoon session begins, the government clears the air on key economic issues. No plan to slash long-term capital gains tax on equity transactions, no diversion of dormant EPFO funds, and remittance flows stay under watch. Markets end the day in the red, with the Nifty closing near the 24,250 mark after recovering most of its intraday losses amidst the Iran Foreign Ministry's comments on mediation. As far as the Middle East war goes, Axis Bank and HDFC Bank turn out to be the top losers. Broader markets have outperformed the benchmarks today. India's core sector output has grown 5% in June under the new base year of 2022-23. It's hit a 5-month high as cement and electricity output has risen. 9 days of US strikes, yet diplomacy stays on the table. Crude eases after Iran says that US talks could be pursued based on national interests. Brent is hovering around the $88 to the barrel mark. Andy Burnham, he's become the 7th British Prime Minister in a decade. He's pledging cost of living help in his first speech as Prime Minister. All right, now let's kick off this edition of The Bottom Line with a data reset of sorts. The government has given the Core Industries Index a much-needed makeover. It's updated the base year from 2011-12 to 2022-23. And now it better reflects today's economy. For the first time, iron ore has entered the club. It takes the number of core sectors from 8 to 9. The new series also cleans up the methodology. It tweaks the way steel output is measured, and it removes double counting when it comes to coal. And the timing is interesting because the latest numbers suggest that the real economy may be finding its footing now. So core sector growth has accelerated to 5% in June from 3.2% in the month of May, with iron ore, cement and electricity doing much of that heavy lifting. Cement output has surged nearly 10%. It's pointing to healthy infrastructure activity on the ground. But no, it's not a clean sweep just yet. While steel and coal have remained supportive, crude oil, natural gas and refinery products as well as fertilizers, all of these are still under pressure. So the message from the data is that India's infrastructure engine is revving up, but parts of the energy complex are still struggling to keep pace. And joining us to decode this, Mithali Nikore, founder of Nikore Associates. Good to have you with us, Mithali. Mithali, looking at this data, how significant is this revision of the Core Industries Index? Does it materially change how investors and how policymakers read India's growth?
No, absolutely. Thanks a lot for having me on your show and for discussing, this very critical revision that has been made in the index. See, it's very evident that the new index is actually more reflective of especially the steel industry and, the requirements of the steel industry, because we see very clearly that the double counting has been removed. Also, when we look at the coal industry, there was a double counting happening with the import values, being double counted in two parts of the index. And a lot of times, the industry had been advocating for this change in the core index numbers. And of course, the fact that iron ore has now been finally included, in the core index, all of these actually make the index far more reflective of the true value. And the core index is a very critical index because it's a leading index for the economy. It's an index which sort of shows where the economy's future direction is, because these are the foundational features, these are the foundational elements which go into nearly every sector of the economy.
So Mithali, this headline number that we're looking at, it has seen an improvement to 5% in June. In May, it was 3.2%. How much comfort should one take from this kind of rebound?
So I think, Vikram, very honestly, when we look at it, the situation, we know that we're in an oil shock. We know that, the economy is still grappling with an external shock, which is not of our own doing. So in this situation, with the West Asia crisis continuing, with the US not sort of, honoring the MOU, we have to look at whether, the economy can continue to weather the shock. This number, definitely, it brings some relief. It's sort of telling us that there is an adaptability in our economy that's very clear. Cement doing well, steel doing well, electricity output rising. It shows us that the construction manufacturing activity has adapted to this new price of crude oil and the new price of industrial goods. But at the end of the day, the pressure on the economy from the external factors continues to remain. And, without this oil shock, I'm quite sure that the index might have been anywhere between 7 to 8%. And we're sitting at 5% because of, the situation that the global economy finds itself in.
So there is that clear divergence in the data. You see the infrastructure-linked sectors doing well, but crude oil, natural gas, refinery products, those remain weak. So there is that contrast. But also when you look in that data, cement and electricity, they've been particularly strong. So are these the clearest indicators at the moment that construction and infrastructure activity remain healthy?
Yes, absolutely. I would say that these are two very critical indicators for us. And these are the two indicators that, Indian investors, the domestic investors have backed the Indian economy. And that's what it shows in these two indicators. Because, we have seen in the last 1 year how foreign institutional investors were the first to sort of get cold feet and say, we're not sure if we want to stick to this emerging economy. Will we start to see the returns that we were promised? And many of them withdrew. But at that time, domestic capital came in. Domestic capital really provided that support to the Indian economy and said, the investments were buoyed up by domestic investors. And today they are the ones who will see that return, because we can see already with the cement values and the electricity values that the Indian economy has been resilient to this oil price shock.
But Mithali, doesn't this data also suggest that public investment is still doing the heavy lifting? Or you think we are seeing some green shoots of stronger private sector demand?
See, I personally feel that in this situation, every time we try to come out of this situation, right, where we try to say, let's bring in more private investment, let's ensure that there's more private investment. In the last 5 years, we have seen external factors continue to, pummel the economy in a way that makes it very hard to rely only on private investment, whether it's COVID, and that was almost 3 years, and we were coming out of that, and the production linked incentive scheme was sort of bringing in, the returns. And we saw in the last 2 years, 2023 and 2024, were such brilliant years for bringing in FDI inflows into India, which went into manufacturing. But then again, in 2025, on 2nd April, Donald Trump comes out and creates, the biggest economic mayhem that has ever been seen in the international global economy. And that continues, with the oil prices and oil crisis, with the war today. So honestly, at this time, I would not put that onus only on the private sector.
So this is a difficult time, but it's good to see the infrastructure economy. It's coming into its own. It's still doing that heavy lifting for growth. There are parts of the energy sector that remain weak for obvious reasons. The momentum on the ground appears intact. We'll have to see if that translates into a broader pickup in the months to come. But Mithali Nikore, always a pleasure getting in your insights. Thanks very much for joining us tonight. Now, the RBI says that banks have mobilized more than $17.4 billion under the FCNR-BE deposit scheme. This is since the 8th of June until the 17th of July. It highlights strong investor response to measures that have been aimed, like we've been discussing on the show as well, how they've been aimed at boosting foreign exchange inflows. Banks have also raised $1.97 billion through OFCBs and $1.34 billion through the ECB facility. My colleague Piyush is here to break this down for us. Piyush, as far as the forex mobilization efforts by the government, by the RBI are concerned, tell us about the numbers that we have before us.
Vikram, the RBI had announced a slew of measures on June 5 to curb the fall in Indian rupee, and among them were introducing these swap facilities for banks to raise FCNRB deposits, ECBs, and overseas foreign currency borrowings as well. The RBI has put out today a timely notice wherein it has said that banks will now have raised around $17.4 billion, like you said, under the FCNRB facilities. Under the OFCB facilities, banks have raised around $1.97 billion. Under the ECB swap facility, the banks have raised $1.34 billion. Now, we must understand why this is important. First, the dollar, rupee was under pressure after a lot of global geopolitical issues, and subsequently there were RBI saw a lot of volatility in the spot market rupee as well. The RBI had come out with a slew of measures, and they said that they will provide for the hedging costs when banks raise funds under this FCNRB and OFCB facility as well. So under FCNRB, RBI is actually bearing all the hedging costs, and also for OFCBs and ECBs, the RBI has fixed the hedging cost at the lower quantum. So funds have been raised under these facilities, and the banks are also providing very high leverage, Vikram, around 18-19x against FCNRB deposits. So healthy momentum coming in. The expectation is that around 60-70 billion, at least the initial estimates were that, will come through FCNRB, but at least 20 odd billion have already come in.
Yes.
So a good start.
So there are challenges to the Indian economy, and now we are seeing how the entire effort to shore up forex for the country is actually working. We'll keep tracking that, but thanks very much, Piyush. On the earnings front, let's turn our attention to UltraTech Cement, which has reported its first quarter numbers. The management striking an optimistic note on demand, and the company is saying that the conviction in sustained demand has strengthened after the first quarter's performance. There is a healthy order pipeline, they say, across infrastructure and housing, which remains intact for the company. Listen in to what we got from UltraTech CFO, Atul Daga.
The one big theme for us quarter after quarter is demand. If the demand is good, everything falls in line. And I'm delighted to report that the first quarter of fiscal 27 has reaffirmed that conviction emphatically. With a double-digit volume growth and a demand pipeline across infrastructure, housing, and urban real estate is as rich as it can be. Core sector growth slowing down in the month of May, lower coal and refinery output, and aggregate state capex in April-May growing a modest 2% year-on-year.
That's what we got on UltraTech's first quarter. Now, turning our attention to Parliament's monsoon session. It began today, the government answering key questions on market taxes, on dormant EPFO accounts, and also overseas remittances. They're offering clarity on the long-term capital gains tax on inoperative funds and West Asia-related concerns. My colleague Rishabh has been tracking this, all the movements, all the uproar in Parliament as well. Rishabh, the government has clarified that there is no plan to scrap the long-term capital gains tax on equity. Tell us what you picked up on this so far.
Absolutely. Some key updates coming in, largely from the Finance Ministry today. A lot of questions being answered by the MOS and the Finance Minister herself. What we're seeing is that, firstly, the government has clarified that there is no proposal at the moment to change the capital gains tax rates. What they've said is that these policies are already reviewed periodically as part of the annual budget process, and it will continue to do so. Essentially, the LTCG tax has now generated about 1.3 lakh crores in the annual year for 2026 for the government. And that's what you have on that front. On the unclaimed funds part, the Finance Ministry has revealed that about 7,400 crores worth roughly is what is lying as unclaimed funds with the LIC. When it comes to the EPFO, about 9,300 crore rupees is what is lying across its inoperative accounts. Now, what they've also said is that the EPFO is already starting to pilot auto credit of any balances that are up to 1,000 rupees. So if you have less than 1,000 rupees that are pending with the EPFO, that will automatically get credited to your bank account. That is something that the government is also doing to reduce the unclaimed funds that are lying with them. They're also